them like 2 or 3 times.
So
It
what
never ends up being
Beverlovian
like my
instrument
thing.
do they play?
One plays keys and the other plays drums.
Okay.
And then they have a trumpet and bass.
It's not the thing you play on your chest with the strings.
No,
Okay.
it's not what is that?
I just remember
Washboard?
that from New Orleans. Yeah, it was a washboard. Yeah, something like that.
No. So it was fine. And then we left. They played a set at 10 o'clock, which was perfect. And then we left as soon as they end. I was like, oh, they might be on their last song. And I called for the check. And then we got out of there right at 11. But yeah, threw off.
Almost made it.
Yesterday was completely thrown off. Well, then we're laying in bed. And of course, Callie, my
I'm pulling you over to the dark side of...
What?
You're up early and you're tired by 9 o'clock.
Well, and if the thing you didn't tell me about getting up early and not sleeping past 6 or 7 on the weekends, but on weekdays really 5, is if you stay up past like 10 p.m., you're screwed the next day.
Yes, because you still wake up at 3 a.m.
And so we get back, and I'm like, okay, like we get back, take the dog out, and it's like 11:15. Like I quickly get into bed. I'm like, I need to get to sleep as soon as possible. And then, of course, Callie, her birthday is on the 1st. And so, like, every 5-10 minutes that, like, I'm going to go to sleep, she's like, oh, it's 15 minutes till New Year's. And I'm like, all right, I guess we're and I'm literally falling asleep as, like, it hits midnight. And she's like, oh, like, Happy New Year. And I'm like, happy birthday, Happy New Year. And then I fully go to sleep. But, yeah, yesterday... I was totally dead. We didn't do much. I got her flowers.
I saw. Beautiful.
Yeah. How did you see?
I see everything.
Did she send you a picture of them? Oh my gosh. Yeah, they were nice flowers. Flowers are expensive.
I said he needs to spoil you more than usual.
That's it. And then there's like some party on Saturday.
Fantastic.
We'll see. But yeah, how was your New Year's? You went out to the suburbs.
Yeah, we did this whole seafood thing, which was great.
Seafood?
We did our own seafood. They've got this thing at a restaurant called Seafood Tower, where you put oysters and shrimp and stuff on. So we did our own, and there's a really good seafood whatever you call it. It's,
oh, you were telling me about that.
Yeah. Burhops. Freaking, I swear to God, look at my shucking oysters.
Yeah.
I don't know what it is.
You were shucking oysters.
Yeah, because I like the oysters and I like to shuck them. And last time I got them from them, they were great. This time they were just so-so, but I did some serious damage to my hand just with that stupid knife.
Yeah.
And it's so funny. I go from the knife to the screwdriver. Then I do get the hammer, and I stop myself with the hammer because that doesn't.
Screwdriver?
Well, because it's the same twisting thing. It just gives you more leverage. The little knife doesn't. It's only that long, and it's kind of flimsy. It doesn't.
There's no ridges on the hand end of it. You're saying so that like when you turn it, it doesn't turn
right.
As easily.
And if it slides, you slice the knife yourself.
Because this was at the party for your wife's family, right? For Michelle's family.
No, this was just Michelle and I.
Gotcha.
This was Michelle and I Tuesday night.
Because I was going to say, no one else there can shuck these oysters.
No,
can do this for you.
No, that was Wednesday. Was at my family for brunch, which was great. Bridget and Paul, who are her niece and his wife, Bridget's a chef, so it was like.
Oh, okay.
Quiche Lorraine and everything. It was really nice. Yeah, it was very, very
So
nice.
you had Seafood Tower
Tuesday night.
On Tuesday.
Yeah.
And then quiche Lorraine. Is that French? I don't even know who Lorraine is.
It's a quiche with ham in it and cheese and Gruyere cheese, I think.
Sounds French.
Yeah, it was good. So we got the big crab claws. Now Michelle has this thing that they don't crack them enough. So the guy went to town on them with a hammer in back, and so eating them, there was a lot of shell on them. So.
Is that no good, or is that preferred to them?
Well, you've been on when she's gotten angry about the.
It's one of my favorite stories.
Cracking in the claws. She's just got a special way.
I don't remember. Did we send the Seafood Tower back?
No, we just heard about it.
Okay.
Just a lot of complaining about it.
I've been there when like the water has been sent back.
Yes.
Which is
that was.
I understand. Yeah.
That was funky water.
I understand all of it.
Yeah.
Michelle, I'm on Michelle's side.
You better
no
be,
matter what.
Chances are she's watching.
But yeah, the funniest thing was we were out to dinner for your birthday, and we got the Seafood Tower, and it's beautiful. I'm not used to. Pete obviously is a very wealthy guy. He's got a lot of money. If you ever need a loan or anything, ask him. But I'm not used to anything like a
I grow
seafood
my
tower.
own oysters.
Oh, really?
Yes, I actually go and
You've got
catch
some
my
ocean
own.
in your backyard.
Yes, I catch my own crab for the crab claws. I harvest this all myself.
And so we sit down to dinner for your birthday a couple years ago. Nice place. And the seafood tower, you order the seafood tower. I've never had a seafood tower before. It's decadent. It's beautiful.
Yeah.
There's what? There's the cocktail shrimp. There's
The shrimp, oysters, crab claws, sometimes lobster, sometimes the snow crab legs, the long ones, you know. Those were the ones that the guy went to town with, with the hammer.
And I'm of course loving it. I'm eating more than my fair share. And Michelle is having a hard time opening.
You know, on the lobster, they've got those little, like, leg claws that come out. They're supposed to have
Like tender meat in there, yeah.
Yeah. I don't know. It's too much work for me. So,
well, it became a lot of work.
it was not acceptable basis the boss.
But we didn't send it back.
No, we did not send it back. But we still kid her about the crab claws.
It's fun.
The
It's funny.
incident.
Well, I'm glad that
we call it the claw incident.
But we prefer shards rather than
no,
than being
I
hard
wasn't a
to open.
fan of the shards. The guy was, again, I don't know what he was doing, but I'm sure
Well,
he
he
was
used
like
the hammer like you wanted to use.
the lady wants him cracked. I'm going to go crack him, and he just went to town on him.
I don't want to have to see these people again.
Yes, so, but that was fun.
Well, good for you,
Yes.
man.
So
And
we
yeah,
had a
now
good-
now we're here, a new year, and some more dollar strength in certain areas. I mean, I think
Boy,
we got
what
it.
we see a reprieve in Aussie up a little, Kiwi up a little. It's not much of a little.
You got Aussies up 23, Kiwis up 17, but comparatively, I mean, you look at this
Sterling
pound.
down 82 right now.
Yeah, it just keeps dropping here. Obviously, here's last night, and we're looking
Right.
at a short-term chart.
And everything held in pretty much right when,
Super flat.
right. London comes in about 2 o'clock our time, so 3 o'clock our time. So you actually saw Euro, Canada, and Aussie were all positive on the day. Euro and Canada were positive on the day. Not late last night, 7, 8 o'clock, when China comes in, Japan comes in.
Right around here.
Yeah, they staged a little bit of a rally off the lows. They put it on on Tuesday, end of the year.
Yeah, throughout Europe here,
Again,
it's
same
been
story,
a bloodbath.
different day.
Yeah.
It really is. The pounding comes frequently, and the bounces are really not there that often.
And now we'll get into the daily chart and take a look here because, yeah, this pound has held in stronger than a lot of the pieces, Pete, especially when you talk about 126, 125, or where they are currently.
Versus 103 and a half for Euro, 126 held in really well. And obviously, we're well off the 134 highs we put in October. But we were at 134, we were back to 112 and a half, 113 in Euro. So proportionally, the last leg of the stool that wasn't giving ground is now giving a little bit of ground.
Yeah,
so.
do you feel like this is, I mean, if you take the U.S. dollar piece out of all the currency story for 2024, especially leading into the end of the year where you're seeing commodity currencies getting absolutely annihilated. Right. You're seeing yen weakness. You're seeing Swiss franc weakness. And you're seing euro getting weaker, but not as bad as some of those other markets.
It's falling less at a slower rate than everything else.
And this pound, obviously, you know, in those last few months of the year, the trip from 134 down to 126 is downside. That's a bearish market for the last 3 months of the year here. But now to start the year off almost 100 points and moving close to 124, and these lows here compared to that euro down around 104 or 103 or whatever would be closer to 120 in that range.
Right.
Do you see outside of that U.S. dollar, is this a little bit of shifting the strength from where it was in the pound maybe to these commodity currencies to start the year? Or is there anything to be made for the non-dollar crosses? Because you are seeing Aussie, Kiwi, Canada, not only holding in a little bit, but a little bit of a rally here to start the year, whereas the pound is getting hammered for, I'm not exactly sure what reason.
No, and again, we had weak Chinese PMI numbers last night, and commodity currencies still held up fairly well into that. albeit at lower levels. I just think it seems like they're going after, and again, the first couple of days will be interesting here because you can see some fits and starts both in U.S. equities, both in the dollar, where it'll run one way, kind of turn, run back, and then run again. So you can't argue that. I mean, the dollar was bid pretty much across the board at the end of the year. That end of the year flow was buying dollars right up to the end of the day. Was that just so? Sometimes you look at that. The best you got out of that, if you really were patient and waited for the end of the day, was a 30, 40 point bounce to sell against last night. If you're going to work on that tight a range, yeah. But you're certainly seeing some of the ground come out from some of these right now. So
and let's go back actually and take a look at this end of the year move because we talked about it, and here we are Tuesday morning going into when we closed here Tuesday late afternoon, and we talked about that 10 a.m. move that you love trading the month end. Here obviously it's month end and year end. The FX close around 10 a.m. Central, 11 Eastern. In Europe,
and we saw it play through
a big move here, a little bit of a rally, and then a huge sell-off. And then, like you said, there was a little bounce if you were able to time it well. If you were fading this move, there was a 10-point bounce here the last couple hours of the day. But this was a tough one. It was dollar. The story in 2024, Pete, was dollar strength going into the end of the year, the last few months, and then really dollar strength to end the year. And you're seeing a little bit of a bounce here in this Aussie to start the year, but right there at the lows at 62 cents. The question for me becomes, looking at this this pound that's been out of all the major currencies against dollar, the outperformer. Is it going to be continued dollar strength, and now this piece is going to give up some ground because there's plenty of ground to go below 125.
Right. So, and absolutely. And we can take a look at Euro Sterling because I think that will show us a little bit of, we talk about the relationship of the pairs. One of the great things about Spot FX is you don't have to build them by buying one thing and selling another. There is a product that lets you do that. So,
I mean, this is, it's not lower than I would have expected, but it's a pretty beat up market. And this is something that you look at. You and I were talking about metals a little bit before we came on the show. And of course, you can say for any given period, metals are up or metals are down. Or here, currencies against the dollar are up or currencies are down. And obviously the last few months have been a really robust dollar bull market, and currencies have been getting hammered. But when you put them against each other, you start to tell a little bit of a different story. And again, this tells you with the euro sterling market being until today's move well below 83 cents and really at its lows for the last handful of months of price action, tells you again that this pound has been one of the last bright, shiny spots of a non-dollar Forex market.
Right. Yeah, and you're absolutely right. So it'll be interesting to see, does cable release from a little bit of outperformance and catch up to the downside, or do we see the others bounce? We're not seeing any. Again, it's awfully early, and I think you need to be mindful of you're going to get a couple of. We're just seeing U.S. equities get a real bid tone into in the last 2 hours, running into the U.S. Open. Now, it's giving back some ground as we speak, but we're going to see everything kind of be a little today, tomorrow, kind of try to find a direction. So you'll see a little bit of, we could see a little bit of dollar strength, and then it turn get euro get a bid, but I think you still have to look at from a constructive tape action. This is not trading well. wasn't able to hold on to last night's bounce. We're going into the bulk of the U.S. day right on the lows. It's not a great setup. The only thing you can say about this right now is it's cheap.
Yeah.
So will they go through and test 103? It'll be interesting to see if they do, or if, because last night we had equities appreciably lower. SPOOs and NASDAQ were appreciably lower. Dollar really didn't move. Now we have U.S. equities. I think NASDAQ's up 200 euros. SPOOs are up 50 or 60. Dollar's a little bit stronger, not that much stronger though. So I think you have to be a little bit patient here to check out and see what you want to do. I think we'll both argue the cheapest things in terms of proportion are Kiwi and Aussie and Canada. Canada unrelenting. We're seeing and this is interesting. We're seeing a bounce in Aussie and
actually,
Kiwi.
yeah, we're not
a great
seeing
one,
Canada.
but
Yeah.
Canada is again dollar Canada is still strong. Canada the weakest again. Aussie Canada the cross is again getting pushed out to levels.
And
so,
and maybe we can end with this a little bit of a game here, which is taking a look at how historic the price extremes are in these markets relative to the U.S. dollar. Because we have dollar CAD up here, and you're about to see that it's a little bit of a crazy story. But going back to the pound, you can see, okay, it's getting hammered here to start the year. I mean, right now they're going to trade through these lows again, off 100 points to start the year, looking at 124. But 124 is really the low for sterling going back to the spring of 2024. And they've been lower here as recently as a little over a year ago. And you go back further in time, and obviously we had this run down to 105, 110. Right. It was a short-term shot down to that 105, 110 area, but not nearly as crazy a price extreme as you'll see in some of these other markets. Euro down at 103 is starting to look a little wild, because you go back the last year or so of price action, Pete.
There's nothing, again, from a technician standpoint, you don't have any support level. So that's where you're going to have to say, okay, if it gets below this level, well, what's that level? Right now, if you're playing this from the contrarian long side, you're going to have to attach a comfortable pip value to it. And yes, 103.20 seems cheap. 102.80 seems cheaper, but you're going to have to, you're going to have to be mechanical around your choices here of managing, because there's, from a historical perspective, there's not a lot.
We're in no man's land. Yeah,
we're in no man's land.
There's no case to be made for, because down here at 105, you could have said, oh, we've bounced off of this 105. And there was some nice back and forth here. Down here at 103, it's really tough, and you go back even further in time. And what you really have is that same spot where sterling got down to 105, 110 range, where we traded below parity. Now, we traded below parity for a few weeks. So again, if you're looking to buy 103.20s and you can't hold for a move that's down to parity or anything like that, then yeah, having orders in or a strategy for point. Okay, I'm only taking 20, 30, 40, whatever points of loss and profit out of this trade. Otherwise, if you can hold for that, if you're making the contrarian play and you can hold for that bigger move, then yeah, it can be a swing trade or a longer term trade. Absolutely, and you make a great point and that's one of the great things of Spot FX is you're not trapped to it's this size or not at all. Yeah. You can, if you want to give this trade, and again, I don't want to pick, I'm a 40 pip scalper. I like to trade 40 pip flips here. That's you, Pete. Yes. If you want to say that I really think these euros are going to bounce, but I don't know from where, what can you do? Well, first thing you do is you cut your size in half, or even maybe down to a quarter, and say, okay, I'm going to give it 80 pips of room. Now that's setting both expectations. You're going to give yourself a little bit more room to be right, but you're going to set a comfortable loss metric. And as you said, a different time frame. I'm not an intraday trader. That's going to be a little bit longer term play. But you don't just say I'm going to stick with the same unit size.
give it more rope just because I think it's cheap.
Yeah.
Stay mechanical around your ideas so you can always come back in and trade with, without a jaded mindset on this. So one way to do that is to take the flexibility that this gives you of trading different sizes, and be able to do that. This will be an interesting one to see because right now we're looking at it's going into 7 o'clock right now. U.S. traders are in. They're trading. We're going through the bulk of, it's noon in London right now. We're not seeing much dollar selling at all. We're seeing things like the pound really get beat up. It'll be interesting to see if we get to an inflection point and we get a little bit of a turn or it continues. But this first week, today, tomorrow, and then next week will be really interesting in FX markets. My takeaway is be disciplined, set your targets, set your sizes to a comfortable spot, and be mindful that we're at levels we haven't seen in a while. The markets can get a little bit more elastic, but that just provides us more opportunity.
Yeah, I couldn't agree with you more that these first couple of weeks will be super interesting because to end the last week of the year and now the first week of this year, it is looking like more dollar strength when a lot of the contrarians out there would have been hoping for or would have been thinking for some dollar reprieve. Right. And again, I can't help but look at go look at historical data on TastyFX or wherever for the year end and start of the year for the last 2 years. We've seen these markets trend in one direction and then turn, which isn't saying that this has to turn here and it doesn't have to turn from 103, but it's been really interesting, these trends around year end and start of the year in FX markets.
I'm in no way saying don't discount or ignore the fact that we're at this point in time. It's usually a really interesting point of time for FX traders. Yeah. So, and as we walk through, there's lots to choose from right now. So,
just to put a bow on this conversation of how crazy are the extremes. Pound not that crazy. Euro getting wilder by the second as they approach 103.
Canada.
We end here with the commodity currencies, Pete.
We're getting awfully close to no man's land.
I would contend here above 142, 143, wherever. We're in no man's land.
Yeah, that was the top of the pandemic spike there.
This is 10 years of data almost, right. Pete, and we have not traded in here for more than a couple of days, and so. Will be really interesting is this, like that gold move of the last couple of years, right. Where we bounced around 21, 22, 2300, and then they just moved through it, and it's like, all right, we're not in that kind of range anymore. Are we going to see some reversion here back to historical normalcy, or is the 140 to 150 range that new range for this Canadian dollar? No relief whatsoever to start the year as you're seeing Aussie, Kiwi, a little bit of a bounce. Dollar CAD up another 30 points and well above 144. Right.
Good stuff. It'll be a fun week to watch. We'll see how this all shakes out. So coming up next is Tom Sosnoff, Tony Batista, and Vanessa Logan. Have a great day. We'll see you back here tomorrow.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy New Year's to you both. Welcome to the show.
I'm back.
You are. How are you, my dear?
Mandatory vacation.
Did you have fun? Did you have fun vacation? Did you?
I did. I got to see my family. I had to see my family, which is nice. Which
Good. Oh, you're gonna.
Unlike Tom, I enjoy my family.
Understood. Yes, I tried. Yes. Stick around a little bit.
But then, kind of like I was living my trad wife fantasies, and so I was making meals, I was cooking, I was cleaning, and then
what life?
Trad wife.
What's a trad wife?
You don't know? You don't follow trad wives on TikTok? It's like all the rage, whatever. Anyway,
I don't want a Chinese devil.
Just like my domestic goddess fantasy. And then I just got super bored.
You need a man around. That's why.
No. I was just like, my house is clean. I'm making meals from scratch. I've accomplished all that I need to accomplish, and then I just got
made all the meals you wanted to make. Tried all the food you wanted to try.
I made burnt ends chili yesterday.
Very nice.
I made turkey chili.
Yeah, it's not chili.
It is. It's what I eat.
Anything with turkey in it doesn't count.
It's good.
I got to give Saz this one. I mean, we feed turkey to the dogs. I mean,
you can't say that.
I brought in the burnt end chili too because Scott's never really had it, so I brought it in.
Good done. Very nice.
Oh, today, so he can try it?
Yes.
He's going to try it live on the show?
Oh, we're going to film that. No, we'll put it up on social, yeah.
It's not hot, so yeah.
We have a microwave. Is it okay if we microwave it, or will it ruin it?
Whatever you want with it, yes.
It's very rare when you get an outbreak that you get to film the origin of it.
Patient zero.
Right?
Or the actual kill. The homicide in action.
Yes.
Yeah.
Wow. Okay.
Yeah.
I mean, so wait, do you put beans in your chili? Because I put beans in my chili.
I do.
Okay.
I don't put a ton of beans in, but
it adds protein.
there's tons of protein. I got enough meat in there to choke. But burnt ends and lots of different kinds of. My chilies are very. My chili is very tomato heavy.
Okay. I use diced tomatoes, and then I use a tomato sauce, and then I use chicken broth.
I don't use any chicken broth or tomato sauce. I use diced tomatoes.
So it's not tomato heavy then? Because I'll use diced tomatoes, tomato sauce, tomato paste, and then like a chipotle sort of tomato bouillon.
No, I don't do that.
I sit down with my bowl and my spoon. That's how I make my chili. I just wait for it to be served to me.
I use lots of different kinds of peppers.
Sure. Because you nuke your taste buds. There's no nuance there.
I have lots of different peppers there.
There's no layers. It's
right. Yeah. It's all just like.
I have 4 or 5 different kinds of peppers, and then and lots of probably too much chili powder.
Little detonation. Hey, let's play a game like the kids play on social. Hold your hands up. Hold your hands up. Put a finger down if you are a grandpa.
Oh.
Put a finger down if you are What?
Hey, congratulations.
Congratulations. Your daughter, Case, and her husband had a very
They haven't told everybody yet.
They had a baby boy.
Yesterday,
a New Year's Day baby.
yes, very exciting.
Oh, I can't believe you're a grandpa.
I know. Very exciting and
new things for 2025.
Very good way to kick off 2025.
And mom's doing okay?
She's great. She's up, barking orders. And
you talking about his wife?
Well, that's grandma or grandma. What does your wife want to be called? She does not want to be called grandma.
I don't know.
You should, she wants to be called something like Mother, the sequel.
I don't think she cares. She's pretty happy.
Or like Gigi. Gigi is very popular with wealthy ladies.
Yeah, I don't think she cares.
Yeah, okay.
But yeah, she was very happy, and yeah, New Year's Day baby. We weren't expecting it.
That's awesome.
Well, that's good.
Yeah.
And were you helpful or were you yourself?
Oh, it was pretty funny. We were out on New Year's Eve. We were just having dinner, and we had both. Corinne forgot her phone, and my phone was turned off. And,
oh, great! The classic boomers. And I can't get a hold of my parents either.
And Case was, her water broke, and so then she's calling us to drop off the dogs and to from the hospital. She's like, I'm trying to reach you two idiots for 2 hours.
Didn't you go over this? You guys are part of the chain. There's part of a plan.
Well, I just talked to her a couple hours earlier, and it was like, Do
you not know how women can just have their water break?
Yeah.
I'm sorry.
You didn't know time to talk.
That it conflicted with your dinner schedule.
You're the first baby I know of Generation Beta.
Yes, your baby is Generation Beta.
Beta?
Yes,
Beta.
Vinny is Generation Alpha. Mm-hmm. Vinny's Generation Alpha.
2025 is Generation Beta.
Yep, yes. The world a generation which will be expected to live in a world dominated by advanced artificial intelligence, quantum computing, which you mentioned last week, and further integration of technology.
I think it's from this year and then the next 15 years. So.
Yeah.
Yeah.
25 to 39.
First of the beta babies.
Yeah. Wow.
All right.
Very cool.
So yeah, it was cool. We were at the hospital yesterday. It was great, and then it was awesome.
I can't believe you're a grandpa.
Yeah.
I can't believe you're a grandpa, and I also can't believe that I know you cleaned up your account from 2024 to 2025. But yet there are some outstanding debts that you haven't paid in 2024. Would you like to clear them up now?
Back to you.
You want to pay Francis his money?
What did you do?
Oh, yes.
It's cheaper to just shut him up. It's cheaper to just shut him up.
You could go right now and take you 2 minutes. You weren't that busy. You were out at dinner.
I was a little busy yesterday. I wasn't out there yesterday.
Okay. Well, you watched the game.
I did.
Okay, so you weren't that busy.
I watched the second half of the game, and it was actually a really...
it was the best bowl game I've seen in a long time.
Wait, which game?
The Arizona State game.
Yeah. I think, was it the first time they gave the MVP to the person on the losing team?
Who got the MVP? Scataboo?
Yeah. I'd just like to say Scataboo.
It's a good name.
Yeah.
Yeah, it's a good name. It was a great game, and it was great.
My Taiwanese source one of the baby came out with a silver spoon in its mouth.
Yes.
Yes, it did. It did.
2 silver spoons.
Two. Beautiful.
That trust fund already locked and loaded. That kid's already worth more than I am.
Generation Trustafarian.
Yeah, I know. That's fine.
Forget about beta.
That's fine. No.
So you're not going to pay? Francis is wondering.
Oh, you shut up.
He didn't. 2025 got the first shut up first day.
So wait, why aren't you handing out cigars?
Yeah,
Or
cigars,
why aren't you,
cigarettes.
like, where's my nice bourbon or something? Like, you gotta do something.
I didn't even.
I got nothing over here, Bat.
I got nothing too.
I got caught by surprise yesterday.
No, I will say thank you. There's someone who sends us candy from like a small batch confectioner in Ohio, and we got that box. Yes, thank you very
Phil
much.
does it every year. He's been
Every
doing it
year,
for like a dozen
clockwork.
years. Phil's the best.
It's so.
And did you notice who they were addressed to?
He's the best.
They were addressed to Tony Batista. They were all open already. I didn't open any.
You know that's a federal offense.
That's exactly what I told him. Did I not tell you that this morning when you walked in?
Josh opened it. I don't even.
You're going to the big house, Grandpa.
That's right. That's right. That beta kid will be visiting you in the joint.
In the pokey. No, but yes, sincere thanks to Phil. That guy is the best. Did you take Vinny to the Crosstown not the Crosstown Classic? To the Winter Classic?
We went the night before.
Oh, to see the whole setup and everything?
No.
You
We didn't go.
stayed on
No, we
it,
went
or?
to the Blackhawk game the night before.
I have to tell you that the intro to that game was freaking great.
It was awesome.
They took the train.
They took the train.
Yeah.
I absolutely loved
How hilarious that they
Every
took
girl in my
this-
house was like thinking about, ooh, public transportation looking a little better now.
Yeah, the CTA. It was a funny video. It was awesome.
It was great. They took the train.
They played like crap. That was the best part of the whole game was them getting there.
No, the best part of the game was them getting there, the bagpipes, and coming into the stadium. And then they had Smashing Pumpkins kick it off.
Yeah.
It was great.
Chance the Rapper, who went to my kid's school, by the way.
Yeah. I mean, Chicago puts on a good show and beautiful. Like the aesthetics, it looks.
And it was
so
and it was
cool.
nasty. I mean, it was raining.
40,000
It
plus
wasn't-
people.
I mean, it didn't. It stopped raining for the game.
It was
Thank
cold
goodness.
and wet.
Were playing. It was raining.
Yeah.
Yeah.
And then they had. I'm glad they still brought out.
Horrible game though, man.
Even Connor Bedard, he's like, I know. He said, "quote." He's like, I know how much people paid to be in those seats and for those tickets. He's like, I'm sorry we couldn't have given them a better game.
Yeah.
He said we got dog walked out there.
I didn't watch the game.
Oh, it was bad. It was a good fight.
Donnie went.
What's that?
Donnie went. I'm gonna ask him what it was like. I just don't know where like the hard thing is you don't know where your seat I don't know how the setup was.
No, because it's all
I mean, there was nothing around the ice. I mean, like
you really
were,
can't in a baseball stadium.
Yeah.
You go for the show.
Yes.
Yeah.
But it was cool. The opening was great.
Yeah.
Awesome.
Wow.
Yeah. And then USA Canada junior high. It was great. USA beat Canada. One of the rare times. Beautiful. Very.
At Wrigley, they were.
No,
this is, okay.
Wrigley.
Okay.
No.
Okay, I can't. I'm trying to follow along.
Yeah.
Okay, I'm just
good hockey is all I'm saying.
I'm just trying to follow.
Yeah, we don't have any 14, 15-year-old hockey, so we had to talk about.
I'm going to the game on Sunday.
My kid doesn't have a game this Sunday.
Not your kid's game.
Oh.
The Hawks game.
Real hockey.
Oh, well,
Hawks
you should
game?
go to my kid's game then. You ain't gonna watch it for the Hawks.
I didn't get to check in with you because I was on vacation. But did you guys watch the Christmas games on Netflix?
Yes.
See, I did too. Like it set all the records.
Were there any good ones?
No.
The Chiefs Steelers game was good.
No, it wasn't.
Yes, okay.
Oh, the Chiefs killed them.
Yeah, okay. Well, but it was a dominant performance.
There was one
clinching home field advantage. Now my Chiefs, they get to rest.
There was one good game the whole weekend. It was the Cincinnati game.
Oh, the Bengals.
Yeah, that was a great game.
Yeah.
It wasn't the Bears.
For sure, wasn't the Bears. Bears. Well, I don't even know if anybody's going to play this.
No, it just ended with the chance of sell the team. I love Bears fans.
I'm a little upset that the Eagles are. I mean, I guess I'm not for the Eagles, but they're not going to play Saquon Barkley.
Yeah, he's not going to beat the record
against the Giants. He's not playing.
Yeah. But that's. I mean, what's the call? Like that's the right call.
It's the right call for the organization because they're the top seed.
Yeah.
I mean, he's not bitching about it, but
No, he's not. I mean, he said he wanted to beat the record.
But he wanted to play.
Yeah.
What were the odds, though, maybe? Because obviously it's a QB-driven league. No. What were the odds that Saquon got, like, MVP? Because it's normal. Because it never... Okay, well, he was in the mix.
He wasn't in the mix.
He was in the mix.
When he got traded, and he was not in the mix for MVP. His odds would have probably been 200 or 300 to 1.
Yeah, well.
I don't even know if he's still going to get it. I mean,
that's what I'm saying. He's in the mix.
It could be Joe Burrow. It could be probably Saquon.
Oh, what? That helped me.
Because he just said it. What you're trying to listen to what he says. Don't be Josh Allen. Listen to what he's thinking. 2025 is going to be no different than 2024.
Yeah.
Josh Allen, Joe Burrow, Saquon.
Yeah.
That kid from the Vikings who's a crappy quarterback, probably him be in the running.
Sam Darnold's not in the mix.
I know.
Can I just tell you, I love all the TikTok videos of the iconic pop culture references of all of the Minnesota Vikings touchdown celebrations. Like, it has been a wide array. So people have been syncing up to what they've been referencing, and it's been A+. I love the choreography. I love they practice, they choreograph, because they did one from High School Musical. We're all in this together.
They're having fun.
Yeah, it's great. I love it.
They're definitely having fun.
I want more of that. That's what I want. But you're going to get more of us today. We are back, and Happy New Year to you, Tasty Nation. We hope 2025 is the best ever, and it can be the best ever by you winning Tom's money. You still have time today and tomorrow to submit for Guess the Market. How close was it on New Year's Eve for the winner?
He was about...
I didn't watch.
5... The winner was about $5.
Yeah,
that's amazing.
4.5.
So he like a whole year out, 366 days, whatever, a whole year out.
But believe it or not, in the 5 years we've been doing this,
yes,
that was the furthest away.
Wow.
That anybody's. Who won again? Bill from Rochester. Yeah, Bill from Rochester.
Yeah.
Bill from Rochester won 58, 76, 54, and I think it was. I think the index finished
81 or something like that.
So he was about 4.5 points away. But the funny
little lesson there for everybody at 58.90, make it 58.89.
Yeah, Nikki tweeted that out. He's like, use the decimals, use all the digits. That's a good tip.
But this was still the furthest away in the 5 years we've been doing it.
Yes.
It's the furthest away. Usually the winner's been within like $1.
Yeah, we'd have two fighting it out or something.
Yeah, but this has been in like a crazy year. Like,
yes,
in the market.
No.
Like, I'm just, yeah. Anyway, we would love...
A little better than we did.
We would love for you to win, Tom. Did you put your guess in yet? Are you going to reveal?
Yeah.
Oh, you did reveal what yours were?
Not yet.
Oh, okay.
MVP will be Lamar Jackson, my Taiwanese sources say. It's ridiculous I haven't even mentioned him.
Lamar Jackson?
Yep.
That is the dumbest thing I've heard. Zero chance it's Lamar Jackson. Zero chance.
He is having a banner year, my man.
You can have,
he's having a good year, but it's not going to be Lamar.
Their schedule's just been brutal, but you're right. Like, the Ravens are good. It's just
Lamar Jackson, I'd say he's the 4th or 5th pick.
Wow. My Taiwanese sources want to know if you watch football.
tastylive.com/guess if you want to throw in your guess.
I'd say he's the third top. I think he's the third quarterback.
Headed your way today on our schedule. I don't know, I'm a little rusty. Just bear with me. Although I did check, and we do have Diet Coke. I told my mom on the phone last night, I'm like, Mom, look, I'm going to be honest with you. If there's not Diet Coke, I'm probably going to stab somebody. She's like, baby, don't stab nobody. And I'm like, I'm not making any promises.
Diet Coke in our machine?
Yeah, it's been out. No, it's been out. Like, the lady has to come and refill it with the special sauce. And like during Christmas, in the lead up to Christmas, it'd been out.
Yeah, we were out.
Trust me, I know.
We were out of Diet Dr. Pepper.
Yeah. Okay. See, so that affects you. So then, yeah. But we're good. We are stocked up.
You weren't out of water. That's what I drink.
We are stocked up.
Fine.
I am thriving. I am back. And also someone else pointed out, they're like, resolutions don't always have to be positive. Like, you could just vow to stay petty, Bat. You're very
I'm glad you looked at me when you said that.
You could just vow.
I'm going to stay vindictive.
Yeah.
I vow to stay. Yeah. I like this. This is the first New Year's resolution that I think I'm going to be able to keep, and I actually enjoy. That's correct.
Yeah, I already messed up my New Year's resolution.
What was yours?
I don't know, but I didn't start off the year good.
You could start all over. But hey, headed your way at the top of the 8 o'clock hour. The best way to ring in the new year is with trades.
What is your New Year's resolution? You probably
my New Year's resolution. I don't really make resolutions. I'm doing more of like a bingo card style thing where I have.
You're gonna be as snarky as you were in 2024.
Yes,
or more.
sassy as ever. But I do have like a bingo card of like things I want to do or goals, and then hopefully I can do my bingo card. Although I will tell you this, me and every other woman I know was eating 12 grapes underneath my kitchen table at midnight.
Yeah, what was with that? What was with that?
Do you know how hard it is to eat 12 grapes in a minute? Because you have to do it between midnight and 12:01. And I was like, oh my God, I'm going to throw up. No, it's a Spanish tradition, and it's supposed to bring you good luck in life and love. I said in love for the new year. So you eat one grape for each month of the new year. It's actually started by Spanish grape growers who just needed to get rid of a bunch of grapes. But I am embracing the woo-woo. I am embracing the universe. So I ate 12 grapes under my table. So what? Treats from the research team at 8 o'clock. Victor Jones. Woo, talk about starting the year off strong.
Yeah.
It's been 2025 over in Singapore, but Victor's going to clock in. What are you talking about with Victor today?
No idea.
No idea. It's going to be off the rails already. I already just see that there. And then at 9 o'clock, I got a market measure, the best of the zero DTEs. We've been working on our whole zero DTE series all of last year, and we're going to talk about the best of the zero DTEs.
Yes, we did a couple of best ofs. We had one left because we were supposed to do it yesterday, but we were closed.
Yes. Okay. And then live from the trade desk, I hope he had a very prosperous New Year's celebration. And that's my favorite person, Scott Sheridan. Scott will be in talking about all the top trending tickers over at Tasty Trade. And that is our run of show. I know you missed it. You want your daily dose?
Sure.
Maybe it's my theme music. Let's go.
Our leading story, breaking news,
across the wire.
leading story, top story, jump in.
Today's headline.
This just in. Breaking news.
All right, everybody. Today is a thrilling Thursday. It's January the 2nd. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. I know you missed me. Are you ready for the news?
Ready for the news.
Hey, do you want to know the top 5 stocks of the S&P 500 for 2024? Can you guess?
Top 5 stocks?
Yes. What was the best performing stock in the S&P 500 last year?
Either NVIDIA or Palantir.
What do you say, Matt?
Palantir.
Palantir, yes, up 340%.
Yeah.
A company, VST Vistra Power, was up 258%. NVIDIA came in at number 3, up 171%. United Airlines, your girls got status. UAL up 135%. That's actually kind of a shock there. And then Exxon, they do law enforcement. They make tasers, stuff like that. Up 130%.
I thought Taser made Taser.
Well, they make also the
Remember
body
when Taser
cameras
first came
and
out?
electric shock devices. Sorry,
This symbol was like TASR.
I misspoke. Electric shock devices. I'm using like Xerox or Kleenex. I'm using the right.
Taser, when it originally came out, had a symbol that was
right.
I think
Yes.
it was TASR, but I'm not 100% sure.
Right. Yes.
And I want to say it was in the 90s, late 90s, maybe 2000.
Kind of. It was like a meme stock before meme stocks.
Yeah.
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 It was thinly traded, but yes, I don't.
I wasn't.
I can't find it.
Yeah, I don't remember what year it was, but I kind of remember we were on our old trade desk back on off the floor, and we were trading Taser, and it was like, I don't remember what year it was. I want to say 1998, 1999, somewhere around there.
Of the 5, what do you still have existing positions in, like United, NVIDIA, Palantir, or none?
Yeah, those 3.
Okay.
United, NVIDIA, and Palantir.
Okay.
Palantir up another 50, 60 cents this morning.
Ooh. Hey, do you want to guess the 5 worst performing stocks in the S&P 500?
Yes.
Okay, let's go. I love the enthusiasm for 2025. I love I miss this.
Well, I would say 2. I have 2 of the 5.
Okay.
That I'm long right now.
Okay, let's go.
Intel and Moderna.
Yes, boom, yeah, you got it. Intel coming in at number 2, down 60%.
You don't win like a $50 or something.
No, he does. Shh, we're getting along.
Intel, Moderna, I'd say that's the 2.
Intel's number 2, Moderna's number 3. Moderna down 58%. You're doing good. The other ones
I don't know the other one.
You don't. The first one though is Chicago-based. You don't really trade it, but that's Walgreens Boots Alliance.
Oh, I had a position I closed out on.
Okay.
I'm all confused by dates.
What day is it? What year is it?
Because it's Thursday. On Tuesday, I closed out
Okay.
I didn't want to take it into the new year.
Well, Walgreens Boots Alliance was down 64%, kind of seeing a theme, some healthcare stocks there. But you're right. Then followed by Intel, then Moderna, and then a company called Celanese, CE, down 55%. They make paints and coatings. No idea. And then personal favorite of mine, Estee Lauder. Actually wear their double wear foundation.
Don't
I'm a
trade
chestnut. The cosmetics and beauty giant down 49%. Hey, this is fun. Do you want to guess the 5 best performing stocks in the Dow? A little bit easier because there's only 30.
Yeah, I never traded the Dow.
Dow?
In the Dow. How now, Dow?
I'd say Meta, Microsoft, in the Dow. Meta, Microsoft, Apple, AVGO. Is that in the Dow?
I'm just going to let you guess.
IBM.
All right, here's what
Meta,
I'm doing.
Microsoft, Apple, I'd say.
Okay. No, you're kind of all over the place, but we're gonna focus at the top here. Okay, so NVIDIA joined the Dow November 8th.
Oh, I forgot NVIDIA was.
Right, yeah. Well, that's okay. I mean, it's just literally, it was I don't even know what day it is.
Yeah.
But NVIDIA joined the Dow November 8th, replacing Intel. So NVIDIA was actually the Dow's top performer.
Yeah, I didn't even remember.
I know. So I don't know how they calculate that because it was like not until
That's
November.
kind of a scam when they could put you in
Kind of a
November,
scam.
and then you're the
Not a
top performer.
No doubt. No doubt.
It's not a scam.
We'll just take the top performing stock and put it in there.
Number 2.
Making it Dow great again.
Number 2, Walmart. Nation's largest retailer, Walmart,
Yeah,
up 72%.
I wouldn't have guessed.
So, okay, the Bentonville, Arkansas company is one of some analysts' top picks for 2025. They're number 3, American Express.
Don't trade it.
Okay, I know you don't, but it's still the number.
Don't care. It's dead to me.
Okay, I know that it's dead to you. Number 4, Goldman Sachs.
Oh, yeah.
Wouldn't have guessed that.
I know, this is why this is fun. They were up 48%, and then coming in at number 5, Amazon at 44%.
I didn't even know it was in the Dow.
Yeah, there you go.
Yep.
Maybe you should do some research into some things. And then the last one, do you want to guess the worst performing? What were the dogs of the Dow? And then I will move on from...
Well,
Intel's in the Dow,
Well, it can't be Intel because it took it out. So the dogs of the Dow. Boeing.
Okay. Yeah.
I'm going to say Boeing. So I don't even really know what's in the Dow anymore.
I know I don't.
You're right. Boeing's in there, but you're right. We're gonna start at the top. And
That's the only one I can think of.
Nike maybe or something.
Yes.
In there.
Yes, there you go. Johnson & Johnson.
Oh, I never got that.
That's like number 5. They were down because they had litigation, a bunch of other deals, little J&J. Okay, now you don't care about that. Merck.
Yeah, I wouldn't have guessed that.
Merck down 9%, because kind of like on that Moderna kind of Walgreens Boots Alliance, not a good year. Amgen down 10%.
They're all the same kind of group. Yeah,
Right, I know.
I wouldn't have guessed any of those.
Nike bat, very, very insightful. Nike down 30%. And the biggest dog of the Dow, Boeing.
That one I got.
Okay, good job. Boeing ending the year down
Hey, you have a position in it.
32%. Hey, the battered bond market could start 2025 facing some difficult issues around debt. I just want to use this headline to springboard to talk about treasuries in general and what we can maybe anticipate for the first quarter, at least, in bonds.
I mean, we're long them.
Bonds traded under 114 last night, 113.11 on the low. They're 114.15, about 4 ticks from the highs, up 20 ticks so far.
Ooh. All right. So you're just how long do you think you're going to be long bonds?
A whole year.
Till 2030?
Yeah. Or until I make.
Or until they rally.
Or until they rally.
Hey, U.S. natural gas demand from LNG plants hit a record on Tuesday, the last day of the year. U.S. natty gas demand for liquid natural gas plants is forecasted to rise next year. Let's talk about natural gas.
Natural gas has been rising, 3.64. We haven't seen these kind of levels since, I guess, June or July of last year, 2024. Basically unchanged this morning.
Do you have a natty gas position?
I do not.
I do.
Oh, you do?
Yeah.
Okay.
And today it should be fine. Natty gas is unchanged. Yeah, we're fine.
What about oil? Throw that in there real fast.
No oil position.
Okay.
Oil IV rank of 17, trading 72.63, which is up 90 cents. That's a 1% move, a little over for oil. It's had a good 5-day run going from around under 70 to about 72 and change.
Okay. Hey, I did not know this, but why would the internet lie to me? Bitcoin was the best investment of 2024. Of course, it had its volatility, but if you look at Bitcoin relative to the NASDAQ, gold, S&P 500, Dow, Russell, oil, TLT, what else you could throw in there? These are the numbers. Bitcoin is the best investment of 2024.
Yeah, that's why I hate Bitcoin for 2025. I do.
So what does this do for your portfolio allocation? Like what are you?
We haven't touched our Bitcoin position.
Okay.
I mean, I'm not going to get out, but I'm going to lighten up. I've already lightened. You know what? I take that back.
Are you okay?
I'm going to just keep what we have on a Bitcoin because it's too small. I don't even care. We do have a much bigger ETH position, and I'm probably going to lighten up in that a little bit. But again, I don't really.
Well, you're up $3,500 more per coin this year than you were last year because it's up $3,500 right now. 97.6 after trading, let's just call it 93 or so.
Yeah.
How is Coinbase doing to start the year?
They killed it, but it's up today, but they killed it.
It is up today. 257 and change on the bid puts it up around
$9.
Yeah.
What do you want Bitcoin to? What level do you want it to?
Mid-70s would be perfect for me. 60s or 70s, 60,000, 70,000.
Okay. All right.
In that range.
That's quite a fall. All right.
Yeah. Don't forget this Sunday we're doing. It's filled up, but if you can get on a wait list we're doing everything you wanted to know about crypto, but we're afraid to ask.
Ooh.
Sunday night.
Hosted by Mr. Ryan Grace.
Yeah, it's gonna be fun.
Yes, that will be fun.
Snacks and drinks provided by Bad Coffee.
And if you can't come to Chicago, because, who doesn't want to visit Chicago in January? You can sign up.
This January's been pretty good. Today's going to be cold.
We're getting a polar vortex, yeah. But you can sign up for the free live stream, though, for Ryan's talk.
Yeah, it's January 23rd.
First, I think. Something.
Fine.
Whatever. Just sign up. Hey, with a pro-crypto administration just around the corner, venture capital looks to surge in the year ahead. In 2024, VC funding in crypto increased 28% to hit $13.7 billion. Does that number seem low or high to you?
Seems very low.
Oh, okay. Interesting. It does remain modest. Compared to the meteoric rise of crypto.
It seems ridiculously low.
Because I think more people just pivoted to AI sort of VC investing.
It's very hard, actually, because we're an investor in a crypto company.
Zero Hash.
Yeah, our company is invested in a crypto company, and it is very hard to raise money right now in the crypto space. The companies that survived, I think.
You know what? That's probably a good thing, because when money's readily available and free, it's too much.
The companies that survived are all now pretty good in crypto. Mm-hmm. At least I think they are. I just don't. Yeah, I think the companies that survived are pretty good. I just don't think it's easy to raise money if you're a crypto firm.
All right. Well, hopefully that'll change in the year ahead. Hey, 12 U.S. billionaires, 12. That's it, 12. The amount that you need for a jury gained almost $1 trillion in wealth in 2024 as the stock market delivered another year of massive returns. That is totally normal. Elon Musk's wealth increased $213 billion. So just the amount that his wealth just increased, not his total, what? Mark Zuckerberg and Jensen Huang of NVIDIA also had eye-watering gains in wealth. What does this mean for society at large?
Probably not that good.
That 12 people just generated $1 trillion of wealth?
Probably not that good. You can see the damage it's already creating in political circles. So it's a question of, how much does that extend globally? I think that's
making it great again. What are you talking about?
I think it's going to be a real question going forward globally. I don't think it's just an American problem, but I think it's going to be a problem all over.
I think the bigger issue here is that Jeff Bezos shut down Aspen for his $600 million wedding, and I'm obsessed.
What do you mean you shut down Aspen?
So
basically did.
So you have to have. I'm gonna butcher this, and my dad's gonna be mad, and Pete's gonna be mad, whatever. But you have to have like a special pilot rating to land in Aspen because I guess
sure.
right. Like so I might not be using the exact correct words, but let's say there's only like 100 pilots that have this special Aspen rating or whatever. So Jeff Bezos like utilized like 73 of them or whatever for his way. And so normal people who were just trying to get it, like there weren't enough
normal
planes.
people on a private jet.
Well, yeah, other smaller regional plane, whatever, that were trying to fly into Aspen.
The commercial pilots are different.
No, but they're basically Jeff Bezos issued like a ground stop.
Every private pilot.
Yes.
So anybody who's trying to get into Aspen.
Shortage of private.
Anybody that's trying to get into Aspen on their private jet.
Yes.
So all the Chicago families that back and forth to Aspen cannot.
Please, they ask for privacy in this difficult time.
Well, it could be worse. You could go to Park City and they basically shut down the mountain. Did you see that?
No, I didn't see that. Why? Because of the weather? Or?
No, because the ski patrol's on strike.
Oh, good for them.
No, it's not good for tourists because everybody's there. They can't get on the mountain. They're just, what do you...
Yeah, but you should pay... I thought you're the son of a labor lawyer. Like,
all I'm saying is if you went out there for a vacation, you can't get on... There's nowhere to ski.
Well, too damn bad.
No, that's not
Pay those kids, man. Anyway, the big winners were Bill Gates, Warren Buffett, Thomas Petterfy, Sergey Brin, Larry Page, Michael Dell, Jeff Bezos, Larry Ellison, Jensen Hong, Mark Zuckerberg, the Walton family, and Elon Musk. Congratulations on your riches.
We are so happy for them.
Hey, Silicon Valley's turn of fortune. This is interesting. Intel had its worst year ever, and Broadcom enjoyed record gains. Intel lost 60% of its value in 2024, the biggest drop in its 53 years as a public company. Conversely, Broadcom's stock price more than doubled. What are you keeping your eye on in the chip sector? New year, new chips, new you?
Intel's one of our biggest longs. I think Intel, we're just short a lot of puts. I haven't bought any stock in there yet.
Okay.
But I think you got to buy stock on the first downturn in the market. I think you got to buy stock in Intel. I mean,
you don't have a downturn today.
And then and then you're just selling calls, and then you're just going to sell calls against it, or what? Like, why
Intel's up 20 cents off of its lows. You can't buy it today. It would be a tragedy. You have to wait till it's down 4 cents. Is that what you have to wait? Okay,
Yes.
got it.
Okay, got it.
Okay.
AVGO though,
the market's screaming. Stocks are up $8, $15, $30, and you want me to buy Intel when it's down 4 cents? Is that what you're trying to tell me?
Yes, exactly.
Got it.
AVGO, we're just short.
Sounds a little silly.
What do you think's going to happen in all these chip stocks this year?
I think you got to buy the dogs.
Okay.
And you got to sell the.
So like Intel and AMD, or
AMD is definitely a dog.
Okay.
Intel is for sure a dog. There's a couple of. Let's see. I made a list.
SMCI, is that a dog, or has that had a comeback?
Yeah, but
like Santa, you checked it twice.
SMCI is different because I think there's a potential. That's a potential scam.
What is
SMCI?
SMCI, yes.
I'm worried about that stock. I don't have it right in front of me, but I made a list of like 10 stocks that I thought that we trade that I call them the dogs of the NASDAQ.
Oh, okay.
And
so this would have been some good content.
Talk about being Mr. Obvious.
If you had this together.
You call them the dogs of the NASDAQ. What are they in the NASDAQ?
Yes, the dogs of the NASDAQ. So, but I don't have it in front of me.
I call them the dogs of the NASDAQ.
All right, well, switching gears here, Alibaba is slashing prices on large language models by up to 85% as a Chinese AI rivalry heats up. I just wanted to talk about a larger discussion about China and how you are situated to play China as we start the new year.
Long Alibaba.
Okay.
And I'm long Alibaba and I'm long Baidu. I think.
Now, can people buy Baba? Because it is down 40 cents this morning. is that okay? I mean, trading near its lows, not on its lows of 70 some odd dollars, but 80.
I think you have to be long Alibaba, but not like go crazy. But I think you have to stay long Alibaba all year because it's going to.
Is that a wider saying, like you have to be long China for the whole year? Or?
You have to be long Chinese tech stocks.
Okay.
Because they're grossly undervalued compared to U.S. tech stocks.
Okay.
I don't know about the rest of China, but Alibaba I'm long, but I was long at all last year and it actually worked out. in 2024, but all we did all year was sell puts.
Okay.
Like, I mean, literally sell out of the money puts and do nothing else in there.
All right.
Same thing in Biden. It's not the most liquid stock either. It's like 2.5 to 3 stars, 2 3/4 stars. I would say it's not even a 3-star, but you can just sell puts and leave them. That's what I do all year.
Hey, crazy news in the aviation sector as we were sort of ending last year is just a ton of plane crashes. Boeing shares continue to fall after South Korea is ordering an investigation of the 737-800 plane. Uncertainty surrounds the exact circumstances of the crash, but it did kill 179 of 181 people on board the flight on Sunday. So tragic, not sure what happened with the landing gear there, but there is a wall at the end of the runway and the plane smacked.
Did you see your girl Whitney Cummings on the New Year's? You haven't seen it on TikTok or anything else like that? Oh my God, she did a roast of about 10 minutes where she just went off on everyone. She even went off on Boeing, talking about the drones. She's like, the drones are in the sky. Can we talk about things that we don't talk about on regular TV? And she goes, I can't believe we're not, cut off. And it was live. And she's like, well, the drones are still in the air. Obviously, they weren't made by Boeing. And then she just went on and on and on and on.
Oh, it's too soon, Whitney.
I mean, everything.
But I love you, girl.
I can't. You haven't seen it on TikTok? Seriously?
No.
Oh man.
What are you doing, Boeing?
I actually think that this was an airport issue.
But why wasn't the landing gear down on the plane?
That could have been pilot error.
Okay.
Boeing up $1.30 anyway, $178 and change. Boeing actually has had a good run off its lows, sub 140 up to 178 where it is right now and change.
Hey, I don't know if it's out or if it's coming out later, but we're gonna get Tesla delivery numbers today. So yeah, whoa, hey, all hands on deck here. Tesla shares reversed course and they were lower last week, continuing recent declines, but their Q4 delivery report is expected today. Analysts are expecting the EV maker to report a record number of deliveries, but the full year total probably won't meet Tesla's forecast. Bat, what do you see?
Tesla's up around $5, 408.
Okay, so I don't know if the numbers are out. I can't, the way that my computer.
IV ranks come down actually from the high 80s, 90s, even over 100 last month, down to around 76.
The stock's $80 off its high, so they took it down 20%.
Yep.
And totally unrelated, they are still investigating why a Tesla Cybertruck was used in an apparent IED in front of the Trump Hotel in Las Vegas. It has not been classified as a terrorist attack.
I know.
But
the bigger issue is that are people that bought Teslas the first time around going to buy Teslas the second time around? I think that's the real issue to Tesla.
Or I think the real issue is what happens when you get rid of EV credits.
Nope, I don't think that is.
Nope. Okay. Yep. Your insightful issue is not.
Are people that bought Teslas once going to buy Teslas again?
Sure.
Because of Elon Musk.
Sure. Well,
so
we will see what happens. But you traded Tesla a lot last year and the year before and the year before that. I don't see that that's not going to change.
I mean, listen, Tesla and Nvidia are the two most actively traded equities.
Yes.
You almost have to trade Tesla.
Nippon Steel is offering the U.S. government veto power in a bid to salvage its U.S. steel approval. Nippon Steel has proposed giving the government veto power over any potential cuts to U.S. steel's production capacity. The steel has been tied up in limbo for a very long time, and now into the new year. What are you doing? X gonna give it to you?
We don't trade stocks that are in the middle of a deal.
Yeah, but it's been in the middle of a deal for 18 months.
3 years.
Yeah.
I know. So we don't trade this stock.
Hey, here's something interesting to you. We are on the clock for a ban of TikTok. I know you don't believe it. We'll see what happens. But something that did get passed, a judge in California has upheld California's ban on addictive feeds for minors. A tech lobbying group representing Google, Meta, and Snap challenged SB 976 on First Amendment grounds, but their efforts were largely unsuccessful. It will go into effect January 1st, 2027. It bans tech companies from serving addictive feeds to minors and to impressionable boomers.
There's no chance TikTok gets banned.
I didn't say TikTok. This is listen, your reading comprehension is deteriorating. This is all
You mean it was
social
good
apps.
at one point?
This is all social apps with addictive feeds. This is to minors. So
Whatever.
nah, okay. Whatever, girl. Whatever. Speaking of Meta, though, Meta will invest in AI-generated characters and profiles to drive up engagement. So what do you think of Meta being like, okay, we are telling you we are going to make fake avatars, fake profiles, fake accounts, and this is how we're going to increase our engagement.
This is how we do it.
This is how we do it. No, I hate this.
Oh, I love it. I would much
The
rather-
profiles are fake, and that you think that it's a real person, and it's just AI.
Yeah, I think everybody should be lied to about everything. It'll make everybody feel better about themselves.
Spoken like a man. What are we doing in Meta?
Meta's hanging out with an Ivy rank of 48. It's $5.93 and change on the bid. That brings it up about $8.
What are you doing in Meta?
Market's up also. I mean,
Sure,
that's up
yeah.
1%.
No position.
Apple TV. Speaking of all the big tech stocks, Apple TV is going to be free to stream for 3 days starting tomorrow. The tech giant has critically acclaimed shows, but not quite the engagement numbers of, say, like a Netflix. And so they're promoting free worldwide access to titles including Severance, Shrinking, Ted Lasso, The Morning Show, and more. All you have to do is you have to have an Apple ID, and then you get 3 days from Friday, January 3rd to Sunday, January 5th.
Now I got to remember my Apple ID.
I can't remember.
It's in your phone, sweetie. So when you go to general, it tells you what your Apple ID is. I can help. I bought my parents' iPhones.
You just want my Apple
I
ID.
bought my
That's
parents' iPhones for Christmas because I'm the best daughter. But then I was like, Vanetta, you realize?
Is this their first iPhone?
No, they had iPhone SEs, and I was like, this phone is crap, and I hate this phone.
iPhone SE, what number is that?
No, it's an SE. It was the first gen SE. It's like the smaller, whatever. It's just a terrible, terrible phone. So anyway, Christmas Day, I'm doing a SIM swap on my dad's phone, and I'm like, I can't believe I'm doing this. And then I tried to do my mom's, but hers didn't have a physical SIM. She had an eSIM, so we had to go to the Verizon store. But the guy was impressed. He's like, you set this one up? I'm like, yeah. And he's like, yeah, good job.
Nice.
I'm like, thanks. Anyway, but yeah, daughter of the year right there.
Did you put it on their account? Yeah. That's what my kids would have done.
No.
Actually, I think one of my kids did do that.
No.
I have the original iPad in my house, so running my house.
Yeah,
I'm scared to take it down. And
that's
change
on
it.
you. That's on you. Hey, the Sugar Bowl has been postponed one day until today following the brutal terror attack on Bourbon Street in New Orleans. The game is between Notre Dame and Georgia. Just
How
the
did you guys
saddest
do, you and
situation.
Scott? I was wondering, you took all the favorites, right? You had to lose.
No.
The dogs were the ones that paid, I think. I mean, I don't know which game.
No, I have the dogs.
Oh, you have the dogs, so then you won. I mean, I think you won.
No, I think I lost.
Oh, I
don't
thought
even
the
know.
dogs
I'll ask
paid.
him today.
But I'm not sure.
I thought the dogs-
I'm not sure how this works because if you were going to the game and like you were scheduled to fly out today and your hotel was over today, you know what I'm saying? Because if the game was last night and you like, I know in the scheme of things, but still, just like it seems like a logistical sort of nightmare for everyone involved.
I'm sure the only.
And it's people from our community here, so like because Notre Dame, South Bend, I just hope. I don't
only
know.
advantage is I think some Georgia people could probably drive. I don't know how far it is. It's got to be 8 hours. How far is Georgia?
Well, people have work and other things that they
do.
I mean,
Yeah, well, there's a lot of students. They're still off.
Yeah.
I don't know.
Guess what? No Thursday night football tonight either.
Well, you got this game now.
I know, but it's the first
is it
time.
tonight or is it during the day?
I think it's in the afternoon. So that's what my sources say. I don't have an exact time.
Oh, we'll check it out. All
But
right.
I think it'll be this afternoon.
And that's another thing. It's weird. An afternoon game on a Thursday?
I mean, they gotta.
Let's
gotta
see.
Well, that's what happens when you have a terrorist.
And now he's gonna look it up.
Yeah.
Although Google search is so broken, I typed in Sugar Bowl to get an image for this story, and I just got pictures of Sugar Bowl, and I was like, "Are you kidding me right now? Like, you can't." Like, read the room, Google.
Google up around $1.50 or
Yeah.
Yeah, it's super weird. 3 p.m.
3 p.m. Yeah, that's it, this afternoon.
3 p.m.
I mean, I don't know.
That is really crazy.
Well,
cray.
But it's also interesting that the whole college football structure, so that Notre Dame-Indiana game wasn't a bowl game. It was just a playoff game. But then now the semifinal or quarterfinal and semifinals are bowl games. So if you, like, some people will play two bowl games. I was like, what is happening?
When is the national championship?
I have no idea now.
When is the national championship game? It's usually on a Monday night.
Sure, certainly like the 7th or the...
No, it's usually around like the 20th or something.
Okay.
It's the 20th at 6:30.
Thank you, John.
Oh, there you go. Thank you.
God.
Where is it, John?
Well, that's a tough question.
John's like, oh, that's a tough question.
It's the Mercedes-Benz Stadium, Sadnoff. You know it as where?
Atlanta?
I'm not 100% sure.
Is that New Orleans?
I don't know. Biggest game in Atlanta.
Atlanta.
Hotlanta.
Good job.
Tano, I'll be staying with you.
And it's a Monday, so that Chick-fil-A will be open in the stadium. That's clutch. Hey, finally today for my viral video of the day, if you put learn a new skill on your New Year's resolution list, I salute you. But maybe your new skill shouldn't be learning to ski. Watch this guy getting some helpful advice from his buddy. He's okay.
Do a pizza! Pizza! Do a pizza!
Look at his legs!
Do a pizza.
Pizza!
He French fried when he should have pizza.
That's great. That's great.
Anyway, thank you, John. Hey, that's my time.
My son's going skiing today.
Of course he is. Life of luxuries, nothing else to do.
Is there snow? It's been raining.
It's cold.
Yeah, but it's cold enough now.
They make snow.
No, I know they make snow. I'm saying, but it's unbelievable. I haven't had any snow.
None. Zero. Zilch.
Knock on wood. Hey, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with what comes up next. We changed it for 2025. We got Confirm and Send. We'll be back in 90 seconds with Tasty Live. Good job out of you, Tom.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, Just amazing. Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do. Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, would you like to take a quick look at the market? 2025 style, even the S&Ps up 43.75, solid enough, off of their highs by about 15 handles, if you can believe that, off of their lows by about 70 handles. They were down last night. They were up all morning. NASDAQ up 200, Russell up 21, and the Dow up 279. They're all up around the same on a percentage basis. Volatility down 33 cents, 17.15 after flirting with 18 last night, flirting with 17 this morning, 17.15 right now. Bonds up 12. It too has had some two-sided action. Under 114, almost flirting with 113. 113.11 over 114 to 114.19 on the high. Over a point range, trading 114.07 right now. Bitcoin had a big move, also up $3,100. I'm talking about the futures, 97.2. Oil up also big, $1.13. Gold up $18. Also a decent size move there on gold, up at the high end of its range for the last week. Silver with a larger move to the upside after having 3 down days, up 47 cents. Nat gas continues its rally, even though it is well off its highs, over $4, 3.67. Sad enough, the rest of the market is higher right now. Not too many stocks lower. That's all I got.
Welcome back, my friends, to the show that never ends. Thursday, January 2nd. It seems so weird to start the year on a Thursday. I don't know why.
I know. We got Victor Jones coming on. I think it's Monday. I think I'm supposed to have Dr. Jim. It's crazy.
I felt like yesterday was Sunday, and it was Thursday, it was Wednesday, whatever. But we're back. I'm Tom. He's Tony. This is Tasty Live. We start our 14th year of doing this. Last night I saw the S&Ps at one point. It's like around 7 o'clock last night, and they were down 23, and I'm like, oh my God.
Yeah, I didn't see them down. I saw them up 13. That's where they opened. Oh, is that what they?
And they were down 23, and I'm like, oh, I can't believe they're crashing. Then I looked again, they were up 5, like 20 minutes later. Bonds, I traded them last night at 113.21. The next thing I know, they're trading 113.13, and I'm like, oh, this is not going to be a good start to the year. And now they're up 11 ticks. So who the hell knows?
Yep.
But here we go. Confirm and send. Our positions are small going into the year. We cleaned up our balance sheet. We cleaned up our position statements on Friday. Tuesday. So let's see what happens. This person writes, to start the year off, I'm curious what you think about my 2024 results. I was up 15%, which is below the S&P, but the volatility of my returns was very low, and that mattered to me. Would you consider that a good year, or do you think I underperformed?
I think you did great, man. I think you should do that poorly every year. If you do that poorly every year, you'll be very, very happy. Your money will double every 3.5, 4 years. I think you'll do just fine.
Tony is exactly right. Listen, you can't, if the S&P was down.
I don't judge myself when the market's lower in return the year and I make money and say, oh my God, I overperformed crazy. No, it's my own personal.
If the S&P was down 15%, you wouldn't be asking this question.
Mm-hmm.
But of course, we think you did great. Listen, I'm sure it's a very marginal difference, just like it is when you get a kind of a really they used to call them like a cheap hit in baseball, a duck snort or whatever you want to say.
Yep.
And you drop one in that shouldn't be a hit. Sometimes the difference between a 15% return and a 22% return or 25% return is, just getting lucky on a couple of different underlying.
Yeah, a trade or two, not much, yeah.
Things helping out. You did great. And don't overthink this one bit. You did fine. Forget about the S&P. The volatility returns was low, and that matters to you. That's all that matters. 15% return with low volatility, three times the risk-free rates, you're fine.
Yep.
Let's go next slide. My account is less than 25 grand. And that is an issue with the zero DT trades. To avoid being flagged as a pattern day trader, I can either choose not to close these trades or I can open them on the close the day prior. That's when they still are 1 DTE. If you had to pick a method, which would you choose?
I would probably avoid closing the trades. It's 6 of one, half dozen of another. It's a tough one for me to say, only because it's cash settled. I hate being handcuffed, not being able to take my profits or minimize your loss.
That sucks.
I know, but you're going to be relatively tight here anyway, $5, $10 wide. I think you're almost kind of stuck with any kind of adjustment. I don't know. It's a tough one.
All right. I'm going to give you a couple of things here. I'm going to, and like Tony said, this is a tough one.
Yeah.
I'm going to say that I would choose the day prior because I like to have the ability to decide to get out or adjust or do whatever. So I'm going to take the day before. But what I really would rather see you do is if you have less than 25 grand, you want to trade zero DTs, trade the ES options.
Yeah.
It's basically the same thing, /ES. Trade the options. They're instead of $100 a point, they're $50 a point. So they're half the size of SPX. But there's no pattern day trading rules. None.
Right.
So you can get in and out. It's the same exact thing. But you can get in and out as many times as you want during the day. There's no pattern day trading rules. Just trade the /ES options.
Yep.
Okay. You want to trade the 0 days. You have less than 25 grand /ES. It's half. The trades are half the size. It's fine. Still good. You want 1/10 the size, you can do MES. But and there's no pattern day trading. Don't blame us. It's a regulatory thing. Let's go to the next slide. Let's say I sell a strangle and it's working.
Mm-hmm.
Then I add a second tranche, same strikes, same expiration, but a different credit. When it comes time to close the position, if I just want to close half, how do I know which tranche is being closed?
It doesn't matter. I mean, it's all one pie at this point. Don't worry about a thing. If you're reducing your size by half, just close one on each side and you'll be done. It's all good. It's all done on the back end. You'll be fine.
This is not 1982.
Yeah.
It doesn't matter. So if you want to close half, just close half. It doesn't matter which tranche it is.
Yep.
At the end of the year, our software pairs everything off for tax purposes. You don't have to worry about the wash sales or anything like that. When it comes time to close the position, just close whatever you want. Don't even worry about what tranche it is. Let's go to the next slide. If the ZB were to go to 0, that would not be good. What would the interest rate level be? Is it even possible for that to happen?
I don't know the answer. I don't think it's possible because if they go to 0, that means the world would be bankrupt or the U.S. would be bankrupt, right? I mean,
let's put it this way:
0 is Armageddon, right? I mean,
let's put it this way:
we're now bartering for we're Mad Max under the Thunderdome or something like that.
Well, let's put it this way: if you had asked me years ago, could crude oil go below 0? I would have told you no.
Yeah, of course, and it really
and well, it did in the front month. So there are situations based on storage for like crude oil where it went like $20, $30 below zero, which made no sense to any of us. In fact, not only did it not make sense to any of us, not even the exchanges built the technology. No firm could even support prices that were negative.
Yeah.
So it wasn't just us thinking it couldn't happen. So I guess I don't want to say that it's not possible. At 100, bonds are currently 114. At 100, the bonds would be 7% because that's what par is. So the interest rates at 100 would be 7%. I don't know what the interest rate would be at 0. Maybe, I don't know. I would have to say 40, 50%, maybe. I don't know. I don't know, actually. And is it possible? I mean, I don't think it's possible, but then again, I never could have told you that crude oil could go to 0. I'm sure there's some scenario where something could happen because I've seen interest rates in other countries go to crazy levels. But could it happen here in the US? I would say no. Is it possible? Well, I've seen it happen elsewhere around the world, but I can't, man, I don't want to put this thought in your head because it's not going to happen. Let's go next slide. Even though the S&P's just dropped.
Yeah, they just dropped about
27, 28 points. Handles. I heard you say
30 off their highs, yeah.
I heard you say that for undefined risk trades, you use around 5% of your net lick. When I began trading, I had less than 200 grand. Now I'm up to over $1 million. 5% of net lick seems like an awful lot for one trade. So my question is, as your account size grows, do you use a smaller percentage of your net lick per trade? And if so, does it become harder to move the needle on your net lick?
No, it doesn't become harder at all. But yes, you do reduce your size. I mean,
yeah, you reduce your size 100%. There's no question about it. You know, like if your account's 200,000, first of all, when we say 5% of your net lick per trade, we're usually talking about an average size account of $40,000, $50,000 to $100,000. Okay, once you get up over 200,000, you start to reduce that number. If you have portfolio margin, you reduce that number even more. When you're at $1 million, you might use 1% of net lick. Okay, I mean, there's sometimes I use 0.5% of net lick, even for undefined risk trades, or 3/4 of 1% or 1%. There's no reason you have to use 5% of net lick. Yeah, as your account size goes up, your allocations go down.
Yep.
And it's not a bad thing and does not become harder. Trust me, it does not become harder to move the needle. Let's go next slide. On New Year's Eve, I was talking with a friend about crypto. He's skeptical. He asked me to explain what a Bitcoin is or what Bitcoin is. And much to my surprise, I didn't have a good answer. How would you explain what Bitcoin or Ethereum is, or any crypto product, any digital asset, to someone that's interested in trading?
You know what? I'm glad you asked this question because I don't know how to say it either. I don't have any idea what Bitcoin is either. 100% agree with you. And I own some. So, yeah, I get it. I think it's, I mean, Tom's going to tell you it's a
mythical
blockchain technology.
Creature.
I still don't know what that means. It's like
it's a mythical creature out there. Think of it as technology's answer to a physical commodity. So think of it as gold think of gold as a physical commodity, and think of digital assets as a technologically based or mined asset instead of a physically mined asset. That's how I kind of would explain Bitcoin or ETH. Instead of physically mining a precious metal, we are technologically mining a precious metal through a series of mathematical equations. And what's interesting is it's kind of like it's a physical commodity or a physical asset that's the next generation, potentially the next generation of technological assets. or it's the beginning of that trend that may go on for, many decades or centuries to come. I think that's how I would, it's a technology play. It's a software play. And I think your friend has lots of reasons to be skeptical. I have reasons to be skeptical of digital assets, but the reality is people like trading them.
Yep.
So why not?
Very good. Great question. Way to stump me 2 times in 2025 already. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Sign up. What comes up next? Trades from the research team. Again, you are spot on for 2025. We'll be back in 90 seconds. Let's Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
He squirreled it all away. Now his financial life is dead.
Don't die like squirrel.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower.
What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant. That means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed? Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live with what? Trades for the research team. Who's our first researcher?
Baby shark.
Oh, I was hoping we'd have new music for 2025.
Oh, I don't have new music.
I thought I had pull.
So
we should have Jaws music on. This man stands on his own 2 feet. Sahil! What's up, my friend?
I'm doing good. How are you guys?
I'm doing great. Thank you for asking.
Good.
Appreciate it.
New year.
New year, same bat.
Yeah. Any New Year's resolutions?
To be just as snarky as I always am. Cantankerous.
That's a good one.
Oh, God.
As he gets older, he gets more cantankerous and petty and more like everything.
What about you, Tom? Anything?
I'm just special.
Oh, okay.
My goal this year is to be more special.
More special. Okay.
What do you got for us, Phil? I hope a special trade in honor of Sosnoff.
It might be a special trade because I don't know if Tom's traded this.
PayPal. This has a do not disturb sign on it. You cannot trade PayPal, but go ahead.
Okay.
I've traded a lot of PayPal in my. I mean, I haven't traded PayPal the last 2 months, but I traded it when it got super cheap down into the 60s.
Mm-hmm.
It's rallied back up.
And now it's dipped a little bit again, but.
85-ish.
Yeah.
Yeah. So
I don't know what direction it's going to go in, so that's why.
Well, of course.
Strangle. Yeah. Mm-mm.
Yeah, let's take a look. So which one are you doing? Are you doing Feb?
Yeah, February. It's 50 days out, so it's closest.
IB rank's still decent.
Mm-hmm.
And you're doing the 75.
75 and 97.5. To get around the 20 delta, you can move it a little bit if you don't like the 0.5 strikes. But,
Okay.
Think Saz.
pretty decent credit to BPR ratio. So
Yeah.
I thought you haven't traded it for a bit, so might as well try.
I do not mind this trade. Yeah, I think I'm going to do the 75 100 because the stock's probably going to be up this
What's
morning.
with the do not disturb then, Tony? This is the first trade Tom's like.
You could not trade it. Don't wake it up. Just leave it alone. Like a Roach Motel. Once you get in, you can't get out. But it's okay. That's okay. I haven't traded in a long time. Oh, he put the order in already. Sahil, he loves you.
Love.
Love me a little Sahil. Beautiful.
I came up for the first time. He doesn't hate the stock. So.
It's true. True. Good job out of you, my friend. Who is our next researcher? My man Kai in the house. How are you, brother?
I'm doing great. How are you?
Doing well. Thank you very much. This is the year of the snake?
Year of the snake. But the new year is going to be the end of January. Not yet. So
soon.
Yeah, so it's still year
imminent.
of the dragon.
Imminent. Yes, imminent. The new year is imminent.
What do you got for us, Kai?
All right, so I don't think we talked about Costco recently.
We haven't traded Costco recently.
It's too expensive and never had a downtick in the past almost year.
It also had a very low IV rank until the last couple of days.
Exactly. All right.
Yeah.
So
it's had a downtick though the past month or so. Stock is off its high of 1,000 down to around 9 and change.
Yeah, the stock's dropped almost $100.
Yeah, 10% mover. So I tried to do something from my option trades today, every Tuesday and Thursday. I tried to do it on Tuesday. Thankfully for you, Sal, if it's Thursday, you'll get one today. It was hard to find something to trade and hard to get good grasp on the markets as they're wide. I'm curious to see what you've come up with.
Costco is difficult to trade. Is it the credit versus buying power doesn't make too much sense.
I had my first disappointing sushi from Costco.
Did you?
Yes, I really like their sushi. I think it's pretty good.
California roll just wasn't up to snuff for you?
The spicy sushi is kind of like nasty.
I'm not going to lie. I had their sushi for the first time about 2 weeks ago.
It's okay.
Bought it for my son. Yeah, it was very good.
It is, but I got a bad one. It was kind of old. Which usually you can count their stuff being really fresh.
Yeah, and their seafood is pretty good. King crab legs and all.
I had king crab legs from there too. Yeah,
very nice one.
Very nice.
Their steaks are top notch.
Look at
tenderloin from there too.
Look at you.
Yeah, step up the game.
Look at you,
Pikachu.
Look at you, Pikachu.
Yeah. All right, so Costco, I'm doing a poor man's cover call. So the price is down roughly 10% from $1,000. IVR's 18%. It went up a little bit, but I still think it's good for a poor man's covered call.
What would be this so-called poor man's covered call? What are you buying?
So I long 915.
Of what month?
March.
March,
and I sell February 965. So $50 wide.
Yeah, that was
pretty much buy at the money. Buy at the money March and sell from month. It's actually February.
Buy at the money March. Okay.
And sell 30 delta, 28 delta, which is 965 right now.
Costco trading 9.19 and change, maybe a little bit higher, up around $4 or so, 3.5.
A little bit, yeah. Yesterday was 916. This morning as high as 923 or 22 something.
Yep.
I am going to take your idea and massage it
to
what strike you selling? 950s? Oh, 965.
965, yeah.
Yeah. I'm going to buy one, sell two.
Oh. No.
A
cutie.
Buy one, sell two.
Oh.
The Ivy is not that rich right now.
I know. It's like a poor man's covered call tweaked. I'm going to buy one of the 920s in March and sell two of the 960s. That's the ratio I'm going to do.
Okay.
In February. And you can do it for around, I don't know.
So more like a poor man's strangle if you sell two.
Yeah.
Cover call plus a naked
Yeah.
call.
I'm going to check. I'm going to do a little price discovery and then I'll add more. It looks like around $16, but I'm not sure.
Okay. Cool.
Cool. All right, Kai.
Beautiful.
I like it.
Cool.
Awesome.
Got to get some.
Appreciate it.
Got to get some positions on to start the new year.
Awesome. I love it. Who's our next researcher? My man.
Hey, guys.
Dr. Data, how are you?
Doing well, doing well.
It's good to see you back in your natural habitat with a tie on.
Well, thank you. Thank you very much.
You're welcome. You got a little rogue there at the end of the year.
You were kind of worried about me, weren't you?
I was worried about you. I thought you were kidnapped. I thought you were kidnapped.
I wouldn't call
Make
that
a sign.
rogue.
They were
Make a
just
sign.
standing you up. You know what I mean?
Yeah.
That doesn't look like my data. What do you got for us, Data?
I tried to zip the jacket up all the way, so you couldn't notice it. It must have slipped down. So I'm looking at XOP today. XOP is not doing too well. Last
No, it's not.
So during the first Trump presidency, oil stocks did not do very well and actually underperformed. And some of these oil stocks have not been doing very well this last time.
No, they've crushed almost all these oils. They're up today because oil's up $1.25.
Yeah. But I mean, knowing oil, this thing is going to be right back down to where it was.
Actually,
always
the
has
stock
a
has had
range.
like 7 or 8 up days in a row.
It has Ivy rank of 41 in XOP. It is well off of $150, which it saw.
Yes, and that's what I'm
at
thinking
the beginning of December, down to 132, but it's not at 125 where it was about 2 weeks ago when it's had a little bit of a run.
Yep. And so that's what I'm looking at right now. Is just trying to take it, just selling a put. The 122 put you can, maybe not at this moment. You got to wait for the thing to move around during the day.
Unfortunately, it's up like
I know,
selling puts.
about
It's tough morning. It's $1.50 higher.
Yeah, so maybe right now you'd be able to get like 140.
Yeah.
But I'm gonna probably do maybe one down to 150, and that's about it. And I'm gonna just
You just wait. You got to wait it out a little bit.
Yep. But I think there's some opportunity here. The stock could basically drop, or the ETF could drop by about 9%. You could still make money on this thing.
All right.
Or almost 10% actually with
I like it into
cost
a
of
down
credit.
move though. I'm not going to do it on the opening. I'm going to wait and see what happens with the stock.
Understand? Yeah.
All right. Cool.
Chase.
All right, beautiful.
Thank you.
Who is our next researcher? Jajun, the creator of the Jajun trade. How are you, Jajun?
I'm doing great.
Happy New Year to you.
Happy New Year.
New Year to you.
I love your research, Jajun. You're doing good.
We have a better one coming soon, so.
Oh, beautiful.
Look forward to it.
I look forward to it then. See, that's how if we have better coming. See that?
Better.
It's
That's
always
right.
gonna
Do
get
better,
better and better.
Jajun. Do better.
You should do better. What you got, Jajun?
So I agree with Dr. Data that oil stock, it looks like it's going to bounce because it has always been at the bottom. But right now it looks like it's getting ready for a bounce. So we do Exxon Mobile, IB rank 38%. We do a short put spread. February 21, we sell the 105, buy the 100.
Sell the 105s.
Yes.
Buy the 100s. What's the stock doing this morning? It's up $1.
Mm-hmm.
It's up a bit. Yeah.
Like everything, sad enough. I mean, the S&P's up 33. They are off of their highs.
Yeah. All right. Well, we'll put it in a little bit. We'll. What price you brought in here? 141. Yeah, I mean, you're not going to get filled on there at the opening, but maybe it'll come back around down to that level if there's a little sell-off today in crude oil. So I'll put it in a little bit below that, like about 138 or something, and see if we get filled.
I agree.
I like it.
It's a win, Jajun. It's a win. You're starting 2025 with a win.
The stock's on its butt for sure. It's dropped, it's had a really nice pullback. I agree with you. I like this short put spread here.
And dollar looks like it's peaking, so this is going to help the oil stock a little bit.
Now you're just sucking up to Saz, okay? Now you got to stop it, okay?
It's always been
now you're selling way past the close, Jajun. Way past the close. A little annoyed at you now.
I'm Team Tom more often than Team Bat.
Oh,
so
I see you on Twitter. I know you're Team Tom. I know. Don't think I'm not watching you. I got my eyes on you. That's why I'm going to let you go right now.
Thanks, Jajun.
Bye, Jajun. Who's our last researcher? Ping pong, boom, boom. Julia, how are you?
Hi guys, that's the first ping pong I got in 2025. That's pretty cool.
I'm honored and
you're
sad.
Off and running, Julia. You're off and running.
Good job. Good
I
job.
have another. Before we get into the trade, I got one more trivia question for you guys.
Sure.
Something I just learned. Are you ready? Okay. So there's a country where a New Year's tradition is to smash plates on your neighbor's doorstep for good luck. Do you want to guess which country it is?
Smash plates on your neighbor's doorstep.
I want to say Italy. Am I gonna be wrong?
I'm gonna say.
I can see where your head's at. It's not Italy though.
Is it Switzerland or something?
Is it somewhere in Europe?
It is in Europe.
Yeah, I know.
I'm gonna say Georgia.
That's quite the guess. Yeah. We got Italy. We got Georgia. It's actually Denmark.
Okay.
There's it does sound Greek to me over in Tasty Chat. Yeah, for sure. So yeah, no, that's a fun little thing I learned for New Year's trivia.
Oh,
I did not know that.
Did you smash anybody's dishes this New Year's?
No, we didn't get that rowdy.
Okay. All right. No
had a
smashing
pretty
in your
clean New Year's so
household.
far.
Got it.
I would never.
Good job.
Hell yeah.
I've had people throw things at me at New Year's that smashed.
I'm sure. Before I say something bad about smashing on New Year's, can you tell me what your trade is before I go in a different direction?
For sure.
I feel like the boys from Jersey right now. Go ahead. Mm-hmm.
So today I'm actually looking at AMD. I don't love where this is falling relative to earnings in the 50-day cycle, but I'm hoping that this is going to collect a little bit before that actually happens. So I'm looking at Feb. This is 50 days out. IV rank of 54. It's looking pretty good. Last price is $120. So this is Condor. It's 105, 150, right about 16 delta, and then it's $5 wide. So collects $1.30 in credit for 370 in buying power. And hoping, I'm not in love with where this falls relative to earnings, or where this expiration cycle, I guess, falls relative to earnings. But we're seeing that with a lot of single company names, and I'm not in love with the idea of trading ETFs. Funny enough, going into like sector ETFs and commodity ETFs going into 2025 and going into inauguration day. So this is what I'm looking at instead.
What do you think, Sadnov?
I think you got to have positions on in AMD, and I think you got to maybe lean a little tiny bit long because the stock is on its, relative to other stocks, it's on its butt a little bit. We're a hair long in there. That's it.
Yeah, in the past year, like just looking at 2024, it's down 12% versus Nvidia and maybe not Intel, but some of its other competitors. Yeah.
Yeah, I agree with you. So I'm leaning just a hair long in AMD.
Just a hair.
Beautiful. Well, good job out of you, Julia. You smashed that. We're going to take a quick 90-second break right now and come back with some more with the opening bell next.
Thank you.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than Boom! Trade like a trader. Tasty Trade. Make your move.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Tomas, we are back, my friend. I have breaking news.
What do you got?
Francis is whole. He thanks you for your payment, and you are in good standings with him again. He was almost going to come to fisticuffs there for a little bit. You know, he's not sure when he was going to get around to see you again, collect, but Venmo works wonderful.
Thank God you're around to arbitrate everything.
That's right. That's right. Or he would not have gotten paid. But he's gotten paid, and
Thank God
thanks you.
You are around.
Thanks you for your service. Thanks you for coming, and please play again. He said, please play again. Side note, we're going to play again with this market. First day of the new year in trading. To the downside, you've got Tesla. I guess their numbers came out. Stock is $3.90 after being up $10, down about $7. We'll see how the rest of the market opens here in just a second. You got about 10 or 15 seconds before the market opens. Even the S&P is up 31 mid-range for the day between high and low. I'm going to ballpark it here, Saz. Your P&L for the day looks amazing. It looks just like your year-to-date. Can you imagine that, Saz? How that works
This is
out?
the only day it does. Today is the one day that your P&L is your year-to-date.
There is your opening bell there, Sadnov. You got a couple of movers here. Let's see what those movers are as soon as I change this from the NASDAQ 100.
Boom, 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 boom.
To the high option volume list. Tesla leading to the downside, down 11 and change. Costco down 2. CVNA down 3 and change. Apple down 2. Sadnov. Baidu down around 80 cents. And to the upside, let's see what's moving this market higher. MSTR up $10. Lilly up $7. Coin up $7. Goldman Sachs, that horse, up $7. And Meta up $6. Sadnov. It's
kind of funny in Tesla, they take out premium to the downside.
They do. Ivy rank is 70 already.
Yeah. I just rolled down some calls in Tesla. I thought that this stock would be a little bit heavier. I just don't understand how Tesla thinks that previous Tesla owners are going to buy another Tesla. But
why? Why does it?
Well, because he's alienated his base. That's why. Pretty simple.
Why do you say?
Well, because I'm a base. I bought 2 Teslas. I'm not buying a third.
You're a subset of one.
I'm a subset of one. Well, then take my.
And you loved it. You loved your Tesla. You loved it.
I know. I can explain my own story. I loved my Tesla.
Okay.
I still love my Tesla.
Yes.
But I'm not buying another one. That's my point.
Why?
Because I don't want to.
Well, that's your prerogative. You don't have to.
Neither are my kids. Neither are the Sheridans. So there's 4 people.
Why? Because of his political views?
Because he's an asshole. Yes. Right. What else do I have to say?
I don't think it has anything to do with
I don't have to
the
explain.
vehicle. I mean,
I don't have to explain that to you. Yeah.
You're saying it. I didn't ask you for your opinion.
You obviously
gave
said
me your
because
opinion.
I can do whatever I want. I don't
You
want
can,
buy
but one side has Musk, the other side has
don't
Soros.
want to
I mean,
buy
what difference does it make? I mean,
Soros
politics have been
I'm
being
not buying
bought forever.
I'm not buying a car from George Soros.
Okay, I understand.
What are you trying to explain?
I'm trying to put a parallel
No,
here.
you're not putting any
You're
parallel.
saying that he's meddling, right?
I'm not saying anything. I'm just saying I'm not buying another car.
Oh, okay.
Not buying another Tesla. I'm not. You don't have to try to rationalize it. I don't want to buy another Tesla. I'll buy something else.
What are you going
Lots
to
of
buy?
cars.
Just curious.
I don't know. I might buy a Lucid.
How do you even drive it? Why don't you sell it out? Just get rid of it already.
I would if I had time. I don't have time.
You don't have time? I can get a bid for you.
Yeah, I'm not just hitting your bid. All right, let me get my stuff done here.
Well, you're not doing a very good job of it.
You're bothering me. Let's see. PayPal.
All you've done is one trade, but it was a good sale because Tesla's down 17 already.
Oh, I sold it a little bit. Just rolled some calls down. Costco. Ooh, Costco. What the hell? It's up. Oh, the markets in Costco are really wide.
I said I tried to do it for my option trades today. I couldn't find anything to do. I didn't want to go month to month the way
You know what's weird? The stock is $1 wide. Maybe it's not open yet in the primary marketplace. Is it? Oh, yeah, it is. It
It's
is.
open.
Why is the stock $1 wide? I don't trade
900.
Costco stock. Does it always trade $1 wide?
I don't watch it enough to answer that accurately.
Yeah, I don't either. Exxon's up 57 cents, so you're not going to get filled in there. PayPal, pretty damn close. PayPal's actually down. So I think I got a chance to get filled in PayPal.
Think you can. You think you can.
All right, let's take a look at our positions here and decide what do we have on that's good, bad. Wow, SPOO's only up 19.
Good, the bad, and the ugly. Yeah, that list I read was kind of the...
Japanese yen doing good today. All the other currencies are actually lower. The Russell versus the S&Ps is about a wash.
I don't think your sound is on.
I didn't make a trade.
Oh, okay. Well, you made Tesla's trades, and I didn't hear them.
Okay. Bonds, good. Let's see. What else do we got?
Coin only up 5 and change now. Nvidia up 280. Tesla down 21. That's your big move to the downside. Even the S&P is only up 22.
Yeah. Coin, nothing. I didn't do anything in there yet today. Let's take a look. GLD, maybe a problem child, a little bit.
Maybe.
Biggest winner this morning is actually, surprisingly, it's Tesla. And I've already
got a little bit of short delta, and it's lower, and volatility is contracting. IV rank is 67.
When that stock goes down, volatility contracts.
Yes, 100%.
I got to roll calls down again in there.
Well, as volatility contracts, you're gonna gain some long delta on your position because those out of the money options are actually going to lose delta to them. Not only because the stock is going lower, but because volatility is contracting. So if the expected range, since volatility is contracting, is now smaller, that same out of the money option is going to have a lower delta.
It's going to be the most actively traded stock today.
By far.
I just rolled calls down again.
Again and again.
Let's see what else we got going on here. Boy, this is not the
not the opening we were expecting. With the S&P's up 9 now.
When I pulled into the garage this morning, the S&Ps are up 58.
Were you driving your Tesla?
Yes. The S&Ps are up 58.
Uh-huh.
And now they're up 8, 9,
11, 10.
They're moving all over the place.
They are moving all over the place. NASDAQ up 6, basically unchanged. Russell up 10. That's your leader in the clubhouse. Russell and the Dow. Dow up 194.
Remember, last week was 21 DT, so we kind of got pretty flat. Let me just see what we got here. NASDAQ down on the day. It was
NASDAQ down 4. Down goes Frazier.
It was up 200 this morning pre-market.
Trade up to 21,490. Yeah, more than 200.
Oh, I see. Here's the problem in NASDAQ. It's not Tesla as much. Well, it is Tesla for sure, but it's also Apple.
Yes, I said some of the leaders to the downside. You got Apple down $4, Netflix down $3 and change. You are
Snapple getting killed this morning. I'm not sure why.
Apple down 5.
Did they have a bad?
They're selling some phones cheap in China or something, or giving some rebate.
They have a bad weekend?
$60 or something like that. Yeah.
Well, time to take out some of the trash in Apple and roll some stuff down. Definitely not the opening that I thought we were going to see this morning. God, that's how tough this business is. You kind of plan for a certain opening and you think you're going to have to make a certain adjustment, and then the next thing you know,
Jed's a millionaire.
Next thing you know, that's not even relevant anymore.
Goldman Sachs up 4, coin only up 3.5 after being up 11. Buy this dip size, not volatility unchanged.
I wouldn't touch this dip with your money.
The
dip, you dip, we dip. I wouldn't dip.
While we get through this opening here of 2025, we got Guess the Market, Sadnoff. You only got 2 days left to submit your guesses. Friday, it closes. That's it. That's right. Guess the Market. It's up there on the screen right now. Go to tastylive.com/guess, completely free. Get a chance to win $1,000 for Q1, 2, and 3, and $2,000 for Q4. All you got to do is put in some silly numbers. The world is your oyster. Free guess. Only 2 more days, and then it's get locked down.
I was going to say, what do you think the chances are that we made the high this morning on the opening? And it's not.
For 2025?
Well, last year we made the
low
by day 2, right?
Yes.
So it wasn't the craziest question. What do you think the chances are we make the high? And I mean, obviously now that since the market gave it up, it doesn't make any difference.
Nah, I don't think so. Volatility unchanged here. I don't know. I don't think so.
I don't think so either.
Doesn't look good though. Reddit down 7, 156 and change.
It's interesting how they're giving it up a little bit for some of these. All right, let's take a look at trades from the research team. Exxon, we are not going to get filled on this Exxon trade because the stock's up $1.14 now. In Costco, I'm definitely working it.
I'm working it, boss.
Do you know how wide these markets are?
Yeah.
I'm working a spread that is 14 bid at 21.5.
Yeah.
I mean, it doesn't.
Yeah, I told you I
it.
tried to do it for my option trades today podcast.
I don't think you can get filled in there.
Yeah, I couldn't get it done.
I can't believe there's 60 handle sell if they're down on the day.
We are down on the day, down 50 cents right now on the E-mini S&Ps. NASDAQ.
God, and I thought the
down
Russell.
also.
I thought the Russell S&P trade was a death trade this morning. It's the best trade.
And now look at you. Now you're like a genius.
Yeah, great. All right, we'll leave the Costco trade working because who knows? Maybe somebody will fill us. And in PayPal, that was Sahil's trade. Right there on the dance floor. Stock's down 13 cents.
It's close. It's close.
What price did he say? Do you remember?
Oh, I'm sorry. I do not.
Filled.
Like I can tell you the price you got filled. $252, Sal.
Do you remember what price he said?
I do not. I'm sorry.
Okay. Filled $252.
Maybe somebody could chat me. I can get it for you.
No, I can look it up.
I can look it up.
All right. Let's see. That's that. So we're kind of quiet here this morning. We've only done 16 trades so far today.
That's a lot.
Our deltas are very...
What's your delta theta ratio?
Oh, it's a lot because my deltas are flat here. I was short on Tuesday and I covered a lot of stuff just to get flat. So it's nothing. Yeah. I'm not sure what I want to do here. I really don't know.
Okie dokie, but I can tell you what we're going to do. We're going to take a quick 90-second break. You want to know why, Sad enough? The moment I've been waiting for, and the only reason why I don't think it's Monday, I got my man Victor Jones coming in and hear me out coming up next. We'll be back in 90 seconds. Let's Tasty Live.
Hey, Doc. Your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is gonna be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's gonna be hangry.
from the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Beth got us presents. What is this all about?
This
What
is
this
so
all about?
nice.
Oh, a little mini fridge. I love it. I love it.
That. And it's red.
It goes well with my Mr. Coffee here.
She
I don't know
gives
if
you
can-
something hot. She gives you something cold.
Tom's is a regift.
What?
Man.
Beth wrapped up something that she'd already given you.
No, I think I've given you this before.
I want the refrigerator.
It's for your pistachios. It's for your-
Pistachio. No, you put your pistachios on top. You stick your nuts in the. You don't have to take it out. You stick your nuts in the little space, the little hole. Don't
And
use
it
that hole for
shells,
anything
right.
else.
Shells
Your
in there.
shells.
Yes, to keep it clean.
I love it. Good job, Beth. Good job out of you.
I want the mini fridge.
Aw, you're literally a billionaire. You could buy your own mini fridge.
So if you're in a random store, right? You're at Trader Joe's.
Okay.
Okay.
Trader Joe's.
You're standing on.
Am I holding a cart or am I pushing?
You're
Am I
holding a little
basket. I got a little basket.
Okay, you're at
go
Trader
ahead.
Joe's.
Okay, that's fits me.
Random guy, me.
Yeah.
Standing in front of you. You don't know me.
Stands in front of me. Okay.
Right in front of me. I turn around. You look at me. My fly is open.
Nah.
Do you say anything?
I think so.
It's a serious question.
I think
you don't
so.
Say anything.
I am not clocking men's in the line.
I would
I
say,
do that.
hey, your fly's open.
I would do that.
I would think it's a trap that he would want me to talk with, like, purposefully. So I'm not going to say anything.
What if he says to you, more importantly, what if I'm the dude in front of you?
Yeah, do
and
not
my fly is
engage.
open, and you say, hey, your fly is open. I
Say
go,
thanks.
do you like that?
I would like.
What do you say next?
Thanks.
I want to go home.
I was a late bloomer.
Were you too busy?
Yeah, I was an athlete. I was.
Oh yeah. You're too busy with Aragon and Argon?
Yeah.
In the shower, what's your go-to for soap?
Like a Dove, liquid soap.
Thank you.
Unscented.
Thank you. Liquid soap.
Yeah.
These
Hate
two guys,
liquid soap.
These two
Hate it.
guys use a bar. I'm like,
Hate it.
what year were you born that you still use? It's disgusting.
Pretty disgusting.
Huh?
I can't stand liquid soap.
So that when you pick it up, there's hair all over the bar, and you're, oh my god, it's disgusting. Like, actually, I gotta remember in your bathroom. Do you have a pump with liquid soap, or do you have a bar in your bathroom in the first?
No. Communal bathroom used the liquid soap.
Yeah, right.
This I have to hear. What's the logic that in a communal bathroom it's liquid, but in your private?
Yes, I agree with
Well,
Tony.
they're not cleaning their in my powder room. Okay? That's the logic.
Get the full scoop by checking out the archives at tastylive.com.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. Nothing says it's not Monday like this, man. Hear me out. Victor Jones. What's up, brother?
Oh, yeah. Tom, Tony, Tasty Nation. New Year. How you doing, everybody?
How you doing?
I'm all right, Tony. We were talking before the break. Who made it to midnight? Not me.
I made
by
it to
a mile.
midnight. I made it to midnight by default. Like, I wanted to go to bed at 11, but the kids, like, kept me up.
I mean,
haven't
to
done
be
it in
fair,
years.
you made it to New York midnight or to here midnight?
Here midnight. I tried to claim it was East Coast midnight because my daughter's from DC, but they wanted to start eating at like 11 o'clock or something like that. They were trying to get rid of some of the alcohol that they had. I didn't partake like that, so I was good. So they stayed up and made food and everything else like that. So I stayed up.
The only issue with staying up in Chicago is the Chicago one is not.
It's bad.
Yeah, we watched it from C or whatever.
It's a little jinky.
Yeah.
Let me ask you a question. Would you rather be the first time zone to go through the new year or the last?
Oh, the first for sure.
No, you would think, but you don't. You don't want that.
Well, you're living it, right?
14 hours ahead. Yeah, I'm 14 hours ahead. There's barely anybody that goes through it. It's that there's no real big hoopla because everybody celebrates New York like it's the only city in the world. And then you're just basically waiting for 14 hours. It's the middle of the afternoon and everybody else is celebrating. It's the weirdest experience.
I'm sure it is.
You know, to be fair, I feel like the only New Year's Eve that counts is New York.
Oh, he's basically. Hey, Victor, you want a fresh one? You want a fresh one? You want a fresh one, Victor? Give you another one.
Listen, I love Chicago, but I feel like the New York one's the one that counts.
Man, what did you just wake up and choose violence this morning? You're like, I'm going to try to turn away the entire Tasty Nation.
They don't have anything else. They don't have anything else in New York. That's all they have. Okay, they used to have some sports teams, but those are gone now. You know, they just don't have anything else.
What are you doing right now? Why don't you go after Texas next? And how about Florida? How about you go after all top 5 states and cities where all the retail traders are? How about you go after all the biggest cities in all of America? Let's try to offend everybody.
Oh my God, I'm not offending anybody. I'm saying it to New Yorkers. That's what they got left. They got New Year's Eve. Give it to them. That's all they got.
Wow.
Fair enough. All right, here. This is what I want to do. I'm curious, gentlemen. If I take you back in the way, way back machine, because, you know, if even, what do they say? Even a broken clock is right twice a day. You know, this long bond trade started to work a little bit. Dare I whisper it into the ether? Off the lows at 113, something like that. I'm curious, though. Home builders, if you look at ITB, it was $60 at the end of 2022. We're now like 105, 104 and change, I think. I don't know. XHB, which is another home builder ETF. So you pick your poison here, whichever one you like, whichever construction or liquidity, option market liquidity you like. Also was $60-ish end of 2022. It's now trading roughly 105. These things have basically doubled. Here's the narrative. I'm gonna set it up with the narratives just so you could what all over the narrative and tell me your narratives don't matter. The price is the only thing that matters. And then you'll tell me which direction you like based on price action. The narrative was everyone's locked into existing homes. So existing home sales are locked out. So the only game in town is new home sales for the last couple of years. If you want new inventory, you can only buy a new home because everyone else is locked into their existing homes they're not going to sell. And for that reason, it's going to push up the average selling price of some of these new homes. It's going to support the inventory that they're going to put out there, and their stocks have more than doubled. Most of the low-end or mid-tier home builders, higher-end, haven't necessarily had this sell-off in the last couple of weeks. So here's my point. The last couple of weeks, these things have taken a bath. Why are they taking a bath? Well, 30-year mortgages, 30-year mortgages are pushing like 6%, 9%, 7%, something like that. So on this Fed cut, what everyone thought was going to happen is the long end was supposed to go down along with the short end. That did not happen. It has pushed higher. For that reason, home affordability has actually gotten worse, not better. And you've now seen a break in some of these home builders. I'm curious from a contrarian point of view as we go into this new year, knowing that I know how you guys think about bonds here. I think you guys are thinking the same way I'm thinking, which is on a short term, there's probably a little bit of opportunity to trade the long side of bonds. Even though I think in 2025, we're going to see a 5% 10-year. And I think with that, I'm curious then how you would play the home builders. Do you think they've done enough damage in the short term Vol super low. Ivy ranks only like 25-ish and change on both of these things, so you can't really sell vol. I'm curious, do you think they've done enough damage to come in here, start buying some long call spreads, long calls, just getting some long deltas through long premium? Or do you think, given the fact these things are still nearly doubled, that they haven't done enough damage? What does the contrarian see when you look at the home builders here? Mortgage rates near 7% and bonds just getting off the mat here. Does the contrarian see the opportunity for upside in home builders here, or does the contrarian see not enough damage? You continue to play the downside.
It's a weird topic for me because I don't actually trade the home builders at all. And so, because I don't like the liquidity in there generally, maybe I haven't looked in a while to see if I'm missing something, but I don't even know if I've traded a home builder in the last year. And so I don't, when you're asking these questions, I'm kind of glazing over because I honestly don't even know what is a home. What stocks are we talking about?
Lennar.
I don't even know what you're talking about. I don't know.
Pulte Homes, KB Homes, Lennar.
KB
I
Homes,
can give you
right.
a handful.
Okay, I haven't traded a single one of these stocks in
a decade and a half at least.
Yeah.
We traded KV Homes for, I think it was a Chicago or Illinois.
All I'm telling you, Victor, is you're bringing up a topic that's like, this is one of the things I hate about like a big macro discussion like this is it's only relevant to me if it's got some liquidity to it. So the only thing that matters to me is if the underlying's liquid, then it's interesting because liquidity plus volatility equal opportunity. If there's no volatility and there's no liquidity, I don't care what the macro story is with home builders. You're much more of a, you will buy a commodity, whether it's physical, technical, whether it's for whatever, you'll buy something or sell something because you think there's a bigger story to it. And I don't think the same way you think in that regard. Like I won't, even if I love the story, I will not trade it. Like one of the reasons I'm convinced that one of the reasons that I didn't buy a lot of Bitcoin or digital assets when they first came out was because I am so trained by liquidity that I didn't want to touch something. One of the first stories I read about Bitcoin was there's no liquidity, there's no depth to the market, so that's why you can't trade it. Like that's one of the first articles I read by somebody that was that had written something about why it would never take off or something, and I'm like, yeah, that's exactly the reason I'm not trading it. And so I missed certain things. Is my point. And I think I missed a lot of the digital asset move because I did not trust that there would be enough liquidity and efficiency to that marketplace. You, on the other hand, would have been much more open to the story. I'm not open to the story. I really just focus on the markets. So I think in the case of home builders here, I'm not trying to blow it off as there's nothing there. I really don't care.
That you opened the door to a much more interesting conversation. Let me close the door on this one and then go into the door you just opened. So the door you just closed, the reason I bring it up is because I think we're likely headed. I think we're going to see correlation here between the current mortgage rates and how home builders trade. For a while, they'd separated. Long-term mortgage rates are going higher, but home builders are going higher as well, and home prices were going up as well. To me, that makes no sense. How can home affordability be getting away from people, but prices of home builders still be going up? At some point, that divergence had to come in. I think it is coming in, and I think if you're going to play long bonds, you're probably playing long home builders and vice versa. To the point you just made, I'm curious then. Is a contrarian ever in on the outlier move? In other words, here's what I mean, the upside outlier move. If you need liquidity and you're constantly fading what the market sort of is front running, doesn't that make it hard for a contrarian to ever be on board with the upside outlier move, the Palantirs of the world, maybe the early Tesla?
We were long Palantir for a long time. Even made money in Palantir to the upside. Palantir was getting killed for a long time.
I bought Palantir when IPO, at $9 when it came out at $10 and went down to $9 because I thought that was the contrarian play.
Right, and then sold at 13. So
Probably 1280.
Well, I sold it before it got to 11. But I mean, listen, you don't know what's going to happen.
Agreed. You don't know.
I'm not opposed.
That's sort of my point, which is it hard for a contrarian to hang on for the outlier upside move?
Sure, of course. Well, it's not hard for just the contrarian. It's hard for any trader to hold on for some outlier move to the upside or the downside because you're just a trader. The whole reason you're here is because that's what you do. You just trade them. You don't really. There's no such thing as holding for the outlier move.
Agreed. Here's where I'm going, Tom. Is the last 2 years have been 20% years in the markets.
Yeah.
Okay. So all anyone had talked about after we got the final print for the year is time in markets is better than timing markets. Effectively, everyone after the last couple of years, they're dogging out active participation in favor of passive participation.
Sure.
So my
Okay,
question to you
that's
is,
a whole different discussion.
What do you say to that narrative?
Yeah.
What do you say to that narrative?
So that's an entirely different discussion. That's the passive versus active, and that's an age old discussion. How much first of all, you can't just take the last 2 years or the last 5 years because if you had said the same thing, would you have said the same thing in 2022 or 2021 or 2022? And the answer is no. You would have argued in the case of active, but the last 2 years, you have you're up almost 50% in the indices. But the real question is, is that a fair discussion to make? And for some people, which is by the way is about 95 or 98%, whatever the number is, they prefer the passive approach to investing. And I would argue that the passive approach to investing, okay, in the end, is why we have such a huge wealth gap. It's why we have such a huge discrepancy in the way that wealth is distributed in this country. And that's because there are people that are passive and there are people that are active. And those who are active, ultimately, whatever that word active means, those are the people that ultimately end up with the majority of the wealth. That doesn't have to necessarily come just from trading, because I don't think that's where it necessarily comes from. But it comes from derivatives of or byproducts of that mentality. So I don't think there's ever a case where you would say, where you're going to tell your son, okay, I know he's only 5, but I don't think there's ever a time when you're going to say, you know what? If you have a choice to make, I want you to choose the passive choice.
Never.
Of course, never. Just like you would never do that. Just like nobody would ever do that. So why would you ever do that when it comes to investing?
I wouldn't. And I couldn't agree. This is one of the few times where I couldn't agree with you more. I think over the last 2 years, if you were an active participant in markets, the markets told you who they thought was going to win the election, regardless of what mainstream media was telling you and feeding the general public. The markets, not only the equity markets, but the prediction markets were much more on target than media narratives were. If you were listening to markets, they told you what certain nominations would potentially mean for, let's say, healthcare companies like Pfizer, Moderna. All of that stuff is already repriced. If you were listening to markets, you had an understanding that, well, in some cases, what was going to happen on the cut, that if you don't have the Federal Reserve actually buying long-dated tenors, that the market has to absorb all of that debt issuance, and they're going to go find the market rate, not this distorted rate that we've had over the last 15 years. I would agree with you. Over the last 2 years, if you were passive, you've gotten 20% returns. But did you learn anything about the way the world works? Did you learn anything about the way policy impacts your bottom line, about the way policy impacts economics? I would say now more than ever, In a world of high inflation, in a world of high geopolitical concern, it's more important to be an active participant, to be watching markets and what the wisdom of crowds is telling you about the truth that exists in the world versus what the narratives are telling you. I couldn't agree with you more.
It's not even what the markets are telling you was so important. To me, that's only a little piece of it. It's more about understanding what it takes to understanding what it takes to be able to measure risk on your own terms and to be able to take that in order to go to another level. It's really I don't even care like what it tells you about politics or market structure, any of that kind of stuff. I think so much more of it that's underrated is the decision-making aspect, the way you can think probabilistically, the way you can think strategically, the number of decisions that you get to make, and the way you get to apply everything in real time to see that things work and they don't work. You know, it's a whole leadership quality. And I think it's grossly underestimated. You know, one of the things we like to say is, you know, you close your eyes when you're 25 and you wake up when you're
50.
When you wake up from your nap and you're 55 and you go, you know, where the hell did my whole life go? Right. What the fuck just happened? You know, where am I? I didn't learn anything in the last 30 years. That's what I hate about retirement accounts. It's just, what did I learn? Okay, so big deal. I bought NVIDIA when it was 100 and now it's 600. Okay, great. So I made $500. That's awesome. That's an amazing investment, but I have no idea what I did. You know, and you know, I think it contributes. I think the whole passive side of all this contributes to the huge wealth disparity in this country and other places. You know, and to me, I know it's going to sound crazy, but there's not that big a difference. You know, people don't like the fact that wealth gets passed down from generation to generation for lots of different reasons. And I get that. I understand that. But it's not that much different from passively investing in something and then waking up 30 years later. And I really wish people would participate in active decision making. And I don't know how many places you can do that outside of markets.
When you say passive is contributing to the wealth disparity, I want to pull on the thread. What are you actually saying there? That passive investing is sort of what are you saying there? There's ignorance to that participation style. Like, what are you saying there?
I'm saying there is ignorance because you end up letting other people make all your financial decisions for you, and all you're acquiring wealth. Hopefully, you're acquiring wealth through other people's decision making. And all you're doing is sitting back deciding who's going to make those decisions for you rather than making those decisions on your own. So therefore, the acquisition of wealth is secondary. When you go out and you do it yourself, it is a very different approach to wealth creation.
And let me add one thing that my buddy John also wrote, and he's written me before when we talk about active investing and passive investing. He goes, you know, Apple stock has increased 257,000% since its IPO in 1980. But to achieve those gains, Apple investors would have to endure many agonizing declines, including an 82% drawdown, which lasted for 8 years, 1991 to 1999. I'm just saying, like, you know,
always forget about that stuff,
right?
You know, they always forget about, like, you know, the 2008s and the 2009s and the 2020s. You know, it's not easy. And anyway, I just think.
Let me ask you this.
Yeah.
Let me ask you this, because I can see what the people are going to say in the comments right now. Here's what they're going to say, Tom. They're going to say, well, you run a brokerage firm, so of course you are going to advocate on the side of active investing because that's where you make your money. I'll say this, that there's a big difference between active participation and active trading. There's a difference between active engagement of your investments, and you could still be a long-term investor and still be an active participant doing it yourself. So I'll say that as a setup. But what do you say to all those that are going to come at you at this conversation and say, well, of course you're going to say that because you run a brokerage firm?
I actually I have plenty of passive investments. Some might be real estate. I think most people consider real estate to be passive. At least I do. I also love to invest in myself, which is not some ego thing. It's just like feel like, if you're going to run a company, you need to be the largest shareholder. You need to have skin in the game. And so I passively invest in ourselves, in our own company, things like that, and in other companies like that. I have no issue with that. But I can tell you right now that the only reason I'm here today and the only reason that Tony's here today, I mean, and there's more than just the two of us. I'll throw Scott into the mix and a lot of other people, is because we started trading in our early 20s and we've never stopped. And you could throw a lot of other things behind that, but it's none of the three of us come from, nobody backed us. Nobody put anything out, nobody handed us anything. This is all from scratch, from a few $1,000s. And it's all from trading. And it's not all from trading gains, I will give you that, but it's all from related to that. There's no other way I can look at it. I cannot look at it any other way.
Tony's about to throw me out, but I'm going to ask one more question.
No, I love it. I love when you talk.
No, I think he's not going to argue that.
No,
That's his entire
I'm
wealth and net worth is from trading.
Sure. Yeah.
I'm just saying I'm long on the segment. That's all I'm saying. Let me ask you this: if you're a really lazy marketer, you'll put out something on January 1st or 2nd that says "New Year, New You." you put in zero work and you'll put out something like that. I'm curious. You guys been doing this for decades now. Did you two learn anything about markets, about strategy, about instruments in 2024? After doing this for decades, did you guys learn anything in 2024 that you guys are taking as a brand new lesson in 2025?
No, but I learned something about myself every year of trading. If I want to reflect back on a day, I always think I've seen everything, and you've never seen everything. And I always think that I'm going to act a certain way myself when opportunities arise, and I don't always act the same way. So each year I evolve myself in my trading, but I don't think the markets or I've done, anything different. No.
I love the fact that every single year it's always something different. And I love the fact that we could sit here after X number of decades and still have these discussions about, about what's going to happen next and why it's going to happen and the magnitude of what's going to happen, and that there's always some crazy form of opportunity. I mean, already this morning we've had about 3 1% moves in the market already.
Yeah.
We're not even 35.
We're not even done with 2025 yet.
We're not even 35 minutes into 2025. So yeah, I mean that's the great thing. But I mean I'm going to go back to the most important takeaway. I'm not going to comment on the home builder thing that you started with, but the most important takeaway.
Because that was stupid.
No, it wasn't.
You can call him stupid. You do it to me all day long.
I didn't call him stupid. I don't trade those home builders. But I think the important, discussion here, there's a bigger discussion. And, I feel strongly about the active role. I feel strongly that people need to be into here, I know it's going to sound crazy, but I was watching a lot of football the last couple of days. And I'm watching football. I know this goes, I was going to write about this, but I'm going to tell you what it is first. I feel like every football coach, okay, should be given by the team owners a few dollars, whatever it is, a $25,000 account, $100,000 account, whatever it is. They pay these guys $5 million a year. Their entire success is based on their ability to make instantaneous decisions, okay? And yet some of them, including Bears coaches this year, are so slow in making decisions that it's painful to watch. And I feel like if all of them actively traded, that they would make so much faster decisions, that would be so much better, that would be so probabilistic and statistically supported that they would be better football coaches, but yet people don't do that.
I feel the same way about policy. I feel if people were active participants of the market, then they would understand why our capital markets are so great.
Okay, stop right there. Stop. Now, this is my entire argument to you about why every single person in Washington should trade. This was my whole argument.
I've never said they shouldn't trade. I said they should pre-announce. But you changed my mind on this. But I think it's bigger than that. It's more than the elected representative. This is passive versus active. Passive is you put somebody in Washington, and you put somebody in your state capital, and you check out for 2 years or 4 years. Active is you're checking up on the results of what's going on in your community, in your state, in the country. You're checking up on the mandate that you gave your elected representatives. You're checking up on your portfolio, on the instruments. I think there are very little things in life, if you care about them, that you go into a passive mode. It doesn't mean that you're not a long-term investor. It doesn't mean that you're day trading. It means that you're actively engaged with the topic at hand. And whether that's policy or whether it's your actual portfolio, if we understood the power of market forces, we would demand better policies that implement market forces versus the dictating of winners and losers in our policy. And I think, I think I learned that in 2024. I think there were elements of 2024, in particular the election, that taught me the power of market forces when applied to everything, not just our accounts, but
by the way, there's no question, and we have been electing presidents in this country forever that don't understand, that have very little understanding of how markets work, market structure, and it's not a good thing, and I hope that changes.
Tony Batista, 2028.
Thank you, my friend. I appreciate it. I will be your representative, Victor. You remember that. I will listen to you. You're going to be my trusted advisor, not Sosnoff.
You will flip on me as soon as you get in office, just like Elon Musk.
You can say a lot of things about me, but I'm loyal. Well, I mean, my first wife probably wouldn't have said that. But anyway, we're going to take a quick 90-second break and come back. We got more Tasty Live after this with a market measure. Peace out to you, Victor. I love you when you come on.
Peace, guys. Peace, guys.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. 'Cause Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the market measure. Even the S&P's, I don't know if you're talking about a couple 1% moves here. We've had some good movement in the market. Even the S&P's up 37, NASDAQ up 164, Russell up 25, Dow up 275, volatility in by 30 cents.
You got it.
Did you buy the dip? The bet tried to paint the bottom for you.
I did not buy the dip, but I have very manageable position on today, so I feel kind of like I think I did
you're ahead of the game.
I think I did the right thing for a change by cleaning up all the crap on Friday that was in my. on Tuesday. Mm-hmm. It was in my account.
Don't worry, the days I don't know what
days
day
are messed up for me.
Yep.
It's 9:19 in the morning. It's Thursday, January 2nd.
Mm-hmm.
I'm gonna get that right. I'll never forget January 1st again.
Mm-hmm.
But
no, you
Thursday,
won't. No, you
I
won't.
It's Thursday, January 2nd. And
you already had a shut up by me on January 2nd, an F-bomb already on January 2nd. What's the trifecta? What else can I get from you? I don't know what else I can get from you. My 2025 job here is done.
We do have a couple of brief announcements, and then we'll get right into this market measure. It's a really good one. It's best of 0 DT timing. And don't forget we have a guess the market. Bill from Rochester won the grand prize from last year, and we'll be reaching out to him today. So if you're listening, Bill, you should get a call from Nikki Bat today at some point.
Mm-hmm. Mm-hmm.
But if you haven't signed up yet, there's tomorrow at, I'm not sure what time, midnight, let's say, you have to submit your guess, but don't wait till midnight because I don't even know if that's the time.
Yep.
Time is whenever whoever does this
goes
to bed. Do it early or miss out. Mm-hmm. Submit your guess by January 3rd, 2025, tastylive.com/guess. If you haven't done it, shame on you. That's all.
That's all,
folks. Yeah. Let's go. Also, we have a couple of things going on. This Sunday, we have a live event. It's in Chicago. It's the first of 3 very small coffee shop live events in Chicago. These are not part of our 2025 global tour. We're going to be all over the world and all over the U.S. later in 2025. We have not posted those cities or dates yet. But for the first 3 months of the year, we're not going on the road, and because we were on the road all of last year. So we're taking 3 months off from traveling. But we are going to do 3 events in Chicago. They're very small. The first one, and they all precede a digital asset that we are putting together, basically a digital collectible that you'll be able to own, that'll live on our blockchain, that you can look at any time or reference any point you want. The first one's called An Evening of Crypto Talk. It's with Ryan Grace from Tasty Crypto. Everything you want to know about crypto, but we're afraid to ask. Ryan's doing his presentation. Also, Edward Woodford, who's the CEO of Zero Hash, we'll stop by and Edward will do a Q&A with the audience for about 20 minutes to a half hour when Ryan's done. And you can ask anything you want. Edward is one of the leading crypto experts in the US. I'd put him up in the top 5 in the whole US. And then also Ryan is our crypto expert and really smart, really knowledgeable. Sunday night, January 5th, that's this Sunday night. Doors open at 5. The event starts at 6. And you can sign up at tastylive.com/events. It's on the north side of Chicago, just west of Wrigley Field. And it's very small. It's only 50 people. And I believe it's all full and it's waitlist only, but you can still sign up because some people signed up didn't realize it was a live event. So we have somebody that signed up from Singapore. It's probably Victor. No, it wasn't. Somebody that signed up from Australia. So I don't think they're coming in for this. So there's probably a few people that we need to clean up. But it just happened.
Even the S&P is only up 15.
We're just up 45 2 minutes ago.
Markets are dynamic.
Crazy. Anyway, hopefully we'll see you Sunday night. If you can't make it, and there'll be 2 more of these live events coming up. Go to the next slide. Thanks. Everything you want to know about crypto, January 25th. It's a Saturday morning at 10 a.m. We will be minting this, and you can watch it live. The Beginner Trader from start to finish, Jim Schultz, February 22nd. And a couple of weeks before that, when Jim comes out to film it, we'll have another one of those live events. And then Mike, his friends, on his whiteboard on March 29th. These are all the dates that we're minting these. You can register right now at tastylive.com/events. You and 10,000 of your closest friends can sign up for this. We don't care how many we mint. And these are really important to us. These guys do a great job putting this stuff together. And we want you to own it. Stream it, own it, whatever. And if you want to come to the live event, when we post them, you can sign up. Again, only 50 people will be permitted to those.
Yep.
We want to keep them small, intimate, chatty, that kind of thing. Perfect. All right. Thanks. Thanks, John. Let's do it. The best of 2024 market measures, part 3, 0 DT timing.
Sponsored by the SIBO.
Sponsored. Let's go. Next slide. So 24 marked our first full year of gathering the 0 DT data at Tasty. Market measures are a chance to share the results with you in depth. As we head into 2025, we're going to review some of our best 0 DT research of 24, and we're going to explore the importance of timing when it comes to 0 DT trades. Let's go to the next slide. So our study, using 1 year of data in 0 DT SPX options collected every 10 minutes for 15 years worth of data in the 45-day options. So in the 0 DTs, it's whatever it is, 20 months. And in the other data we're going to show you is 15 years. We examined selling strangles with 20 delta legs, both at the 0 DT market open and 45 days to expiration. We contracted the hourly performance as a percent of the initial credit for the 0 DTs and the weekly performance of the 45-day to expiration trades. Next slide, please. A lot of stuff here. This is old stuff that we're just showing you. This is weeks versus hours, okay? The first one, 45 days to expiration, strangles. First 2 weeks, average P&L change, 11%. Second 2 weeks, 24%. Third week, tough one, -2. And then the final week, +16. Standard deviation of change, you can see the first week, the key is the last line, the standard deviation of change. 6% is very manageable. 12%, very manageable. 28 and 53, that's where it gets tough. It's not worth the return at that point. Let's go to the next slide. And this one, we're going to show you the 0 DTs. So in the 0 DT strangles, it's the same thing. Look at the last line, standard deviation of P&L change. What's interesting here is that the first 2 hours, 19%.
Manageable.
Second 2 hours, 34%. The third 2 hours, 56%. And then the final hour, 153. Swinging. Yeah, you're just swinging.
You're just swinging it.
153. Now, I'm not saying -5 in your average P&L the first 2 hours. Nothing great, okay? But the second 2 hours, that's pretty damn good. So in that first 2-hour period, there's a chance to make some money. It's not worth the risk holding to the end of the day. At 19 and 34%, very manageable. 56 to 153, not so much. Next slide, please. Both the 0DT and the 45 days to expiration trades had more stable prices early in their lifespans, as measured by the lower standard deviation of returns. That's what I showed you. For both, managing winners to capture early success were the more beneficial mechanics. For early in the 0DTs, it just means the first few hours instead of the first few weeks for the 45 days. For handling losers, the 0DTs gave more opportunities for traders to succeed using their own style. More risk-tolerant traders could choose to stay in losers and hope for recovery before the close. Did this late-in-the-day success mean it was a good idea to trade 0DTs even if you missed the market opening? Next slide. Let's have some fun. This is our kind of fun. So using 20 months worth of data in the SPX 0DTs. Now, people that have a smaller account that want to trade without pattern day trading rules using the ES options, same exact thing. It's not cash settled, but it's the same underlying product. ES, SPY, SPX, they're all the same. MES, XSP, they're all the same. But some have pattern day trading rules, some don't. We examined selling 0DT strangles using the 20 and 30 delta strikes at market open, 10 a.m., noon, and 1:30. All the times are Chicago times, CT. All the trades were managed if they reached 25%. Losers that didn't reach 25% were allowed to expire. All trades were assumed at mid-price. Let's go to the next slide.
Okay.
So you can take a little off if you want. Here's your 20 delta strangles that were, these were just on the 0 days. Placed at market open, you made 89% win rate. Placed at 10 a.m., 88. So it didn't matter what time you placed for the win rate. What it mattered for was how much money you made. And the average P&L is significantly higher if you put your trades in early in the day. Period. That's it. First 2 hours. Let's go to the next slide. 30 delta strangles, exact same thing. Everything happens P&L wise in the first 2 hours, or the majority of it. Let's go to the next slide. So since we started trading 0DTs in 23, they have been consistently profitable for short premium traders who took profits early. Choosing strikes by delta automatically adjusts trades for the current volatility levels and the time remaining in the contract, giving consistent success probabilities and helping retail traders expand into new arenas with confidence. While the 0DT trades had more success stories for those who held on through expiration than the 45-day trades, placing new trades late in the day was detrimental, just like placing new trades late in a cycle can also be a little bit detrimental.
Good job out of the team.
It's a heavy piece, but yes.
Good, awesome. We're going to take a quick 90-second break and come back. We got, oh joy, your friend of mine, Mr. Scott Sheridan, Tasty Trade World Headquarters. Immediately following these messages. Back in 90 seconds.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
All right. Perfect. I would like to buy Park Place.
No.
What?
There is no Park Place in this game.
Yes, there is. I'm looking at it.
No. This is mine.
Take it.
It's mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want
I'm
it.
the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly. This is the mayor, and I am overturning everything, and I am allowed to buy. Excuse me?
You're in over your cute little head.
Don't patronize me.
You
This
don't
is a
come
board
down
game.
to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it.
Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a wallet? Did you just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads. And what do you just have? You have a bunch of hotels and houses, which in this market is ridiculous. A nice, simple house on Mediterranean Avenue. A beautiful car worth 10 times more than your dog who is gone. Got to deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. The old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Tomas, we are back, my friend. I am on fire today. All this means nothing. Tasty Trade World Headquarters, your friend of mine. Can we get a plaque? The Scott Sheridan Studios, Mr. Scott Sheridan.
Yeah. Oh,
I said I was going to get one. I am going to work on that this afternoon.
I appreciate that. Belated Rabbit. Happy
Belated
New Year.
Rabbit.
Happy
Belated
New Year.
Happy New Year.
Thank you.
Although I think I wished you a Happy New Year.
You did. You did.
You gave me the obligatory, I said I love you, and you went, oh, I love you too. Like Happy New Year.
It kind of was how it was.
I brought you in chili.
Did you?
Yes.
He did. He
Where
brought
is
you in chili. Nobody was allowed to touch it. Now
It's in the
been sitting
refrigerator.
out for hours.
Which refrigerator?
Our special refrigerator.
Back here?
No,
Up front?
up there.
Oh, yeah.
He's talking about the one
It's our iced tea
his
refrigerator.
bougie iced tea one.
Does it have my name on it?
The chili?
Yeah.
I did not put your name on it.
So how does anybody know not to eat it?
Do you think anybody's going to go into a refrigerator and take a container?
You've seen some of the animals out there?
And it's
I do steal Josh's Red Bulls from time to time.
It's not.
I don't steal them. I hide them.
It's not that spicy.
Okay.
It does have mushrooms.
Oof.
Well, don't give it to the six.
You should eat mushrooms now.
I know. I heard.
It does have a few mushrooms.
I'm killing. I got legs.
It does have a few mushrooms, not a lot.
It's funny because I'm going to make.
Well, you're not a mushroom guy.
I love mushrooms.
Oh, you love mushrooms?
I
What are you
love
saying?
There was a guy.
I love mushrooms.
There was a guy at the Green Street Farmers Market, and every week he would come. It was the mushroom guy.
Is it out by Green Street Meats? Where is it?
No, in Lincoln Park.
Oh, Green Street, the one over here.
So there's a mushroom stand.
Yeah.
And every week the guy would make mushroom chili.
Amazing.
And then he stopped making it.
And then one day he didn't show up.
No, he's still there. He's still there. He just doesn't make the chili anymore.
Why?
I don't know. It's the best thing there.
You didn't ask him?
I asked him. He's like, I don't know. Because it's a pain to get the heat, bring whatever they have to do to heat everything up.
It sounds like you.
No, it sounds like I was the only person that bought it.
That's entirely possible. Okay, can we I got to gloat a little bit. Can we just talk about some football? The one bet that I didn't want to make.
How did you guys do?
So far,
what did I do?
What? Really?
He doesn't remember.
Really?
He doesn't
really?
know.
What did you do?
No, I don't remember. Who do I have? I forgot.
2 losers. And the one game that we didn't bet on.
Because this morning he was a winner. I go, Saz, I think you.
No, I said I thought I lost. I had
lost. I had Penn State, and I had Ohio
You
State.
had all the dogs?
I had the favorites.
I forgot. I missed the Penn State. Okay,
I had Penn State, Ohio State, and I got Georgia this afternoon. Okay. So the problem was, so you wouldn't take, because you wanted Texas, I wanted Texas. Because you had Frankie Walsh took. Yeah. Okay. A couple things.
So you would have lost that bet.
Yeah, but so I have a 14 parlay, and I'm looking good.
So you lost that.
So I lost it. But then I took Ohio State in the over, and they crushed it. So this is how crazy the line was. So the line was 2.5 for Ohio State.
The Arizona State game was the only one that was good.
Great game. So let's come back to that in a second. But anyway, so the Ohio State game, the line went to 30.5 that I saw. I could have taken Oregon at 30.5. And I'm like, how do I not take this? I'm like, no, I don't want to be that guy. Like
what a crappy game.
Like a degenerate
game. Horrible game.
Horrible game. But let's go back. First of all, that kid Scattaboo.
The worst game of the year.
That kid Scattaboo, unbelievable.
I love that kid.
He's going to be an NFL fan favorite wherever he goes.
He doesn't think he's going to be drafted.
Oh, I think he'll be drafted, but I don't think he'll play. I think
he's going to be
small.
good.
Did you watch the game?
Yeah.
He ran over that 350-pound defensive lineman.
You can't do that into perpetuity.
Have you seen that guy's legs?
They're huge. They're huge, and they're also this big.
Okay, somehow he has the ability.
Hey, you want a fresh one?
Somehow that guy
he's going to be good in the NFL.
He's going to be great. Somehow
he can catch the ball too.
He can catch.
He threw the ball too.
Somehow he has the ability to get when he's low. He doesn't go down. He still keeps driving.
Yeah.
Am I allowed to have an opinion?
No.
Okay.
No. Okay. I agree. No. Anyway.
I mean, his opinion on NFL prospects is not very good.
Sarkisian, totally outcoached. Totally outcoached. Ewers, that guy sucks. Okay, that's a guy that I don't think is going to go into the NFL. He just lobs the ball. It's like Tom back there. He kind of tosses it up there.
Did you see the Texas QB?
Yeah.
Yeah, he already
stinks.
Well, he got a $6 million offer
from who?
To go into the draft portal and not go into the NFL.
Not the draft portal, the transfer portal.
Oh, sorry, transfer portal.
And I did.
$6 million.
They gave the kid Cam Ward for Miami. I think they paid him $3 million. He got paid $3 million to go play 1 year at Miami. Does he have another year?
They took paying these kids to a new extreme.
Does he have another year?
Not giving them any.
Wait a minute, he won't stay at Texas?
Well, that's the rumor or the offer.
Boosters in Texas don't have $6 million to throw at him? He
What's
stinks. I'm sorry.
I like him in Texas.
Kid, the most impressive kid I saw yesterday was the wide receiver on Ohio State.
He's unbelievable.
That kid's 19.
He's unbelievable. Did you see what they're comparing him? Like who he compares himself to? And
no, he's 19.
Yeah, well,
monster.
He's a monster. The kid on Alabama, the 17-year-old Williams,
he's a monster.
He's really good too.
Yeah.
But the kid on Ohio State, I have Ohio State. I took him 5.
You watched the ASU game, right?
Yeah.
First 3 quarters, who do you think was winning the game?
Well, I thought ASU. I mean,
when they were ASU outplayed them.
Outplayed them, but it was 16-0. They were up by 16 points, and I'm like, okay, they're going to get this. And all of a sudden, this kid's he just took the game over. Like that's a superstar. When you take a game over,
a football game,
and you're
not a quarterback,
and you're not the quarterback. He took the game over. Everybody knew he was getting the ball. Shouts out to that kid.
I totally agree with you.
Shouts out to that kid.
I thought Texas was beating them off the line.
Take the line, the defensive line for Texas.
I bet on Texas.
I mean, for Arizona State was killing the
I bet
offensive
on Texas, and I wanted Arizona
I thought the
State.
defense. I didn't bet anybody. I didn't care.
Once I knew I lost my parlay, I was rooting for. And how was that not targeting?
Yeah, that was a.
How's that not?
I hate targeting call first of all because I don't think it was intentional. But that was targeting.
But the definition.
The way they define targeting. That was targeting.
Going at the head, that was targeting. And the play when Scatterboo, when he had his helmet ripped off.
Yeah.
Pass interference and a face mask.
Yeah.
And he caught the ball.
Yeah. That was a tough one. That was a tough, bad play by Texas.
This afternoon should be a good game.
It's a great game.
3:00 is a stupid.
How about the poor kicker?
So.
Misses right, hits the goalpost left.
When he went left, I'm like, oh my God, he missed this. I thought
it hooked. I mean, it looked like it was going straight middle.
That was a little bit of a oof.
You got to feel for the kid, man.
Not really. I don't care.
Wow, heartless.
I don't care.
Wow, I had to deal with him all day. I thought you would come in and be a little kinder,
He's
gentler.
got one job. Make his field goals, okay?
Wow.
Yeah. And they got lucky.
A field goal kicker.
They got lucky to win that game.
Oh, well.
On third they scored the touchdown. Was that fourth down?
4th and 13.
Oh, yeah, 4th and 13. The odds of that, it's like 0. That was a good throw. I'll give you
No, actually, I could tell you what the odds were because we bet it.
That was a great throw.
It was a great throw. It was.
It was.
He still stinks. I don't think that kid's not going to make it.
It was 16 to 1. I think $10. At $10.
To what? At what point in the game? When it was fourth down?
Right then, yeah. To throw a touchdown pass. I think it was 16 to 1 or something like that.
Yeah, but the receiver, number 4, I don't remember his name, but
yes.
That kid's nasty.
Yep. Totally agree.
That kid, he's gonna have a good career on Sundays.
Mm-hmm.
All right. So anyway, at 3:00 when you're done with the show.
Yeah, we're done till 3:00.
Right. I'm just telling you, I'm nice enough. You can come over to my computer because I have YouTube TV. I'll have the game on. You can watch a little bit before you get in your car and you go home.
What do you think about that, Saz? That's fighting you over.
That is awfully nice of you.
And I'm taking Georgia in the over. Who's the kid? I don't even know who the quarterback is. Who is this kid for Georgia? Like, I think he played cup, whatever. He's obviously must be a good quarterback, so we'll see.
Oh, so I'm down 100 right now?
Yeah, and you can't win. Unless you want to double it up.
I'll double it up.
Oh, never add to losers. That's what you told us
Okay, so
here.
you're going double or nothing.
And you also say, don't do as I say.
I had it written down. What's the line I'm laying? I think I'm laying 1.
I don't remember the line.
I think I have it written down at home. I think I'm laying 1. Let me see.
First of all, he was gloting so strong this morning.
I wasn't gloating.
I got Sheridan money.
No, I didn't.
I got Sheridan. Yeah, you did.
No, I knew he'd win.
No,
I'll go double nothing on. I'll take Notre Dame.
It's 1. Oh, Notre Dame's laying 1.
No wonder you look. This is a setup. You knew that all
Notre
along.
Dame is now laying 1.
You baited him. You bait and switched him.
I'll take nothing. I'll do it pick 'em.
Oh my God! See, now he wanted the point. Now he doesn't want to give the point. Do you know?
I was laying.
I thought I was getting the point.
The original 50. Yeah. I think I'm laying. I'm laying you. This line moved. I think I have it.
So you're laying me a point.
I'm laying you a point at 50.
Yeah.
I'll take Georgia +1 for another 50.
Sure.
Okay. So you got 50. I'm laying you 1.
All right, got it. I understand.
No, you don't. This is a little complicated for you. This is complex math.
How much more do you want to even?
Oof. So I don't know who his quarterback is.
What difference does it make? You don't care. It's college football. Quarterbacks don't matter.
Quarterbacks don't matter. In the NFL, you can't win the Super Bowl without a quarterback. In college, they don't matter.
That's exactly right.
Duke, Ole Miss.
I don't care about Duke.
North Texas, Texas State. All right.
North Texas Tech. No, I don't.
All right.
Duke Ole Miss. That's like saying bet on the Bulls game.
I'm going, by the way.
Tonight?
No, I'm going on the game you didn't want to go to. I'm not going to get into it.
Which game are you going to?
The Knicks.
How'd you get tickets?
Do we really have to go through this?
You got my tickets?
No, because I'm not buying those tickets. They were way too expensive.
What'd you get? Afford those?
What
do you think? We want to transfer some of our wealth.
Right. I'm in like the 10th row. They're still expensive.
Oh, but you got tickets from the Bulls.
Yeah, my guy. Our guy.
Well, my guy wrote to him, told him I want my money back.
Did you get your money back?
I don't think so.
No, he's in Florida right now. He just landed. He told me, because I said, am I getting tickets or not? He's like, I don't know. I just landed in Florida. I think you're filled. So,
oh, my God.
Then he came back to me, and he said, you're filled. And I looked, and they're in my wallet. So I actually do have 4 seats.
I did not get my...
It takes a little while for refunds to hit. Okay?
Quarterback from Georgia... has all-state record. He even threw more touchdowns than Trevor Lawrence in high school. The kid's a total stud.
Did he transfer from Auburn?
And Nick Saban said he's known him since he was 8 years old, and he never loses anything he does. Gunnar Stockton.
Good name for a quarterback.
Good name
Gunner.
for a quarterback.
Gunner.
Oh,
Gunner's
going to impregnate the whole nation, Gunner.
Gunner.
Better for a 3-point shooter.
That comes from my Taiwanese source, Todd.
Are you caught up on Landman?
Am I caught up on what?
Landman?
No, I have one. I haven't seen
you haven't
it.
seen? Wait, so did you see the episode when she's with the quarterback?
Yes.
That was great, right?
Yes. Now they're going to Bible class.
Correct.
Yes.
That's what happens in the next episode.
Yeah.
And what were they talking about in Bible class this week? Abstinence.
Yes, he didn't know what it is, though. I saw the coming attraction.
He's like, do you know what that word means? He's like, no. Okay.
I like Billy Bob's answer to him, though. He tells him what it is.
Right. Oh, my God. That's great.
MVP, here's one of the things. Sadnov picked us off. He wouldn't even give us proper odds on this.
Yes.
NFL MVP, who do you think it's going to be?
Well, because I stand across from a Buffalo Bills fan.
Right.
Josh Allen is like minus 600. I think he's minus. He told me he's minus.
He's minus 300, but whatever.
Minus 300. Maybe he's minus 300.
Yeah.
And Mahomes is like plus 2 something.
Yes. Yeah. And
So,
and Lamar Jackson's like plus 160.
Right. So I'm going with the line. You don't think it's going to be Josh Allen?
No, he does. We have a gentleman in production. I want to name his name. I got him 30 versus 20, but it's 75%. If he's negative 300.
I mean, that's a lot.
75%.
I think it's, believe it or not, I think it's going to come down to the voters are going to come down to, I think it's going to be.
When does the voting end? After Sunday?
I think it could be Josh Allen. If it's not Josh Allen, it's going to be Joe Burrow or, because I think he's.
Barkley.
Or
Saquon Barkley?
Yeah. Saquon Barkley.
Is Barkley playing this week?
No.
So.
He doesn't
have
like
a better
Lamar
year than he
Jackson
had.
And our production.
Did you?
I'll give him a name. His name is James. In production.
I mean, the money is telling you that it's Josh Allen.
Money is telling you.
Did you see Eric Dickerson? Did you read this article with Eric?
He didn't want him to break his record.
They said, do you want to break the record? He's like, hell no, I don't want him to break the record. Right. And he's like, but look, I did it in 16 games. He's got 17. He's like, I don't think he's going to do it. But the best line was, because the thing now is, like all these quarterbacks, running backs, they buy their offensive line, trucks. So they said, did you buy your offensive line a truck? He's like, I made $150,000 in my last year. Okay.
Yeah, Tonka trucks I bought him.
Right? Can you imagine? I don't know if it's true. I'm assuming he's telling the truth.
Probably is.
$150,000. What Barkley get from Philly? 20?
Yeah, but that was before Joe Biden got in office, so that was like $6.5 million.
What did Saquon Barkley, $20 million? What did he get from Philly?
I don't think he got 20 million, but I don't know.
15?
I don't know.
$100.
Whatever he got, it was
worth it. It was worth it.
Whatever he got.
And he wasn't going to do that behind the Giants' offensive line.
No.
Right?
No, it was not. No.
If you're a Giant fan, you can't be mad at Saquon Barkley. I mean, it wasn't his fault.
It was not his fault. And I'm sure they would love to have him back.
Barkley's set to earn a total of $13.5 million this season.
$13 million. You
That's
can
just
afford.
A quick article headline. Please don't out me. That's what I got. 3-year contract, I believe.
So, but he needs, I think, like 135 yards or something to break the record. Don't you think he'd want to be in the game?
He does.
He does.
Right?
The coach said no.
They said no. I mean, the bigger picture.
Probably he's doing it for the better of the team, right? There's no I in team, Scott. I know you didn't play a lot of team sports, okay? But there's no I in team.
If they were out of the playoffs, he'd be playing.
Yes,
he'd be playing for sure.
Of course. Plus, he probably gets a contract bonus if he broke something.
Right.
It cost him $1 million to sit out.
Correct.
Believe me, he wants to play.
Yeah, he wants. Well, these guys want to play. I mean,
of course they want to play.
They want to
They're
win.
trained to play.
Yeah. I get it.
They don't. That's why
no I in team, Scott.
I love when people say like New York.
No I in tasty trade. No I in team.
Giant fans are up in arms because they won last week.
Live, there's an eye. I'm looking.
Tasty live. We have an eye, and he sits across from me.
I'm looking.
That's
at
correct.
one.
That's
I'm
correct.
Go ahead.
There is an eye in Tasty Live. You remember that, Pat?
Giant fans are pissed off because the Giants won last week, so they don't get the first pick anymore. Now they got the 4th pick.
That's crazy.
I know they went from 1 to 4.
Big deal. They screw up the pick anyway.
Well, they probably would, but their whole point, like all the fans are like, how you can't even lose.
So you can adjust our bet that we made since you're 75% favorite to win.
No,
I would chop my toes off before I adjust it.
Wow.
Just I'll be collecting the $20 from both of you.
From me about what?
Not you, from him and
I had
James.
You got to bring James.
Showed solidarity with you, James. I showed solidarity with you.
You got to take him down. Not enough to take.
I'm still gonna take him down.
Not enough to take. Who do you have? Anybody but
Lamar? I have Lamar.
Straight, $20 straight up, Lamar.
$30 to win 30. 20 to win 30.
He's always got
the edge. Always got the edge.
First of all,
I didn't
even know what the line was. Here it comes.
Yeah, he's such a liar.
I have a computer in my head, and I knew
such a liar.
I think he's gonna have trouble coming in. I think at best he's gonna be third.
Who?
Lamar, and he's great, but we'll see.
Has Josh Allen ever won an MVP?
No. Lamar's won 2.
And how many does Mahomes have?
2 at least.
You want to do a side bet in the betting about Burrows coming in second?
No.
What's Burrow? What's the money line on him?
I don't know, but I'm just, I thought I could make an even bet with them, maybe skew it a little bit my side.
They don't make the playoffs. He won't. If they
another
make the
20,
playoffs,
I mean.
That shouldn't matter.
He broke a record that's never been.
Burrow?
Yeah.
What do you do?
I think he has 8 or 9 straight games with 3 touchdowns and over 250 yards or 300 yards in passing. A crazy record.
Wow. All right. Should we get to some business?
Sure.
All right. Top 15 symbols going through the system. First 40 minutes a day. No broad-based indices or futures. Time for you. Number 15, Netflix. Coming in at 67. I heard there was a big, actually, beef.
Oh, Lamar broke his tooth. Quit cherry picking, Tom. You just make your things sound so much better. You just like Trump. Go ahead.
I guess a lot of NBA players were pissed that there were football games on Christmas.
Oh.
Oh, yeah. Why? Of course, that was their day.
Yeah, they're like, it's our day.
It's our day. Yeah, sure.
Yeah.
Yeah. LeBron was mad. A lot of players were mad.
Oof. Strong to quite strong. It's their day.
Yeah, they were really mad because football crushes.
Right.
Yeah.
Crushes.
Yeah.
All right. Number 1 for everybody else. Tesla to 65, Nvidia to 21, Apple at a 37, PLTR at a 71, MSTR at a 28, AMD at a 51, Meta at a 50, SoFi at a 54, I bet at a 72, Coin at an 18, excuse me, GLD at a 48, Amazon at a 53, TQQQ at a 32, XLE at a 35, and number 15 for Tom, Netflix at a 67, rounding out the next 10, AVGO at a 40, Uber at a 51, Boeing at a 49, PayPal at a 47, Microsoft at a 43, TSLL at a 70, Google with an L at a 54, and TLT at a 40.
Sadnov, what do you say about that list?
Amazing.
Strong to quite strong.
Strong list.
Starting off the year.
Smiling.
Yeah, well, he's a little grandpa. What can't he smile about
right.
today? If I could smile today. I mean,
how'd it feel
he did give me an F-bomb, and he did call me stupid already. He do have that, though. So he's the same old Saz.
How'd it feel to hold the little one?
It's nice.
It's a little scary, is it? Because they're so
small.
Like, you're like, what do I do? Like, I don't want to drop it.
The hands. I mean, they like
tiny.
The whole hand is like the top.
I like them better when they're like a year to 2 years.
Yeah,
you can actually do something.
You need them to walk, and even at 1, they don't walk that well. You're always like worried about where they're gonna fall into. Like around 2, they kind of straighten up and fly.
Yeah, we gotta lay the foundation so they know who you are. You can't show up at like.
You can't. Yeah, you can't.
That you show up at 2.
Don't walk in front of the child.
Yeah, that kid.
I don't want the child to
start screaming. That kid will be like, "Who is this guy? Get him away from me!" So you got to start early so that you can work your way in, so that the baby knows who you are.
Right.
Got it.
Don't. Get them all at once.
Thank you, 2 geniuses, for the.
Well, he's got practice. I don't have practice on the grandparenting side.
That's right. That's right.
I still have some more years.
Mm-hmm.
And your mom has to be happy she's a great grandma?
She's very excited.
I'm sure. Beautiful.
Right. How could that not be? Like, amazing.
Of course.
Right?
Of course.
Yeah.
Amazing.
Are we not allowed to talk about it after today? We're going to take a quick 90-second break and come back. It just means you're getting old. It's no big deal. We're going to take a quick 90-second break, come back. We got more Tasty Live. You'll be fine. Right after this. Peace.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. Same thing with college. She went to a different college. I went to a different college, but we both ended up at the CBOE together. Yep.
Everybody, and welcome to the Liz and Jenny Show. I'm Jenny. That beautiful blonde is Liz. Happy New Year. Happy Retro Thursday. I forgot what day of the week it was.
I got red. Did as much red as I could.
You are looking good. Looks like you have recovered.
I'm fully recovered. No more sick talk. Jenny, happy first day of 2025. I think it's going to be a great year. Shoot.
What?
I wrote all this stuff down. It's downstairs on my counter about my best and worst of every single account. I went through it.
I've got mine. Run and get it.
Well, it's the third floor, so it'll take me a couple minutes.
I can.
And we don't take a break. I'll see if somebody in my family can deliver it.
Oh, that's a good idea. Otherwise, I can monologue.
Well, let's run over. We can run over yours too. But this is the first show of 2025. I think it's going to be an amazing year. We've had 2 back-to-back years of S&Ps up 20%. Is it a third?
I don't know, but the day is starting off. Well, SPOOs are only up 10 now, but it's starting off like a good day. You have it's interesting. You have the reset, right? Your P&L from December 31st disappears on December 31st, and you have a reset. So today you walk in and it's just your P&L from the day, starting over for the year. Some people like that. Some people don't. Has there ever been an option for a rolling P&L? How long could it go on? I don't know.
I don't know if I would like that or not like that. I sort of do. You know what, Jenny? I'm going to put my opinion out there right now. I like the fresh restart. Now, last year was a great year for me. I will tell you that. But it is nice to kind of look at things with a fresh set of eyes. 2025, everybody's got their New Year's resolutions. What was your New Year's resolution, Jenny? A personal and trading.
Oh, well, I made a new workout routine for myself. So I made a new workout routine. Check. January 1st. Check. Did it yesterday. Day one. So I have that going. That's really, as far as new workout routine. As far as trading goes, I think I'm going to, I think I'm going to not be afraid to sell more premium. I know that the last couple of years we've had big run up in many products, and it behooved you to just be long some. But this year I'm not going to be afraid to, sell both sides. Let's say I have stock or a long position. I'm not going to be afraid to sell both sides instead of just like holding on long and hoping it goes up, because I don't know that this year is going to be another huge rally like last year.
I don't know either. No one does. No one expected it last year either.
Yeah, I guess. Yeah. So we'll see. I'm hoping that this year is a good year for premium sellers. And if the market is choppy, if things stay in a range, selling both sides will be a good thing. We'll see. What about you? What were your resolutions?
Okay, so my resolution, I always say this every year, is to get my life organized, number one. But number two, this is the newest one I'm going to do, and I like it. Okay, so I'm changing my vocabulary. Instead of the word have, like I have to go to the store, I have to walk the dog, I'm changing the word have to the word get in my vocabulary. So I get to go to the store, I get to walk the dog, I get to do this. I'm changing the definition of everything. So I'm changing the word have to the word get.
Oh, I like it. I like it. I wish I would have done that last night, because there were a lot of things I got to do last night.
You got to do last night. There you go. Because when you think about it from that perspective, it changes the entire narrative, doesn't it? Because a lot of people don't get to do what you just did, and a lot of people can't do what you just did. So I'm changing the vocabulary. The word have to the word get.
Excellent. Last night I got to wash 3 loads of laundry. Last night I got to pick up after everyone because the cleaning lady was coming this morning. And last night I got to
wait, but Jenny, you're not getting it. You get to because a lot of people can't do what you just did, but you still get to.
I totally get it. I get it. I get it. I understand that. There's a lot of people can't do it. Correct. I get it.
And then you're not gonna like my trading resolution.
What?
Swing for the fences.
Oh, where I'm selling both sides. I'm selling both sides. Liz is swinging for the fences.
I'm gonna be like Babe Ruth. I'm bringing a bat to the plate and I'm calling where it's going. That's what I'm doing.
So, look, SPOO's down now.
Mm-hmm.
Down again. Now, when I say, I'm just gonna bring up one position in general.
Hold on, I'm gonna go into the.
Okay, so like Intel.
Can we jump in the platform so people can see what we're talking about too, John? Thanks.
Okay, I'm just going to bring up like one example. Okay, so let's say Intel. I'm long it, right? I'm long it. So if you go to Jan options or Feb options, instead of just being long it.
What's going on here? What is going on here?
Oh, TP wanted the volume added.
Oh, okay. Okay, so I'm sorry. Go ahead if I'm going to Jan.
So, go to Feb. Go to Feb. That's fine.
Oh, Feb. Okay, got it.
So instead of just being long, I'm probably going to sell both sides, and maybe I won't do as many calls. Let's say you have 1,000 shares. Maybe I'll sell 5 strangles around it instead of selling 10 calls against it. Like I'm going to sell to not be afraid to sell some calls in case things don't just move straight up.
Oh, I'm not afraid to sell calls. I'm just saying I'm getting my size bigger. That's what I'm swinging for the fences. I think my size was too small this year.
I don't know.
And that is a problem sometimes. Like my account got bigger, but my sizes didn't. So I'm either going to go to bigger products or bigger sizes.
I think so. I think like when you have a bigger account, we always say this, it's easier to have a better return on a smaller account, right? It's much easier to have a bigger percentage return on a smaller account. Once the account gets bigger, in order to have a similar percentage return, you either have to increase your size or trade bigger products. I think a lot of tasty traders switch to trading bigger products.
And that's what I'm going to do. I guess I probably should have clarified that. I'm going to go bigger products because my account grew. So I have to grow with my account. I can't just be who I was when my account was that size. So that's my New Year's resolution. Jenny, hold on. Let's put the Jeju train on right now because we're down.
Okay. Jeju.
So hold on.
I did TP's NDX trade on Friday. I did it and it came off 50%. So shout out to TP. I did the TP NDX trade and I did get filled both in and out.
Excellent. We didn't do that on the show because we couldn't get filled on the show.
We couldn't get filled, but I it does give you a little more room. And I get his point of NDX bouncing around more.
No, I do too, but I do think I also have to stick in liquid products. Liquidity is king for me. Getting in and out. Do you remember the commercial where it used to be somebody who liquidity is interesting because you can get into something and then all of a sudden you're in a pool filled with ice. You know how hard it is to get out of that? Remember that commercial with the pool filled with ice?
You could use SPX and do TP's trade. Like it would be selling that 58.70, 58.65 put spread. If someone wanted to do TP's trade, this is it. You could do it in SPX. Here it is. His point was that NDX has a little more volatility, a little more movement.
Agreed. I mean, I don't disagree with that. Okay, we got filled for 260. I'm going to close it for 310, right?
Sure.
And the New Year's resolution, Liz and Jenny's New Year's Jajun resolution. I think breaking news. I think we might be able to have a Jajun sighting sometime here in the near future.
Yeah, that's going to be great. That'll be amazing if he could become a weekly guest on the show.
Oh, this would be amazing. And he's going to come up with great stuff. I like what he does. I think he's a great addition to the research team because I like that he looks at things from a different perspective, meaning like I like his time. I like his seasonality of things. I like the fact that, you know what I mean, that you can do all that stuff.
No, I love Jajun. He's put together some great research pieces. And if he's here and we're seeing him, we could ask for certain things. He can expand on some of his studies that he's done. So I'm looking forward to seeing him. Hopefully we'll see him in the office next week.
Yeah, hopefully. We'll be in the office on Tuesday.
Now, as far as this year goes, well, today's Thursday, tomorrow's Friday. We probably have some positions expiring Friday, but I don't know that we have too much to do. Things are coming back today, but they were down on Friday. So we're just kind of making back probably what we lost on Friday.
I just wanted to take a look at the VIX and see what it's done today because I actually didn't look at it today. This is very bizarre with this huge opening down there. So if I look at the VIX today, wait a minute, Jenny. I'm sorry. I don't think she's watching, but I have to give a massive shout out. Is my mother-in-law's 75th birthday today, and we are taking her to lunchish. It's going to be between lunch and dinner and to the casino, but we're going to go to the casino first, immediately following the show. So 75 years old. Hopefully she wins, but yes, that's what we're doing.
Happy birthday to Sue. Happy birthday, Sue. Good luck today. So you're going to the casino first and then to eat, or eat first and then the casino?
We're going to the casino for 1 hour and then we're going to eat.
Out near the casino?
No. Nowhere near the casino.
I don't know if you're going where I suggested, but we actually have a reservation there. The 4 of us are going there tonight.
Where did you suggest?
Remember that steakhouse? That's that old-fashioned steakhouse.
Oh no, we're not. No, we're not going to Joliet. We're going north.
No, it's not Joliet. It's by Nas. It's by your
that's south. We're not going to the casino south. We're going up north to we're going to Rosemont, but we're going to eat in Oak Brook somewhere.
Okay, well that'll be nice.
Yeah, it'll be fun. Okay, but take a look at this, Jenny. I want to see what the VIX has done today.
So VIX is up 48 cents. What does that say?
VIX is up with SPOOs down, but the range is, where did we open? We opened 1721. So we opened a little bit lower than this. The high was 1818. I wonder when we hit that. And then the low. So with VIX is up and the SPOOs are down.
That's right. That's how it works. That's typically how it works.
I know, but usually, do you think they should be down more?
Well, maybe
what was
we will
the
be.
what was the low? What was the low of the SPOOs that we hit 1818 on the VIX? Let's see the low of the SPOOs.
Check for this. I don't know what. I wasn't watching all morning. Low today, 59.10. So 20 points away from where we are, down 26.
Yeah, I mean, that's a lot.
Mm-hmm.
I did not see that.
And as far as not Friday's close, end of the year close, we were all wrong. It did not close. If you go to SPX to see where it closed on New Year's Eve, it did not go up. It did not run up at the end of the day. It's 59. Yeah, and TP thought it would be around 59.50, right?
No. He thought it was 5,900. He was pretty close. He was like 10 points away.
No, because go to the SPX. Well, you just go to the SPX and go on, because we put in the butterfly at TP strike, which if we were that close,
we made like $1 on the butterfly.
Can you go to the day? Okay, close 58.84.
Hold on.
Yes,
no, I gotta go back.
There's like 15.
No. Here we go. 58.81.
Yes, and
we made $1.61. We made 60 cents on the butterfly.
Do you think so?
I know so, because I had the butterfly on too. We made 60 cents on the butterfly.
No, we should, at that price at 58.81, we should have made $1.60. Oh, because we paid $1 for it. Yes,
we paid $1 for it. Yep, we paid $1 for it.
58.80. No.
80? Yeah, we had the 80. Yeah, we did. I know we made $1 on the butterfly because we had the 80, 90. Yeah.
We pop out the side. I think we had the 90, 5,900, 10.
SPX. Let's see. Hold on.
And just go to SPX.
Oh, yeah. Hold on. I'm sorry. I thought I did. Oh, we also got a hit on a GTC.
Yes. So there.
Oh, yeah. We didn't make any money on it. You're right.
We didn't make any money on it.
Nothing on it. Okay. You were right.
Well, I thought we were lower. I thought we were lower than everyone thought, because even when he chose the day before, that day you were out when he was on, he chose the lower strike, either the 5,900 or 5,950. He chose the lower strike. I thought maybe the higher strike, but we were even lower than that. So to end at, 20 points away from that 5,900 level.
Did they have, and John, I'm sorry if I'm putting you on the spot, did they have the guy from Guess the Market on for last year? Because I know they have a winner. Like they pinpointed a gentleman who did win, and I know they usually said he was going to get a phone call from Nick Batista. I was wondering if they had him on.
They did not.
They didn't. Okay. Will they have him on, John, or is that not a thing?
I don't think that's a thing. If they get a hold of him, they'll try to.
Gotcha.
I think Spoo's up now. Check the Jejun trade. We might be 5 cents a nickel away from hitting.
Let's take a look.
Get ready to yell.
We are right there.
Come on, Jejun.
Okay, so we're gonna let this percolate for 1 second, because we were down 4 when we put it on, and now we're up 2. So this should hit. But this is probably, isn't that weird?
Well, so we saw the other day we needed a little more movement.
Yeah, we did need a little bit. That's okay. We usually say 6 points. So if we were down 4 and it's this, we almost hit when we were up 4. But I think I'm feeling lucky about today.
I hope so. January 2nd, 2025.
I'm feeling lucky about the Jejun trades. I wanted to show you this too.
Busted out the new calendar.
While we're waiting, all symbols today, our Moderna GTC hit. I just want to show you that.
Oh.
So that was at 8:45 this morning. That was our Moderna GTC. Now it was interesting because the dogs that Vanetta and Tom were talking about it this morning were Moderna and Intel. Those are the 2 lowest. And he didn't say DraftKings again, which I thought would make you happy, because I know you were very upset. You were very upset about that last week.
I wasn't upset. It couldn't be one of the dogs because it wasn't down that much from January. And I think Boeing too was on that list.
They didn't talk about Boeing, but Boeing was actually pretty good to us. Do you know that in our account, Jenny, number 1 was Disney, number 2 was Boeing? I
know, that's funny, isn't it?
Mm-hmm. Let's take a look at Boeing, because we don't have a Boeing trade in right now.
No, and it's down $6. If you want to get rid of the volume on the chart, we can. So Boeing has had quite a rally from the 140 up to the 170, but
well, it opened at 178 today because I have a Boeing position in, and I remember being like, "Oh, Boeing's up today. That's weird."
So I don't mind getting into Boeing with a short put spread.
I don't either. We got a 51 rank. Now, here's my question. So you're going through earnings, which is fine. I just want to see if we can sell a put.
Oh, like right before the earnings cycle?
Yeah. What if we did a $10 wide for two? Now granted, I'm giving up something just because of the capital required. I'll delete this leg to let everybody see. I just went to a 33 delta and the 15 day. If it goes down like this, we can roll this through the earnings cycle. But this is using $2,800. You can see you can probably use less. I just went to the 50 to make it $15 wide.
And I'm fine. I'm fine with that. 250, taking in 250.
Right? Let's do that.
Only 22 days to go, and it's down today.
Yeah, let's ship this. Okay, we'll throw this in.
We have a decent amount of buying power. So when they were mentioning the dogs, and Walgreens Boots was on that list too.
Yeah, so, Walgreens Boots is the Dow. They were talking about the number one winners and the number one losers in the S&P. Do you know what was the number one winner?
Palantir.
Yeah. Boeing we're in. I almost screamed Jajun when we got filled on the Boeing trade.
Yeah, so no wonder you had a great year because you had Palantir. You had of the big winners this year, you had a couple of them.
I did. My number one, which was very shocking, and I do remember this from my account. Out of left field.
Marvel.
Here we go. Marvel. Yeah.
Which had a big run up. So we've had so many products that had crazy runs.
How do I get rid of this? Rid of this?
Go to indicators. Go up to the top left there, indicators, and then see where it says volume. Yeah, clear all. Yeah.
There we go. Because then it looks like more of a run. When you look at it from that small period, I don't know what it does up there, but it did not look like it had a run.
I agree. I prefer the charts like this. TP wanted to see the volume, which I get it.
I like to add them on when we want to see the volume. I get it because, and I know why TP want to see the volume. When you're looking at the last trading days of the year, there is very low volume. And to be honest with you, I would imagine, maybe today the traders are back, but I know a lot of times, a lot of people are on vacation between these, and you'll see a lot of those holiday weeks. We've said this before, and I will never forget some of the most violent moves I've seen were when nobody was looking, and it was a half day on the trading floor.
Right.
When there's
not a lot of volume, and if a big order comes in, it can move things.
Yeah, when there's less people on the trading floor, I do think, it can be moved in one direction or the other, which is kind of crazy.
So, what's surprising to me looking at TLT, can you open up TLT? It was up, I thought it was up quite a bit more this morning. Can you click the chart, see where?
No, Jenny, they all were. That's why I was looking at Boeing. Boeing was up $8 and now it's down $6. It's crazy to me.
Well, and I'm just looking at the bonds, ZB, it was at 114. It was over 114 this morning. TLT was 88.11, so much higher. And they're not up as much anymore.
Did we get the balloons?
I can't remember it's not the thumbs up.
It's peace.
I don't know. Oh, there we go.
Yeah, there we go.
There we go. So that's good. January 2nd, first one of the year.
Do you know what I love about the Jajun trade? I'm going to tell you the pros and cons of this. Okay, number one, I like our mode where we are going to, no matter what happens at the end of our show, take it off.
I like that we're clean start, fresh slate, clean start, beginning of the year. We're going to do it at the end of our show. If it doesn't work, we're going to take it off. And let's set the parameters now so we're just mechanical.
Yeah. So that's an excellent point. So we're going to do it. I know we say we do it every day, no matter what. I almost think it should be. And you know what? We got to get Jajun in here. But until we get Jajun in to change it, let's say we've got to be up on the day or green on the day, but green on the day on the open.
Green on the day on the open. Okay. Green on the day on the open.
Don't you think?
Yeah.
Because I feel like I remember Frank saying that Jajun said that, and we'll take it to the tape. We're going to take it to the actual tape, go straight to Jajun and ask him this, but it's not a bad plan. If it's green at all, you know what I mean? So I'm saying like this, a tiny little bit of green.
I think that's fair. I think that's fair. That's why I wanted to set the parameters. Green on the day on the open. We put it in around 10:10, 10:15, whenever we get to it early on in the show. And at the end of the show, if it doesn't come off, we take it off.
Well, the Knuckleheads redid the market measures, and they actually redid it. It was it was the same thing, but they actually, it was different. It was different slides than it was in the original. And they said that that's why I wanted to do it early. It's more in the beginning of our show.
Okay.
Yeah.
So we'll just be mechanical about it. Green on the day on the open. So we'll see what this year's going to bring. Hopefully everyone got their Guess the Markets in. If you didn't, you can still get it in today. tastylive.com/guess. Tomorrow is the deadline, January 3rd. I wouldn't mess with it. I'd get it in today.
No, I think it's got to be in before January 3rd, right?
Okay.
So it's tastylive.com/guess the market.
Don't forget to put your
No, it's not guess the market /guess. Sorry.
Yeah. Yeah, so we've got ours in. We will see. We should have written ours down so we knew. We should have written them down somewhere.
We're just going to be so surprised when we win.
How was JD over the holiday? Did he get any more cash to put into his trading account?
He did. So he did get cash put in his trading account. It's not actually transferred over yet. I have to do that when I go into the Tasty Studios. So he's in the world of hurt today because this little kid keeps getting more and more Tesla. And look at this. That's a big move for his account. Now in full disclosure, I'm very happy that this happened. He's still up a ton he had his trading account for 1 month, and he was up a lot more than I ever expected him to be up in 1 month. So he was up over 12%. And then with the move down in Tesla, the days going into the end, he was only up about 9%, which is great for a month. Like for 1 month, he was up 9%.
And so, yeah, and he'll see, like, you have to learn. You'll see. You'll have positive P&Ls. You'll have negative P&Ls. Yeah. You'll see swings. You will. I mean, and it's a good lesson for them. It's not a good lesson. We would say this to the young kids who came in when we were in the bull market, and it was just up every day, up every day, up every day, up every day. It's like, it's not healthy for those kids to see that. It's good for them to see both sides.
Well, and even it's even good for them to see a day like today, which I think a lot of people sometimes, and him included, sometimes people only look at the markets once a day, right? So it depends on what slice the day you looked at with this market. We were up huge and down. And you know what I mean? This is a pretty wild swing.
But maybe
I saw him up 45 this morning before the open, and then we were down. What did we say? We were down 20. I never saw that.
No, I didn't either.
Yeah.
But this also can be, it's like markets up, SPOOs are up, NASDAQ's up, Dow is up, Russell's up, but he's down because he's so heavily weighted in Tesla. Maybe he'll think like, oh, well, maybe I should spread this out and not have as much Tesla.
Well, and to be honest with you, he's locked in so much profit in Tesla because he's been scalping it. I kind of want to have him like lighten up a bit, but it's so hard for me to have him lighten up on a day when it's down 25.
I get it.
No. Yeah.
Because aren't some numbers coming out in Tesla tomorrow?
The inventory, I think they came out today.
Oh, today. So that must be why it's
down. You know what? I don't know, Jenny. I'm not going to
click the news. Click the news.
Yeah, deliveries. Here we go.
Okay.
It was annual deliveries.
Okay. So if Tesla's down, competition hurts demand. Will you go to Rivian? What's Rivian doing today? Up 27 cents?
Yeah. Up 27 cents. This is crazy. Okay, so let's take a look. Is there anything else we want to do? I'm going to go into Twitter real quick. We are taking tweets. Put the hashtag LIZJNY. Hold on, let me refresh. There we go. Bob, thank you so much. Happy New Year's, ladies. Love it. I hope you had a great New Year's too.
Me too, yeah. 2 weeks in a row, no red shirt. Mikey, I have no idea what day of the week it is. None. Next, you're going to tell me you don't have your favorite mug.
You got to read the rest.
I'm looking for it. Also, please say hello to Prosecco Millie. She knows who she is.
It's okay. So I was texting with Mikey, and number one, I'm blind in this eye, but I was texting with Mikey on New Year's Eve. And I was saying I said, Happy New Year's, Millie. And he's like, first you call me Bob, now you call me Millie. And I was like,
why do you call him Millie?
Autocorrect went from Mikey to Millie. And every time I would type in Mikey, it would go to Millie. And then he's like, did you have too much Prosecco on New Year's Eve? And I was like, Mikey, you know me so well that I was like, you can't even do this. But yes, no, it was autocorrect. And I did have a little bit of Prosecco on New Year's because I was slightly sick, but that doesn't matter.
Well, you're looking good today, and you could could celebrate today. When you're out for Sue's 75th birthday, you can make up for it today.
Oh yeah, we're gonna party like it's 1999.
Hey, we are.
Do your kids even know what that means? Party like it's 1999.
I'm sure they've still heard the Prince song.
What were you gonna say?
That's what we're doing tonight. We're going out, the four of us, celebration. It'll be like our New Year's celebration since everyone was sick over actual New Year's.
Yeah, that's a good idea. And that restaurant does sound pretty good. We will eventually get there at some point. Okay, so please, we are taking tweets. Put the hashtag LIZJNY. This is really what we look at versus our actual Twitter account. I know that sounds bad, and my New Year's resolution might be to start taking a look at the other stuff too. But we love this. I love having people communicate with one another. We will answer live tweets. We will put anything that you put on here, we will usually address during the show.
I will say, and I don't know what changed, but Frankie, brought it to our attention that we don't have that blue check mark. But if you notice here, Bob's got the blue check mark, Mikey has the blue check mark, Frank has the blue check mark. If people don't have the blue check mark, like I don't know what the new deal is with X.
Everybody does have the blue check mark except for us.
No, but everyone.
Oh no, James doesn't.
But that was December 31st. Like I don't know what changed January 1st. I don't know. I don't know what the ruling is. Like, can people tweet with the hashtag if they don't have it? I don't know what the new ruling is. I know Frank sent us an email about changes. So we're going to have to look a little bit into this, dive a little deeper into this.
Yeah, these two technologically savvy old ladies will totally look into this. Okay, yeah. You know what I want to start doing a little bit more in, which we started, 50% of the year. But I like looking at the SIBOs.
While you're looking at this, I'm going to make sure our trades are all pushed out.
Also, I love Tony Batista. I love Tom Sosnoff. They are wonderful, wonderful humans. We all got our start on the SIBO floor. All of us got our start on the SIBO floor. Now, Jenny and I are the lucky ones who get to film live from there on Wednesdays. We took a 2-week hiatus because the dates of when the holidays fell. We will be back on the SIBO next Wednesday. Notice I keep saying SIBO because Tony Batista, it's not CBOE anymore. It's now C with a capital C, lowercase BOE, because it's SIBO. And we were lucky enough to be told that by the people that work there while we were there. So it took a little bit for me to stop saying it that way.
But now there's more. It's no longer just the Chicago Board Options Exchange. There's more to them. That's why they're the SIBO group of exchanges, not just the one anymore. And I'll be happy to be back next Wednesday. Definitely. I was relieved to see that we're not closed next Wednesday. We're closed Thursday instead of Wednesday because I'll be happy to be back on the SIBO floor.
Yes, I was thinking the exact same thing because we didn't want to. We have a great crew there, but they need some time off too when there's time off.
And when on a news station, when they were announcing everything that's going to be closed next Thursday, they did include, they said the SIBO Global Markets. So when they said it, I was like, huh, I work there.
That's me.
Talking about me. It's going to be closed next Thursday.
Well, it was pretty interesting. So we don't even need to go into this, but I did have, when I was super sick, I did have a small wedding at my house. And during the wedding is when we got the announcement about Jimmy Carter, right? So it was literally in the middle of the wedding when we got the announcement about Jimmy Carter. There was another traitor in here. There was another traitor in my house. And so both of us look at each other and I was like, Jimmy Carter died. Not in a good way. He had a wonderful life. He was 100 years old, like all that stuff. But and nobody else, everybody around us had no idea that all markets closed for one day.
Oh, I was with our friend who's a teacher, and when I said, well, the banks will close, the markets close, everything will close on the day of his funeral, of his services, and so she immediatly emailed the director of her school and said, "Are we closed this?"
I don't know why that's funny, but it is. Well. What are you going to do? Yeah, so that's pretty interesting. Okay, so let's take a look at this. Is there anything that pops out at you? Now, the one thing that pops out at me, and I will say this, is during our show, a lot of times when you see the most active, you'll see larger numbers than 30. Sometimes we see 50s, 60s, 70s, 80s.
Yeah, but look at that. Okay, 49.50, 4900. Let's price out that Feb put spread.
The put spread? This is, wait, look at this. Yeah, the Feb put spread.
It's 49.50, 4900.
Yeah, you keep it up and I'll go this way.
SPX, Feb, regular Feb.
Was it regular Feb? Was it Feb 21?
Yeah, but probably not the AM, probably the 50-day.
How do you know? Does it say?
Oh, no, it's Feb 14, Feb 14.
Yeah, Feb 14, which is the regular Feb. No, it's this one. Okay, the 49.50, right?
49.50?
That's what I'm saying. This is
49.50,
insane.
49.00.
You and I are looking at this, and I was like, wait a minute. Hold on.
I want to see how much that is. 49.50, 4900.
Hold on.
40 cents?
50 cents?
They better be buying that back.
Yeah.
If they're trading 30,000, those, they better be buying it back and not selling it.
What if they are selling it? It's not a bad do.
Not a bad do. 50 cents for $5,000 in risk each.
Yeah, these are big by big. This is Frank Walsh. This is Frank Walsh size that I'm saying right here.
You know,
I think it's big by big.
I can come up with better ways to make 50 cents.
No, I can too, but we don't know. Okay, so I just want to be wait, hold on, there we go. I just want to be very clear about this. Jenny and I are just extrapolating what we would do as self-directed retail investors now. When you're on the SIBO floor, there's a lot of different things. And when these orders are coming down, there are a lot of bigger things that are going on besides what happened in our little brain. So to your point,
all I said was they better be buying it back, not selling it.
To a Jenny Andrews, that isn't worth the risk. But to some people, look at Barbecue Master, things of that nature. You're getting 50 cents. They might think that 50 cents is easy money. Because if you're in a PM account or a huge account, that's not holding up any capital. It's a free 50 cents.
We can figure it out. Look at the open interest today, and we'll look at the open interest tomorrow.
Let's take a look. Okay, so the open interest.
49.50.
Yeah, there you go.
Only 17,000.
17,000 and 30,000 of them have traded. So we'll take a look at this tomorrow. Write it down. Get your little pen.
It'll probably be all I'm gonna do is take a snapshot of this.
Yeah. Do you have your popsicle? Do you remember one year when it was written on a popsicle that meant your popsicle notepad? That meant it was gospel.
Someone stole my popsicle notepad. It's gone.
Who stole the popsicle pad?
It's gone. It's gone. Now all I have are these. Look at these little sheets.
I don't even know what that is. Why do you have such a little sheet?
I don't know. I have no idea. It's hard to finding paper to write on in this house is never easy.
My God, that's so funny.
That's what you can get me for my birthday, Liz. Just a notepad.
I already have your birthday present. I already ordered it. I might give it to you early.
I forgot what.
What'd you ask for? You already put in a request.
I forgot what I asked for.
Is there anything else that we want to do here? Now, her birthday is not until March, but I do actually have
every once in a while I come up with something that I need. Like the only thing I asked for Christmas was a salad spinner. Got it.
Oh, did you use it yet?
It's amazing. It's changed my life. It's changed my life. You've been making so many, prepping so many salads, and now I finally got a salad spinner.
You'll love the salad spinner. It's amazing because then you can wash your lettuce and eat it soon instead of washing it and then leaving it there to dry for a while.
Yes. Oh, I would go through a roll of paper towels trying to dry it.
Yeah. Nope. Not anymore.
And last year, all I asked for was a can opener.
That's
my can opener was terrible. I'll tell you the best can opener, the Cutco can opener.
Oh, Cutco for life. Jenny and I both got taken by teenage boys who sold us a whole knife set to the tune of $2,000 each.
$60 can opener. You'll never get a better can opener.
Never get a better can opener. Okay, so let's take a look at this. The other thing that I want to start doing in the new year in 2025, we've talked about this before. I want to put in GTCs. We're going to be very mechanical. And I'd like someone, and maybe we can put in a request for this. Do you remember in years past, we would have a chart and the chart came up. If you were in this trade selling premium for X amount of days and you got X percentage, get out. I would like that one to be redone for 2025.
Oh, let's ask for that.
Right? Because it was very nice to have that chart. So you would say, you'd go to days open, just kind of with something like this, and Google, now we're down. I'm going to try to find something. Well, we can't find anything that we're up. But taking a look at IBIT, you got 5%, but you're in it for 7 days. There was literally a chart, and it would say, if you're in it for 1 day and you're up 10%, get out. If you're in it for 2 days and you're up 20%, I'm making that up, get out. And then once it got past 2 or 3 days, it said leave it till 50%.
Well, because I mean, like, look at AEO. We're up 31%. It's been on 13 days. But I think you're right. I think after it got past so many days, it said then you got to leave it for 50%.
And you leave it for 50%. But you know what I'm going to do here? So, well, Jenny, this is also a naked option. So let's roll this. 21 days till, 21 days till expiration. This is something we still want to be in. Taking a look at this, I'm going to roll it out to regular Feb. Taking a look, if you stay at the 17, you're going to take
we tried to do this. We looked at this on Friday. We looked at this 2 days ago and said the same thing. Like, let's just leave it. But right, it's mechanics. We're beyond the 21-day mark. Roll to Feb.
And I'm going to put in a 50% GTC. Is there anything else that needs to be rolled or GTC'd?
I'm sure. But we could do that tomorrow. We can, because I don't want to have to go through every position right now. And look, it's 2025 and RSX is still on here.
It's 2025. Where's RSX? You know what's so funny? I think all traders. I think that I would love to ask a poll of our viewers that didn't come from the trading floor. If this special skill set that all floor traders have translates, I can see what I want to see and I can ignore anything around me noise wise.
Oh yeah, for sure.
So I can hear if I want to, I can turn my ears on and I can hear 4 different conversations at once. But if I want to hear one that's in the corner or one that's over there, I can literally just make myself do it. Just like RSX, I can completely ignore it. When we look at this, I don't even see it anymore.
I thought maybe it'd be gone. I get it. I mean, that traders, because we grew up surrounded by noise, like things don't bother me. Dogs barking, babies crying, things don't bother me because we grew up in an environment where we were just surrounded by constant noise.
Yes, it doesn't. I wonder, and I don't know about the noise per se, but I want to know if self-directed retail investors can block anything out too. Do you think it's a trading skill set or do you think it's a floor skill set?
I don't know. I don't know that I have the skill set of blocking everything out because I clean up my account. I like my account we called them the sheets back in the day. Like I like my sheets to look nice. So I do get rid of things. That I don't want to look at. So like.
Oh. I have an account that I transfer everything to that just has, I was telling my husband this. I go, well, in the account where things go to die, we were only up the risk-free account. And he's like, what are you talking about? And I was like, well, anything that I don't want to see, I transfer into that account. He's like, well, why wouldn't you close it? I was like, well, what if it's very, very cheap and it continues and it rises like a phoenix from the ashes? That would hurt me more than the closing. So I put it into an account.
We saw that just happen with rum, but we've also seen things go to zero, so you can go either way.
No, I know, but when things are so low, I'm trying to think of let's take a look at MJ.
We're not in rum. Let's get in rum because there's premium and it's fallen down quite a bit.
It has. I was going to say, take a look at MJ, for example. That's something that's something. It's a $2 stock. I have things that are going into where things go to die that are 70 cents. I was like, I'm not going to take my 70 cents. I would rather see if this thing can make something of itself.
I just can't believe MJ never did anything.
Never did. Remember, wasn't it 2023 that was supposed to be the year of the pot stocks?
If you go into Michigan, I think it was like 2021. It was or 2020. It was a long time ago. It was a long time ago. If you drive into Michigan, it's insanity. So this is what I'm learning. Illinois, if you buy anything from a cannabis store, it's more expensive or the taxes are higher. Indiana doesn't sell it. It's not legal there. Michigan, it's legal, and I believe it's cheaper or taxes are less. So when you go and it doesn't take long, like it maybe takes an hour to go from the Illinois border through Indiana into the Michigan border. And as soon as you cross that border and you're in Michigan, there have got to be 20 cannabis stores lining the border.
Wow.
It's insane.
That's where you go to get all your weed?
No, but you can't. You drive over the border, and it used to be welcome to Pure Michigan. It's like Pure Michigan. You could breathe here. The air is fresh. Now you go over the border, and it's just 20 cannabis stores that line the street that have just popped up in the last 6 months.
Oh yeah. Well,
it's really, really crazy. And I feel like it's not a good look. It's not a good look for Michigan. Gotta tell you.
Well, that's why they're on the border. You got to go past Canada stores to get all the way in.
Well, no, I mean, they're in Michigan once you cross the border. So MJ has never really done anything. Those pot stacks have never really done anything. I don't know. I'm long MJ, but.
And I'm long MJ. These are the ones that I'm also long to. And Tilray. Like, why would I close Tilray? Just in case it does something.
Right. Someday. We're all over the place. Look, we're up 20 now.
I know. It's been a crazy day. Okay, I'll go back into Rumble because we said we were going to do that.
Well, I wouldn't mind selling something in here. It ran up to 17. Now it's back down to 12. There's premium in these options.
There is premium. So let me ask you this. We don't have a position in there. So let's say fresh set of eyes. You look at something, a $12 stock, 57 rank. Doesn't look like there is going to be earnings on the horizon, although I don't know when their earnings are or what they do. But so let's take a look. Would you go to February? Yeah.
I mean, I think we have to. So
wait a minute. Hold on. Let me just see if my eyes are deceiving me because this could be true. Okay, so we're in February. Just take a look at the 11 options. So the 11 options with 50 days to go are 120, 130, and I'm going to sell it. It is it cash settled? Yeah, it's a lot of capital for a $12 stock. Okay, now I'm going to go to the regular Jan just because. Okay, the 11s are 30 cents. I'm sorry. I must have been looking at the 12s. I was looking at I didn't realize it was 50-cent wide strikes.
Oh, right. With the 50-cent wide strikes, it throws you off.
Yeah. So I was like, you got to be kidding me. I was like, we're going to stay in January because it's the same price. But that was the, 12 strike. Okay. So if you're going to go here and we want to sell something.
I would just sell I'd probably sell the 10s for 85 cents. Well, is it less? Is it less buying power? No. Unless you want to define your risk, then make it the 11, do like the 11.8.
I was just trying to find something down here that had tight bid asks. You got to go 11.8.
Yeah,
you got to do 8.
Do 11.8, and then you're getting 90 cents.
Okay, shipped.
Filled. Look at that, and filled into. What are we doing? Oh, it wasn't Tilbury. It's just rum.
So let me ask you this, Jenny. No, we just got 90 cents there, which I understand, and that's a spread. Would you want to add on the call side? I know we were talking about this. You could literally do just a $2 wide on up here for another 33 cents. That means you've got 120 to the upside. That's both sides.
For 50 days, I don't know if I would.
Or maybe.
When I say I'm selling both sides, I mean on my long positions, I'm selling both sides, but I'm not selling the call side against all of it. I'm not selling the call side against all of it. I'm just selling more. Like in rum, I have some rum. I have been selling some calls against it, not against all of it.
Okay. I was just asking because I know that's your New Year's resolution is to sell both sides. But
instead of selling both sides, not just thinking like, let it ride, it's going to keep on going.
Oh, never let it ride.
Well, which is what you mostly did last year with a lot of your underlings.
I was actually probably the most actively managed I've ever been in my life with my long underlines.
Well, with the zebras, but like
no, even with the diagonals, daily adjustments of diagonals is also it also gives you a lot of theta.
Right.
So active, like in my mind, I would rather active management. I'm never just going to sit on it and let it ride. Like there was not a single stock in my entire 3 or 4 accounts that I just had stock.
No, but like when I'm saying I'm not just going to keep riding a zebra up and riding a zebra up and thinking we're going to keep going up. I'm fine having my stock and selling both sides around it, but I'm just not selling 100% of the calls around it.
Yeah, no, I get you.
Instead of just having the stock and selling puts, instead of like doubling up just to the long side.
And I also think I liked what I did in 2025. I liked mechanical active management. Every single day I opened up every single position and adjusted it. And guess what? And I know this is going to sound bad. And I know that we work for for the company. I was happy to pay those commissions because it helped me. It locked in profits. It eliminated some risk. Active management for me is the way to go. No, it's not that way for everyone. Everybody's got different trading styles. For me, everybody's got to find their own footing and what kind of style their trader is. I think I'm an everyday open up every day actively. And I would blindly do it to the point where I never even thought about it. I would just open manage. And it would, because I've got a lot of positions. It would take me 20 minutes each day, but that's it, 20 minutes.
Well, and again, it depends on what people want. I don't mind the commissions. It's $1 in and it's free to get out. So I don't mind the commissions. My commissions weren't that bad. If you are an active trader, your commission, like you're going to pay commissions wherever you are, wherever you're trading. It's just part of the business, part of it. But they're not bad at all.
And every single day, that's what I did in the tail half of the second half of 2024, and it really helped me every day on the open, except on Wednesdays and Tuesdays, because I can't do it because we're driving in the car or we're on the train. I open up every single position and actively adjust it.
And end up with mostly diagonals.
No, with everything. No matter what it was, I actively opened it and actively adjusted it. If it was a short put, I would roll it up or add on a call. Right. If it was a zebra, I was rolling it up and adding a call or selling a strangle around it. I actively managed each position almost every day, which actually helped me a lot more than I thought it would.
Well, then you keep track of what you have and what's going on. Like if you're just like, sometimes we don't open all of these and we forget what we even had. Like, oh gosh, look at this. Forgot what this was from.
Yeah. Right. That is true. That is true. Okay. So what else do we want to do here? Now, we don't do that here because that does not make for good live programming.
No, let's add. So Vanetta today talked about the dogs of the Dow, the dogs of the S&P, the dogs of the NASDAQ. We looked at Boeing and added a put spread. Moderna, we already have something. Intel, we already have. No,
Moderna, we don't. It closed.
Oh, it closed. That's right.
Yeah.
Do we want to get back in? What was our put spread? Could we put the same one back on in Feb?
Let me look. Moderna, it's down here. It was the 35.40 in the 15-day.
Okay. So we could go to Feb.
35.40. Sure.
Put the same one on in Feb. Sure.
192, not bad, 61 rank. Now doesn't matter for earnings, but take a look at this, Jenny. Here's what I want to kind of show. And I'm fine with this. I don't mind being directional through earnings, but this is going through earnings, and we can tell that there is no purple line. How do we know that? Because the implied volatility in February and actually March and going forward is much, much, much higher than it is in this Feb 14.
Yeah. You can see that.
Now, that being said, with drug stocks, though, Jenny, sometimes you'll see implied volatility pop because it's drug stock.
Right, like if there's news coming out of some kind of one of their drugs.
Yeah.
So I don't mind being back in this. It's a defined risk trade. 60 rank.
Yeah, I don't mind it either.
We wouldn't sell both sides. We wouldn't go through earnings selling both sides, but just selling one side. If we get an update, we can get out.
Yeah, so we've got that in, and we're filled.
Okay, so put in the GTC, part of the, New Year's plan, stay on top of the GTCs.
Yes, and I would argue, tomorrow morning, I'll put this on, well, actually, I got to log into a different account to do that. I'll put this on my list to put GTCs in for everything.
What else was on the list of the dogs that we don't have?
I don't know. That's all I was kind of half listening with what it is. Let's pop back into Twitter real quick. I just wanted to make sure we got to everybody because I know we're running a little bit out of time. What time is it? No, we got about 10 minutes left.
See, I'll be curious to see 1.3 million SPX have traded versus 1.8 million Tesla. Whoa.
Goodness.
That's crazy.
Yeah, Tesla is super liquid. I know we have a Tesla. We have a Tesla position. No, we're kind of locked and loaded.
Oh, but this is just like two ratio spreads,
we never took the risk off either side. So they're two broken wing butterflies. So we're up 51% on the credit that we received.
Then close it all.
No. We've left this for so long that it doesn't matter.
No, but it's free to close. It's free to close. I would take it. When you put on a ratio spread for a credit, you're usually paying for the credit, or you wouldn't be taking in a credit.
Correct.
It's free to close. I would just close it and take our 50%.
No, I agree. We've talked about this multiple times, though. That's the only reason. It's the only reason I'm having it on because I don't want to say we're talking out of both sides of our mouth. We've opened this up and looked at it multiple times where we're like, put it on for the ratio spread to leave it.
No, we have looked at using the credit, using our profit to make it a butterfly. But if we have 50% of the credit taken in and it's free to close, I would just take it off for 50% of the credit. Because I don't think, and I've said this all the time, a $400 stock, I don't think we're ever going to pin a butterfly.
No, but let's put something else on in Tesla. If it is the most liquid trading, I said I like liquid products, let's put something else on.
I would take these off and just sell a put spread. But we want to make sure that we're actually making the money, that we're actually making the $60, the $65. So you have to be careful when you're putting in your bids, because if you're paying 55 cents for this, that means we can only pay a nickel for the calls.
The calls are so far away. You see what I'm saying? The calls are so far away. So for the nickel for the calls, this is how you pay the nickel for the calls. I'm paying 7 cents.
Oh, I see.
That took all the risk off the table for that 7 cents.
Yeah.
And then we don't even need to close it. Like if it goes up there, great. Then we don't even need to close it.
Right. We don't need to worry about that. But I would close the puts and then we could put on a put spread in Feb if you wanted to. With it down $18.60 rank.
Then it eliminates all of our trying to do the math on it. I'll pay 60 cents for this. Yeah, we'll see if we can get out of it. Then we would have taken in $40. Okay. Then let's go.
Last time we had these on, we took them off for probably 50% of our credit, which saved us. Yes, we did. We took it off. We collected $2. We took them off for about $1, and it saved us because then it ended up blowing through the calls. We got a bunch of emails and questions on it, and we had taken it off.
Look at this volume, 62 million shares. That's crazy.
Yeah.
Okay, so the reason we just still have the upside in there. Now, if we're going to put on a put spread in Feb, you're going through earnings.
And we don't have to, but I know you said you wanted to put something new on.
I do want to put something new on.
But we don't want to go neutral through earnings.
You could just take very little risk and do something like that. That's $1.
Yeah.
You need to collect more. 50 days to go. That's not worth the risk. It's not worth the risk. And we just took off the 50-55. So we just took
it was right there.
Well, we were long this. We were long this, short 2 of those. To be honest with you. Wait, hold on. You know what I mean? If you're a butterfly, you're a long 1, short 2. We could do the opposite where you're selling 1, buying 1. It's 110. That's not bad for 15 days.
I don't know. We just took the risk off there because I thought if we're going to put something on, it should be further than 15 days.
But then you're going through earnings.
Yeah.
I don't know that I want to put an earnings trade. I really do want to put an earnings trade on in Tesla because I have to support my child.
Then we can put one on.
Wait. What is the earnings move for Tesla? So it's going to be about, it might actually be, I think it's, look at this, Jenny, 34, 39, 57. I think the earnings are in this cycle.
You can actually sell the 22-day.
Want to get risky? Let's get crazy and see what it looks like. So 50, 45 for 112. That's not bad.
I don't, go ahead.
It's not bad, but I was just going to say because, hold on, I want to go back to that.
Otherwise, if you're going to collect more, you need to go out further in time.
You need to go out further in time. But I wanted to be out before earnings. So now I'm just trying to beat the system by saying I want to get out before earnings. But this volatility is telling me the earnings are not in this cycle.
But if you want to be bullish, who cares if you go through earnings?
No, I want to be more aggressive through earnings. I think that would be ridiculous to be bullish through earnings for $1. So what I'm comfortable with here, let me just clarify that. I want to go to the expected move for the cycle. I'm not really interested in trying to get aggressive and be 350, 345 because we just took off the risk at 320. You know what I mean? So if I'm doing this, that's $1.10. 50 days for $1 is kind of bunk. That's the only reason I'm saying that for something that I want to be a little bit more aggressive. My eye line was actually going to go to my poor little guy, and I'm going to have to talk to him about earnings when he's got half of his account in Tesla because the expected move for earnings is $50 per share.
Right. Yeah.
Per share. This isn't per 100 shares. This is per share. So if that is the case, this could be, a massive swing for his account.
So $50 takes you down to 320. I mean, the put spread in Feb gets you out of the way of that. Does get you out of the way of that. If you wanted more than $1, get $2. Make it $10 wide and get $2.
I don't want that. I want to be aggressive on earnings.
All right. Well, wait. I'm just saying if you get a bounce up between now and then, you would get out of that. It'd come off.
That's why we're going to do this. We're going in 22-day. I'm taking a shot saying that I don't mind the dollar between now and then. We're going to take a shot that it's going to bounce up before then. If it doesn't, then we lost a little bit of money in Tesla.
Well, and at least we've got $1 credit on this. On that downside Brooklyn butterfly, we only had like 50-cent credit.
Yeah, we didn't have anything really in it. So we'll see if we can get filled in that. Anything else we want to manage? We're almost done for the day. I'm going to pop back into Twitter.
No, and my question on Twitter, again, is can only people post who have the check mark, which is now like a paid for, it's like you've got to pay for that.
Oh, you think only people can post that have the check mark?
Yes. Well, that's my question.
Hold on, Jenny. You know what? For this, I will send something with a hashtag to see, because we're not verified, correct?
Right. We're not verified. So if you just send hashtag LAZJNY test and just send it, and then does it come? That's, with this new system, do you have to have the check mark? Do you have to pay for the premium?
Nope, I did it.
Oh yeah, so you did it, and that posted, and we don't have the check mark.
And look at us. We're gonna get that check mark for sure. But I just posted it. We don't have the check mark, and I put the hashtag LIZJNY, and it came right.
We don't need it, right? We don't need it then.
Well, need or want. I want it. I want a check mark.
Liz wants to have the check mark next to her name.
I want to be verified. So we're going to figure out that. We'll figure that out within, a week or two. And then here we go. So, but this is, I had taken a picture of this to make sure that everybody was in. Today is your last day. Please, tastylive.com/guess. And this is nothing to shake a stick at. $1,000 for Q1 through Q3, $2,000 for Q4. That's pretty good.
I wonder how many guesses they have received.
Oh, that's a great question.
I know, because then you're, how many people you're against.
But this is fascinating because this is really this is like a free jumping in and you could win a lot of money. I wonder how many people are in there. That's a great point.
It's almost like a free butterfly. It's almost like Herb's $50 put spread for $2.
Yeah, that's right. That's
or $15 put spread for $2.
This is true. All right, Jenny, let's look at what we did today. And I know we're going to be, the account looks...
Got into a couple of the dogs. As far as New Year, the only news and things we talked about were some of the dogs Vanetta talked about. So we're back in Moderna. We're back in
Tesla.
Boeing.
We're back in Moderna. Yeah.
We got into Boeing?
No.
Yeah, we got into Boeing.
It didn't, look at this. We did not get, oh yeah, there we go. Boeing is right here. So we got into Boeing. Now, granted, what we've done so far has been relatively bullish.
Put spreads.
Yeah.
Right.
Which are relatively bullish. They're neutral to bullish, I would say.
It's tricky. If you go to are we out of time? Just about. If you look at the chart of the triple Qs or the SPY, we've had a handful of down days. So it's hard to say let's put on a bearish trade today.
No, I agree. It's hard to put them on, especially on an up day. We're whipping all over the place today too.
I know. Well, it's going to be an interesting 2025.
I can't wait. I'm very excited for it. All right, Jenny. Have fun at your New Year's celebration with your kids. I want to see what time it was.
A happy birthday to Sue. Have a wonderful time at the casino with Sue on her 75th birthday.
Thank you very much. Hopefully she wins. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
Tomorrow, everybody.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive, really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mike Butler, and of course, Katie McGarrigle in the house with me today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my two besties. Happy New Year to both of you.
Happy New Year.
Happy New Year.
What y'all do?
I watched the new Gladiator.
Nice.
Yeah, it was good.
On New Year's Eve or New Year's Day?
New Year's Eve.
Nice.
That was my boring night in.
Zero judgment.
Okay.
New Year's Eve, cooked some lobster.
Nice.
Lobster.
I had lobster too.
Went to my friend's house, cooked some lobster. I was home by 12:20 because I had a New Year's Day party yesterday.
Wow.
So
bougie.
Did a little bit of both. And one of my friends, Madden, who you know,
Yes, we do.
big Notre Dame fan, he was absolutely devastated by the fact that they basically
Postponed the
canceled the game and pushed it to today.
Yeah.
Because he was planning on staying there all night, doing the whole thing.
Yeah, having himself a
Cooking up some
day.
parlays, you know, and then all of a sudden it's just taken from you.
Well, I mean, better safe than sorry.
True.
And my heart goes out to the people that
Yeah.
were down there and experiencing that. Not cool.
Yeah, not ideal.
Cool. But
Not ideal.
How was yours, Katie?
good. I was at a dinner party, a very low-key dinner party. I told myself I'd be home by 10:30. Stayed till midnight, which was fine.
Okay, that's good.
It wasn't like a rambunctious time. It was 5 people and 2 dogs.
Nice.
I also had lobster, had some steak, risotto.
When did you guys get so bougie?
I just
Lobster, surf
showed
and
up.
turf,
I made
like
the
it.
salad. I was like, I'll be there with the salad. And they're like, great, we're having steak and lobster. I was like, okay, I can get used to this.
Mm-hmm.
And then yesterday, I drove out to the burbs and ate at the equivalent of like a Cheesecake Factory
Nice.
type of place.
Perfect.
Nice.
So I am very ready to start healthy 2025 and just kind of live on rabbit food for a minute.
I was lying. I went to Maxwell Street.
Oh.
Trading. Maxwell Trading. Delicious.
Love that.
Yeah, it was very fun.
That's
It was very
great.
fun. Yeah.
Well, Happy New Year to everybody that's showing up in the chat. We got what feels like record numbers for us right now.
Yes.
Looking real good. What's up, peeps?
Yes. And for everybody in the chat, guess the market is You have 2 days left, today and tomorrow, to get your guess in for 2025. So it's the quarterly guesses. I just sent an email to Bill, who won it in the Q4.
Oh, nice.
$2,000.
Congrats, Bill.
$2,000 goes out to Bill for the Q4 guess.
What was the number?
5886.54, I think it was.
Well, here you go.
Pure game theory.
Where's Bill? Yeah, 5876.54.
5876.
So he was like right on the number. I think SPX closed. Let me get this. Where were we? SPX closed. 5881.63. So he was
The under.
4 or 5 points off from it.
That's great.
That's amazing.
An amazing guess.
Yeah.
Congrats. Better luck next time, baby from Vegas.
Yes, Baby in Vegas was very close. And the group there. And I've been talking about this. You
Yeah.
got to game theory it. You can't go round numbers. Just put a little funkiness in there.
Yeah.
Add a little decimal place. Something.
Yeah. My guesses are in.
Okay.
I mean, I have no idea what's going to happen this year.
Yeah.
That's the beauty of trading.
None
of us know.
Do you want to spoil where your guesses were?
I don't even
or-
remember.
You don't even remember. Where were you? Because I just did mine this morning.
Mine were 6337, 66
6337.
Yep, 6337, 6666, 6900, and 6969.
Nice.
There you go. So
Just
you're
a small trickle to the upside.
small. Here, do
20%.
another 20%.
20% is the new 5%.
That's true.
That's what inflation does.
I will say you are not a mid-curver,
No.
as Ryan would say.
No.
I think we have a little bit of, I think everybody is excited this year. A little change in the air, regulatory, whatnot, taxes, all this stuff. I think everybody is exuberant to the upside.
Yeah.
I think we get a little upside drift. I'm not going to fade the upside drift, but I think we get a little upside and then maybe a choppy, and then maybe a little bit of upside like that.
Are we?
Are we in that?
Are we? Are we?
See, we've done this long enough that we're
I know.
sympathetic.
Yeah, my September guess is pretty flat relative to my June guess.
Okay, so I did that same thing of just kind of like a
Yeah.
little bit, and then at the end we go. I think we ended up like 9 or 10%, something like that, like a normal upside year sort of thing.
Yeah. It'll be interesting.
We'll see.
Who knows?
Yeah.
Yes.
But I'm also now like I'm picturing in my mind all of the guesses a la like Squid Game too. I've started season 2.
Okay.
Have you both started?
I binged it.
I've got one episode left.
Oh man, okay, don't tell me. I just finished episode 4. So they're playing the new second game. That's the only thing I will say about it. But I'm just imagining all of the different numbers as being taken out in the game.
My one gripe is 7 episodes. You got to go either 6, 8, 10. You can't. 7 is like.
Yeah.
Like, did you forget to upload one or something? Like, I feel weird. I'm like,
yeah.
7 is kind
Well, last year they did like 7 and then they released 3 more later in the year. So I don't know if
Really?
that's they did a second installment release.
They did?
Pretty
I thought it was
positive.
all.
I don't remember.
It was
I don't
all.
think
Either
it was
way,
all at once.
that's kind of been the latest
Maybe we
thing
get
I've
more.
been watching as well. So don't spoil it for me.
No spoilers.
But
Spoiler free.
yeah. Shout out to everybody staying around in the chat. I see
Yes.
some people sharing what they had over the last couple of days.
Beautiful.
We are secondarily a food talk show, in my humble opinion. Not us per se.
Not us as much, yeah.
Yeah.
I will say Gigi's chicken that we have for lunch today,
Good.
Really?
I brought my own.
one of the better lunches we've had. And I'm usually a griper. Like, I gripe about the lunches.
Oh, the chat knows.
This was a good one. This was worth the hour of my time that I give them for this lunch.
Okay.
This one was worth it.
All right,
This
maybe I'll
one
have
was
to do a
worth
little
it.
picking.
Yeah, it was very worth it. The chicken sandwich was very, very good.
Very nice. I'm here for it. Should we get into some little market recap?
Sure. tastylive.com/guess. Get your guess in. E-mini S&P 500 future 59.50. We're up 14 right now. We've had a little bit of two-sided action. Last night, if you were watching the futures, they were down like 20 or 30 handles in the overnight session, or at least right in the start. You had all this stuff happening and, the terrorist stuff that parts go out. So a little bit of weakness in the market in the afternoon session or the after-hour session yesterday. Into this morning, they were up 50, so it kind of got digested there. We've had about a 85 point intraday range in the E-minis, which is probably the biggest one we've seen in a couple sessions in terms of up-down movement here. So definitely seeing a little bit of a bounce around here. NASDAQ up 84. You got the Dow up 52 and the Russell up 20. So the Russell outperforming the rest of the group. But the Russell has been relatively the weakest of the group over the last couple weeks. You got oil catching a little bit of bid, /CL 73.61 up at $1.89. It's gone from 69 to 73-ish in the last week or two. Volatility futures down 20 ticks, 1728. You got bonds down 10 ticks. They were higher this morning. Bonds continue to just get smacked every single time they try to rally. Gold and silver both catching a little bit of a bid. Gold up $31, silver up 76 cents, and Bitcoin having a little resurgence here. Futures up $4,000, spots up 1,800. They've had a nice couple trading sessions.
Back to 100 almost.
Mm-hmm.
Love to see it.
Keep it going.
Where's the next blast off?
In short order.
Yeah.
It just, there's no stair step.
Did you figure out what your trade of the year is going to be?
No.
You got about 48 minutes to figure it out.
I got to do it today. Okay.
You have to do it today? That's the rule
No.
first trade?
No.
Mine was already in.
This is it.
last
I'll figure it out. I'll think about it.
I did
IBIT. He stole the best one. IBIT's like, that's one.
You can go back to DraftKings.
I know.
Or just do IBIT.
Yeah.
Just do a different IBIT.
I'll find something. I'll figure something out. Yeah. I'll figure something.
Hop off with a straddle and IBIT.
Yeah.
Interesting.
You can collect $1,000 for a 55 strike straddle. That's absurd.
Just fade a 20% rally. Or
Well, it's not even that. It's just you just pick up so much premium.
Yeah, well, that's 20%. 10, 55,
Yeah.
18,
Yeah.
17%. Okay, I'll think about it.
Yeah. You got some time. Don't rush things. You know?
Thank you, Kate.
Let the market speak to you.
Thank you. Thank you.
Speaking of speaking, I feel like this is I posted the picture of you at the barbecue place.
Oh, at the barbecue.
Yeah,
place,
as a joke to end the year. It's probably the most popular tweet I've ever had.
That was fun. That was a good little
fun.
spot. Yeah,
It was just a little jokey joke to finish the year.
Yeah.
The Dallas.
Yes.
Yeah, I just dropped my tweet in the chat.
Nice.
But speaking of followers and stuff, I've been pretty plateaued at my 10K level. So if there are any new people out there that want to follow us, at Trader Katie, at Trader Mikey B, at Trader Nikki Bat,
yes,
give us a follow.
Please.
Does this work? Let's see if this works.
Say what's up.
There you go.
Oh, you got it? Is it showing on the screen?
Yeah. Just a little sleepy Nick.
Just
Where?
sleepy.
I don't think it's showing, is it?
It's right
It'll
below
show up,
Katie.
yeah.
There you go.
There it
Oh,
is.
thank you.
Stunning.
Thank you.
Yeah.
Yeah, that's,
I mean, it makes, when you're placed in charge of social media, when
There
we
you
do
go.
go on the road together, it really helps.
I put
You get the barbecue sauce?
Yeah,
That's nice.
Yeah.
I
Nice
played
touch.
into it.
Yeah.
Yes.
I was very glad that we walked home that night.
Yes.
'Cause
Yeah, you gotta get your
girl
steps
was
in.
Full.
Yes.
Got to get your steps in somehow.
Yeah. Anywho, all right. What do we want to do? We want to recap 2024, talk 2025.
Yeah, let's do it. We got our 3 trade ideas too. Thursday, coming in hot to start the year. This is a beautiful segment.
It is, and I get to spend it with my besties.
You two, I wouldn't trade you for the world.
It's good.
Okay.
I appreciate that.
You guys
and I feel the same way.
I do too.
Yeah.
Like Billy Madison, where he's like, stay as long as possible. That's how I feel with you guys. It's like, you're going to be mine forever.
Yep. It's going to be that way
It's love.
for a minute.
It's love.
It's the tasty way.
It is. All right. Let us recap who is first in the 2024 look back.
That's going to be me. Okay, so yeah, we're going to walk through some of our best and worst trades of the year. Let's kick it off with the icing on the cake before we get to the sour stuff. My best trades of the year were FedEx.
Again.
LOL.
I think multiple times.
Yeah, multiple years. FedEx
DraftKings was my next best one, and then Amazon. So really the logic behind these, FedEx, I think was almost exclusively earnings trades to the upside and dip buying. But FedEx, if you look historically at earnings results, like 80% of results have been to the upside in the last 2 years. It's crazy. That's not to say that that's always going to happen, because if you look at the chart of FedEx and you see the one-day dip in September and then also in December, it's not always to the upside. But big moves to the upside a couple times in a row in a $200 stock, that's going to put you well in the green if you're playing the upside there. So earnings trades and dip buying. DraftKings was more my traditional short premium year-long strategy with a straddle I started with. So I had the 35 strike straddle, sold that for $400, and then by the end of the year, I accumulated almost $2,000 in extrinsic value premium. And my strikes really didn't move too much. And if you look at where DraftKings started the year at 32, and it ended the year at, well, when I exited, it was at like 38. So it was well within the implied volatility of the year. Just looking at DraftKings now through the end of this year, you're looking at a 13-point expected move. So if it's within the expected move, if it's within 13 points, plus minus 13 points from 37, and you're selling premium the entire year, you're likely going to be just fine. So that one worked out. That was nice. And then Amazon was a lot of dip buying. So I did the same thing in Apple and Google. I was profitable in both of those too, just kind of waiting for those market sell-offs and then buying the dip. It was a strategy that worked very well in 2024, and I'll likely continue to execute that strategy, buying dips in low volatility markets, defined risk with time on your side with 60-day options for diagonal spreads and stuff like that. I think it'll be another good strategy for 2025 if we stay in this low vol environment. Worst trades were SPX and the Qs, ironically. I was using SPX and the Qs almost exclusively for hedges. So trying to hedge the downside. But my mistake here, looking at the actual trades, my hedges were too big for the portfolio that I had and the positions I had on. So I was placing after 200-point rips to the upside in SPX and the Qs, I was placing 1.5 to 2K hedges with time, and I was like, okay, these don't have binary event risk. I can make them a little bit larger because I might have time for it to move to the downside. Little did I know that there were no red bars in sight after those trades were placed.
It was literally really fast moves too.
Yeah, it was literally like you place the trade and you're down 50%, you're down 60%, 70%.
They shouldn't move that fast unless you get. That was one of the things I mentioned too.
But at the same time, they shouldn't move that fast, but they did.
Yes.
So where's the error? The error is that my hedges were too large.
Yes.
So really, looking back, I should have had trades on that were $500 to $1,000 in risk versus 1.5 to 2K. If that were the case, this would not be on my worst trade list because my losses would have been in line with an earnings trade loser or something like that. Yeah. And then Netflix was the other side of the earnings coin. So Netflix, I was playing it to the upside, and Netflix had a really hard time rallying after earnings for the most part. So, and Netflix is an expensive product, which means earnings trades are expensive. And, even though Netflix had a great end of the year, that's the trouble with defined debit trades is you don't have the ability to participate in that. And that's really the power of trading small within your account size. Anyone that sold puts in Netflix or had stock in Netflix, obviously you did great on the year, regardless of what happened with the inter-year chop. So, but with a small account, you can't do that. So I was participating in a defined risk way, binary event way, and it didn't work out. So yeah, those were my best and worst, but I think, like I said last week, I'm really not going to make too many strategic changes. Usually when we do this, there's a strategic change that kind of comes to light when you look at your best and worst trades of the year. But I was fortunate to make money in this account this year, and really when I had losing days, they were really not that bad because I had a lot of diagonal spreads, calendar spreads, and my risk was defined. In all situations where I had big losers, they would have been significantly larger if I had sold undefined risk premium. And that's a function of low IV, really. High IV, it's a little bit different, but low IV environment, low IV product, this is why, we kind of lean towards that debit side of things so we can control our environment much more easily rather than just selling premium blindly, even when IV's low.
Good stuff.
Cool. And then, real quick, going with the same theory here, I was looking for products that are well known that are not participating in the broad-based market rally today. Microsoft is one of them. I actually got filled when Microsoft was up earlier, but Microsoft is well off the highs. If you look at Amazon, Apple, Netflix, Nvidia, they're all near the highs. Microsoft is not. So I'm just playing for why is Microsoft not? I don't really care about the narrative. Eventually, I think Microsoft will retrace to highs, especially if we have another bullish market in 2025. So kicking it off with a $1,000 risk, 10-point wide diagonal spread, long Feb, short the January 24 cycle, which is just before the earnings announcement. So that gives me another out. If I need to roll that short option, I can roll it into the earnings cycle, pick up a lot more premium, and reduce basis pretty aggressively.
All right.
Nicely done.
Thank
I
you.
will not join you, and I will explain why when I give my little 2 cents.
Ooh, okay. Very nice. Very nice. All right, for me, best were NVIDIA, DraftKings, MCL. I think for NVIDIA, anything that you did all year, as long as you weren't like leaning heavily short, was profitable. It was one of those cases where, I hit some good earnings trades and just directional positions, call diagonal, stuff like that. But also, if you were selling strangles or iron condors or really anything like that, for the last 6 months or so, that's been just a cakewalk. I mean, or I shouldn't say 6 months. Let's call it, 3-4 months.
Yeah, with that chop.
The fourth quarter of the year, you had 4 or 5 cycles where, 30-day cycles where anything you sold, whether it's a 20 delta on either side, 30 delta on either side, they were all profitable. So it was a good vehicle for both directional trades as well as short premium, I think is what I was trying to highlight in here. I had a number of iron condors, one of my most active traded stocks of the year. So hopefully that continues, with NVIDIA and others into next year. I also had DraftKings on there. This one was just like, a simple no fuss position. These aren't exactly my biggest wins and biggest losses, but I think these are the ones that kind of stuck out. DraftKings was a perfect example of just being able to hold a position and, take 10 or 15% up moves, take 10 or 15% down moves, and just not even have to worry about it. So that was another good one. And then I put MCL in here because I think that was one of the more frequent, weekly, 3-day, swing trades like scalping. And that's a product I think I will be doing more of in the future just because it's like the perfect size. You get a lot of leverage with it because of the span margins. You can, you get those big $100, $200, $300 winners, in a short period of time. And assuming that it continues to stay in this range, it was a very good trade. So I had that one on there as well. On the downside or on the worst side, some of the stuff that didn't work, as Mike said, the SPX positions and some of the hedges that I put on, I don't think they were bad trades, so to speak. I think going off of what Mike said of just the fact that these were big positions that I wasn't expecting to move as fast as they did. I mean, you put on an SPX butterfly and you the market chops around but floats higher and you're on the put side. On a $1,200, $1,500 butterfly, you expect to lose like a couple $100.
Sure.
The market goes up 5 or 10% in 2 weeks, which is something that we saw almost routinely.
Yeah.
Those trades go from $1,500 to $500, and so I don't think I had them wrong. I think it just so happened that the market wasn't, that I wasn't playing into what was happening in the market.
Yeah.
So those ended up being a tough one. Another one where I got too greedy, Tesla. So this was one that I traded from the long side for most of the year, and it was a great trade. Call diagonals, short put spreads, skewed iron condors, stuff like that. And then I put on a wide call broken wing butterfly that basically just zapped everything that I did throughout the year. So I got a little bit too big on that position. I think that caught me. I don't think Tesla, the product or the move, was really the problem. It was just getting a little bit too big. That's all.
Yeah.
Always getting too big is the problem.
Eat like a bird, like an elephant.
Yes, exactly. And that goes to the currencies as well, which, and I put my little dots there, or I had them there, I deleted them. I have a 3 lot of the micro euro contracts sitting at lows I don't think I've ever seen, or it's been quite some time.
Yeah, I mean, it's been very rare that like the dollar and the euro are at parity.
Yes. So I've gotten a little bit too big in those in the past. I do not learn my lessons, so I'm getting too big in them right now. You have to be careful. I mean, these products, they're not, implied volatility is like 7, 8, 9, 10%. So they're not expected to move all that much, but they have been moving a lot. And so they grow some teeth in terms, the buying power is low, $300, $400, $500, but they can grow some teeth in the loss department. And so they caught me a little bit.
I can't say that doesn't look unattractive though, in terms of extreme.
Well, I've been saying that for 2 months.
Yeah.
So,
Yeah, currencies, I mean, the dollar's just been super strong.
Yes.
Like, that's the summary.
Yes.
So, I get it. And like you're saying, it is attractive because of the capital efficiency of dabbling in those micros.
See $300 in buying power and you can make 50 or $100. It looks like a no-brainer. And then
I'm in with you.
I'm about to be into.
The triple threat.
Yeah. Oh, God. For my trade, I'm going to get some tendies back.
There you go.
Oh,
Mr.
a revenge
Musk.
trade. Okay.
I like the revenge trade.
We had, I don't know, when we were on Tuesday, we had, I don't know who was looking for it, but we had a Tesla. Somebody was looking for a Tesla, like 5.8. Was it 580 or 480?
It was 600.
600.
It was 600 by a specific date.
Yeah.
Or maybe 500 by a specific.
So if you're that person and you've been waiting to put your trade on, today's is the day to put the trade on. The stock is down $25. It's gone from 450 to 380-ish right now in the last week or so. So you've had a 15-20% down move in the stock. Of course, it can go lower, but if you've been, itching to get long, I don't know if there's been a better time than if you go back to November and December when it was trading here. So, or early November. So I did a call diagonal spread here. I bought the March 420 call, obviously.
Nice.
Got to go to 420, 420 funding secured. I sold the February 450 against it. I did it when the stock was trading right here, dollar lower. But I did this at a $1,400 debit, $1,460, which is $14.60 is my debit on this trade. It's got a lot of duration on it. There's tons of call skew. Volatility is super high. I don't expect any of those things to come out of this stock. So, from a risk perspective, I think in the short term, you have a couple $100 in potential risk, much more than that in potential reward, especially if you do see a pretty decent bounce here. I would look for $300 to $500 would be my exit point, depending on how quickly that comes.
I like it.
All right. Not too shabby.
And yeah, you got earnings coming up, but you're collecting a lot of premium relative to what you're buying in March.
Yes.
That's for sure.
Yes.
Well, I wish you well.
Thank you.
And I wish you well too, Mikey. I wasn't trying to poo-poo your trade idea.
Thank you. I appreciate it.
You're welcome. All right. Well, moving right along then, and I know we have quite a few people that are watching in the chat, so keep dropping those questions. I'll make this short and sweet. But similar to you, Nick, I had a pretty successful year in crude oil, not with the micros, but with just the crude oil futures options. They are one of the most liquid futures options that are out there. And for me, what I did this year well in crude was a lot of emphasizing duration over direction. So if I was entering with a neutral trade, like a iron condor or something like that, and I started to get tested, I would, our first default is often, taking a stock of the situation and maybe peeling off the call spread or the put spread and then rolling part of it or some of it out in time. So by keeping pretty my standard size there, and rolling, 1 or 2 expirations and just continuing to chip away and pick up a credit while doing so, that ultimately helped me out. And it's one that I just like to have in my portfolio pretty consistently. So there is an element of number of occurrences in that asset alone, that I think helped. There wasn't one giant trade in crude that got me here, I guess I should say. Similarly, with natural gas, it was all about defining risk and identifying those price extremes. Natural gas, as most of you know, has a seasonal element to it. So when we do skate at those lows, I really do like to see, okay, is there a put spread or a call spread or a broken wing butterfly or something that I can kind of utilize to gain exposure there. And that worked well this year, with not only just vertical spreads, but as I mentioned, looking at that skew in that product and seeing if there was any type of broken wing butterfly trade I could, make. We tend to see call skew on natural gas. So just kind of trying to use that to my advantage. And again, small trades where I'm not getting too big or overexposing myself, and just trying to keep that in my portfolio relatively regularly, particularly as it came to late summer, early fall. And then a couple of single names, I guess you could say, and an ETF, but Boeing, utilizing naked puts at lows and iron condors around the expected move. That's kind of your NVIDIA trade that you were talking about, where there was just a bounce that I needed with, by selling a naked put, or my iron condors just actually did contract in the way that I needed them to. And I think somebody else in the chat mentioned something about my upcoming trade, but similarly, just emerging market style trades, EWW was great for utilizing zebras this year at extremes and putting them in as stock substitution style trades, rather than just buying outright shares of EWW. And then on the flip side of that, and we talked about it all year on the road, so it's not really a surprise to probably some people that attended our events this year, but gold and the Canadian dollar were tough for me. I was just directionally wrong all year.
Yeah.
I was stubborn, because I was well, if I was short here, I have to be short here, or if I'm long down here, I have to love it even more long down here on the flip side. So I didn't have very many successful gold trades, and the ones that I did were eaten up by a spread where maybe I went $500 more in risk, and then I, ultimately ended up deep in the money and at max loss, and there was nothing to really manage at that point. And then for Micro Canada, it was just, kept thinking I was buying the bottom, and that was not the bottom. So, those things happen.
Yeah.
And then, like I said, these last 3 are, I believe, and this is no shade at you guys, this was my own choice, but I followed you guys into some diagonals.
Oh, you know what?
I followed you guys into some diagonals this year, and they just didn't work. Either we were directionally wrong, or to my own detriment, you guys were rolling pretty actively, and I forgot about rolling part of the leg to continue to reduce the cost basis, and then I just got caught, and then I just had a long naked option that was doing nothing for me. So I will be a little bit more mindful of putting on diagonals this coming year. Not to say that I don't think they're a great strategy, as you guys know, and as we talk about on the show, but I was not successful in my management of them if I were tested shortly after they were put on. Okay. I had some good ones too. But these were just my worst individual names, and the common denominator was that they were diagonal spreads.
And what else?
And you too.
Well, it's I kind of feel bad if it was mine, because I'm looking at the order chains of Microsoft for last year, and I only had one losing trade.
I know.
It was in November. All the other ones were $200, $200, $200, $200.
Yeah.
So it's if that was the one.
That's usually how.
I'll have to go back and, check, but.
Snow was definitely me. I had one trade in Snow
and
that
Carvana
was
for February earnings
Yeah,
I think
February.
Carvana, I got you.
That was you, yeah.
Yeah, I think
Snow
I got
was
you.
me.
Yeah, Carvana, you were definitely Snow. And then Microsoft, that
It
was
could have
just
been
bad
done either
luck
way.
by
If
you.
it was July and Microsoft, that was the only losing trade I had.
Yeah.
Might have been. I'll figure it out after this.
Yeah.
It's water under the bridge, you know?
It's okay.
And I mean, I still was positive on the year. So again, it just goes to show that importance of size and consistency.
As Tom says frequently, you can't take my profits, you can't spend my profits, and you don't take my losses.
Yeah,
so he says,
exactly.
I don't care what your opinion is.
Yeah, exactly.
So it's okay.
Precisely.
Winners and losers. Is
Yeah,
always
of
gonna be
course.
trading.
An honorable mention really quick before we get to my trade idea, but because I just started doing the show with Ryan, of course, and learning more about crypto as, not only a speculation vehicle, but as an investment vehicle, I've had some early success in there. And of course, I got lucky and I started
Altcoin?
I'm not in the bags really yet. I've got a little ball.
Okay.
That's it.
A little ball.
But honorable mention to some of some Bitcoin and some ETH and Solana and things like that. I've been nibbling on those. Unfortunately, it's tough for us at the moment to show crypto investments on the follow feed. So don't come for us. We're working on it. But I just wanted to throw that in there as something that is also like a resolution of mine, which is to kind of continue to learn more about that space and hopefully integrate it more, whether it is with crypto ETFs or crypto related single name stocks or the outrights themselves.
Lovely.
And with that in mind, I think somebody in the chat shouted out something that is also on my radar. John, thank you for dropping that in the chat. But we were on the same brainwave this morning. So I am looking at another stock substitution, emerging market, at a price extreme style trade. So I am in EWZ with a call zebra. This gave me literally 100 deltas, as you can see in my screenshot here. Long 2 of the 21 calls in February and short 1 of the 23 calls in February. So 50 days out, which is, in my opinion, helpful for when you're doing just kind of like a static-ish delta style of trade. I paid $320 for this, so that's of course the most you can lose on this position, and would be really happy with 75 to $100 in here, if not more. But 50 days for me to see a little bit of bounce in the Brazil ETF EWZ.
Bom dia.
Bom dia.
I'm joining you here.
Yeah.
341. Filled at 340.
Yeah.
I got 342.
Ooh.
Oh, and really quickly on the same note, I didn't put it in here because we were running out of time, but I also did a put zebra in American Airlines.
Ooh.
In the January 24th expiration. So that's the one that is
Into earnings.
in the earnings.
Do you have a vendetta?
Clearly, $16
I don't
stock.
really have a vendetta, but
Just at highs, and you're saying why?
yeah, just why? I mean, all of the airlines are looking pretty good, but yeah, I just, I needed a little bit of short delta.
Hey, I like it. There you go.
Yeah. Slightly, of course, like wider markets in these weeklies than there would be in the monthlies, but I was particular with my price entry. So said go for it.
I like it. Beautiful.
There you go.
So 2024 is over. We've shared the first 3 trade ideas of 2025. Let's get to some questions.
Cool.
Let's do it. I also have the tastylive.com/guests pinned to the top of the YouTube chat. If you want to join us on YouTube, we're streaming live there. Just go to Tasty Live. You'll see this video front and center.
E-mini's down 40 now.
Yeah, this is the second time we've
What? It
sold
was
off
2
right at
seconds
11
ago.
a.m.
It was like down 5.
Yeah. They're moving.
Bitcoin up, E-mini's down. Is this the end? All right, John. For leaps in the money options near 100 delta, track stock with minimal extrinsic value. Yes, that is correct. But 30 delta options offer more leverage if the stock rallies. How do I quickly calculate leverage?
Well, in terms of the stock move, I wouldn't say
Yeah.
it's leverage.
I mean, it's not necessarily leverage. I would say that's gamma.
Yeah.
So gamma is the rate of change of delta given a $1 move in the underlying price. But really, just to keep it simple, like if you're saying leverage is like how can this 30 delta option get to 100 deltas, that's kind of like a 3x. You can 3x your delta exposure on a move
in your favor.
Right.
But it's tough to say like leverage in this case. Like for me, leverage is more like I'm buying 100 shares and I'm putting up 50% of the value, or I'm selling a put and I'm putting up 20% of the notional value risk. Like that's leverage by way of buying power reduction. That's less than your max loss. But with a long leap option, your max loss is what you pay for it. So I don't know. I think for us, we just kind of
eyeball it and just do the math. I mean, if you have a 30 delta out of the money option,
Right.
it's going to move, for every dollar, it moves 30 cents. Like you just kind of use that. And then you have to extrapolate out the value of the time, which will probably increase if you get closer at the money, as well as the increase in delta. So, on a $5 move on a 30 delta option with a year out in time, it's probably going to move, just on the dollar, it'll move 30 cents. Assuming not much time has passed, that's probably in your favor. And then the increase in delta and volatility changes, all that stuff, it probably moves 2 or 3 times, whatever that move is in terms of your delta, depending on your time.
Yeah. But yeah, you can also, I would just look visually at the stock too. Like if you look at the Jan 2026 SPY options, like let's say you buy a 650 option for $1,500.
In January?
In January of 2026. The 650 is trading for $1,500. The at the money options are trading for $4,500. So if SPY goes from 580 to 650, you're probably looking at a 3x. If it happens quicker, you're looking at more than a 3x because the current at the money options are based on a 580 stock price. The current at the money options based on a 650 stock price, that extrinsic value must be higher, especially if it happens in 2 weeks. So if it takes half a year, that's different. But that's kind of how we eyeball it. Like how much can I make from this leap option that's out of the money? We just look at what our value is out of the money versus what the current at the money options are trading for now. And then if you're in like a volatility product or a product like IBIT that kind of behaves the same way, IBIT is different. If you buy a leap option on IBIT right now and then you get a quick Bitcoin rally from 100K to 120K, the implied volatility of IBIT is going to go up, which is going to increase your extrinsic value of that leap. So there's a lot of factors at play, but we just kind of eyeball it. If you're buying out of the money options, what are the at the money options trading for? And we look at that difference. Let's see. 2 for 1 here. What do we think of companies that offer automated set it and forget it futures trades? I don't know. If it's a simple strategy, you could just do it yourself and not pay the gas fee.
I don't know what that means. Like automated future. I don't know.
Like maybe like a fund that does like a covered call in Tesla or a short put in Tesla, like short premium funds maybe, or futures funds that are set and forget it. If it's a set and forget it, you can do it yourself. Or if it's a static strategy, you can do it yourself. What are your thoughts going into 2025? Bubble popping or bull run keeps going? Bull run keeps going until proven otherwise. Like
Narrator.
Like
they were
honestly,
proven otherwise.
Yeah, the market did crash.
We're getting proven otherwise today.
40 points. 40 points to the upside, nobody blinks. 40 points to the downside, everybody's like, ah.
Yeah.
Everybody panic.
But really, like we've seen violent moves to the downside in SPY. But in all of 2024, if you look at a chart, every single violent down move was followed by a violent up move 2 weeks later. Every single one. So it's like until that's proven otherwise, until we see a downside move and then like maybe volatile intraday chops with a downside slope, I don't see it. I don't know. That's my very strong opinion, is that until proven otherwise, where the dips are not bought, I'm just going to keep buying dips in a small way, in a defined way, keeping it small. But I don't know.
I watched The Big Short again yesterday. It was on.
Ooh, getting nice and prepared for some craziness.
No, I was actually going to say we are nowhere close to that kerfuffle of a situation.
Yeah.
So in terms of bubble, I don't think I call this a bubble. You could say it's overvalued, but I don't think there's a bubble here. maybe a little frothy, tiny bit frothy.
I'm just gonna keep my opinions to myself and see where the chips fall.
Okay, that's fair. That's fair.
You
That's
know?
about just my opinion as well. Yes.
We shall see, though.
Yes.
We shall.
Yeah.
Myrna, 35 short put for $1.80 for Feb.
mRNA.
Stock is at $35. They give us all the jab and then they go to zero.
Yeah. And now they're pumping commercials on TV.
Are they?
Oh, yeah.
Moderna?
That's how you know that. Yeah. The Moderna and Pfizer, they all have the commercials now.
They've all always had commercials.
Yeah.
The amount of drug jingles I could probably sing in this moment.
Let's hear them.
Things are getting clearer.
Mashup.
I feel free.
But yeah, that's
$1,800 in buying power, too big. Too much.
yeah.
I guess you could buy a wing and cut it. I don't know.
Yeah, you could buy a wing for sure. The 25 wing, like why not buy that for 50 cents? Cut that buying power, cut that risk.
Cut it.
Cut it. Just
Yeah.
cut it.
Cut it.
Cut it.
I'm gonna pass, but I don't know. I don't hate it.
Love the foods.
How about BZ to the upside?
BZ.
/BZ.
Kanzu
I don't know. We don't have
/BZ. I don't know what even future that is.
/BZ. Yeah, I don't know what that is.
Oh, it's Brent crude oil. Yeah. I mean, if you wanted to use /CL as the proxy, right? I mean, they have like a very high positive correlation to one another. I mean, if I were to do crude oil to the upside right now, somebody's busy.
Thomas.
Kind of lower implied volatility. It would be tough for me to like want to get long today.
Into this move.
Like after rebounding from like $66 up to 73 in the last 2.5 trading weeks.
Mm-hmm.
But if I did, like if I really was materially, I'd probably just do like a long call spread or something simple.
What about a little iron condor?
Like where you're pushing or you're a little more at the money, not at the money, but like closer to the money on the put side and then farther up on the calls.
Yeah.
I think there's flexibility here. I don't know the liquidity of BZ futures options, but like I said earlier, with crude, a tick or two wide.
Yeah.
Yeah, a couple of different things you could do in there.
A little oil action.
I think I might get on a little iron condor for myself. 68 lows, 78 on the high side.
Okay. 68, 78.
Yeah. For my shorts, and then go $1.50 wide, which is $1,000 in risk at 50 cents.
Yeah.
That's what I'm gonna do.
1/3 the width.
Yeah. I'll try and get 72 cents. I'm 52 cents.
Lovely.
Lovely. All right, who is next?
Mr. Pillows, IBITS, the trade of the year too, covered strangle. Yeah, I like the covered strangle too. It's a bigger trade because you're already long 100 shares, but if you're willing to take another 100 shares where your short put is, you can reduce your basis with dollar cost averaging and you have no upside risk. So I like it. John says EWZ is probably his top pick, emerging from darkness later this year.
Yep. Like I said, I'm with you. I mean, I'm not as far out in time as far as like a year-long pick, but I wouldn't mind a little bounce.
Harsha's got the year-long trade-in today. No management, short 60 put in Jan, and long 75.85 call spread for $1.35 credit. We'll let it ride.
DLTR.
Dollar Tree, huh?
Yeah, this was like one of the.
So the 60 put.
Oh, doing a long term. Jan 2026.
Oh, okay.
Selling the put to buy a call spread?
Mm-hmm. Sure.
Yeah.
It's just a long time to tie up the capital, but I don't mind it. I don't mind it.
Mm-hmm.
Started with a Tesla debit call diagonal and rolled twice to a vertical spread. Then added the put side. Total net credit. So you went from a 990 debit to a net credit of 724. Position is a 400 call spread and a 350 put spread, Jan 10. Interesting.
So you got bailed out on this move.
Yeah. 370, 350.
400, 430.
Yeah, you really did get bailed out.
Yeah, I mean, this was fully in the money.
Yeah.
2 or 3 days ago.
There's really not much to do with this position.
Thank your lucky stars.
Thank your lucky
Close
stars.
I mean, if you start with a call
What's it
diagonal.
trading for now?
970.
Okay, so you'd be $200 loser, $250 loser.
But I don't know how you go from a call diagonal to in the money short call spread.
I don't know. But the transactions do transact. So if he's got a set net credit of 724, maybe he's sold an in the money call before the down move.
Yeah.
Something like that. But yeah, you can. Yeah, it's tough with defined risk. If it was undefined risk, you could manipulate it. But defined risk, I think you either close it or you hold it for another 8 days if you're feeling lucky. But it's a good move. Which Tesla broke me butterfly was a loser? Was that the one where you were wider on the call side?
I did. I think it was wrapped around. Let me see if I can pull it up. I think I even let it expire. I had the 315, 345. So I had a 15 by 30 that I did for $1.14.
Mm-hmm.
So it was almost $1,400 loser. Wiped me clean. But the sack, I mean, it went from, I did this on 11/6.
Yeah,
so we went from 250. I was at the 300. My shorts were at the 315. So I played it to go up to 315 from 250.
Okay.
So it was 50 point, 20% out move. Stock went to 480. So
what are you gonna do?
it was a double instead of a 40% out move.
Yeah.
First year trading options, but earnings feel like flipping a coin unless you're really confident about direction. It's still flipping a coin even if you are very confident about direction. Not willing to do that, I think. Yeah, if you're trying to stay conservative and have the ability to manage positions day to day, then earnings are not where you want to be. With that said, earnings are a lot of risk, but because the risk is there, you can set up nice return on capital trades or collect a lot of premium to reduce the basis of longer term options. So that's what we were doing almost exclusively last year, was buying an option 60 days out and then selling an option with 3 days to go and reducing cost basis by 50% on the long option. Like that was the typical setup. Yes, sometimes they were instant losers and they never came back. Sometimes they were instant losers and they came back because we had a lot of time with the long option. Sometimes it was a marginal chop winner loser. Sometimes they were big winners. But my earnings trades this year, the profits had offset the losses for sure. But I was also placing mostly upside trades in a bullish market.
Mm-hmm.
So, yeah, if you don't want to do it, then that's totally fine. There's so many other opportunities to not participate in that.
Yeah, I would just I would add that the up or down move in terms of which one it's going to be is the 50-50 shot.
Mm-hmm.
Like the way we've been setting up call diagonal spreads or stuff like that, you have a little bit of a buffer so that you don't have to be, you don't have to make that call. If the stock goes nowhere, maybe if it goes a little bit against you, you scratch the trade or you may, it smooths out the outcomes a little bit for the actual trade itself. But yes, I totally agree. whether the numbers are good or bad or, beats or raises, whatever, it's been mostly 50-50.
Mm-hmm.
We've had multiple, where they blew out numbers and the stock drops. It's just how the nature of trading.
Yeah. So yeah, we set up, when we do earnings, we set it up with max loss in mind. We make sure that we have a short premium component to soften the blow for wrong. And we add a lot of time in the long option so that if there is a reversal in the next couple of weeks, we can get out for a lesser loss or even a profit. When you execute a spread, say a put spread of selling a put and buying a put, are they filled as a spread or are they filled as individual trades? If you're legging into it, it would be individual trades. If it's a spread that you execute as one transaction order, then it is one order.
Yeah. It's all or nothing. So if you route a spread, you have to get filled on the two,
Legs. You're not going to get filled on the short and then be working along.
Yes. Yeah. Yes. But the actual price, doesn't matter.
Yeah.
If you route an order to sell it for $1, it doesn't matter if if you're selling the short option for 2 and buying the long for 1, or you're selling the short option for 5 and buying the long for 4. It doesn't matter what those values are. It has to be filled at the combined
spread price.
Yes.
Palantir call diagonal.
Stock has had a nice little down move here. I have a 80 strike iron fly here. I rolled the puts up last week. Should have just sat. Hindsight.
Yeah, PLTR 7580 Feb 7. Feb monthly. Feb 7. With earnings.
Cheap shot. Calendar?
Diagonal.
Oh.
Yeah. 5 points wide. 322. Pretty typical setup. But yeah, you're collecting a ton of premium in the 7-day or the Feb 7 cycle because earnings are priced in to that cycle. Looks like. We'll see. It's still kind of unconfirmed, but it looks like that's where they may be. But yeah, traditional setup. I think that's it.
That's it?
11:58.
All right.
Lunchtime. Really good sandwich. I hope you guys enjoy it. You won't enjoy it because you have your own lunch, but maybe take a little nibble off his.
I'll enjoy it for you.
Yes.
That's great. I'm fine with my little semi-detox, but not really. Anyways, that wraps up this edition of Options Trading Concepts Live. If you want to see anything in future episodes, you can tweet at us. I'm at Trader Katie. Mike is at Trader Mikey B. Nick at Trader Nicky Bet. Don't forget tastylive.com/guess for your last 2 days of Guess the Market guesses for where the SPX will end quarterly. Win some Tom Bucks. Good luck, good trading, go football. Let's go eat some chicken. Peace.
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 Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live with what? Trades for the research team. Who's our first researcher? Oh, I was hoping we'd have new music for 2025.
No, I don't have new music.
I thought I had pull. So we should have Jaws music on. This man stands on his own 2 feet. Sahil! What's up, my friend?
I'm doing good. How are you guys?
I'm doing great. Thank you for asking.
Good.
Appreciate it.
New year?
New year, same bat.
Yeah. Any New Year's resolutions?
To be just as snarky as I always am. Cantankerous.
God.
That's a good one.
Oh, God.
As he gets older, he gets more cantankerous and petty and more like everything.
What about you, Tom? Anything?
I'm just special.
Oh, okay.
My goal this year is to be more special.
More special. Okay.
What do you got for us, Phil? I hope a special trade in honor of Sosnov.
It might be a special trade because I don't know if Tom's traded this
Oh, PayPal. This has a do not disturb sign on it. You cannot trade PayPal, but go ahead.
Okay.
I've traded a lot of PayPal in my, I haven't traded PayPal in the last 2 months, but I traded it when it got super cheap down into the, 60s.
Mm-hmm.
It's rallied back up.
And now it's dipped a little bit again, but
85-ish.
yeah.
Yeah. So
I don't know what direction it's going to go in, so that's why.
Well, of course.
Strangle. Yeah. Mm-mm.
Yeah, let's take a look. So which one are you doing? Are you doing Feb?
Yeah, February. It's 50 days out, so that's closest.
Ivy rank's still decent.
Mhm.
And you're doing the 75.
75 and 97.5. To get around the 20 delta, you can move it a little bit if you don't like the 0.5 strikes. But
okay,
I think so.
pretty decent credit to BPR ratio. So yeah.
Yeah.
I thought you haven't traded it for a bit, so might as well try.
I do not mind this trade. Yeah, I think I'm going to do the 75 100 because the stock's probably going to be up this
What's
morning.
with the do not disturb then, Tony? This is the first trade Tom's like.
You could not trade it. Don't wake it up. Just leave it alone. Like a Roach Motel. Once you get in, you can't get out. But it's okay. That's okay. I haven't traded in a long time. Oh, he put the order in already. Sahil, he loves you.
Love
me a little Sahil. Beautiful, beautiful.
I came up for the first time. He doesn't hate the stock, so.
It's true. True. Good job out of you, my friend. Who is our next researcher? My man Kai in the house. How are you, brother?
I'm doing great. How are you?
Doing well. Thank you very much. This is the year of the snake?
Year of the snake. But the new year is going to be the end of January. Not yet. So
soon.
Yeah, so it's still year
imminent.
of the dragon.
Imminent. Yes, imminent. The new year is imminent.
What do you got for us?
All right, so I don't think we talked about Costco recently.
We haven't traded Costco recently.
It's too expensive and never had a downtick in the past almost year.
It also had a very low IV rank until the last couple of days.
Exactly. All right.
Yeah.
So
it's had a downtick though the past month or so. Stock is off its high of 1,000 down to around 9 and change.
Yeah, the stock dropped almost $100.
Yeah, 10% mover. So I tried to do something from my option trades today every Tuesday and Thursday. I tried to do it on Tuesday. Thankfully for you, so I don't know if it's Thursday, you'll get one today. It was hard to find something to trade and hard to get good grasp on the markets as they're wide. I'm curious to see what you've come up with.
Costco is difficult to trade. Is it the credit versus buying power doesn't make too much sense.
I had my first disappointing sushi from Costco.
Did you?
Yes, I really like their sushi. I think it's pretty good.
California roll just wasn't up to snuff for you?
The spicy sushi is kind of like nasty.
I'm not gonna lie. I had their sushi for the first time about 2 weeks ago.
It's okay.
Bought it for my son. Yeah, it was very good.
It is, but I got a bad one. It was kind of old. Which usually you can count on their stuff being really fresh.
Yeah, and their seafood is pretty good. King crab legs and all.
I had king crab legs from there too. Yeah,
very nice one.
Very nice.
Their steaks they're top notch.
Look at
tenderloin from there too.
Look at you.
Yeah, step up the game.
Look at you,
Pikachu.
Look at you, Pikachu.
Yeah.
Yeah.
All right, so Costco, I'm doing the poor man's covered call. So the price is down roughly 10% from $1,000. IVR's 18%. It went up a little bit, but I still think it's good for a poor man's covered call.
What would be this so-called poor man's covered call? What are you buying?
So I long 915.
Of what month?
March, and I sell February 965, so $50 wide.
Yeah, that was
pretty much buy at the money. Buy at the money March and sell from month. It's actually February.
Buy at the money March. Okay.
And sell 30 delta, 28 delta, which is 965 right now.
Costco trading 9.19 and change, maybe a little bit higher, up around $4 or so, 3.5.
A little bit, yeah. Yesterday was 916. This morning as high as 923 or 22 something.
Yep.
I am going to take your idea and massage it
to
what strike you selling? 950s? Oh, 965.
965, yeah.
Yeah. I'm going to buy one, sell two.
Oh. No.
All right.
Buy one, sell two.
Oh.
The IV is not that rich right now.
I know. It's like a poor man's covered call tweaked. I'm going to buy one of the 920s in March and sell two of the 960s. That's the ratio I'm going to do.
Okay.
In February, and you can do it for around. I don't know.
So more like a poor man's strangle, if you sell two.
Yeah.
Cover call plus a naked.
Yeah.
Okay.
I'm going to check. I'm going to do a little price discovery, and then I'll add more. It looks like around $16, but I'm not sure.
Okay. Cool.
Cool. All right, Kai.
Beautiful.
I like it.
Cool.
Awesome.
Got to get some.
Appreciate it.
Got to get some positions on to start the new year.
Awesome. I love it. Who's our next researcher? My man.
Hey, guys.
Dr. Data, how are you?
Doing well.
It's good to see you back in your natural habitat with a tie on.
Well, thank you. Thank you very much.
You're welcome. You got a little rogue there at the end of the year.
You were kind of worried about me, weren't you?
I was worried about you. I thought you were kidnapped. I thought you were kidnapped.
I wouldn't call
Make a
that
sign.
rogue.
They were
Make a
just
sign.
standing you up. You know what I mean?
Yeah.
That doesn't look like my data. What do you got for us, Data?
I tried to zip the jacket up all the way, so you couldn't notice it. It must have slipped down. So I'm looking at XOP today. XOP is not doing too well. Last
No, it's not.
So during the first Trump presidency, oil stocks did not do very well and actually underperformed. And some of these oil stocks have not been doing very well this last time.
No, they've crushed almost all these oils. So they're up today because oil's up $1.25.
Yeah. But I mean, knowing oil, this thing is going to be right back down to where it was.
Actually, the stock has had
range.
like 7 or 8 up days in a row.
It has IV rank of 41 in XOP. It is well off of $150, which it's sort of
Yes, and that's what I'm
at
thinking
the beginning of December, down to 132, but it's not at 125 where it was
exactly
about 2 weeks ago when it's had a little bit of a run.
Yep, and so that's what I'm looking at right now. Is just trying to take it, just selling a put. The 122 put you can, maybe not at this moment. You got to wait for the thing to move around during the day.
Unfortunately, it's up like
I know,
selling puts.
about a buck.
It's up morning. It's a buck and a half higher.
Yeah, so maybe right now you'd be able to get like 140.
Yeah.
But I'm gonna probably do maybe one down to 150, and that's about it. And I'm gonna just
you just wait. You got to wait it out a little bit.
Yep. But I think there's some opportunity here. The stock could basically drop, or the ETF could drop by about 9%. You could still make money on this thing.
All right.
Or almost 10% actually with
I like it into a
cost
down move though. I'm not going to do it on the open. I'm going to wait and see what happens with stock.
Understand? Yeah.
All right. Cool.
Chase.
All right. Beautiful.
Thank you.
Who is our next researcher? Jajun, the creator of the Jajun trade. How are you, Jajun?
I'm doing great.
Happy New Year to you.
Happy New Year.
New Year to you.
I love your research, Jajun. You're doing good.
We have a better one coming soon, so.
Oh, beautiful.
Look forward to it.
I look forward to it then. See, that sounds like we have better coming. See that?
Better.
It's
That's
always
right.
gonna
Do
get
better, Jajun. Do better.
You should do better. What you got, Jajun?
So I agree with Dr. Data that oil stock, it looks like it's going to bounce because it has always been at the bottom, but right now it looks like it's getting ready for a bounce. So we do Exxon Mobile, IV rank 38%. We do a short put spread. February 21, we sell the 105, buy the 100.
Sell the 105s.
Yes.
Buy the 100s. What's the stock doing this morning? It's up a buck.
Mm-hmm.
It's up a buck. Yeah.
Like everything, so I don't know if you mean the S&P's up 33. They are off of their highs.
Yeah. All right. Well, we'll put it in a little bit. We'll. What price you brought in here? 141. Mm-hmm. Yeah. I mean, you're not going to get filled on there at the opening, but maybe it'll come back around down to that level if there's a little sell-off today in crude oil. So I'll put it in a little bit below that, like about 138 or something, and see if we get filled.
I agree.
I like it.
It's a win, Jajun. It's a win. You're starting 2025 with a win.
The stock's on its butt for sure. It's dropped, it's had a really nice pullback. I agree with you. I like this short put spread here.
And dollar looks like it's peaking, so this is going to help the oil stock a little bit.
Now you're just sucking up to size, okay? Now you got to stop it, okay?
It's always
now you're selling way past the close, Jajun. Way past the close. A little annoyed at you now.
I'm Team Tom more often than Team Bat.
Oh, I see you on Twitter. I know you're Team Tom. I know. Don't think I'm not watching you. I got my eyes on you. That's why I'm going to let you go right now.
Thanks, Jajun.
Bye, Jajun. Who's our last researcher? Ping pong, ping ping pong. Julia, how are you?
Hi guys, that's the first ping pong I got in 2025. That's pretty cool.
I'm honored and
You're
sad.
off and running, Julia. You're off and running.
Good job. Good
I
job.
have another. Before we get into the trade, I got one more trivia question for you guys.
Sure.
Something I just learned. Are you ready? Okay. So there's a country where a New Year's tradition is to smash plates on your neighbor's doorstep for good luck. Do you want to guess which country it is?
Smash plates on your neighbor's doorstep.
I want to say Italy. Am I gonna be wrong?
I'm gonna say.
I can see where your head's at. It's not Italy though.
Is it Switzerland or something?
Is it somewhere in Europe?
It is in Europe.
Yeah, I know.
I'm gonna say Georgia.
That's quite the guess. Yeah. We got Italy. We got Georgia. It's actually Denmark.
Oh, okay.
That's on Greek to me over in Tasty Chat. Yeah, for sure. So yeah, no, that's a fun little thing I learned for New Year's trivia.
Oh,
I did not know that.
Did you smash anybody's dishes this New Year's?
No, we didn't get that rowdy.
Okay. All right. No
had a
smashing
good
in your
New Year's so
household.
far.
Got it.
I would never.
Good job.
Hell yeah.
I've had people throw things at me at New Year's that smashed.
I'm sure. Before I say something bad about smashing on New Year's, can you tell me what your trade is before I go in a different direction?
For sure.
I feel like the boys from Jersey right now. Go ahead. Mm-hmm.
So today I'm actually looking at AMD. I don't love where this is falling relative to earnings in the 50-day cycle, but I'm hoping that this is going to collect a little bit before that actually happens. So I'm looking at Feb. This is 50 days out. IV rank of 54. It's looking pretty good. Last price is $120. So this is Condor. It's 105, 150, right about 16 delta, and then it's $5 wide. So collects $1.30 in credit for 370 in buying power. And hoping, I'm not in love with where this falls relative to earnings, or where this expiration cycle, I guess, falls relative to earnings. But we're seeing that with a lot of single company names, and I'm not in love with the idea of trading ETFs. Funny enough, going into like sector ETFs and commodity ETFs going into 2025 and going into Inauguration Day. So this is what I'm looking at instead.
What do you think, Sadnov?
I think you got to have positions on in AMD, and I think you got to maybe lean a little tiny bit long because the stock is on its, relative to other stocks, it's on its butt a little bit. We're a hair long in there. That's it.
Yeah, in the past year, like just looking at 2024, it's down 12% versus Nvidia and maybe not Intel, but some of its other competitors. Yeah.
Yeah, I agree with you. So I'm leaning just a hair long in AMD.
Just a hair.
Beautiful. Well, good job out of you, Julia. You smashed that. We're going to take a quick 90-second break right now and come back with some more with the opening bell next.
Thank you.
Tomas, we are back, my friend. You know what that means. It's time for a little bit more Tasty Live. That's right. Nothing says it's not Monday like this, man. Hear me out. Victor Jones. What's up, brother?
Oh, yeah. Tom, Tony, Tasty Nation. New Year. How you doing, everybody?
How you doing?
I'm all right, Tony. We were talking before the break. Who made it to midnight? Not me.
I made it to midnight. I made it to midnight by default. Like I wanted to go to bed at 11, but the kids kept me up.
Haven't done to be fair, years. You made it to New York midnight or to here midnight?
Here midnight. I tried to claim it was East Coast midnight because my daughter's from DC, but they wanted to start eating at 11 o'clock or something like that. They were trying to get rid of some of the alcohol that they had. I didn't partake like that, so I was good. So they stayed up and made food and everything else like that. So I stayed up.
The only issue with staying up in Chicago is the Chicago one is not.
It's bad.
Yeah, we watched it from it's C or whatever.
It's a little jinky.
Yeah.
Let me ask you a question. Would you rather be the first time zone to go through the new year or the last?
Oh, the first for sure.
No, You would think, but you don't. You don't want that.
Well, you're living it,
14
right?
hours ahead. Yeah, I'm 14 hours ahead. There's barely anybody that goes through it. It's that there's no real big hoopla because everybody celebrates New York like it's the only city in the world. And then you're just basically waiting for 14 hours. It's the middle of the afternoon and everybody else is celebrating. It's the weirdest experience.
I'm sure it is.
You know, to be fair, I feel like the only New Year's Eve that counts is New York.
Oh, he's basically. Hey, Victor, you want a fresh one? You want a fresh one? You want a fresh one, Victor? Give you another one.
Listen, I love Chicago,
insane.
but I feel like the New York one's the one that counts.
Man, what did you just wake up and choose violence this morning? You're like, I'm going to try to turn away the entire Tasty Nation.
They don't have anything else. They don't have anything else in New York. That's all they have. Okay, they used to have some sports teams, but those are gone now. You know, they just don't have anything else.
What are you doing right now? Why don't you go after Texas next? And how about Florida? How about you go after all top 5 states and cities where all the retail traders are? How about you go after all the biggest cities in all of America? Let's try to offend everybody.
Oh my God, I'm not offending anybody. I'm saying it to New Yorkers. That's what they got left. They got New Year's Eve. Give it to them. That's all they got.
Wow.
Fair enough. All right, here. This is what I want to do. I am curious, gentlemen. If I take you back in the way back machine, because, you know, if even what do they say? Even a broken clock is right twice a day. You know, this long bond trade started to work a little bit. Dare I whisper it into the ether? Off the lows at 113, something like that. I'm curious though. Home builders, if you look at ITB, it was $60 at the end of 2022. We're now like 105, 104 and change, I think. I don't know. XHB, which is another home builder ETF. So you pick your poison here, whichever one you like, whichever construction or liquidity, option market liquidity you like. Also was $60-ish end of 2022. It's now trading roughly 105. These things have basically doubled. Here's the narrative. I'm gonna set it up with the narratives just so you could all over the narrative and tell me your narratives don't matter. The price is the only thing that matters. And then you'll tell me which direction you like based on price action. The narrative was everyone's locked into existing homes, so existing home sales are locked out. So the only game in town is new home sales for the last couple of years. If you want new inventory, you can only buy a new home because everyone else is locked into their existing homes they're not going to sell. And for that reason, it's going to push up the average selling price of some of these new homes. It's going to support the inventory that they're going to put out there, and their stocks have more than doubled. Most of the low-end or mid-tier home builders, higher-end, haven't necessarily had this sell-off in the last couple of weeks. So here's my point. The last couple of weeks, these things have taken a bath. Why are they taking a bath? Well, 30-year mortgages, 15, 30-year mortgages are pushing like 6%, 9%, 7%, something like that. So on this Fed cut, what everyone thought was going to happen is the long end was supposed to go down along with the short end. That did not happen. It has pushed higher. For that reason, home affordability has actually gotten worse, not better. And you've now seen a break in some of these home builders. I'm curious from a contrarian point of view as we go into this new year, knowing that I know how you guys think about bonds here. I think you guys are thinking the same way I'm thinking, which is on a short term, there's probably a little bit of opportunity to trade the long side of bonds. Even though I think in 2025, we're going to see a 5% 10-year. And I think with that, I'm curious then how you would play the home builders. Do you think they've done enough damage in the short term? Vol's super low. Ivy ranks one like 25-ish and change on both of these things, so you can't really sell Vol. I'm curious, do you think they've done enough damage to come in here, start buying some long call spreads, long calls, just getting some long deltas through long premium? Or do you think, given the fact these things are still nearly doubled, that they haven't done enough damage? What does the contrarian see when you look at the home builders here? Mortgage rates near 7% and bonds just getting off the mat here. Does the contrarian see the opportunity for upside in home builders here? Or does the contrarian see not enough damage? You continue to play the downside?
I actually it's a weird topic for me because I don't actually trade the home builders at all. And so because I don't like the liquidity in there generally, maybe I haven't looked in a while to see if I'm missing something, but I don't even know if I've traded a home builder in the last year. And so I don't, when you're asking these questions, I'm kind of glazing over because I honestly don't even know what is a home. What stocks are we talking about?
Lennar.
I don't even know what you're talking about. I don't know.
Pulte Homes, KB Homes, Lennar.
KB
I can
Homes,
give you
right.
a handful.
Okay, I haven't traded a single one of these stocks in
a decade and a half at least.
Yeah.
We traded KB Homes for, I think it was a Chicago or Illinois.
All I'm telling you, Victor, is you're bringing up a topic that's like, this is one of the things I hate about like a big macro discussion like this is it's only relevant to me if it's got some liquidity to it. So the only thing that matters to me is if the underlying's liquid, then it's interesting because liquidity plus volatility equal opportunity. If there's no volatility and there's no liquidity, I don't care what the macro story is with home builders. You're much more of a, you will buy a commodity, whether it's physical, technical, whether it's for whatever, you'll buy something or sell something because you think there's a bigger story to it. And I don't think the same way you think in that regard. Like I won't, even if I love the story, I will not trade it. Like one of the reasons I'm convinced that I didn't buy a lot of Bitcoin or digital assets when they first came out was because I am so trained by liquidity that I didn't want to touch something. One of the first stories I read about Bitcoin was there's no liquidity, there's no depth to the market, so that's why you can't trade it. Like that's one of the first articles I read by somebody that was that had written something about why it would never take off or something, and I'm like, yeah, that's exactly the reason I'm not trading it. And so I missed certain things. Is my point. And I think I missed a lot of the digital asset move because I did not trust that there would be enough liquidity and efficiency to that marketplace. You, on the other hand, would have been much more open to the story. I'm not open to the story. I really just focus on the markets. So I think in the case of home builders here, I'm not trying to blow it off as there's nothing there. I really don't care.
That you opened the door to a much more interesting conversation. Let me close the door on this one and then go into the door you just opened. So the door you just closed, the reason I bring it up is because I think we're likely headed. I think we're going to see correlation here between the current mortgage rates and how home builders trade. For a while, they'd separated. Long-term mortgage rates are going higher, but home builders are going higher as well, and home prices were going up as well. To me, that makes no sense. How can home affordability be getting away from people, but prices of home builders still be going up? At some point, that divergence had to come in. I think it is coming in, and I think if you're going to play long bonds, you're probably playing long home builders and vice versa. To the point you just made, I'm curious then. Is a contrarian ever in on the outlier move? In other words, here's what I mean: the upside outlier move. If you need liquidity and you're constantly fading what the market sort of is front running, doesn't that make it hard for a contrarian to ever be on board with the upside outlier move, the Palantirs of the world, maybe the early Tesla?
We were long Palantir for a long time. Even made money in Palantir to the upside. Palantir was getting killed for a long time.
I bought Palantir when IPO at $9, when it came out at $10 and went down to $9 because I thought that was the contrarian play.
Right, and then sold at 13. So
probably 1280.
Well, I sold it before it got to 11. But I mean, listen, you don't know what's going to happen.
Agreed, you don't know.
I'm not opposed.
That's sort of my point, which is it hard for a contrarian to hang on for the outlier upside move?
Sure, of course. Well, it's not hard for just the contrarian. It's hard for any trader to hold on for some outlier move to the upside or the downside because you're just a trader. The whole reason you're here is because that's what you do. You just trade them. You don't really, there's no such thing as holding for the outlier move.
Agreed. Here's where I'm going, Tom, is the last 2 years have been 20% years in the markets.
Yeah.
Okay. So all anyone had talked about after we got the final print for the year is time in markets is better than timing markets. Effectively, everyone after the last couple of years, they're dogging out active participation in favor of passive participation.
Sure.
So my
Okay,
question
that's a whole different discussion.
What do you say to that narrative? What do you say to that narrative?
So that's an entirely different discussion. That's the passive versus active, and that's an age old discussion. How much? First of all, you can't just take the last 2 years or the last 5 years because if you had said the same thing, would you have said the same thing in 2022 or 2021 or 2022? And the answer is no. You would have argued in the case of active, but the last 2 years, you have, you're up almost 50% in the indices. But the real question is, is that a fair discussion to make? And for some people, which by the way is about 95 or 98%, whatever the number is, they prefer the passive approach to investing. And I would argue that the passive approach to investing, in the end, is why we have such a huge wealth gap. It's why we have such a huge discrepancy in the way that wealth is distributed in this country. And that's because there are people that are passive and there are people that are active. And those who are active, ultimately, whatever that word active means, those are the people that ultimately end up with the majority of the wealth. That doesn't have to necessarily come just from trading, because I don't think that's where it necessarily comes from. But it comes from derivatives of or byproducts of that mentality. So I don't think there's ever a case where you would say, where you're going to tell your son, I know he's only 5, but I don't think there's ever a time where you're going to say, you know what? If you have a choice to make, I want you to choose the passive choice.
Never.
Of course, never. Just like you would never do that. Just like nobody would ever do that. So why would you ever do that when it comes to investing?
I wouldn't. And I couldn't agree. This is one of the few times where I couldn't agree with you more. I think over the last 2 years, if you were an active participant in markets, the markets told you who they thought was going to win the election, regardless of what mainstream media was telling you and feeding the general public. The markets, not only the equity markets, but the prediction markets were much more on target than media narratives were. If you were listening to markets, they told you what certain nominations would potentially mean for, let's say, healthcare companies like Pfizer, Moderna. All of that stuff is already repriced. If you were listening to markets, you had an understanding that, in some cases, what was going to happen on the cut, that if you don't have the Federal Reserve actually buying long-dated tenors, that the market has to absorb all of that debt issuance, and they're going to go find the market rate, not this distorted rate that we've had over the last 15 years. I would agree with you. Over the last 2 years, if you were passive, you've gotten 20% returns. But did you learn anything about the way the world works? Did you learn anything about the way policy impacts your bottom line, about the way policy impacts economics? I would say now more than ever, in a world of high inflation, in a world of high geopolitical concern, it's more important to be an active participant, to be watching markets and what the wisdom of crowds is telling you about the truth that exists in the world versus what the narratives are telling you. I couldn't agree with you more.
It's not even what the markets are telling you what's so important. To me, that's only a little piece of it. It's more about understanding what it takes to to be able to measure risk on your own terms and to be able to take that in order to go to another level. It's really, I don't even care like what it tells you about politics or market structure, any of that kind of stuff. I think so much more of it that's underrated is the decision-making aspect, the way you can think probabilistically, the way you can think strategically, the number of decisions that you get to make, and the way you get to apply everything in real time to see that things work and they don't work. You know, there is, it's a whole leadership quality. And I think it's grossly underestimated. You know, one of the things we like to say is, you know, you close your eyes when you're 25 and you wake up when you're
50.
When you wake up from your nap and you're 55 and you go, you know, where the hell did my whole life go? Right. What the fuck just happened? You know, where am I? I didn't learn anything in the last 30 years. That's what I hate about retirement accounts. It's just, what did I learn? Okay, so big deal. I bought NVIDIA when it was 100 and now it's 600. Okay, great. So I made $500. That's awesome. That's an amazing investment. But I have no idea what I did. You know, and you know, I think it contributes. I think the whole passive side of all this contributes to the huge wealth disparity in this country and other places. You know, and to me, I know it's going to sound crazy, but there's not that big a difference. You know, people don't like the fact that wealth gets passed down from generation to generation for lots of different reasons. And I get that. I understand that. But it's not that much different from passively investing in something and then waking up 30 years later. And I really wish people would participate in active decision making. And I don't know how many places you can do that outside of markets.
When you say passive is contributing to the wealth disparity, I want to pull on the thread. What are you actually saying there? That passive investing is sort of what are you saying there? There's ignorance to that participation style? Like, what are you saying there?
I'm saying there is ignorance because you end up letting other people make all your financial decisions for you. And all you're acquiring wealth. Hopefully you're acquiring wealth through other people's decision making. And all you're doing is sitting back deciding who's going to make those decisions for you rather than making those decisions on your own. So therefore, the acquisition of wealth is secondary. When you go out and you do it yourself, it is a very different approach to wealth creation.
And let me add one thing that my buddy John also wrote, and he's written me before when we talk about active investing and passive investing. He goes, you know, Apple stock has increased 257,000% since its IPO in 1980. But to achieve those gains, Apple investors would have to endure many agonizing declines, including an 82% drawdown, which lasted for 8 years. 1991 to 1999. I'm just saying, like, you know,
always forget about that stuff,
right?
You know, they always forget about, like, you know, the 2008s and the 2009s and the 2020s. You know, it's not easy. And anyway, I just think.
Let me ask you this.
Yeah.
Let me ask you this, because I can see what the people are going to say in the comments right now. Here's what they're going to say, Tom. They're going to say, well, you run a brokerage firm, so of course you are going to advocate on the side of active investing because that's where you make your money. I'll say this, that there's a big difference between active participation and active trading. There's a difference between active engagement of your investments, and you can still be a long-term investor and still be an active participant doing it yourself. So I'll say that as a setup. But what do you say to all those that are going to come at you at this conversation and say, well, of course you're going to say that because you run a brokerage firm?
I have plenty of passive investments. Some might be real estate. I think most people consider real estate to be passive, at least I do. I also love to invest in myself, which is not some ego thing. It's just like, they feel like, you know, if you're going to run a company, you need to be the largest shareholder. You need to have skin in the game. And so I passively invest in ourselves, in our own company, things like that. And in other companies like that. I have no issue with that. But I can tell you right now that the only reason I'm here today and the only reason that Tony's here today, I mean, and there's more than just the two of us. I'll throw Scott into the mix and a lot of other people, is because we started trading in our early 20s and we've never stopped. And you could throw a lot of other things behind that, but it's none of the three of us come from, nobody backed us. Nobody put anything out, nobody handed us anything. This is all from scratch, from a few $1,000s. And it's all from trading. And it's not all from trading gains, I will give you that, but it's all from related to that. There's no other way I can look at it. I cannot look at it any other way.
Tony's about to throw me out, but I'm going to ask one more question.
No, I love it. I love when you talk.
No, I think he's not going to argue that.
No,
That's his entire wealth and net worth is from trading.
Sure.
I'm just saying I'm long on the segment. That's all I'm saying. Let me ask you this: there's if you're a really lazy marketer, you'll put out something on January 1st or 2nd that says "New Year, New You." you put in zero work and you'll put out something like that. I'm curious. You guys have been doing this for decades now. Did you two learn anything about markets, about strategy, about instruments in 2024? After doing this for decades, did you guys learn anything in 2024 that you guys are taking as a brand new lesson in 2025?
No, but I learned something about myself every year of trading. If I want to reflect back on a day, I always think I've seen everything, and you've never seen everything. And I always think that I'm going to act a certain way myself when opportunities arise, and I don't always act the same way. So each year I evolve myself in my trading, but I don't think the markets or I've done, anything different. No.
I love the fact that every single year it's always something different. And I love the fact that we could sit here after X number of decades and still have these discussions about, about what's going to happen next and why it's going to happen and the magnitude of what's going to happen, and that there's always some crazy form of opportunity. I mean, already this morning we've had about 1% moves in the market already. We're not even 35.
We're not even done with 2025 yet.
We're not even 35 minutes into 2025. So yeah, I mean that's the great thing. But I mean I'm going to go back to the most important takeaway. I'm not going to comment on the home builder thing that you started with, but the most important takeaway
because that was stupid.
No, it was.
You can call him stupid. You do it to me all day long.
I didn't call him stupid. I don't trade those home builders. But I think the important, discussion here, there's a bigger discussion. And, I feel strongly about the active role. I feel strongly that people need to be into, like here, I know it's going to sound crazy, but I was watching a lot of football the last couple of days. And I'm watching football. I know this goes, I was going to write about this, but I'm going to tell you what it is first. I feel like every football coach, okay, should be given by the team owners a few dollars, whatever it is, a $25,000 account, $100,000 account, whatever it is. They pay these guys $5 million a year. Their entire success is based on their ability to make instantaneous decisions. Okay? And yet some of them, including Bears coaches this year, are so slow in making decisions that it's painful to watch. And I feel like if all of them actively traded, that they would make so much faster decisions, that would be so much better, that would be so probabilistic and statistically supported that they would be better football coaches, but yet people don't do that.
I feel the same way about policy. I feel if people were active participants of the market, then they would understand why our capital markets are so great.
Okay, stop right there. Stop. Now, this is my entire argument to you about why every single person in Washington should trade. This was my whole argument.
I've never said they shouldn't trade. I said they should pre-announce. But you changed my mind on this. But I think it's bigger than that. It's more than the elected representative. This is passive versus active. Passive is you put somebody in Washington, and you put somebody in your state capital, and you check out for 2 years or 4 years. Active is you're checking up on the results of what's going on in your community, in your state, in the country. You're checking up on the mandate that you gave your elected representatives. You're checking up on your portfolio. on the instruments. I think there are very little things in life, if you care about them, that you go into a passive mode. It doesn't mean that you're not a long-term investor. It doesn't mean that you're day trading. It means that you're actively engaged with the topic at hand. And whether that's policy or whether it's your actual portfolio, if we understood the power of market forces, we would demand better policies that implement market forces versus the dictating of winners and losers in our policy. And I think, I think I learned that in 2024. I think there were elements of 2024, in particular the election, that taught me the power of market forces when applied to everything, not just our accounts, but
by the way, there's no question, and we have been electing presidents in this country forever that don't understand, that have very little understanding of how markets work, market structure, and it's not a good thing, and I hope that changes.
Tony Batista, 2028.
Thank you, my friend. I appreciate it. I will be your representative, Victor. You remember that. I will listen to you. You're going to be my trusted advisor, not Sosloff.
You will flip on me as soon as you get in office, just like Elon Musk.
You can say a lot of things about me, but I'm loyal. Well, I mean, my first wife probably wouldn't have said that. But anyway, we're going to take a quick 90-second break and come back. We got more Tasty Live after this with a market measure. Peace out to you, Victor. I love you when you come on.
Peace, guys. Peace, guys.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the market measure. Even the S&P's, you're talking about a couple 1% moves here. We've had some good movement in the market. Even the S&P's up 37, NASDAQ up 164, Russell up 25, Dow up 275, volatility in by 30 cents.
You got it.
Did you buy the dip? The bat tried to paint the bottom for you.
I did not buy the dip, but I have very manageable position on today, so I feel kind of like I think I did
you're ahead of the game.
I think I did the right thing for a change by cleaning up all the crap on Friday that was in my. On Tuesday. It was in my account.
It's don't worry, the days. I don't know what
days are messed up for me.
Yep.
It's 9:19 in the morning. It's Thursday, January 2nd. I'm gonna get that right. I'll never forget January 1st again. But
no, you
Thursday,
won't. No,
I won't. It's Thursday, January 2nd. And
you already had a shut up by me on January 2nd, an F-bomb already on January 2nd. What's the trifecta? What else can I get from you? I don't know what else I can get from you. My 2025 job here is done.
We do have a couple of brief announcements, and then we'll get right into this market measure. It's a really good one. It's best of 0 DT timing. And don't forget we have a Guess the Market. Bill from Rochester won the grand prize from last year, and we'll be reaching out to him today. So if you're listening, Bill, you should get a call from Nikki Bat today at some point. But if you haven't signed up yet, there's tomorrow at, I'm not sure what time, midnight, let's say. You have to submit your guess, but don't wait till midnight because I don't even know if that's the time. Time is whenever whoever does this goes to bed. Do it early or miss out. Submit your guess by January 3rd, 2025, tastylive.com/guess. If you haven't done it, shame on you. That's all.
That's all,
folks. Yeah. Let's go. Also, we have a couple of things going on. This Sunday, we have a live event. It's in Chicago. It's the first of 3 very small coffee shop live events in Chicago. These are not part of our 2025 global tour. We're going to be all over the world and all over the U.S. later in 2025. We have not posted those cities or dates yet. But for the first 3 months of the year, we're not going on the road, and because we were on the road all of last year. So we're taking 3 months off from traveling. But we are going to do 3 events in Chicago. They're very small. The first one, and they all precede a digital asset that we are putting together, basically a digital collectible that you'll be able to own, that'll live on our blockchain, that you can look at any time or reference any point you want.
The first one's called An Evening of Crypto Talk. It's with Ryan Grace from Tasty Crypto. Everything you want to know about crypto, but we're afraid to ask. Ryan's doing his presentation. Also, Edward Woodford, who's the CEO of Zero Hash, will stop by, and Edward will do a Q&A with the audience for about 20 minutes to a half hour when Ryan's done. And you can ask anything you want. Edward is one of the leading crypto experts in the U.S. I'd put him up in the top 5 in the whole U.S. And then also Ryan is our crypto expert and really smart, really knowledgeable. Sunday night, January 5th, that's this Sunday night. Doors open at 5. The event starts at 6. And you can sign up at tastylive.com/events. It's on the north side of Chicago, just west of Wrigley Field. And it's very small. So only 50 people. And I believe it's all full and it's waitlist only, but you can still sign up because some people signed up didn't realize it was a live event. So we have somebody that signed up from Singapore. It's probably Victor. No, it wasn't. Somebody that signed up from Australia. So I don't think they're coming in for this. So there's probably a few people that we need to clean up. But it just happened.
Even the S&P is only up 15.
We're just up 45. 2 minutes ago.
Markets are dynamic.
Crazy. Anyway, hopefully we'll see you Sunday night. If you can't make it, and there'll be 2 more of these live events coming up. Go to the next slide. Thanks. Everything you want to know about crypto, January 25th. It's a Saturday morning at 10 a.m. We will be minting this, and you can watch it live. The Beginner Trader from start to finish, Jim Schultz, February 22nd. And a couple of weeks before that, when Jim comes out to film it, we'll have another one of those live events. And then Mike, his friends, on his whiteboard on March 29th. These are all the dates that we're minting these. You can register right now at tastylive.com/events. You and 10,000 of your closest friends can sign up for this. We don't care how many we mint. And these are really important to us. These guys do a great job putting this stuff together. And we want you to own it. Stream it, own it, whatever. And if you want to come to the live event, when we post them, you can sign up. Again, only 50 people will be permitted to those.
Yep.
We want to keep them small, intimate, chatty, that kind of thing. Perfect. All right. Thanks. Thanks, John. Let's do it. The best of 2024 market measures, part 3, zero DT timing.
Sponsored by the SIBO.
Sponsored. Let's go. Next slide. So 24 marked our first full year of gathering the zero DT data at Tasty. Market measures are a chance to share the results with you in depth. As we head into 2025, we're going to review some of our best zero DT research of 24, and we're going to explore the importance of timing when it comes to zero DT trades. Let's go to the next slide. So our study, using 1 year of data in zero DT SPX options collected every 10 minutes for 15 years worth of data in the 45-day options. So in the zero DTs, it's whatever it is, 20 months. And in the other data we're going to show you is 15 years. We examined selling strangles with 20 delta legs, both at the zero DT market open and 45 days to expiration. We contracted the hourly performance as a percent of the initial credit for the zero DTs and the weekly performance of the 45-day to expiration trades. Next slide, please. A lot of stuff here. This is old stuff, so we're just showing you. This is weeks versus hours, okay? The first one, 45 days to expiration, strangles. First 2 weeks, average P&L change, 11%. Second 2 weeks, 24%. Third week, tough one, -2. And then the final week, +16. Standard deviation of change, you can see. The first week, the key is the last line, the standard deviation of change. 6% is very manageable. 12%, very manageable. 28 and 53, that's where it gets tough. It's not worth the return at that point. Let's go to the next slide. And this one, we're going to show you the zero DTs. So in the zero DT strangles, it's the same thing. Look at the last line, standard deviation of P&L change. What's interesting here is that the first 2 hours, 19%.
Manageable.
Second 2 hours, 34%. The third 2 hours, 56%. And then the final hour, 153. Swinging. Yeah, you're just swinging.
You're just swinging it.
153. Now, I'm not saying -5 in your average P&L the first 2 hours. Nothing great, okay? But the second 2 hours, that's pretty damn good. So in that first 2 hour period, there's a chance to make some money. It's not worth the risk holding to the end of the day. At 19 and 34%, very manageable. 56 to 153, not so much. Next slide, please. Both the 0 DT and the 45 days to expiration trades had more stable prices early in their lifespans, as measured by the lower standard deviation of returns. That's what I showed you. For both, managing winners to capture early success were the more beneficial mechanics. For early in the 0 DTs, it just means the first few hours instead of the first few weeks for the 45 days. For handling losers, the 0 DTs gave more opportunities for traders to succeed using their own style. More risk-tolerant traders could choose to stay in losers and hope for recovery before the close. Did this late-in-the-day success mean it was a good idea to trade 0 DTs even if you missed the market opening? Next slide. Let's have some fun. This is our kind of fun. So using 20 months worth of data in the SPX 0 DTs. Now, people that have a smaller account that want to trade without pattern day trading rules using the ES options, same exact thing. It's not cash settled, but it's the same underlying product. ES, SPY, SPX, they're all the same. MES, XSP, they're all the same. But some have pattern day trading rules, some don't. We examined selling 0 DT strangles using the 20 and 30 delta strikes at market open, 10 a.m., noon, and 1:30. All the times are Chicago times, CT. All the trades were managed if they reached 25%. Losers that didn't reach 25% were allowed to expire. All trades were assumed at mid-price. Let's go to the next slide.
Okay.
So you can take a little off if you want. Here's your 20 delta strangles that were, these were just on the 0 days. Place at market open, you made 89% win rate. Placed at 10 a.m., 88. So it didn't matter what time you placed for the win rate. What it mattered for was how much money you made. And the average P&L is significantly higher if you put your trades in early in the day. Period. That's it. First 2 hours. Let's go to the next slide. 30 delta strangles, exact same thing. Everything happens P&L wise in the first 2 hours, or the majority of it. Let's go to the next slide. So since we started trading 0 TTs in 23, they have been consistently profitable for short premium traders who took profits early. Choosing strikes by delta automatically adjusts trades for the current volatility levels and the time remaining in the contract, giving consistent success probabilities and helping retail traders expand into new arenas with confidence. While the 0 TT trades had more success stories for those who held on through expiration than the 45-day trades, placing new trades late in the day was detrimental, just like placing new trades late in a cycle can also be a little bit detrimental.
Good job out of the team.
It's a heavy piece, but yes.
Good, awesome. We're going to take a quick 90-second break and come back. We got, oh joy, your friend of mine, Mr. Scott Sheridan, Tasty Trade World Headquarters. Immediately following these messages. Back in 90 seconds.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy.
Yeah.
Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, Tasty Live in particular because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
People are always asking, where can they find my podcast? There it is. Look at that, Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow, Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Thursday edition of what it is that we are trying to do. Welcome to the 2025 edition of what it is that we are trying to do. Welcome to the glasses edition of what it is that we are trying to do. Man, Happy New Year to all of you guys out there. I really hope you guys had a wonderful Happy New Year and a great New Year's Eve, and it was fun, and it was safe, and it was all those kinds of things. And so, man, we are back. We are here, and they're in the process of scaring the children on day one of 2025. Man, that ain't right. That ain't right indeed. But thank you guys so much for being here and being a part of what it is that we do. Without you guys, we couldn't do what we do every single day. So if you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the conversation and you can join the discussion and you can communicate with our brethren that are also watching the show. You can celebrate if you are a bear. You can commiserate if you are a bull. But it is a long year ahead indeed. And of course, you can ask me whatever questions you might have and drop them in the chat. The earlier you do so, the higher the delta that I will get to that question. All right, so some housekeeping today. We are extra long today. We are going all the way to 3:15 Eastern, 2:15 Central. So if you do have a question for me, now would be a great time to pop it in there, because after a little bit of more or less worthless market commentary, we'll look at a couple of positions, and then I'm going to see where you guys are at in your neck of the woods and in your part of the world, and then that is what will take us to the end of the show 75 minutes from now. So John, go ahead and bring us in to the market. Man, guys, I don't know. This is this how they drew it up? You know, immediate S&P is down 50. Risk-free instrument, also known as the NASDAQ futures, extraordinarily high-risk product, down 195. You got the boomers down 350. You've got the Russell 2000 futures index down 11. And so bonds unched on the day. You've got oil up $1.50 on the day. You've got gold. Man, look at this thing. Got gold up $27. I think silver's up a ton too, right? Silver's up silver up 60 cents. So you got gold up 1%. You got silver up 2%. You got the Bitcoin bros celebrating up $1,500 today. And so everybody is happy. Even the volatility bros are happy today. You've got volatility futures up 97 cents. And then you've got the spot volatility. The VIX is going to be up $1.60 on the day. So, wow, VIX all the way up to almost 19. It was higher earlier, I think. If we take a look at let's take a look at the chart of the VIX. We got nothing but time. We got extra wide lanes. Lane Bennis. This is it, man. This is what it should have been from the very beginning. So if I go into the chart here of the VIX, you can see that just today, it's been pretty strong all day. But, okay, so we're actually pretty close to the highs there. I mean, you've got a high of 1950, and we're currently at about 1880, 1890. And so we're not that far off the highs. And so it's going to be interesting to see how the last hour and a half of the day goes, because, I mean, the last three trading days for the market were weak. I mean, they were very, very, very weak. I mean, if you go to the NASDAQ, you can see, I mean, look at this, guys. Is that 5 black crows? I thought it stopped at 3. Is that 5 black soldiers? I thought it stopped at 3. We're not allowed to have 5. It's supposed to be 3. So look at that, 1, 2, 3, 4, 5. That's crazy. That's really crazy. And so, wow, it's going to be, man, is this the start of something special this year? Is this the start of actually some two-sided action? Maybe the volatility index, maybe it hangs around 18, 19, 20, 21, 22, 23, 26, 33. I don't know. Is that crazy to ask? I don't think so. I mean, it's been pretty suppressed for most of 2024, and then especially 2023. But yeah, man, this is crazy. This is some crazy stuff. So, all right. So there's your market commentary. It was actually less valuable than it usually is, and it's pretty worthless most of the time. But it's on par. It's on par with whatever you would find from any other major media outlet. I can assure you of that. So, all right, let's go into the portfolio now. I'm going to get to y'all. Man, I see you. Look at you guys. I see you guys in the chat. Man, you guys are already trolling the glasses. That's awesome. I love it. Junior Max in the house. Leroy's in the house. Mr. Green's in the house. Sergio's in the house. David Galmore's in the house. Don's 721 in the house. Man, look at you guys. I'm going to get to all you guys in just a few minutes. And by all, I mean maybe 3, possibly 4 if I really, really rush. And so, all right, let's go ahead and let's take a look at this. If I look at my list, I had a lot of emails the last couple of days. People wondering, like, what are you going to do? Are there going to be any shakeups to the staff? Are there going to be any changes to the From Theory to Practice team? Because if you guys are brand new to the show, then you don't know this. I am the only one on the network. I have a trading assistant. I have an intern for my show. She only works for me. She doesn't work for anyone else. She does all of my trade analysis. So all the losers that come your way, they're hers. All the winners, those are, of course, mine. But she's the only one I'm the only one on the network that has an intern, has a trading assistant. She is my 4.5-year-old daughter, almost 5 now. She'll be 5 in March. Little Miss Amelia May. Yes, she is still employed. She is still accepting the same low-paying job, i.e. free, that she's had for the last 18 or 19 months. And so she's doing a pretty good job for being almost 5. She's right up there with your major Wall Street analysts in terms of her win rate and her hit rate. And so she will continue to do our analysis. Well, today, she didn't really want to do anything new. She was like, hey, Dad, you really should take a look at Tesla. You deserve a victory lap or 2. These are her words, not mine. She's like, you should even take a look at Uber. That's worth maybe not a victory lap, but maybe just a trot down to first base. Maybe just an easy single in the center field, nothing crazy. And then she's like, I would also take a really, really good look at Apple because that indeed is a full victory lap. So, all right, let's go ahead and do that now. And then, of course, the wind will blow us in a myriad of directions. And then we'll see where you guys are at, man. I see you guys, man. I see you guys in the chat. Look at you guys. Man, let's do it. All right, so let's go into let's actually go into Apple first. So Apple down $7 today. Man, that's a pretty big drop. Especially when you've got the NASDAQ. I mean, the NASDAQ is down, but it's only down 130 now. I mean, it's just rallied like 70 points since we started the show. I mean, we started the show 4 or 5 minutes ago, and the NASDAQ just rallied. I mean, it's back to 21.1 basically now. And so now it's selling off again. It's almost like markets move and things change, man. It's almost like a VIX at 19 means something. It's almost like it's more than just a number on a screen or a bullet point on some PowerPoint presentation. Like when you have a VIX at 18, 19, 20, it's like your knickers, they ain't coming out straight. Like they're going to be wrinkled. They're going to be twisted. And that's just the way that it is. But yeah, man, NASDAQ moving around doing some things. But Apple down $7, $8. That's a pretty big move. It's almost like a 4%. Or it's a 3% move, a little over 3% on the day for Apple. That's pretty significant. And then obviously Tesla down a lot more because of the Cybertruck situation in Vegas. Like from what I can gather, it wasn't a car malfunction. It was more of a terrorist type of deal. And so that's pretty wild and crazy for obvious reasons. But the stock getting hit, on that news or on whatever else news. I mean, the news is always tricky because it always looks so obvious after the fact. But there are so many times when really crazy things will happen to a specific company or the market writ large, and it just shrugs it off or it rallies. I mean, you guys know this if you trade earnings. Like you already know this. Like a company comes out with an earnings report and they say amazing things. They have nothing but incredible things to say, right? Revenues just blasted everything away. Profits just blasted everything away. We're announcing dividends. We're buying back stock. We've cured cancer. We're doing this. We're doing that. Blah, 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 blah. Stock down 7%. Doesn't make any sense. Doesn't make any sense at all. And so, that happens not only with earnings, but it happens pretty much, every single day around the world if you look hard enough. And so we're kind of seeing that, or we're not seeing that with Tesla because Tesla's getting hit on the news of what happened in Las Vegas. But there are so many instances where something similar might happen, and then the market just shrugs it off, which is really, really wild. But for our bearish position, the downside action in the stock is, of course, welcome. So for Apple, though, guys, I don't know. I mean, I think we probably have another 3 to 5 minutes on this victory lap, but I think we've kind of done all we need to do. I don't really know if there's anything else that we need to manufacture on this discussion. You can see it's a short call spread. We sold it for $1.79. We're about to buy it back for about 60 cents. That's exactly like you draw it up. I mean, we're actually getting more than 50% of max profit. We're probably closer to like 60 or 65%. But that's just because the move down today was so significant. And of course, I try to only trade on the show. And so that's going to obviously limit my opportunities around the open or like when things might be, more advantageous for me to take it off. And, sometimes it works in my favor and sometimes it doesn't work in my favor. But still, it's incredibly valuable to me that for those of you guys that watch the show on a regular basis, and there are so many of you because you guys are in the chat all the time, and I recognize the usernames and people, emailing me, people stopping by the property, like it happens all the time. And so, yeah, you guys are just amazing. I want to give you something in return. If I give you maybe more than just one singular thing, but there is one singular thing I'm trying to do relatively well is, not have any broken links in the chain from show to show, from episode to episode. If you do watch on a regular basis, there's nothing left out. There's no missing pieces. You don't see positions just show up randomly that I never talked about, that I never mentioned, and then they just disappear. They're just gone. Like, that doesn't really happen, right? And so I really want this to be a nice, contiguous experience for you guys, and hopefully we're able to do that. So for Apple, this is it, guys. If you're brand new and you're just, if one of your New Year's resolutions is to sell more premium and you found your way to this very program, man, welcome aboard. Welcome aboard. You're in good company. I mean, the people that are in the chat, if you're brand new to the show, man, please stick around, whether it be my show, whether it be the other shows on the network, like, you're in good hands. You have found a really, really good spot to build a nice foundation. There are only two things you need to remember. Number one, the short side of the option contract is going to be a lot better, let's say, than the long side of the option contract. Just put it very generally. And then number two, of course, just do the opposite of whatever Tom does. If you do the opposite of whatever Tom does, you can throw everything else out the window. You're going to make a whole bunch of money. So those are the two things that you should remember if you're brand new. So, all right. But if you are brand new, I mean, when you sell a call spread, it's a pretty simple, straightforward strategy, just like we had here with Apple. It's a bearish trade. If the stock goes down, you're going to make money. If the stock goes up, you're not going to make money. It's really that simple. And so for us here with Apple, you can see I put the trade on. Man, we really are milking this victory lap. I put the trade on 1220. And so if we just look at the chart here, you can see that when I put the trade on, you know what? We don't even have to look at the chart. Oh, man, you know what? I could right click. I can just go to view market state snapshots. And I can see where the price was when I sold it. I mean, we could look at the chart to kind of see the back and forth each day, but I think this victory lap has all but exhausted itself. And so you can see that Apple was at 253 when we put this trade on. It's currently at 242. If you sell a call spread, that's going to work out pretty well. Like, if you have some kind of type of bearish trade on a stock, like a short call spread, that's going to be a pretty easy trade from start to finish. And that's exactly what has happened here. So let's go ahead and take this off. And 59 cents, that looks pretty good. Let's go ahead and let's see here. Let's have a sip of our water from the loo. And we'll do 62 cents. That's fine. No takers. All right. Okay. A little hard to get here on the first couple trading days of the year. Let's go 64 cents. There's got to be somebody out there. All right, fill that 64 cents. All right, so the Apple trade is over and done with. It's like it never happened, other than the fact that we have an extra $1 in our profits. And so last year, well, I'll get into that later. So let's see, Apple. Yeah, so we did Apple. What's next? What's Amelia got for us? She wants us to take our Tesla victory lap. All right, so this one is interesting. This one is more interesting than Apple because Apple was very simple. Apple was very easy from start to finish, right? We put the trade on. It basically worked. We never took any heat, and we just kind of rung the register, which is exactly what we just did. All right, so for Tesla, this was a lot different. If you look at, we did the trade on 12.9, right? So almost a month ago, like 3.5 weeks ago, we did this trade. Now for this one, I do want to bring up the chart because we took a tremendous amount of heat on this trade. I mean, we had to basically sit while Tesla was running up close to 500. And, this is one of the huge benefits of defined risk in that, you put your trade on, you control your risk on entry, your maximum loss. And maybe the most important part, more important than anything I just said, is you are comfortable with the max loss. You're okay if it comes to that. You don't want to be getting nervous. You don't want to be getting antsy, kind of feeling like, man, I need to get out of here because this max loss is too big. Then that's a problem at step one. That's a problem at step 0, where you've really got to do a better job of more diligently controlling your position sizing. You should never be in a defined risk strategy, in my opinion, where at any point in the strategy you are sweating bullets that if you take max loss, it's going to be really damaging and really detrimental. It's going to sting, of course, because every loss does, but it should never be in a situation where it's like, man, if I take max loss on this, like we're getting really close to the end, however you might define the end. And so you don't ever want to be in that situation. And so for us here in Tesla, as we're going to see if we bring up the chart here really quick, we did the trade on 12.9. That's going to be, let me see here. Let me actually zoom. That's going to be right here. Yeah, so that's that little red candle right there. So this is where we put the trade on. And it was a bearish trade, by the way. And so this is very Tom Sosnoff-esque, right? Like you put something on bearish and boom, it's 15, 20, 30% higher within a couple days. Like it's real quick, like really efficient. And so this is, look, it almost got up to 500. You can see it right there. There it is. And so with this right here, that was tough. That was difficult. It didn't look like it was going to come back. It didn't look like it was going to work. It looked like, man, this thing's dead to rights. I'm just going to be, ultimately taking max loss and all those kinds of things. But with defined risk strategies, another really important part is give it all the time that it needs. If this thing needs, a couple of weeks, give it a couple of weeks. If this thing needs all the way to, the final week of expiration, that's what you've paid for. That's what you've signed up for. So don't feel like you need to go in and circumvent the process just to save a little bit of money and kind of, accept something lower than max loss. I don't like doing that personally. I can't say that it's better. I can't say that it's more optimal or anything like that. But, oftentimes you'll be in a situation like here for Tesla, for example. So for Tesla, this was what, a $10 wide spread? Let me look at this really quick. So if I go into Tesla, yeah, this is a $10 wide spread. So we sold this guy for $370. So I'm going to say at some point over the last couple of weeks, I can't remember what the numbers were. If you actually watched the show over the course of, since December 9th, watch the show. Any day that I bring up Tesla, you can see for yourself what the mark price was on that spread. I'm thinking that this thing probably marked at $8, maybe $9 at one point. Understanding that the maximum mark price is $10 because that's its width, and that's what it's going to settle to if it's fully in the money at expiration. It was tempting, of course, at times thinking, man, this thing's 100 points in the money. It's like, man, let me close this thing at $8.60 and save $1.40 off of max loss. Let me close this thing at $9.10 and save 90 cents off of max loss or whatever, right? But I really don't like doing that because you're kind of short-circuiting the process, the probabilities, all the things that you set up on trade entry. Like whenever you look at a new trade, like if I bring up a new trade right now, right, and the pop is 58%, I'm just picking a number at random. If the pop is 58%, the P50 is 66%, whatever, those numbers they're looking out all the way to expiration. They're looking out all the way to that third Friday in whatever month it might be, February, March, April, whatever it is. They're expecting, as if they're a person, which they kind of are a person, right? ChatGPT, AI, it's 30% human now, right? They're expecting to have all that time. That position is anticipating all of that time, the full gamut of DTE, if that's what it comes to. So if you go in and you save 70 cents or $1 by closing it, 21 days early or 13 days early, is that really better? I'm not so sure. I'm not so sure it's worse either, to be perfectly fair. But I really let's stay consistent. Let's just ride these things to the end. We're comfortable with max loss if that's what it comes to. And then there'll be plenty of, situations like this one where it will come back. It will come back. Now, of course, if you're 100 points in the money, it's not likely that it's going to come back. This is not something that you want to be, pegging your children's, future education on or anything like that. Although with YouTube, you don't really need to worry about that anymore these days. But here with Tesla, it came back. And so there you go. So let's go ahead and I'm actually going to close it. I'm not going to, we're up 80 cents on the trade. We're inside of 21 days to go. We're not at our profit target, but that's fine. I don't really care. It's a nice little trade. So let's go ahead and let's book it. So we've got Tesla for 291. That looks pretty good. Let's go ahead and do it. No takers at 291. Let's try 294. All right, filled at 294. Beautiful. So Tesla over and done with. All right, so next we've got to talk about Uber and we've got to talk about MES. So, all right, let's talk about Uber really quick, just to take a real quick victory lap. Look at this guy, guys, even guy, if there's just one of you out there, which is very possible given the quality of the program. Uber up 265. 15 days to go. We have a 67.5 long call. Doesn't look like we're going to get there. So this is sort of like a Tesla situation, right? Didn't look like it was going to come back and it came back, right? This is sort of the same just from a general principle standpoint. It's a very different strategy. This is a naked long call now that was a holdover from a diagonal spread. I've been waiting for an uptick to sell premium. I never got one. And so I just was basically left holding a long call. Now there's only 15 days to go. I'm not going to sell any premium in this cycle. It's not going to make any sense to do that. There's not going to be any premium left. So just holding the long call makes the most sense to me. The most I can lose is the additional 47 cents, that it's worth in terms of the mark price of the call. So there's not a ton of risk left in this trade. If Uber just crash boom bangs and, Waymo takes over and Lyft takes over and whatever, and Uber crashes to 50 or 40 or 30 or whatever, it's not going to matter. I'm going to be down 47 cents. Not that big of a deal. But we still have 15 days to go. It doesn't make a lot of sense to me to close it early for all the reasons I mentioned a couple of minutes ago. And so, no one takes victory laps on losing positions quite like I do. So here's another one. For you. We'll see what happens. It doesn't look like it's going to work. And that's just the way it goes sometimes. All right. So that is Uber. And then lastly, let's talk about MES a little bit. So, you've got Bank of America and Starbucks. These are our two long stock positions, which, oh, by the way, if you're ready for our next installment of long stock discussions, we're going to have another one tomorrow. We're doing it every Friday for as long as I can keep thinking of things that I think are relevant related to long stocks. So tomorrow is probably going to be – so quick little tangent because we have so much time. We have like an hour left. This is crazy. We have like 50 minutes left in the show. This is nuts. If we think back to the first few installments of the Friday stock discussions with Dr. Jim or whatever we want to call this, right? We've talked about the reason why I think most people do buy stock and should buy stock is they use the product. I think that makes a lot of sense. That was episode number 1. Episode number 2 was we talked about the probabilities, which are really not 50-50. I think they're more like 53-47 because of the positive drift. Excuse me, and the positive risk premium that's baked in over the long haul. Okay. Episode 3, which was last week, I think. We talked about profits and revenues over time. And, if you invest in a stock where it grows its revenues and it grows its profits over time, then you're going to see the stock price increase. If you give that enough time, zoom out into like years and decades, not like months and quarters, then you're going to see a pretty high positive correlation between companies that sell a bunch of stuff and make a bunch of money. They're going to see their stock prices go up, because at that point, you're not talking about noise in the market. You're not talking about bid-ask spread differentials. You're not even talking about Fed announcements. None of that crap matters when you zoom out 5, 7, 10 years. Okay, tomorrow I want to talk about dividends. So tomorrow I want to have a very, very, very open discussion about dividends. And I'm going to say that so far in our little collection of 4 stock discussion episodes, tomorrow will probably be the most, what's the word I'm looking for? It's going to shine stock ownership in the most favorable light. It's going to shine. I'm just trying to be honest and open with you all. Like, obviously, if you watch the show and you have any, if you've seen me at all on the network or basically anywhere on the network, like, you already know that I think short premium is going to be a better move for most people. I think short premium is going to be more strategic. I think there's a lot more things you can do. I actually have a really fun segment that I'm going to do on Monday morning with Tom and Tony that I'm cooking up right now. That's going to be a lot of fun, kind of talking about, modern portfolio theory and options and how it changes things. And it's going to be, I think it's going to be decent. We'll see. I mean, Tom's going to hate it. But, obviously, what doesn't Tom hate on Monday mornings? But I think tomorrow morning is going to paint stock in the most favorable light. So don't miss tomorrow's show. We're going to talk about dividends, and it is going to be a good time. So, all right, that's going to be tomorrow. We've got Bank of America, Starbucks. Let's talk about MES though, really quick. So with MES, this is a trade where you've got the stock. I mean, look at the stock. This is so interesting, because we have the index right where we want it to be. It could even be a little bit lower when it comes to the optimal price that we want. For my Tom Sosnoff fans, he loves his optimality. It doesn't really exist, but man, he loves it. The price that we would pick would obviously be 58.70, right? That would be the price that I would choose. However, there's caveats to that. There's fine print to that. There's a lot of things going on, and this is a great example of one of them. We have a good price for MES. It's between our strikes. It's in the middle of our spread. That's really, really good. But we're still not making a ton of money, right? We're only making a little bit of money. You can see we're only up, 18 points on the strategy. right? So we're not even up $100 on the trade. And so we're not up that much. We're only up a little bit. And the reason why is very simple. When you have on, I mean, this kind of applies to both ratio spreads and butterflies. When you have these complicated strategies on that give you a lot of different ways to win, they're omnidirectional, there's lots of flexibility. Obviously, there's going to be gotchas built in there somewhere. One of them with a strategy like a ratio spread is you can't hit the optimal price point, the perfect price point, too early. Because if you do, it either A, won't show a lot of profitability, which is our case here, or B, if you hit it really early, like within the first couple days or first week of the strategy, it's going to be a loss. It's going to be a loser because remember, with a ratio spread, all of your risk is down below that extra short put strike. And so if you start to move towards that short put strike too early, the extrinsic value in all the options begins to explode. And that's where your risk begins to, kind of be on high alert. Because now all of a sudden it's like, man, if this thing keeps going down, that's going to be really, really bad for my position. And so for MES, this is really interesting simply because, it is in a good spot. This is kind of where we want it to be, but it's still a wee little bit early. So I'm going to sit tight. I'm not going to take it off because when we put this trade on, I talked about how, I wanted this to be a longer term project. I'm prepared to potentially hold it, close to 21 days to go, maybe even inside 21 days to go, as long as we all agree not to tell Tom that we're doing that. And so this is going to be an interesting little project. Let's see what happens. And, I'm like, hey, if the market stays here, that's good. If the market rallies, that's also good. The only thing that would not be good is if they keep scaring the children. I mean, this is like day 18 of this bear market now. Like, I know it's only like 6 calendar days, but man, it feels like we've packed 18 full bearish days into those 6 calendar days because we're almost like 3% off of all-time highs now. I mean, this is some crazy stuff. I actually think in the NASDAQ, we're like 6 or 7% off of all-time highs. So the apocalypse is here. So for all my Gen Zers out there that have never seen a down market, this is not great. And by not great, I mean it could potentially get a whole lot worse. And so, all right, that's MES. That's all the other positions. I want to see where you guys are at. We made it to about the halfway mark of the show. Actually, a little bit before the halfway mark of the show. Look at the market rallying. So look at this strength, man. You can't keep a good risk-free instrument down. Got the NASDAQ now only down about 100. You've got the EMA S&Ps now down 31. You've got the boomers, right? Boomers coming out with that New Year's resolution strength. Like, these guys invented New Year's resolutions. Like, they're the ones that did the initial New Year's resolution. So you can bet your bottom biscuit on a January 2, they're going to be all, full of something and something. And so 240 to the downside, but making its way back to unched on the day. And so, man, there you go. So let's go ahead and let's see. What's volatility doing? Selling off on some volatility? Yeah, a little bit. So we're only up $1 now on volatility. All right. Let me see where you guys are at. I'm going to go all the way back to the top. Man, look, man, you guys are lighting me up today, which is good. That's good because your boy needs that watch time and your boy needs to trick the algorithm into thinking this is valuable content. So keep hitting that chat box, even with just, I'll take whatever you got. Questions, of course, are welcomed, but comments, stories, and jokes are welcome. Right? Especially if your stories and jokes are very similar to my own, kind of right in that B minus range. That would be very, very welcome. So, all right. Let's see. Sergio's in the house. He says, Happy New Year, Dr. Jim. What's going on there, Sergio? I wish you and your loved ones a great 2025, man. I wish you and your loved ones also a great 2025. And yes, it does. I got to hand it to Tom. It does kind of have a bit of a regal feel to it. A quarter century. It's kind of cool. It's kind of fun. 2025. It's very feng shui. You've got, the 20 is kind of a feng shui number. 25 is a very feng shui number. You smash them together, smash burger style, and we're in 2025. And there you go. So YouTube Jim's in the house. Greetings, Dr. Jim. What's going on there, YouTube Jim? I appreciate you, my friend. I appreciate you very much. Thank you so much for being here. And you are a staple, man. You're part of the core position now. You're in it to win it, man. So that's really, really awesome. Thank you so much there, Jim. Don721 is in the house. Says, hope you have a great 2025, Dr. J, man. I hope you have a great 2025 too there, Don, my friend. And yes, thank you so much for being here. It's just, I'm just so humbled. I'm so humbled that so many of you guys show up and so many of you guys come back. That's what's amazing to me. I understand, on the internet, there's some crazy stuff out there. And on the internet, I myself frequently find myself watching things, consuming content that I never really meant to consume. But that doesn't mean I go back. I usually check it out. I'm like, yeah, that wasn't that great. I'm not going back to that. But you guys come back, man. It's amazing. It's so incredible. I just appreciate you guys so much. And so David Gilmore's in the house. What's going on there, David? Happy New Year to you, my friend. Dr. Jim, when your wife tries to talk to you, have you ever blamed your deaf ear for the reason why you say that you did not hear her, but you really just ignored her? David, that is my go-to strategy. So David, that is a daily strategy, my friend. And she doesn't watch the show, so I mean, we're just talking amongst friends here. She's not going to hear any of this, much like I don't hear what she says to me, like throughout the day. Oh yes, I use it often. I use it frequently, and so that's why, like when we're driving places, you know, not only am I the man, not only am I the head of the household, so I'm always going to be the driver, but given my own personal auditory situation, I will always drive, because there's a lot of things I may not pick up on. Right. And that's not necessarily a bad thing. Like that can be a really, really good thing. And so there you go. And so for those of you that are brand new, by the way, I haven't talked about this that much on the show, but I brought it up from time to time. I do have no hearing in my right ear. I was actually in a car accident when I was 18. So I wasn't born deaf or anything like that. Like everything was normal for 18 years. And then I was in a car accident. And I'm honestly lucky to be alive. Very lucky to be alive. I broke the right femur bone in my right leg, and I lost the hearing in my right ear. And so I have a titanium rod that's going through my leg, but I don't really notice it or feel it. Doesn't feel any different. And then obviously I have, you know, the hearing loss, which I don't even think about that. As crazy it might sound to you, if you're like, wow, that's crazy. It was kind of crazy when it first happened. It was 25 years ago. But I'm used to it. I'm so used to it. I almost never think about it. And I've just kind of adjusted my whole life to where everyone's always on my left. And it just makes everything very simple for me, except for my wife. She's the one that I put on the right. And so Sergio, Grandpa Jim, we love you. There you go. This is what I'm saying. This is what I come here for, right? I'm going to be bringing the glasses back. I'm going to be bringing the glasses back. They're going to be a regular occurrence. And, you know, maybe it gives me, I would think it kind of gives me the grandpa vibes, but does it also not give me the intellectual vibes? Does it also not give me, you know, kind of the studious vibes? I mean, maybe the t-shirt and the backwards hat kind of nullify all that, but I would think maybe I come out ahead. I don't know. Maybe there's something there. But I appreciate you there, Sergio. Thank you, my friend. Robert's in the house. Happy New Year, Dr. Jim. Are we just looking for 50% on that IBIT trade? IBIT. Oh, wow. Look at IBIT. Yeah, that would be kind of the go-to there. So you've got IBIT at 55 and some change. It's still between our strikes, so we're still very much in the do-nothing kind of mindset there. And yeah, I mean, for me here, there's a lot of time left. We're still 50 days to go in the cycle. Yeah, this is very much a let's go for 50%. I mean, you could manage it early. I mean, a lot of traders like to do that, but that's a little too it's a little too aggressive in my opinion, for my style at least. I mean, you know, again, I mean, if it fits what you're trying to do and you really like doing it, then I mean, go for it. But in terms of, you know, the way that I approach the markets and kind of things being a bit more methodical, a bit more kind of, you know, just slow moving, let's say, I like sticking with the profit targets. And so, and of course, there's plenty of times to kind of, you know, bend the rules and kind of, you know, make some, call some audibles, but I don't think this is one of them. So Mr. Green, oh, here we go. It's kind of a similar question. How do you adjust your trading strategies when it's taking profits too early? I'm hitting a mental block. Okay, so great question there, Mr. Green. Let me see if I can grab onto what you're asking here. How do you adjust your trading strategies when it's taking profits too early? I'm hitting a mental block. So are you saying – so hang on, because we have a lot of time, Mr. Green, and I'm hoping you're still watching. If you're not, then I'm not really going to be able to help you. But if you are still here – so, and I know there's a delay, like it's like 30-second delay from when I say it to when it actually hits you, and then you got to type in stuff. So I got it. Are you saying that you are currently taking profits too early and you're not quite sure what to do because it's not playing out like you would have expected? Or are you saying something else? Let me know, and I'll go to a couple more questions, and I'll come back to you at the bottom of the chat. I'll search for Mr. Green, and we'll find it, and we'll get you squared away. But I want to make sure, since we have extra time, let's use it to our advantage. I want to make sure that I'm understanding your question correctly. And so let me know, clarify just a little bit there on the bottom. So Marlon's in the house. It says January 6th is around the corner. It certainly is. It will be interesting to see how the Capitol will react to Trump coming back, since he and the MAGA invaded the Capitol 4 years ago. Yes, I don't know if invaded is the right word, but yes, it will be interesting. And I mean, the whole 4 years is going to be interesting. You know, I mean, the whole deal is going to be crazy for the next administration and all this kind of stuff. And so, you know, it's it's glorified entertainment, in my opinion. And I know that people that are really, really in it, you know, on either political side, they're going to be kind of offended by that comment. But I personally think that none of them care about us. I really, truly feel that way. There are very, very few that might, but most of them, they don't care about you, and they don't care about me. They care about them, right? And so personally, me, take it for what it's worth, I think it's glorified entertainment. But that's just my own personal thought. So anyway, Chris King is in the house. Says, happy Synthetic Monday. Yes, it does feel like a Monday. It absolutely does feel like a Monday. It feels like a Monday, or maybe like a very, very early morning Tuesday, at like 2:35 Eastern. Like we just got going, like we just got rolling. And so it does feel a wee little bit odd. I agree. But Chris King, thank you for being here, my friend. Junior Mac says, good morning from Australia. Yeah, Junior Mac. I think Junior Mac is in Australia. He's already in 2026. So let us know how 2025 went, because we're very curious. Was it as regal as we thought maybe it would be? Like, did it kind of have the prestige and the clout that we were hoping for? Like, let us know there, Junior Mac, since you are so far ahead of us. Let's see. Leroy Jenkins in the house says, for strangles and short positions in general, is there a minimum IV, IVR that you really prefer, or just as high as possible? Great question, Leroy. Great question. All right. So, yes. So, the higher the better. That's, kind of just, the original kind of feeling. That's kind of the disclaimer that we put on there. But then you need more. You're like, well, okay, what does that mean though? What is high? The research team has looked at this a number of times. The number that they keep coming back to, or at least that I've seen show up a couple of times, is 30. So 30 IVR, not IV. So a 30 IVR, IV rank is kind of your cutoff point between high and low. Now, that's just a very, very, very rough around the edges reference point. It's not a hard and fast rule. It's not like, well, it's 29.6. I can't sell premium. It's nothing like that. But if you're looking for some kind of way station, if you're looking for some kind of landmark to guide you on your journey, I think that's a good starting point. I think 30 is a really, really good place to kind of look to in terms of kind of drawing some distinction between high and low. So when you're looking to sell premium, you're looking for IVRs that are 30 or above. Okay. Now, to go one step further down the pathway forward through the forest, another thing to keep in mind is, where is market volatility writ large? What is the overall market doing at this moment in time in the market? Like right now, for example, volatility is on the move. Like, sure, maybe selling off a little bit here today off the highs of 1950, but still look at the VIX at 1860. That's pretty good. That's high for historical, standards, by historical average metrics. That's on the higher end. So when I look at IV ranks, when I look at implied volatilities across the board, I should be able to find opportunities that are 30 or greater. Like just going to the major indexes, right? I go to SPY. It's got to be over 30. It's only 24.2. Man, that's crazy. Go to QQQ, 21.8. What is this? Who's running these numbers? Is Jajun running these numbers? IWM, 26.5. Man, who is doing this? DIA, boomers? There you go. Whenever you need someone to come through for you, you find your nearest boomer. This is basic life strategy, guys. Right? SPY let us down. QQQ let us down. IWM let us down. What did we do? We turned to the boomers. 34.4 IV rank. Boom, there you go. That's where you're selling your premium, Leroy Jenkins. That's it. Right? With volatility so high across the board, I think 30 is a good level. Now, if volatility collapses, if it's just, crash, boom, bangs back down to, 14 and a half, then it's like, okay, you want to have some premium working for you. You want some positive theta. Like, you can't just keep all your powder dry on the sideline. I can appreciate that and understand that. So now maybe you kind of ratchet down that reference point a little bit. Instead of looking for 30, you're looking at 25 or 20. Right? I mean, you kind of have to decide what makes the most sense. But again, kind of using the research as kind of a blunt instrument to get you moving in the right direction, I think 30 is a good level. And then the other thing I will say, since we do have so much time, as far as IV is concerned, so this is not IVR, this is just raw IV, which again, to find the IV for a stock, you would just go over to this, click on this right-hand arrow that I just clicked on. It's up here in the right hand. Well, it's a left-hand arrow until you click on it, then it becomes a right-hand arrow. So they're just kind of keeping you on your toes. Then you click on overview. Then it's going to be this IV index number right here. So the IV index number, that is basically what the quote unquote IV is for that stock. The reason why it's called an IV index is because it's giving you kind of an average implied volatility across all the relevant implied volatilities, because every stock has a bunch of implied volatilities. It's a bit of a misnomer to say what is the singular implied volatility of stock XYZ. That doesn't really exist, because you have to know the strike, you have to know the expiration, you have to know the call or the put. Like, it's all going to be different and unique depending on specifically what you're talking about. But giving us some kind of averaging metric to get some baseline around, is this a high implied volatility stock, or is this a low implied volatility stock? This will help you do that. So for DIA, you see the IV index is only 16.6, but if I were to go to QQQ, the implied volatility index is a lot more. See, it's 22.3. And so the reason why I bring this up is because when it comes to a strategy that's going to take advantage of volatility mean reversion. So when volatility is high, it has a tendency to go down. When volatility is lower, it has a tendency to go up. It's not perfect. It's all probabilistic, but that's kind of our thinking. Implied volatility rank, which is what we just got done talking about, is going to be the thing that's going to get you interested in terms of what type of strategy you're looking for. IV rank over 30, under 30, just like we talked about. But as far as the actual premium itself that's in the strikes, that's going to be determined by the implied volatility. So the IV index, or the IV of that strike and the IV of that option in that expiration. It's helpful to know that because the implied volatility, not the IV rank, but the implied volatility is the thing that goes into the option pricing model to determine what option prices should be. And so the reason why I bring all this up is because IV is very important from the standpoint of, if you're trading a DIA with an IV of 16 relative to a QQQ with an IV of 22, you can expect there to be higher premiums in QQQ relative to DIA. Now, again, if the IV rank is significantly different, then that could obviously play a role. But generally speaking, I would expect there to be more premium in QQQ than DIA. And so that's, and not to mention, QQQ is a $500 stock and DIA is only a $400 stock. So this is a multifactorial thing. Like, it's not just one variable that's driving the ship. It's actually, there's like dozens and dozens and dozens of variables that are actually impacting and influencing the prices. But just understanding what role each one plays, hopefully it can help you kind of have just a little bit more market awareness. So hopefully that helps you a little bit there, Leroy Jenkins. But Emmett Morrison's in the house. Says, Happy New Year, Dr. Jim. Man, Happy New Year to Emmett. What's going on there, my friend? I got back to you on your email. I really hope it was helpful if you had a chance to take a look at that. If you haven't yet, then it should be waiting for you in your inbox. Thank you so much, Emmett, for being a part of what it is that we are doing. And Emmett goes on to say 2025 is off to a tremendous start. Yes, it is. It is indeed. All right, so Marlon, I'll get back to you in a second. Let's go down. Let me see if Mr. Green. Did Mr. Green drop in some more info? It doesn't look like he did. Oh, he may not have been able to keep watching. That's understood. Totally understood. I'm shocked you guys watch her at all, to be honest with you. And so let's see. Let's see. Yeah, I can't see people asking about if there's a titanium rod in my ear. No, the titanium rod's in the leg. Although a titanium rod in the ear could be an uptick. That could absolutely be an uptick. All right, so Mr. Green was not able to give us more details. So I'm not quite sure, Mr. Green, where you were going with that question. And so if you happen to hear me say these words, like you watch the rest on the archives or whatever, just shoot me an email, man. Shoot me an email. We'll get you squared away. I just needed a little bit more context around. And I guess that's a drawback, right? That's a gotcha of I move sequentially through the questions. By the time I get to the questions, we're 25 minutes into the show usually because we're doing market commentary, we're doing trading and things like that. So, it's obviously a gotcha. But let's see. Marlon says, what do you suggest Coterra versus EQT? Since Ukraine shut off the Russian pipeline, would this American gas company are they a buy? Coterra. What is the ticker symbol on Coterra? Can I just punch in Coterra? Oh, yes, I can. How cool is that? So CTRA. Okay. And then you've got EQT. So CTRA. It looks like so 3 stars on liquidity meter. And then I go to the actual options. You got weeklies. That's good. You go to February. Yeah, I mean, the options market's fairly liquid. It's not too bad. the at the money strike, you've got 5 to 10 cent wide markets. I mean, it's not amazing, but I've seen much, much worse. I've traded much, much worse. I will continue to trade much, much worse. And so this is not really that bad. And so, but if I go to EQT, that is $46 stock and 3 stars on liquidity meter. And then you go into February and you've got, so slightly tighter market. Maybe, I'm not sure. Similar type of deal, 5 to 10 to maybe 15 cents wide on the at the money strike. All right, so I'm not really a macro guy there, Marlon, so I don't really know about what Ukraine's doing, what Russia might be doing, and pipelines and things like that. Again, I mean, we talked about this the other day with my completely missing the mark on President Carter's market being closed for funeral services, whatever. You won't meet people that you will rarely meet someone that is less plugged in to world events than I might be. And so I'm not the guy to ask. I mean, this is where you bring in your Chris Vecchios. This is where you bring in your Ilya Spivaks. This is where you bring in, your Dylan Radigans if he's not busy, gallivanting the world, selling, handmade leather shoes to, just unsuspecting passerby. And so, yeah, this is when you bring those guys in. Right, I can't really help you. So for me, it would just be a liquidity play. I'd be looking for liquidity. So it looks like EQT and Coterra are about the same. The options market on both looks okay. It's definitely tradable. And so I would be looking to, EQ2 has an IV rank of 42. Coterra has an IV rank of 71. So I might go to Coterra first. Plus EQ2 has earnings coming up on February 11th. So that's going to make the February cycle a little bit trickier to deal with. I would probably go to Coterra. You don't have earnings to deal with on the near-term horizon. And you also have a higher IV rank. So for selling premium, that's probably what I would do. And then you could go in there, you could do whatever you want, man. You could be bullish, you could be bearish, you could be neutral. And so you can kind of pick and choose what makes the most sense. And so hopefully that helps a little bit. So Big Deal Donuts says, hey there, Dr. Jim, what's going on there, Big Deal Donuts? I appreciate you, my friend. Thank you so much for being here. I'm just so humbled by you guys. And I got to turn the AC down in here. I gotta make it cooler in here. It's warm in here. I got this little heater on this next to my toesies so I can keep myself kind of warm. Because, man, it's freezing outside. I mean, it was like 61 today. I'm like, this is nuts, man. Like, I got to find my pants. I'm like, this is absolutely nuts. And so, but now it's too warm in here. It's still a little too toasty. And so, anyway, we got the AC now. But Big Deal Donuts in the house. What's going on there? So, Rob M. Greetings, Dr. J. What's going on there, Rob M? I appreciate you, my friend. Thank you for being here. If I can ever help you in any way, please let me know. Please let me know. It's my pleasure to help however I can. Lubra's in the house. What's going on there, Lubra? I appreciate you. Sam L's in the house. Man, Sam L, what's going on? How did you start the new year, man? How did you start the new year? What was yesterday's training session? I want to know. Right? Did you do legs like you should have? Because I certainly did. There's only one way to start the new year if you're doing it right. If you want to show the new year who's boss, you go in there with a leg day and you obviously start with squats. Now you can pick whatever squat you want, right? There are so many suitable, substitutes. You could go hack, you could go back, you could go front, you could go, Bulgarian. You can do whatever you want to do. But let me know how you started, Sam L, yesterday. I don't want today's session. I want yesterday's session. So Big Deal Donut says, since the holidays have passed, I'm a little desensitized. Yes, I think we all are. I know my kids need to be for sure. Although we actually told all my kids, like when they were like 18 months, that Santa's not real. I'm like, I don't know, man. I'm like, obviously when I was a kid, like, I didn't know. I didn't find out until I was like 10 or 11 or whatever the normal age is. But I was like, I don't know if I really want to lie to my children, right? I don't know if I really want to, like start my relationship off with my kids like on a lie. Like I don't really want to do that. And so we told them early on that there was no Santa. And they were all fine with it. Like they were kind of like, yeah, it doesn't matter. We just care about the stuff. So whoever brings it, we're totally cool with it. And so, Big Deal, Jonathan Simpsons, Dr. Jim, opposing muscle groups, 2025. Here we go. I'm ready. Back and tries on one day and chest and buys on the next day. I don't have a problem with it. It's interesting. It's innovative. So now we're pushing the envelope. Now we're thinking, right? Now we're trying to use our critical thinking skills. That's good. That's a positive thing. Okay. The thing that is a little bit tricky about that is you never, because, keep in mind, like when you do a back day or you do a bicep day, they're both pulling motions, obviously. So the same types of muscles are going to get, the muscle fibers are going to get exhausted. They're going to get fatigued. And so, you just have to be really careful with the volume that you might distribute for each day to make sure that you're getting the most out of each session and you're not just always worn out. And you just always feel like, you're pulling muscles and pulling fibers are just worn down. Your pushing fibers are just worn down because chest, tries, shoulders, they're going to use a lot of overlap. Like, you can do certain exercises to really hone in on a certain, area of a muscle or a muscle itself, but there's going to be a lot of overlap. So it can be done. It can absolutely be done. And I do it from time to time myself, but you just have to be mindful of the volume distribution. And so let's see. Oh, Big Deal Donuts is asking about some posterior anterior chain. Let's get some posterior chain days. There we go. Trading options for cash flow. Yes, which is not the same thing as trading options for income, which is good. Hi, Tasty Nation. Happy 2025 to all, and Jim, man, happy 2025 to you too, my friend. Thank you for being here and being a part of what it is that we do. And so Theta Trader says, Dr. Jim, this is further than 5 comments down, so I doubt you will see it, man. Look at this. See, it's the glasses, man. I mean, I'm so buttoned up today. Nothing else has changed. I've still got the water. I've got the water from the loo. I've got the hat. I've got the t-shirt, but I've got the glasses. We are efficient. Humor, still B-. It's all the same. Nothing else has changed. But now we are super efficient. We're knocking them down. We're moving through. It's just keeping me kind of on point. But Theta Trader says the Krampus rally still has legs. Yes, maybe it does. But man, let's see here. NASDAQ down 110. I don't know, guys. Are they going to close them green today? Man, they would really scare the children there. I guess that'd be the opposite of scaring the children. If they closed them green, be a little bit of relief. I'll tell you what would be crazy if they close them green today. Any level of green. It could be 10, it could be 100, it could be 250, whatever. They close them green today and then they squash them tomorrow, right? They close them green today and then 250 to the downside tomorrow. That would scare the children, because that would look like a market that just can't find a bottom. Can't find a bottom 7% off all-time highs, which is laughable, right? But just a market that just is not attractive enough to buyers, I guess, which, it sort of makes sense. I mean, you buy them up this high, you really got to be, you got to be a little careful, I guess. And so let's see. Chris Conley says Tesla reported a big miss on deliveries. Oh, was that it? Okay, so there you go. Maybe there was something more than meets the eye than just the Las Vegas Cybertruck thing. If they reported a big miss on deliveries, then that's potentially going to have a much bigger effect on the stock today. And Tesla is down about the same. So it stayed about the same as where it was when we closed the position just a little bit ago. And so, all right, where are we at? Michael Mike's in the house, man. We are getting through so many questions. I'm going to get through all the questions today. This is crazy. This is absolutely crazy. And so let's see. Michael Mike says, howdy, Dr. Jim. No more trades for me today. Just hanging out, seeing what's up. Happy New Year, man. Happy New Year to you, my friend. Thank you so much for being here. And I hope you're, taking the rest of the day off because you've had an amazing start to the day. That's always a good day, by the way. It's always an amazing day when you have some great trades in the morning and you're just like, I'm done, man. I'm going to go live my life. I'm going to go live my life, which is obviously going to, involve some kind of nasty quad hamstring burn and pump. And then I'm just going to see where the wind blows me from there. Like, that's an amazing day. It's a great day. And so you don't have to trade all day long every day. Like, take a break. Take some time off. That's awesome. And so let's see. Theta here says, see, that's the mistake. End of the laneway. Don't come up on the property. Oh, I think you were talking about the comment I made earlier about people stopping by the property. Yes, maybe so. Michael Mike, doing well with the 260, 365 call spread in Apple. Or the 260, 265. Yeah, it was great. Ended up working really well, so we took it off. And again, that's how you draw it up, right? That's your textbook example of a short call spread, kind of, what you're hoping for and what you're really playing for there. And so let's see, Grumpy Mike, if I had a lawn, Michael Mike, I got it from you. You're talking about the short call spread. That's good, man. I'm glad. No, we took it off. We definitely took it off. Hopefully you followed, you did the same, made a little bit of money. That would be awesome. And so let's see, Methune,'s in the house. Hello, Dr. Jim. What's going on there, Methune? I think I got that right. If I didn't, my apologies, but I'm trying. Methune says, hello, Dr. Jim. Happy New Year. How about a Palantir call diagonal? 75.80. Let's see. PLTR. Let's take a look at this. So PLTR, a 75.80 call diagonal. Are you thinking January, February, maybe? So we've got earnings on February 3rd, which is interesting. 75.80. So obviously you're talking about buying the call diagonal because we don't sell diagonals here, not normally. And the main reason why is generally, I mean, when it comes to when you buy a diagonal, when you buy a diagonal call or put, it's a debit strategy the way that we like to play it. It's generally a low volatility play, defined risk strategy, and we typically do it in lower volatility environments. If volatility is high, there's so many better things to do than selling diagonals, in our opinion. Like there's so many better things that you could do, even define risk. I mean, verticals, iron condors. I mean, these things are simpler and a lot more straightforward than selling a diagonal, at least in our opinion and in my personal opinion. But here you're thinking about a diagonal that's going to be around earnings, I'm guessing. You do have an IV rank that's fairly high, which makes sense because Palantir is, it's a highly volatile stock, and you have earnings coming up, which is kind of getting baked into. Well, maybe it's a little bit early for the implied volatility to be getting bid up because of earnings, because they're still over a month away. So maybe not yet. But you have implied volatility rank of 69. For that reason, Methune, I'm going to pass on the diagonal spread for Palantir. I think something in here that is short premium would make a lot more sense than buying premium, like a call diagonal or a calendar spread. Those are kind of long premium strategies. I think we do something, if you wanted to be bullish in here, I think you could go into February. And I'm assuming that because a call diagonal is bullish. So if I go in here, if I could sell a 70-65, right? Yeah, I mean, this is a decent looking little trade right here. I mean, I'm just selling a put spread. I think I might actually do this trade. This is not too bad. You've got an IV rank of 69, right? We do have earnings to contend with, but maybe we can get out before earnings. It's possible. You have a pop of 57. You have a P50 of 70, 71. I don't normally like to do trades with earnings that are in the cycle. I would much rather wait for the earnings day and then do the trade then. But this one is a little bit further out, so we still have a month's worth of time to maybe cash this guy in for a profit before we have to worry about contending with earnings. And Methune had a really, really good idea here with something in Palantir, so I kind of wanted to do it. Not to mention, now if it goes wrong, it's not my fault, man. It's Methune's fault. Like y'all see it in the chat, right? This is his idea. It's not my idea. And so let's go ahead and let's see. If I go in here, I think it's good as is. I don't really think we need to do very much in addition to this. We sell a 70. We buy a 65. It's a short put spread. It's defined risk. I mean, it's $5 wide. We're basically risking 3 to make 2. That's a pretty standard short put spread setup. All of that looks good. All of that looks fine. And I think we just do it. $1.93 looks pretty decent. All right, so we got filled at $1.93. So there you go. So we have a short put spread on in Palantir, and there we are, man. Good stuff. So thank you there, Methune. I appreciate you, my friend. So Sam L's in the house says, Dr. J, are you science-based lifting or bro science? So you think they're different? So you think they're different. I may have an issue with that. But to answer your question as it is written, I think that, the evidence-based crowd and the bro science crowd, it's like they're sort of like Republicans and Democrats in some ways. Like, man, they just dig their heels in and they're like, I'm right, you're wrong, we can never live together. Like, this is crazy, right? And so I'm just like, man, I don't know if it needs to be like all that. I think there's obviously gimmies and gotchas to both. And I think we can take so much out of both crowds. Let me give you a great example I'm talking about. If you're really like heavily invested in like the evidence-based crowd and you're on WebMD and like, you're obviously watching, Jeff Nipper's YouTube channel, like all this stuff, right? It's like you're going to get a lot out of that. But at the end of the day, you got to get in there and you got to do the work. You got to get in there. And I mean, in the wise prophetic words of Tin Cup, you got to grip it and rip it, man. Like you just got to grip it and rip it. And so, I mean, you get so lost in like, well, what did this study say? And what was the hypothesis? And what was the sample set? And blah, 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 blah. It's like, man, just get in there and grip it and rip it. And the rest of it will work itself out. And that's what the bro science crowd figured out, 35 years ago, 55 years ago, whatever. They just got in there and got it done. And they just kind of figured it out. Because the reality is this, and this is what I personally believe, and I think that it's backed up by the bros and, the scientists and everybody. If you get in there and challenge yourself, the rest is all going to work itself out. You can pretty much do whatever you want, but you just got to challenge yourself. If you're challenging yourself with resistance training, it's really hard to miss. It's really hard to miss. Now, if you're trying to like compete at like the highest levels of like, competitive bodybuilding or physique or whatever, and you need that last 1%, 5%, whatever, then maybe it's a little bit different. But that's not going to be most people, right? That's not even really going to be me. And I mean, I am a competitive bodybuilder, but I don't think I want to go to that level. I don't think I have the skill or the ability. And so those are my thoughts. Hopefully that helps a little bit. So Mike's trying to get out of that short call spread. Let's see. Oh, it looks like you got out. Maybe you did or maybe you didn't. Anything fresh for us? Yes, a Palantir spread. Compliments of Methune. So it's not even my spread. I mean, it's my spread if it works. But if it doesn't work, you all know who brought it to us. And so you let him know that. Hopefully he's a good sport. And so Bill Buchanan's in the house. What's going on there, Bill Buchanan? And let's see. Oh, Bill Buchanan says between Grumpy Mike and Michael Mike, that's a lot of Mike. I agree. That's too much Mike. And so there's gonna be limits placed on the amount of Mike that we can allow into the chat in the future. And so I'll work with the production team to kind of throttle that somehow. And so Space Explorer is in the house. What's going on there, Space Explorer? I appreciate you. Let's see. Michael Mike. Yes, too much Mike. Oh, Anka, here we go. Man, I've made it really far. I'm getting people talking about dividends. Wow, I made it really far in the comment stream. I don't think I've ever made it this far. Anka says, speaking of income, I love my dividends. See, Anka, this is exactly what I'm going to talk about tomorrow. So let me give you guys a little bit of a teaser into what we're going to talk about tomorrow. Dividends are a very interesting thing. They're a very interesting thing because most investors that are being paid some kind of dividend, they love their dividends, and rightfully so. But here is what's interesting, and here's what I'm going to talk in a bit more detail about tomorrow. The dividends that a stock might pay, they're in the option prices. They're actually in the premium. They're a variable in the option pricing model. Like they're going to go into the extrinsic value, they're going to lift the put options, by the amount of the dividend to, prevent any arbitrage opportunities from, the fact that the stock drops right after the ex-dividend day because of the dividend payment. If that wasn't factored into the, extrinsic value on the put, then there'd be an arbitrage opportunity there for all the put buyers. So they're obviously not going to do that. So it's in there. It's baked in. It's theoretically the same. It's synthetically equivalent, but it's not. Right? Anka knows what I'm saying. It's not, right? Theoretically, it is. In a textbook, in a formula, in a Tom Sosnoff estate enterprise situation, it's all the same. He's like, it's all the same, Johnny. Don't worry about it. It's totally different. It's completely different, right? Like when you're getting the dividend checks, when you're getting that dividend income, you can use it to buy more shares. You can use it to buy a new squat rack, whatever you want to do. That's totally different. When it's in the option premium, it doesn't really have that separate category. It's not really, it's very difficult to kind of parse it out. Now, again, is it showing up in your P&L? Is it showing up at the end of the year, in the same way? Theoretically, yes. Practically, I don't think it's that simple. I just don't. And maybe I'm way off base here, but I don't know. I think we're close, Anka. I think we're close. And now it's you and me together. And so don't let them tear us apart. And so Ton 5 Zebra says, Happy New Year 2025. May the market be with you this year. Cheers, man. Cheers to you too, my friend. And thank you for being here. I see Larry's in the house. Happy New Year, Dr. J. What's going on there, Larry? Larry says an RKLB Fab 1830 short strangle. Man, let's go. What's RKLB? Is that Roblox? RKLB. Rocket Lab. Okay, let's take a look at Rocket Lab. I've never traded Rocket Lab. They have earnings coming up on February 25th. I'm assuming they do something with rockets. And so you've got 3 stars on the liquidity meter. Let's go to the trade page. Go into February, kind of sneak in there right before earnings, which is nice. The markets are they're okay. I mean, it's palatable. It's not the best in the world, but I've seen much, much worse. And so you've got the at-the-money strike is 10 cents wide. It's not too bad. Let's do it. Let's do it there, Larry. I don't recall you having been in the chat before, so thank you for being here. Thank you for being a part of what it is that we do. And it really is only because of you all that we can do what we do. So just so you're aware, the unofficial rule is you brought the trade to me. If it's a loser, it's on you. If it's a winner, I get all the credit. That's the deal that we are making. And so you don't really have a say in that matter. That's just the way that it is. So if I sell an 18 put and you set a 30 call and a 30 call, Wow, ooh, look at that. Wow, look at that skew. Man, that's some skew right there. Look at that. You've got the 18 put, which is a 15 delta, 96.7% volatility. But then if I go down to that 30 call, which is a much higher delta, you've got a 37 delta, 100% volatility. And so a lot more skew and premium on the upside. And Larry, I don't know, Larry, maybe we should move that call out a little bit. I mean, I like the thought here, but it looks like we're kind of walking into some kind of base ripper type of situation. I have a feeling this thing could rocket against us, pun intended. So if I go in here, though, if I take my 30, I'm just going to move it. I'm just going to go to the 33. Nothing crazy. I'm not completely altering the spirit of what you want to do. But I don't know, this might be a slightly safer, more conservative version of what you brought to the table. And so I'm going to go 1833, just a tiny little tinkering with the strike on the upside there. But it's decent. It's decent and it's solid. And let's see here. Wait a minute. What? The buying power is only $200? No way. This doesn't even make any sense. That has to be some kind of mistake. I know it's a small stock, $24. But, I mean, look at the IV. The IV is 97%. You're telling me that Scott Sheridan and the boys only need $200 for me to hold this position? That's pretty crazy, man. That is pretty crazy indeed. I mean, let's go for it. I'm really surprised. I would have assumed that would be more like $500, $600, $700, just given the volatility skew that's in here and the volatile nature of a 100% IV stock. But I don't know. Let's do it. Let's do it before they change it on us. And so, 214. And let's try. I can't get 214. Let me try. I'll try 210. I'll probably get filled, I would think. All right, so we got filled at 210. We're in Rocket Lab, a little strangle action. That's good. We're building up the portfolio. We're up to 10 positions now. So I appreciate the RKLB. I appreciate the Palantir. This is some good stuff. So thank you guys so much. Griffin Jones in the house says, get greedy when others are fearful. That's correct. That is a Warren Buffett-ism, which I am legally required by my contract with the Sosnoff Enterprises to limit the Warren Buffett isms I'm allowed to speak live on air per quarter. I only get one per quarter, so that's it. Like we've just burned up our January 25 or first quarter 25 Warren Buffett ism. But that's correct. So Finwest in the house. What's going on there, Finwest? Good morning, Dr. J. Happy New Year to you and yours. Man, Happy New Year to you and yours, my friend. Thank you for being here. Of course, I mean, you're center of the core. You're center of the staple. And so I appreciate you, my friend. Thank you so much. And so Darren Hollander's in the house says, I feel bearish, but I still sold an SPY put. I couldn't help myself. Hey, if you saw the digital collectible, which I don't know if you did or not, Darren, but if you saw like our most recent digital collectible where we talked about 6 important strategies, I had, the honor. It was an honor. And I had the honor. Yeah, I had the honor. That's what I was going for. I had the honor of being a part of that. And the strategy that I did was a short put. That is my favorite strategy. I still think, to this day, it might be the most effective strategy out there. And here's what's beautiful about it. It doesn't matter if you're bullish or bearish. It almost doesn't even matter what your underlying, directional assumption of the market might be. A short put has a home in your portfolio. And in that talk on the digital collectible, I talk about all the reasons why that is the case. It's all basically centered around, positive drift, positive risk premium, Uncle Jay's printing press, just all the basic stuff that we know about. But it's powerful stuff. And so there you go. Dave S. says one of the best Buffett quotes. I agree. I totally agree. And so, here we go. I like this. Nice. William McHale says, Doc, which is more advantageous for a second season retail rookies portfolio? Greater than 100,000, buying 100 shares of affordable stocks or fractional shares. So wait, so these are two separate scenarios? Wait a minute. So greater than 100,000. Are you saying greater than $100,000? Which is more advantageous? I don't know what the second option is. Those look like two of the same option. So buying 100 shares of affordable stocks or fractional shares. I mean, I can't quite ascertain what the two options are with that. I'll just say this to try to give you some kind of answer to your question. if you have $100,000 in your account, even if it's in an IRA and capital is a bit harder to kind of allocate and things like that, that is a ton of capital. Trust me, that is a ton of capital. That's more than you need to pretty much do whatever you want to do. If you've got half of that, if you've got 40, 50, even in an IRA, I think you can do so many things, especially if you use like futures and futures options to help limit the buying power on short premium exposure in the major indexes. As we've looked at this on the show many times before, I'm going to look at it a lot this year. Of course, when I'm looking for premium in the indexes, I typically go to MES and MNQ. I'm not going to SPY and I'm not going to QQQ because I've got 30,000 in this account, and it's pretty easy for me to fit in undefined risk positions in MES and MNQ. If I've got 30K and I'm doing it, you've got 50K, you've got 100K. I mean, you've got 100K, you're with the big boys now. Like you've got 100K, you're with the Shooter McGavins now. Like you're trading ES, you're trading NQ. Depending on sizing parameters and things like that. But like it's in the discussion for sure. And so 100K, you can pretty much do whatever you want. And even a lot less than that. And so let's see. Evan says, this is the year. Oh, here we go, man. Evan, I appreciate you, man. I'm going to send you that cash that we talked about. Like, remember when we had that conversation? Yeah, hopefully you forgot, but if you haven't, I'm going to send you the cash we talked about. Now, again, don't wait by the mailbox, but it's coming. Evan says, this is the year that I learned options in depth. Glad I found this channel, man. You are in good hands. Like, you are in good hands. My show, all the other amazing shows on the network. My best advice, and I've said this before, so this is going to be a bit of a rerun for those of you that have been watching the show for a while. My best advice, find someone who you gravitate towards, the way that they explain things, the way that they explain strategy. It doesn't have to be me. I won't take it personally. No, I got plenty of people that have emailed me and just said, you suck. They just said, you suck. That was the whole email. That's it. And some people send it like every couple of weeks to remind me. I'm like, I know. I'm like, I'm aware. Trust me. I'm trying. I'm working. Not hard enough, obviously, but I got it. Find somebody. Those emails really come in, by the way. Find somebody that you really like, that you gravitate towards, and I would stick with them because we all have our own way of doing things. We all have our own way of explaining things. And so I would just, if you kind of lock into somebody that does, that communicates in a way that you find to be, simple, clear, whatever, that would do worlds for your movement along the learning curve, in my opinion. But you're in good hands, Evan. I hope you stick around, and you can reach out to me anytime if I can ever help. So let's see. William McHale says, trading like a Zuni warrior. I like it. Griffin Jones says, I trained myself to notice and be that way around 1987. Black Friday, Black Monday, whatever it was. Black Thursday, maybe? I don't think we've had a Black Thursday. I think it was Black Friday. And so let's see. Big Deal Donut says, glad you're here, Dr. Jim. Man, I'm glad you're here, my friend. Thank you so much. And so Dave S. says, Griffin Jones, I wish I was alive back then and had made some tech investments. Yes, we all do. That is 100% right. Mark Worley. Oh, look at the NASDAQ down 75. Oh, yeah. They're gonna close them green today and then squash them tomorrow. Man, that's going to really be something. I'm serious, guys. If they close them green today and then squash them tomorrow, like that's going to be something. I'm going to enjoy that quite a bit. Mark Worley says, the glasses and the beard is a grandpa look. Man, I appreciate you. I think. Maybe not. It's a good look on you, brother, man. I appreciate that. Although, again, that's kind of like a compliment. That's a troll woven into a compliment. Like, that's the best kind. That's 100% the best kind. And so let's see. Evan says, follow your strategy if you're taking profits earlier than you're supposed to. Let's see. That is true. And then Evan goes on to say glorified entertainment for sure. There you go. You and me, brother. Don't let them tear us apart. That's 100% what it is. That's all that it is. And so Theta Trader says, ooh, long show today. Jimmits will in fact likely see my initial random comment. No fewer than 7 of that first of the first comments today, man. I got to you way down here. How about that? And I'm gonna get to your next one too. I lost it. Where? I lost it. Oh man, where? Man, you guys blew me up after this. Wow, that's crazy. And then Theta Trader says, say it right. Oh, Leroy Jenkins. Yeah, anything else is just disrespectful. Yes, I know that there was a really popular Leroy Jenkins. It was like a cartoon or a show or something like that. Again, I'm allowing my inability to grab onto, not only like, historical events, but current events kind of be my undoing. And yes, I'm right there with you to some degree. And so Griffin Jones says, Dave S. 1987 spreads were wide, costs were high, research took work, and the prices were in 1/8, which was a teeny, I believe. I learned that from Dr. Wood. Individual stocks were hard for me then. Yes, I think they were hard for a lot of people. Oh man, I got to go. And then the Boomer says, "You're right, Jim. Yes, I am. The Boomers are the way to go. That's how we're going to end it." David Galmore says he's a Boomer. Yes, we know. That's why you get things done, my friend. But I got to run. I got to get you guys to Tim Knight. I appreciate you guys so much, man. Thank you guys so much for being a part of what it is that we do. It's only because of you all that we can do what we do. So if I can ever help you, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Hello, everybody. Happy New Year. Tim Knight, and it's time for another year of charting together. Well, we're only one day in, and it's already been pretty exciting because the market exploded higher earlier. The NQ was up hundreds of points. The ES had a massive push higher, which is green, green, green. I've got 16 different positions. All of them are green, which is bad for me because they're all bearish. And then it stopped. And it's been slipping all day pretty much since it's about 4:30 this morning PST. So got a little bit of a down day now. That's a cool reversal. I'm not a short-term trader. I'm not a zero DTE trader or anything like that. My trades are very simple. I just buy puts, and they tend to be at least 100 days out, sometimes 200-300 days out. These are long-term directional trades. And therefore, I don't sweat too much when you wake up and everything's being bid to the stars. But it is a bit of a relief when things have flipped over like they did this morning. So far, so good. I've got my charts ready for you. And let's jump in and kick off 2025 with the latest. Well, here's the spider. Cool thing here. This little dashed line. What is that line? That is the midline of a channel that goes all the way back to 2009. It's more specifically this sucker right here. This multi-decade push higher and higher and higher. And that dashed line, as you can see, is exactly between support and resistance. So in a way, it is its own little force in this. And as you can see here, the last time we sunk to that level was back early in, was it November, looks like. And so we've done it again. So, the bullish disposition could be cool. Got a little bit of maybe tax selling done with the year beginning, and we found support, and so we'll rally from here. That may well be the case. But it affirms the importance of this line because if we can break it, it's all the more important a signal. And if we do break it, which isn't going to happen today, the next thing to watch is this line right here, which is what I call the election gap. That was the Tuesday high on election day. So in any case, we are down. We were a lot lower, and we just about perfectly tagged that very important midline. Here are the diamonds, also red. And once again, we are in the vicinity of the election gap. We got pretty low down here, which was, we had that big plunge, and then we stabilized, and this was the low here. So we got very close to it, just about sealed that gap, did the same shtick today. So once more, breaking past this would be kind of a big deal because it's exhibited its importance as support thus far. IWM down a little bit. In this instance, we had a lifetime high up here on around about Thanksgiving, fell hard, and we've been just kind of grinding around in this relatively high range, persistently below this dashed blue line, like so. So this blue line had been support until we went crashing through it on that big Wednesday fall, and now it's turned into resistance. And as far as tech, which had an incredible year last year, the cubes, we broke this trend line, and we have been falling pretty steadily. If you look from here, this was Boxing Day here. So basically, here's the peak of the bounce, down, 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 down. And every step of the way, it seemed during the day it was fighting back. But on the whole, lower and lower, having failed that trend line. While we're in the neighborhood, I'll just show you. We can go to like a yearly chart, and you can see that we had a tremendous up year in 2023. We had another big up year, although not quite as big as 2023, in 2024. And the 3 years prior, we were just kind of grinding around in this zone right here. And so 2024, which just finished, we leaped above like so. So that's the annual look at it. Okay, well, one item which wasn't up even during all the green earlier is Tesla. And Tesla just went too far too fast. This stock had been a sensation for the latter portion of last year. We bottomed at $138 in April. And this thing pushed higher and higher, especially after the Trump-Musk connection, then the election, and it just went exploding higher. And just a couple of days ago, I'm on a weekly, beg your pardon, not that little thrown there, like, why am I not seeing more bars? That's why, because it's weekly. We peaked right here on an intraday basis at 488.54 on the 18th, and we're down about $110 since then, about a quarter of its entire market cap burned away in the past 10 days. So it's nothing calamitous. We basically unwound about a week or so of lift right here, but we have crunched under the Fibonacci's again. These fibs, I've been looking at for years, and this had been the lifetime peak here. We got above it finally on this day, spent a couple of weeks above, and now as of I keep thinking today's Monday. Some of you have got to be experiencing this. When you have like 4 2-day weeks in a row, it'll throw you. But anyway, Tuesday, we sunk below the fib, and then we're sinking even farther today on Tesla. So next important support's way down here, like so. Now, this has all been domestic stuff. EFA, which is the worldwide stocks outside North America. This remains in a diamond pattern like so. We are well below this broken trend line, and this diamond, I believe, is going to complete. And once we exit that blue tent that I've drawn there, I think we're going to really see some acceleration in the selling. Let's look at some individual short positions, just a handful of them here. AMD I've had for a while, and this is just barely changed at the moment. We've got three red bars in a row, but the important thing to me is that we stay below that dash line at 124.10. The first stock to turn positive for me today was Boeing. It was my one thin reed of goodness when everything else was raging higher. But Boeing had a nice down day. The cool thing here is that here's the gap. That is to say, the gap being the low of this day. So we gapped down, pushed higher on Tuesday, and today we opened strong, but at no time, I'll zoom in nice and tight here, at no time did we violate that gap. On the contrary, we have this nice big bearish engulfing pattern today. So that speaks well with the Boeing short. Caterpillar, which is my best performer in percentage terms, had this one for a little while. Another bearish engulfing pattern, and the stop on this one's like so. And again, these are things these are all quite strong. This was up big earlier. It opened strong, and the high was quite strong. But these are not short-term plays. I'm hopefully holding on to these for much fatter gains. So as I said, that one's top percentage gainer so far. IBM down the littlest bitty bit, a very sloppy pattern. And here's the dashed line on this one. In the bleed, next era energy. The utilities seem to have topped out. And this is my only utility play. And this is extra nice because not only is it below this top here, but we've got a nice cut under this, this trend line, which goes back a good 14, 15 months. A couple more. Here is NXP Semiconductors, that is NXPI. And we have a failed bullish breakout here. That is to say, this green bullish base sent the stock flying higher and peaking here, and then sort of crumbled away. So this pink area here, that's the top reversal top. And here's the dashed line representing my stop. And the last of these, RCL, Royal Caribbean. And we zoom in. This is the channel on this one. We are below the midline of this channel, and we've cracked below this little cute little top right there. And what we really want to see, it's a pretty minor support level, but we really want to see this one crack as well, which was the low here, and evidently was the low today also. Of particular interest to me right now continues to be energy stocks. They've been quite strong lately. Oil had a big up day today, and to me, it just makes it all the more alluring. Here's XOP. And I have gone ahead today and bought into some $137 puts, June puts on XOP with a quite tight stop. Really nothing more than today's high. We've had a big run higher on this, just a solid almost 10 green bars in a row. So a much more appealing level for a bearish position. But I think we're going to hit some overhead supply here, start to slow things down. So that's a new position. An existing position is COP, which has pushed back beautifully to its neckline. So we've got a head and shoulders pattern like so, the dashed bar, the dashed horizontal is the neckline, and we've got a nice reversal happening that who knows how to ultimately turn out. This could be a doji, it could be a shooting star, but it's a nice long shadow above price levels. How are we doing on time? We're doing pretty good. The quantum fad is still running hot. RGTI, Rigetti, is at a lifetime high of almost 23%. This is just a game of hot potato, because the volume is exceptionally strong. And, who knows how high this thing will go. I don't go near this stuff, but some people just jump right in. And if it stays hot, the returns can be terrific. As I said, though, the funny quirk in this whole quantum fad is this critter right here, which by all accounts has nothing to do with quantum computing. It simply has the word quantum in its name, and it's doing better than ever. So either this company has decided to go into quantum in a way that I didn't know about, or people just haven't gotten the memo yet. And this is not unprecedented. Hello. Wrong button, Tim. There was another stock some time ago. Get back to where I'm supposed to be. Kodak, remember them? And Kodak, for whatever reason, was seen as a really hot crypto play. Honestly, I have no idea what was going on there, but that's what this circle is all about. You can see this just zany blast off in volume. It went from like $3 up to like 10 in just a matter of days. And as you can see, as people sort of like blinked their eyes a few times and realized what had happened, it burned back off. So nutty things do happen out there when there's something really hot. Let's just wrap up with a few index charts here. Here's the NASDAQ composite, and we've cleanly broken the trend line on this. And if we are going to traipse our way down to the election gap, we've got a ways to go. It's down around there. The Indu, Dow Industrials, is threatening to break some very important support. We are right at the precipice here. This is the trend line that goes back to October 2023. And it's today for the first time done a little bit of damage to that. So we could well slip below that, and that would cause some real selling in this zone. Here's the S&P 100, the OEX, another trend line failure, and another goodly amount of distance between present price levels and that election gap. And the SOX semiconductor index, always critical, tighter and tighter within the symmetric triangle. It's got to break this one way or the other. If you don't mind, I'd like to see the other. But you can see that the crazy volatility just is like dying down, just sort of like a ball bouncing with less and less gusto, approaching the apex and nearing some kind of resolution, which just has to take place, geometrically speaking. But I'll say again, a real favorite of mine these days remains oil. Here's XOI, kind of a different view of that whole sector. I think that's one of the most appealing bearish plays out there. So, anywho, so ends the first show of the year. I will see you tomorrow, which oddly is the last day of the week. And then we'll actually get, no, I almost said we're going to get a full week. That's not true. No, we don't. We're going to, Thursday, President Carter's, day of mourning. So yeah, we'll take it a day at a time. Keep your calendars handy. So I'll see you tomorrow. Bye-bye.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Look who's back testing. Tasty Trade now has options back testing. for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for the last call. That is correct. Let's take a quick look at the market, if you'd like. Even the S&Ps, they're down 20 handles. Big range today, 120 points on the SPOOs. They're down 22 right now. NASDAQ down 77. Russell down 270. And the Dow down 170. All four indices, cooperating the same way so far this year. And volatility, you would think, is up. It is up by 48 cents, about mid-range for the day. Bonds, a little surprising, unchanged, 113.27. Do they look a little bit sicky, bonds?
They look a lot sicky.
How come?
Sicky. I don't know. I don't know, but I'll tell you something. Given the fact that there's pretty decent futures volume today, like I think it was 1.5 million last time I looked. Given the fact that there's pretty good futures volume today, I'm really surprised how whippy.
Almost 1.6. Yeah, you're correct.
Yeah. I'm really surprised how whippy the market was.
It was really whippy. It was a lot of two-sided action.
I cannot remember. I'm going back in a lot of memory here.
Going in the memory banks?
I'm going deep into the memory banks. I cannot remember
more volatile day one,
an opening day. Going back in many years, I cannot remember an opening day down, up 50, down 50. Up 55, down 55.
Yeah, I agree.
I cannot remember an opening day. Basically, let's make it simpler. Up 1%, down 1%.
Yeah, that's what you
I do not remember that going back, 30, 40 years on the first day of the year. I was trying to think about it all day. I didn't actually go back and look at everything, but I was thinking about it. I can't remember anything like that. Last year, we spent the first 2 days of the year going lower, and then we spent the whole rest of the year going higher. And this
year,
year,
a third year in a row like that.
I don't know if it was like that 2 years ago. Yeah, it's kind of crazy. There is. Yeah. Today for opening day, man, that's super weird, and I kind of like the volatility today. What's funny is that since we kind of closed everything out on Tuesday, just to start the year kind of flat to start over, I didn't care one way or the other.
What happened in the market too much.
But when we were up this morning, because I was short on Tuesday, I was like, what a cover. Like, I'm a freaking genius. And then when they're down, I'm like, oh.
Nobody does it better than me.
Yeah, when I covered, I'm like, oh my God, am I a genius? And then when they go down, I'm like, oh my God, am I an idiot? Because I had the most beautiful position on. So none of this was easy. That I promise you. I wasn't nearly as busy today as I was on Friday. We made like 110 trades, but there was some rolls in there and stuff. And I'm sorry. I keep saying Friday. I meant Tuesday, last day of the year. Today, we only made 61 trades. And I'm trying to think if we can't remember what we did opening trade-wise this morning. I know we did some stuff, but I can't remember.
Well, we had trades from the research team. So
I know, but what trade did we fill from trades to the research team? I know it was something, and I can't remember what it was.
Trades from the research team. I can go through that real
quick. Oh, it was PayPal.
I'm going to say...
It's PayPal.
Oh, yeah. You're right. PayPal. Mm-hmm.
We sold the 75 puts and 100 calls. And because volatility has expanded, you can do it 14 cents better right now.
Yeah. A lot of my positions since volatility expanded, even though I may have had a little bit of short delta to them, The only one that really came in was Tesla. Even with the $26 move in Tesla, volatility contracted so much. Ivy rank is 60 now. It was well into the 70s earlier. That kind of helped me.
Yeah, I'm going to very quietly add to my position in PayPal. I didn't do that many this morning. I was doing price discovery.
Oh, look at you.
You can actually do it 11 cents better.
266. You are correct.
Yeah, I think it was 255 this morning.
Mm-hmm.
So 11 cents better. It's rare that you get a whole day and do it 11 cents better. Very rare.
It is rare. It is rare.
Let's see.
But it's a good thing.
Oh, yeah.
Well, I mean, is it a good thing?
Yeah, I think so.
All right. Okay.
Other than that, just thinking what we kind of did today to see. And the answer is winners and losers today is easy for me. Biggest loser, surprising, very surprising. First day of the year, biggest loser, a position I really liked, and which shows you, no.
What?
Bonds,
Well, they're unchanged, I know.
Yeah, they're unchanged. We should be up money. Yeah, bonds, we had a good day. They killed premium in bonds. And the Russell the Russell S&Ps was really good today too. Euro.
What did the euro do today?
Down 940.
Oh, big move in the euro. Wait, that's a reversal. I don't have a currency position. That's a big reversal from this morning.
It's a big reversal. And when was the last time you saw the euro? I mean, if you're going to go to Europe, go now. Go now, young.
Off of lows, right? I mean, it's not like it's...
Oh, yeah. The euro right here is trading at under 103.
Yeah, 102.9. Yeah. Trading.
Yeah, that's the lowest I've seen the euro.
Yeah, just off of its lows.
Yeah, so that's our biggest loser today was euro. And then looking at different stocks, biggest loser we had in different stocks was nothing. Gold, maybe. Biggest winner was, you said Tesla?
Yes, for me.
Biggest winner for me was Tesla, too.
Oh, see that?
And bonds, Tesla, Russell. Yeah, that's it. All in all, it's a positive day to start the year.
No earnings to worry about either.
No earnings to worry about. Mm-hmm. Yeah, it's surprising.
Day one. Can we call it? Is it in the books? I mean, is there anything you could do stupid at this point that's gonna? No, you're all good.
No. Yeah, Tesla. I didn't have that on my bingo card. Down about 33 handles off where it was trading pre-market this morning. But it's been weak all day. And it's one of those days where
Tesla was up $10 pre-market, maybe.
Pre-market.
More. Yep.
$8. But then I made my first roll when the stock opened at 390, 391, and I'm thinking to myself, "Oh my God, I'm selling the bottom here." But it's not.
It was the best roll, I know.
Yeah, like you never know. You just don't know.
Yep. You never do.
I rolled it when it was trading 391, then 388. Now it's 377, so that kind of saved me.
Mm-hmm.
That's it. That's the big story of the day. First day, a little bit quiet, getting our feet wet, remembering how to trade. Don't forget, tomorrow we do our first fast market of the year. And we need the trades because our deltas are low, our theta's low, our extrinsic's low, our buying power usage is low. We got cash burning a hole in our pocket right now. So we got to get some stuff on. So send us your trade ideas. tastylive.com/fast market. It's tastylive.com/fast market. Everything's at tastylive.com. You can go /fast market. And if you want to guess in this year's competition, tomorrow's the last day, tastylive.com/guess. And if you want to sign up for all our events that are coming out, tastylive.com/events. Super simple. Events, guess, fast market.
Beautiful. Well done out of you.
Yeah. And by the way, because we have a few new rising stars coming out to the show in the next month or so, if you would like to consider signing up to be, or throwing your name in the hat to be considered to be a rising star, we have a new email address, risingstars@tastylive.com. Jeff and his team are vetting people, and they will take a look and see if they think you qualify. But risingstars@tastylive.com. I think for Q1 we're filled up now, but maybe for Q2 there might be
always
something.
Well received by the viewers. They always like seeing their own people kind of doing their own thing, making the process.
These are your people.
Yeah, no, they are. I mean, they're.
Whether you like it or not. Whether you like it or not, this is who you are.
I can see who the mood you're in. I can see.
We do this. These are our people, and we whether we like it or not, this is.
Okay. Okay. Yep. Okay.
I mean, I know you hear that a lot from your wife. Whether you like it or not, I'm stuck with this is what I got.
Yeah. 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 Yep. You're right.
So getting out now, there's no real getting out.
No, I'm in deep.
That's what my wife and I had that very enlightening conversation once. We looked at each other. We go, "Ugh, there's no getting out now." That's it.
Hopefully, she doesn't watch this show.
Stuck. Oh, I don't care. All right. Let's see. What else do we got going on here? Going into the close. First day. What do you think today? Big. I mean, I wouldn't say actually. I was going to say big day in something, but the only thing that's really up a lot is Bitcoin, which I don't really care that much.
Bitcoin's been strong all day long. No turning around there, and it usually, it runs. I thought it runs with the market. I mean, it seems like it runs with the market. Not today. Been strong all day and getting stronger. Actually, about $400 off of its highs. But we had some two-sided action today, as you said. I already talked about Tesla. Apple been weak all day. That's a little surprising.
It was Apple and Tesla to the downside. It was Meta and Nvidia to the upside.
Yeah,
and they played tug of war all day.
Yep.
Uber had a good day.
Yeah, Coin was up today.
If you're long Uber, anything Bitcoin related would be up. But
Reddit was down early, about $7-8. It's actually up $3 or $4 now.
Ooh.
So Reddit had a big reversal, but the IB ranks are low in some of these stocks, and some of them, a lot of them have earnings coming.
Ooh. Did not notice that.
Mm-hmm.
I stopped trading Reddit when I sold it out, $60.
Yep.
And I haven't looked at it. Another stock that had a big day was Boeing. It was down at one point, I think, a lot more than it is now.
Boeing, BA, been weak all day, down $4.61. Yes.
Let's get this Boeing going.
I mean, the S&P down 20. Volatility up by 37 cents. You got 14 minutes before the market closes here. Red or green?
The market?
Yeah.
Red.
All right, everybody. If you didn't get a chance to cover when they were down 50, 40, 30, or 20, you better do it now.
I'm not short. I mean, I'm usually short. I'm not short. I do think it's pretty funny that we were up 1% and we were down 1% and that we could close unchanged. I do think that's interesting because the 1.5 million futures trading, like I said before, this would be a very strange kind of churning day. You don't get that kind of intraday volatility with this kind of volume.
Right.
It's like light volume stuff.
Right.
And it's also surprising to me that we had this kind of volume on a day that, is it still a holiday?
I think it is. I mean, it's not technically a holiday.
I mean, the roads were dead.
Yeah, I think you still have, you only got the true worker bees or those of people who have pictures of you in compromising positions working today. That's today's day. Monday will be the start of the year for most people, normal people. Normal people.
Okay, I can take that.
I bet you could.
Taking a quick look around at just forgetting about my own watch list, but just taking a quick look around kind of all the most active trading stocks to see if there were, I mentioned Uber that turned around a little bit. I'll tell you one stock that I really don't think I'm going to trade this year that I tried to trade last year and it just didn't work out was IBIT. Not trading. If I want to trade Bitcoin, I'll trade Coinbase or
the physical itself.
No, or MSTR because those.
Why can't you just trade Bitcoin too?
No leverage, boring, no options.
Oh, you mean just simple buy or sell? Yeah.
Options. I need options.
Mm-hmm.
And looking to see if anything else jumps off the screen at me, and I'm going to say, no, not really. I'm going to say I don't have a takeaway from today to kick the year off to say, you know what, this is an amazing start or not. But in the cherry picks, which is a quantitative newsletter that we send out every week. Here, can you throw it up on the screen, please? Paul, let's put this up there. We did something that's pretty interesting. We looked at market cap versus equal weighted S&Ps using two different indices just to show you how concentrated.
Well, we didn't. The two people who are the authors of this, I know you commissioned it.
I use we
collectively as a.
I didn't say Tony Batista. I
got
said
it.
we.
Okay, got it. Yep. Mhm.
Scroll down. And there you go. So RSP is the equal weighted S&P, and the SPY is the market cap weighted S&P.
So what's your takeaway from that? Obviously, I can see the blue S&P is much stronger, but what's your behind the scenes or between the lines takeaway of that?
That if I was to...
It's not a trick question. I mean...
I understand that.
Okay.
If I was to start the year right now, here's my takeaway, because I'm a contrarian.
You want to sell SPY and buy RSP?
I would, but I've never traded RSP.
I've never traded it either. But my takeaway from this is...
Does RSP have options? I don't know the answer, by the way. Is it just an...
I don't know, but has options. They trade.
I don't know.
Yeah, they got,
A little wide.
Yeah, they're a
40
little
cents
wide,
wide.
but I mean, an open interest is kind of light.
Single point strikes, 40 wide. It's a little wide for me.
Yeah.
But RSP...
But my takeaway from this is if you look at... So they're looking at the same 500 stocks. They're just giving them all an equal weighting.
Yeah,
when you give them all an equal weighting, that means there's a handful of stocks that are really... it's another way of looking at the same picture that media has talked about for the last year or two. There's a handful of stocks that are really skewing, making this market look so much better than it is. And it is what it is, because SPY is what it is. But the rest of the market's really only up about 10, 12% there, right? 12% versus, 25%.
So let's just see this for a second. What is the ratio here that you have to use, actually? SPY is a $585 stock as of today. And RSP...
If you're using options, it doesn't matter. They're both down
I'm using stock. It's $174.
It's a 1-to-1, Tom. I think they're both down 0.25%.
No, but if you were to buy...
You want to do 4-to-1 or something like that? Or 3-to-1?
3-to-1, isn't it?
What's that?
Isn't it 3-to-1?
Yeah, 3-to-1.
It looks like it's... Yeah, around 3-to-1.
Yeah.
3-to-1 makes you a hair short. So you have to buy 300 shares of RSP and sell 100 shares of SPY. Let's see, that would put you down. That means it would be down 165 today in you'd be down 165 today in RSP.
And you'd be down $1.80 in
you'd
SPY.
be up $1.80.
Up $1.80 SPY. Yeah,
because you're a little bit short SPY. That's exactly what it is. That's exactly right.
Mm-hmm.
So you would have made 20 cents today.
You could have been somebody.
If you did it 3-by-1.
Mm-hmm.
In reality, it's a little bit more than 3-by-1. It's like 330.
It's 174 or 5 times 3. Yeah, you're just a little short.
Actually, what am I sitting here speculating with you? Doing this simple way. What I say, 5.
So you're gonna do it to the penny. You're not gonna do 300 by 100. You're gonna do to the penny. You're gonna do 323.
325 shares.
Okay, sorry. I was doing it from my head. Did 323. Okay. Sorry,
325.
325.
It's 325 by 100.
So click the buttons.
What?
Click the buttons.
Click the buttons?
Click the buttons.
Okay, hold on.
Put it on small.
I'm going to.
Oh, that's the easy side.
They're both a penny wide.
There's no way you could put 325 in there and get it right. You'll do it ratio. Oh no, you did the right ratio.
Let's test it.
Beautiful. Good look at you. Good job out of you.
Let's test it. Have a little fun with this.
All right. Beautiful.
325 to 100.
My prediction on you holding this trade is it's 48 hours tops.
You know what? It's a little more capital intensive. It's not worth it. You can make, to make very little money.
Mm-hmm.
But I just want to start watching it for a little bit, because if I saw that, so your original question was, if you saw this graph, what would you do? And I'd say I buy RSP, sell SPY. Now, what this means is that because these stocks have been so highly concentrated
mm-hmm.
to the top few weighted companies, meaning the biggest companies have moved the most, that the SPY has crushed the RSP.
Right.
Which is also why the Dow is an equal weighted index. So it's the same thing. That's why they crushed the Dow.
Good work.
Yeah. All right. Well, anyway, that's what's in cherry picks.
Russell unchanged. Oh, down 10 cents.
Yeah. That was a trade that worked out quite nicely today, and we're happy about that. And we'll ride with it. Bonds being down 2, not happy with that after they were up 20 this morning. Notes are up a couple ticks, but that's nothing. And gold's up $32. Gold had a nice little move this afternoon.
Gold had a nice move, been up $3 with GLD for most of the day, pretty much. Yes, oil up $1.37 too.
Oil had a big day, but we don't have an oil position on, so I kind of feel like, when you don't have something on it.
Yep. Totally understand.
So I will just adjust our gold position on home tonight. So we'll go home flat gold, and we will go home flat silver. I don't know if that means anything because in this market, who the hell cares?
Even the S&P just sold off about 5 handles, down 25.
It's fine. All right, I'm ready to bring in the
overtime crew.
Whatever you want to call them.
Let's do it. Sure, the overtime crew. Who do we got? Oh,
gentlemen.
Hello. How are you, Ilya? Hello, Dylan. How are you?
Oh, Ilya and Dylan. Hello, boys.
Can't hear you.
I'll take clam.
Oh, we just can't hear Dylan.
Yep. What's up, Ilya? How are you?
Good. And for the record, I can hear Dylan, so there's some kind of
go get it right.
Some kind of shenanigans out there, but I'm sure it'll get fixed. Did you guys have a good New Year?
Yeah, we had a great New Year. How was yours?
Excellent.
So what do you think about
nice
this?
And quiet. We did the New York New Year in San Francisco, which means that by 9 we put the kids to bed and everything was done.
That's it's the only way to get it done. That's the only way to do it, Ilya.
That's the magic. That's the magic.
That is the smartest way you can do it. I said, Tony, it's the only one that matters anyway. Just do it. Do the New York, do the dropping of the ball, you're done.
That's it.
Makes it easy.
That's all you need.
What do you think of this crazy opening day volatility?
The one that really makes me a little bit confused is the U.S. dollar because there's really no reason why it should be rallying like this. And when you look cross market, gold's up. Yields are not really going anywhere. Yeah, it's a risk-off day, so fine. Maybe we had a little bit of a haven, go to cash kind of a dynamic, but it's not crazy. And it's not like European markets were down; they were up. So this idea, I saw this mentioned a few times out there today in the ether that this is money going into U.S. shares because the U.S. has outperformed so much. I don't buy it. European shares are up today, and U.S. is down. Doesn't make any sense. So when you look at this, euro is down a bunch, the pound is down a bunch, seemingly in isolation, and that's a bit odd. It doesn't shake me out of the idea that I think the dollar is overcooked here, but everything else didn't really seem to make huge headway. Oil, as Tony was just saying, is up a bit, but I think that'll become a fade over time. I don't have anything in there at the moment.
What do you think, Dylan?
Can you hear me?
Yep.
Yes.
I've just been sitting here waiting for my opportunity to test my audio, so I haven't really been thinking beyond technical functionality. I did take offense a few minutes ago when you said whatever you want to call them.
When he said the overtime boys? Yeah, I mean.
You're like, whatever you want to call them.
He's a little snarky today, Dylan. I'm not going to lie. He's a little snarky for day one.
Listen.
Well, I don't think I would want to be called the overtime boys if I were you guys. I would like a better name. The overtime boys.
You were being respectful.
Totally
you're trying to upgrade us.
Yeah.
Always. Without question. Well, here's my question for myself that I'll ask the three of you. This is the question I woke up asking myself is I'm trying to explain to myself why I would not be short as all can be of the NASDAQ or the S&P for the first quarter. Full stop.
Okay.
Like, why would I not do that?
Hold it. That is that
I
a
can't
question,
think
or
of
are you
a
going to
good
tell?
reason other than
That's a question
the
I'm
price
asking
action?
myself. I mean, I just don't know why I wouldn't get short the Nasdaq or the S&P. Like, how can you not be short stocks in the first quarter as a rational human being?
I'm short stocks, but just not Nasdaq yet. And that idea that you and I were talking about on overtime at the start of the week, the Apple short, that's working swimmingly.
Yeah.
I think the answer, Dylan, is the reason that people, first of all, the market's been going up for 12 straight months. And
24 straight months.
Well, actually 24. And so there's a lot of people that, until you show me something different, if it ain't broke, don't mess with it. And that's one of the reasons. The second reason is I think there's a lot of people that want to see, what are the big, Trump agenda moves that are going to come out first steps. And, are those going to be bullish for the market? And, and how aggressive is this administration going to be from the finance side with respect to helping market structure, helping businesses. And I think that's, that is
so it's sort of the Trump wild card plus if it ain't broke.
The Trump wild card plus if it ain't broke. And I think there is a lot to be said for if it ain't broke, because to be fair, for guys like me that like to fade markets and be contrarians, that play has not worked.
But it's got to work eventually, sir. I mean, if it does, if not now, when?
Yeah, I'm not so sure that we call that working, but yes, yeah.
Anyway, Happy New Year, Tony. Nice to see you.
Thank you, brother. Happy New Year to you too, my friend.
Happy New Year, boys. We're going to let you go and turn the show over to you guys. Right. And Godspeed. Let's have a good year.
Yep.
All right, indeed.
Happy New Year, gentlemen.
We'll take a quick 90-second break. We'll come back. We got overtime right after this. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols.
And we are back for the first day of 2025. This is Overtime. I'm Ilya Spivak in San Francisco. That's Dylan Radigan in an undisclosed location outside New York City. Sir, welcome back.
Happy New Year. Happy New Year, Ilya. Pleasure to see you. Happy to have you all to myself for the final time. We're going to have to deal with the aggravating presence of Mr. Bull, Mr. Big Guy, Mr. Big Bucks next week with Vecchio's trade. I really want to get after Vecchio next week on why I want to see whether he's a buyer. I want to know what he's doing, because you heard in the handoff with Sosnoff and Batista, I'm itching to get all kinds of short. But only because, for the reason, just only because it's gone up so much for 2 years. I have no other reason for it, honestly.
It's not a bad reason. So when I look at what's going on here, and we talked a little bit with Tom and Tony about this as we were coming off the end of last call. When you look at what's going on here, and if we could get the charts up on the screen, I have the SPY here just as my vehicle for how I'm looking at the sort of overall market sentiment here. Can you see these charts okay?
Very clearly, sir.
Beautiful. And so for me, it was nothing other than this congestion range in December that basically told me whatever rally got stuck. And we talked a little bit on Monday about the divergence in momentum. So when the price sets higher highs, but as you see here, but in this case, this is the relative strength index, but you can use any sort of oscillator indicator you like. When that diverges, it doesn't set higher highs, but this does. It tells you there's some kind of a momentum change. And so I put on a little short vertical in here. It's worked since, obviously with quite a bit of back and forth, but this was really, it wasn't really predicated on any thesis other than the price itself. And we've talked about this before, this idea that it's not that you have to disbelieve that the U.S. economy is going to outperform. It's not that you have to disbelieve that it's already outperforming by a huge margin. It's not that you have to disbelieve that the AI-powered future isn't glorious and great and represents another big transformational change in business and in efficiency and in economics. You can believe all of those things and then look at the price and say, episodically, for a period of time, this looks like it's too hot. This looks like it's gone too far. This looks like all of the hypothetically good news is in the price. And then your barometer for saying, well, when is the right time? For me, it's not some EPS multiple or some sort of other valuation measure. Chris, I know, likes to talk about, valuation hasn't mattered, whatever, but that, of course, comes down to how you measure valuation. And for me, the only thing that really matters for valuation is the price itself and the way that the price itself behaves. Nothing is going to tell markets they're too hot or not hot enough. They'll do what they want, and the price will tell you what that is. And so when I see this kind of digestion, I go, you know what? The risk reward to getting short here is a bunch of distance down and not a whole lot of distance up. So if it jumps from here above this high, I'm wrong by only a little. But if it comes down, I'm right by a lot. And so far it's come down. But right now, and you talked about NASDAQ before we switched over, because of course NASDAQ has been the outperformer. And let's look at the there we go. Let's look at the continuous contracts so we can get some room here. This is what you and I talked about before, this idea that essentially these were the former highs here that essentially establish where the line in the sand is. So I think this is becoming increasingly attractive as a short, but you're sitting against these highs here, which have since become support on a retest down. And really all you're looking to see is something here. You're looking to come in here. Or alternatively, if from here you bounce to here somewhere, that would be your other kind of opportunity. And the reason I sort of shy away from pulling the trigger on this one is just risk reward. You're very close to where the run has been getting stuck, both here and here, and there's levels of significance here. And you're a little bit far away from what the risk of a bounce could look like, because the next major levels are here and here. And so if you bounced from here, let's say halfway tomorrow over the course of the start of next week, this looks like an attractive short. In fact, if we kind of guesstimate what this looks like as a sort of line in the sand, somewhere here, to sort of maintain this sequence of lower highs. So it's either here or it's here, because here the risk reward would reset. The next then objective on the downside would be somewhere down here. And then, okay, yeah, selling here to get down here somewhere, back to like 20,000, let's call it, that makes sense. So at this point, it's just a risk reward game for me. And of course, I'm still short SPY and also the Russell. That one I've had on for the longest. And I got short up here when this little range broke down. And it's idling, but it doesn't want to bounce. And it's holding against these levels here. So we talked a little bit about this on Monday's show. Essentially, this right here becomes a kind of line.
But just educate me. So what are you, because obviously you and Chris have vastly more knowledge when it comes to sort of opinions derived from technical analysis, among other things. But in this case, what are you waiting to see? You're waiting for a close below that low back in July, basically?
For me, when I look at the Russell, since I'm short from about right there, I'm looking at this and saying, okay, this was the last place that a swing from these highs got stuck. And you can see on the way up, it gets stuck here once, twice, 3 times. When it comes back down, it gets stuck on the other side and bounces. So I look at something like this as a kind of oscillation axis. So when you get over it, it seems to have follow through here. And when you come back down, you get stuck right on it. But then here, notice, you break through, and when you retest, you get stuck there again. And
but
this
again,
is now holding.
What are you waiting to see, or what are you looking to see? I guess.
Well, so I'm already short this. If it gets back up here, something's wrong. I have to get out. Because when it gets up here, the history is suggesting when it actually manages it, it has a run.
And how about that short Apple situation we were talking about on Monday?
So
just to kind of keep chewing on the same bone.
This actually worked out exactly as we discussed. So let's get this, and I'm going to get this ticker right eventually. There we go. So our idea was that basically once you broke under this, that essentially this right here, and you can make it even more conservative and say that's it right there, that essentially you ran up into here, this was some kind of a level of significance, you came back off it, and only once you broke back above it did you have any follow through, and then there was a big bearish candlestick pattern here. If you're a lover of fun candlestick names, that's called an evening star. And then you get a gap down with a break back under. So our idea was this means that you've essentially failed on a break higher. Here's that divergence in momentum again. You're setting higher highs, but you're not doing so here on the relative strength index. And so the idea was this is going to be a short. And indeed, it has since come down. It's taken out this batch of lows right here on today's move. And now I think you're probably looking at here as the next kind of layer of support. Now, I did not have a chance to get short this with the holidays and everything. I just missed when the bourse was open, when the exchange was there to take the shot. And looking at it now, it's not an unattractive short still, but I might wait and see what happens here over the course of the next day or two. I look at this little bottom right here where it ran, came back, and this established the next sort of launch pad. It stopped right there. I wouldn't be surprised, essentially, if we went and retested somewhere here. So call it like right there.
But again, yeah, I mean, do you think I'm too late to play? Because I didn't do anything on Monday, but I sure would like to do this.
I think that for me, at least, I'm waiting to maybe see either a larger move here than bounce, or just over the course of the next 24 hours, 48 hours of market time. So Friday, Monday, a move back here and sell it somewhere here.
So you could wait for it.
Yeah, just to let, again, the price show you where the good risk reward is. Now, I don't think you're necessarily late. So you could structure a trade in here with, I think, solid risk reward. So we're at what, almost 244 now. So if you, and vol is not that high. So I think buying a put vertical is the way that I would approach this rather than selling puts or selling calls rather. So I would look at this and say, okay, so if this is where we are and our objective might be, let's say, this range top here on a retest. So let's call this 236. So you might say, let's get like here and let's give it a little time. So let's go 43 days out and 190 to 310. It's not great, but it's not the worst. And if you thought
what about I mean, the other one that's very tempting but also painfully dangerous is Tesla.
Yes. So here,
would you go near that? And would you trade that in any? I know you're going to say no for macro reasons and all that, but if you got involved with names, I mean, it has broken down to its detriment.
Yes. I think here you have that adverse risk reward thing. So let's ignore the ticker. Let's just whatever. This is a chart of something. Would you sell this chart? And for me, the answer is yes, but not here. And the idea would be essentially, here is a place where between November 11th and December 4th, so call it 2 weeks' time, it just bumped against it. Didn't go anywhere. So the relevant sort of level to look at, I think, is here. And because support and resistance are never really just a line, it's usually a range of some kind, then we're looking at probably something like this. So somewhere in here, around 360, I would expect this to get stuck and maybe bounce. And the key to watch on the comeback would be whatever range this is. So here. And this would give me better risk reward, much as the NASDAQ. very similar to the story we have in the NASDAQ, where we seem to have rounded some kind of a top and we seem to be breaking down, but we're probably a little close to relevant support here to jump in now, just because there's more distance on the wrong side of the market. And so just to quickly review what that is, again, here's NASDAQ. It'll load eventually, surely. The idea is that you don't have a very far to go until you get to a meaningful barrier this way. And you have more to go until you have a relevant barrier this way. So if you short here, you're basically saying, I'm going to risk a move here for a move here. And that doesn't make sense in my mind. So either you go up here and you sell, and then the risk is from here, and then the objective is from here down, which gives you much better sort of a view. Or you break down here, and then your risk is very narrow, but your objective is like here somewhere around these levels. So again, you've improved risk reward. I think in Tesla, it's a very similar story. So going back to this chart, there's not much distance here, but there's a lot more distance here.
Meaning
you'd be standing to risk a move here.
No, I get that. Yeah. So what about simply a trade that it won't stay here? I guess a strangle. Or is it a waste of effort? IV at 61.
In my mind, I think it's an interesting thing to basically say, okay, I think this thing is not going to stay right here. It'll do something. I think you could have a more lucrative opportunity just on looking for a trade that has more bang for the buck that you're going to give this, to be directional when this sort of seems to be actively in the process of rolling over. You just need one of two things to happen. But you would need either for this to go here, and this would be an attractive sell, or you would need this to go here, and this would be an attractive sell. Because from here, you're looking all the way down here somewhere against these levels.
And then I guess, what about NVIDIA? You think that just be just for the fun of this sort of first day of the year with the big bangers?
You kind of, I mean, this is basically still dead as doornails, still in this congestion. For me, the key levels, as you might suspect, there, on the top side, and here on the downside. I think the key in here essentially is that this is all chop. And where you get a slightly more interesting view is on the weekly. I think this is really, for me, how NVIDIA is going to end up looking. Where this is the line in the sand. Under this, and it's a short. And a big short. From 130, let's say, down to like 90, 95. So it's all of these things look like they're taking heat. So if we look at sector performance here, just over the course of today, there's a really interesting story that comes around. So not surprisingly, I think, tech is having a bad day, but not the worst of days. It's only down about 0.25%. So these big names are down a lot, but they're not down a lot. The really interesting one is, again, consumer discretionary. And indeed,
which we talked about Monday. Yeah,
that's right. Indeed, over the past, it's kind of funny to say over the past 5 days because there's been a lot of closures over that time. But over the past 5 days of market time, consumer discretionary is down 4.3%. It is the worst sector in the S&P. And just today, down 1.3, which is what we talked about on Monday. Here's XLY, the consumer discretionary ETF. And this was really what we were looking for. So for me, this is the short here.
Mm-hmm.
That level that we were looking at, it's been taken out. There's been confirmation here. Maybe you get a wiggle higher off these levels, but they're fairly minor. So I don't know how much of one you could really hope for, but maybe you get something off of here. But this now looks like a fairly attractive short. And I think when you look at sort of where the trend is here, let's call it there. The only sort of real concern would be that you run into support here. But I don't put a tremendous amount of stock in these kinds of lines because they can be really subjective. I like horizontal things because you can just put a line across the chart and go, there's a something there. So
our consumer discretionaries. Okay, go ahead. Finish your thought. Sorry.
No, just I would say this now pretty much ripe. Pretty much ripe.
Ripe to go lower.
Yes. Very close.
So how would you put it on? Let's get into the weeds.
I mean, for me, this is again probably a put vertical. And so when I go here, I look at, let's say, from around here, let's say the big move would be somewhere down here. So 203, 205, something like that. So that looks like, I mean, that's not bad at all.
Mm-hmm.
And when you look, let's say 43 days out, I mean, that is excellent risk reward.
Mm-hmm.
Really, really good.
And
you're
that's better
risking
than a spread.
300 to make 1,100.
Mm-hmm.
And your probability of profit is 62%.
And you're putting that on at, what is that, 220?
Yeah, so the close today, it looks
At the
like
money.
was 221. You're basically at the money. So for me, this is the kind of risk reward I want.
Mm-hmm.
Better than 3-1.
And is it possible for consumer discretionary to be so poorly performing or so poor in its apparent performance and not have is it not a leading indicator of the broader market in some way? Is it as a reflection of the interest or appetite of the U.S. consumer?
My sense is that the answer is yes.
And to Vecchio's point, isn't Apple also basically the closest thing to, or maybe it was your point, Apple's the closest thing to a luxury goods maker that's in the
Yes, that's what you and I were talking about on Monday. That the reason Apple is getting so shellacked as compared to, well, I mean, Tesla certainly caught
Google
up today. And that's another one, by the way, that's sort of luxury goods adjacent.
Luxury goods tech.
Yeah, sort of in that realm. I mean, obviously, Elon would tell you that they're trying to make a very mass consumption kind of car and that they have all layers of whatever. But I think in my mind's eye, take that for what it's worth, Tesla, as relative to a Hyundai, Honda, Toyota, is a luxury-esque sort of
thing. It's a luxury brand for sure, whatever you want to say. It's a luxury brand.
Right. And so you see Tesla get beat up. you see Apple obviously started off, and they're kind of in the consumer discretionary sort of part of the tech space. Compare this to Meta, which isn't going very far at all. Compare this to Alphabet, Google, whatever, which is, again, not really going very far at all. And so you get into these things that are selling a free thing when it comes to consumers, or at least have a freemium model, and they are not getting nearly as whacked as those things that sell whiz-bang gadgets to people that can afford them, so hardware. And it's those things that are getting kicked in the face. So, and I think that sort of lines up with a consumer discretionary breakdown. Like if you absolutely needed a phone, like you don't have a phone and you need a phone, and cost is a critical consideration for you. And even the iPhone SE is a bridge too far. There's options for you. You can go down market. Obviously, with cars, there's options for you. You can go down market. So I would put those things into the sort of discretionary bucket. There are substitute goods for those things. And I think it is an indication of what the economy is doing and what the consumer ultimately does, because the economy in the US and in most developed markets is like 70-80% consumption. So if consumer discretionary is getting whacked, I think that fully lines up with our idea that the US economy maybe has peaked, and that the rates market is telling you that US economic data starting to cool relative to forecasts, that's telling you that. But if I had to pick sort of one thing that told you that the US economy is getting a little bit stuck here, it's this. It's ZB. The long bond is getting stuck here. It's suggesting that rates maybe have peaked.
Market rates.
Market rates, yes.
Which brings us to our pairs trade from Monday, which was short discretionary's long bond.
Yeah, which, by the way, has worked swimmingly.
And if anything, I feel like both of us are more confident on this than we were. Basically, long TLT with a spread and short XLY with a spread, a call spread and a put spread. Or if you obviously you could do the futures with the bond, but in terms of staying with with the ETFs, it's a TLT. XLY.
Yeah, and I like the ETFs because the position sizing is a little bit more friendly. I don't like to put on big giant positions at market turns with huge exposure to something like a ZB contract, because I feel like timing is the hardest thing, especially if you're macro oriented. And of course, we can talk to Tom about this all day long, where he has convictions and things, puts them on, and they take a long time to work. And so you have to have a depth of capital to be able to sustain until they work. If you don't have a depth of capital like that, if you can't essentially sit on a loss forever and keep rolling it until you're right, then you have to think about, okay, if I'm going to take a loss, how do I make sure that even if I take a loss more frequently than I take a gain, that the losers are so small that they add up at the end of the year to a smaller total than the winners add up to, even if I'm only, let's say, batting like a good MLB batter, 30%, 33, something like that. For me, that's really all I need. I need to be batting about 3 out of 7 or 3 out of 10. That's really all I need, because I am militant with managing risk. So I might take a bunch of losses, but they're going to be tiny. which was definitely the story of last year, as I was attempting to short stocks over and over and over again, only to be wrong over and over and over again. But it actually ended up being not so bad a proposition at all, because the few times that it worked, it really worked. And where it didn't work, which was overwhelmingly the majority of the time, it didn't work by only a small amount.
What about the dollar? Oddly strong in the face of all this. Still, the dollar's a beast.
This was actually, I think, the perfect the perfect place to go, because as we're talking about the bonds, you'd think, okay, so why do currencies go up, right? Maybe interest rate differentials move in that currency's favor, and it becomes more attractive to own as a yield-bearing vehicle of some kind in relative terms. As we can see here for the U.S., you don't have that. So again, here's ZB. Interest rates aren't exactly surging here. In fact, they've been basically stuck. Even if you look at the SR3 contract, the 3-month rate, I mean, obviously this is not going anywhere. Even if you looked at the end of year 3-month rate, not really going anywhere. And if anything, obviously this is the price. So if you wanted to get the implied yield, you would say 100 minus, in this case, 96. And so it would be this upside down. And you can see that shorter maturity rates, 3-month rates, they're actually coming down here over the past couple days. If you looked at the 10-year, it's not doing anything. If you looked at the 2-year, it's not doing anything. It's essentially just sitting. And so if this is not what's going on, then how in the world do you reconcile this? This is the dollar index here. And in fairness, we can see it's corrected a good bit off the highs today, but what a monster. I mean, if you look at the euro here, the euro down almost a percent here today, almost. The pound, another aggressive move. And moreover, notice this is taking out major levels. So if this was a low and then you kind of bounced, you came back, you retested this, boom. I mean, that's a huge move. Giving you a whole lot of apparent conviction. So it's a bit strange. And not only do you have this, but looking at gold here, gold has a good day today. So yields aren't going very far, and thankfully I'm long this, so this helped. But big up day on gold. And tempting though it might be to say, well, this is rotation. And as we were saying on last call, that there was a lot of squawking about this today, where people are saying, well, look at how much the U.S. markets have outperformed Europe. We've got Team Trump coming in with all of their deregulating and tax cuts and everything like that. And if nothing else, it'll suck in more money into U.S. markets as relative to elsewhere that isn't doing these things, all these corporate-friendly things. So this is money going out of wherever and into dollars, into dollar-based assets. I mean, I guess you could make the case with China. Obviously, if we look at how China has fared here, the answer is not great. Big sell-off, and I think on a weekly chart we can see it maybe more clearly. I mean, Chinese stocks are getting whacked here this week. So maybe this is money coming out of China I suppose if we look at FXI, that's not looking all that great either. And even just today, we can see here FXI down quite a bit, 1.8% almost.
Mm-hmm.
But if we look at Europe, it's not doing poorly. And the currencies that are really down against the dollar here, it's the euro. And I mean, yeah, it's down a little. It's not breaking major levels or anything like that. This is the Euro stocks index. And then this would be the sort of overall Eurozone MSCI index equivalent. It's basically at its range bottom.
Mm-hmm.
So it's not like running away anywhere. If we looked at the equivalent for the UK, here's that index. And you can see that's not really doing anything at all. It's down a touch, but I don't know that you can make the rotation case here. And obviously the pound is down a lot. You could blame China, and I've been known to naysay China's economy for a while now, but look at the Aussie dollar and it's not really seeing it like that. There isn't a giant, ugly dollar rally here.
Mm-hmm.
So if this was a move out of China and China proxy assets, I mean, copper, I guess, is down a little. But this was mainly the last session. Today, it's basically a goose egg. This is today. So it's it's a very odd thing that the dollar is getting beat, is putting on this kind of a beating on the euro and the pound in particular. There wasn't really any economic data that I thought merited this. It seems more like the only explanation that I'm gravitating towards, for lack of a better one, let's put it that way, is start of year weirdness.
Well, then going to that, I mean, is it notably? I'm assuming the markets are still pretty thin, considering it's, we're in the last holiday week. I mean, basically, a ton of people are still half working or not working this week.
Well, so if we take a look, it's not the world's most difficult thing to verify. So let's go to our euro contract here. And let's introduce into here a look at the volume. Here we go. And we can see volumes are actually up.
Mm-hmm.
So at least
it's more lively than it was.
Yeah. I mean, obviously it sort of went dead here.
Mm-hmm.
But today, nice little pickup. And we just go to a shorter term chart, let's say, to see how this evolves over the course of the day. I mean, this sell-off was a sell-off on building volumes, at least in what we're looking at here for the active euro contract. I wouldn't be surprised if it's something similar for the pound. I mean, there it is. Building volumes into the sell-off. Now, does that mean anything? If we take a look at it on a weekly basis, do we have weekly volume data here? Maybe not. And this is because we are looking at maybe
because it's the new year.
We're looking at the individual contract here, but we can see here from the continuous contract, right? Here's the new year sort of drop off, right? This is Christmas here.
Mm-hmm.
And we stay kind of cooled off through the new year, and then this is the big move. So, and the last time we had a big volume day equivalent, it was this kind of leg of the sell-off here, right there. So maybe what this is a kind of complex bottoming where essentially everybody was asleep all through here, and that really this move belongs here. That essentially this was just continuation of whatever this was, with a bunch of holiday in the middle. So I suppose you could say that the market was just asleep during the holidays, came back, finished whatever it was doing, but it's very difficult to want to be short this now or long it. It's much easier to be short when the price action is doing this, obviously. But I have a hard time wanting to sell the euro here, wanting to sell the pound here, because I look at the bond, I look at gold, I look at all of these kind of inputs that you might reckon are reasons for the dollar to have a big rally. I guess you could call it risk aversion and the dollar getting strong in risk aversion, but then you would see the dollar strong everywhere. You would see it strong against the Aussie. You would see it strong against other things. I mean, if we take a look at, for the sake of argument, the Canadian dollar here, flatline. We just looked at the Aussie. Let's look at it again. Not really doing anything. If this was, you know what, stocks are going down, money's going to cash, the cash of choice is dollars in this kind of liquidation move, because it is the most liquid version of cash. So if you're going to park your money anywhere, park it where you aren't going to get crazy fluctuations, where when everybody comes in, everybody comes out, risk on or risk off, the price does bananas things, right? If everybody suddenly wanted to cash out into the Kenyan shilling, the Kenyan shilling would go to the moon, and then when it were time to go back into assets, the Kenyan shilling would suddenly crawl into the Earth's core, all in like a tick, up and down, right? It's very difficult to want to cash out into those kinds of things. You have to be first and then first again. First to buy and first to sell. The dollar is so liquid, it can absorb huge inflows of cash and then outflows of cash without going relatively nuts. And so I guess you could make the case that this is liquidation, but if you did, you would want the Aussie to be falling, the Canadian dollar to be falling. You'd want this dollar strength to be everywhere, because it would just be sell assets, go to cash. But that's not what's going on here. This is euro and pound specific.
But at the same time, there's no sort of meaningful explanation that's
not that I see
either.
Not that I see, no. And that's weird, for lack of a better way to describe it. I mean, I really don't see a particular reason why the euro and the pound necessarily should be so strong. Moreover, I mean, when you look at some of the currencies we don't have on the platform here. So in Europe, the Swiss franc is up, or the dollar is up against the Swiss franc a lot. The dollar is up against the Norwegian krone almost not at all. Very modest. So this is like majors Europe are taking it on the chin. For some reason.
I mean, the obvious thing would say it's a pessimistic expression of the economic. Everybody knows that the European economy is a no or low growth economy dependent on luxury goods sales and tourism. Everybody knows luxury goods sales had a terrible fourth quarter, that luxury goods in general are not looking, goes to the consumer discretionary, the test of the apple, but it's also Louis Vuitton, Gucci, Prada, whatever. And Brexit, and then everybody knows that the United Kingdom has made themselves a third world country basically through self-inflicted idiocy. I guess what I'm getting at is why not interpret the currency decline in the pound and the euro as a rational devaluation of that economic region based on.
It could be.
I would say amplified by the new information, which is the slowdown in luxury goods.
It could be. I mean, it's certainly, I think, right to say that the pieces of the European economic puzzle that have worked better are the luxury goods sales as relative to, let's say, manufacturing. I mean, German manufacturing, for example, I mean, that's just a shambles. And so when you look at, okay, what has Europe sold successfully? Tourism and luxury goods. And so if XLY is caving, and that tells you that demand for the kinds of things where luxury goods would go, sort of discretionary upper level, that's going away, that's hitting the skids somehow, you would expect then a generalized weakness in the region. And let's see here. We could take a look here at a sort of general Europe ETF, including both the Eurozone and the UK. This is VGK. And a bit of a pickup in volume, I guess. But you look at this, and it does make some sense that maybe what this is, because obviously the euro didn't make this move, but maybe this is a follow-on, that essentially this has started to kind of roll over. So if you wanted to, sort of in the spirit of using simplistic technical analysis here, come on. There we go. Okay. Just make a little bit more room on this chart. So if we wanted to look at this, and this is a weekly chart here, and again, in the simplest of terms, just put a line across the chart. Let's call it somewhere here. Like that. And basically say, okay, we came up into here, banged up against it, didn't like it, banged up against it, didn't like it. Once we got through, there was a follow-through move, and every time we banged up against it on the way down, we bounced off. 1, 2, 3 times. In the past, let's call it 3 days of market time, and this right here is the 16th, or 3 weeks of market time, I should say. This is a weekly chart. Since mid-December, we seem to have crossed the line. And maybe this is essentially being seen now as a top, where, sort of loosely speaking, the trend is here somewhere. And if that's what it is, something like this, this is what I say. This is why I say these things are so subjective. You could make this look all kinds of way, but if this is, sort of roughly speaking, what you're looking at, higher highs, higher lows, the trend is higher, then boom, breakdown. Maybe that's what this is. And maybe what this is happening in essentially European market hours. So you get into the European session, and this is what reflects kind of larger euro pound weakness, that there is an exodus from the assets of the region. I suppose you could make that case here. On a day like today, just seeing the sell-off in the currencies today, I guess you could make the argument that if you were looking at the euro here on the 18th, on the 19th, when this made the big move, it wasn't really doing much of anything. And so maybe you could make the argument that this is a sort of latent reaction. So let's go back to the euro here. Here's the 18th and the 19th. We can see it really didn't go very far and then got stuck in this same range. So I suppose this might be catch up. This might be kind of, okay, we came into the new year. We're going to look back and say, okay, well, what did these stocks do? Let's start to lay it on in currencies. Let's put that leg of it on here. And maybe that's that sizable move. But it does make you wonder how sustainable it is, because if U.S. interest rates start to come in because the bonds have bottomed, which would be consistent with gold going up as well. And if we get a number, actually the first kind of real big piece of economic data next week is going to be Eurozone inflation, first out of Germany and then region-wide. And that number is expected to go up. As a by way of segue, we're going to be delving deeply into that on Macro Money here next in just 5 minutes time. But if you get a number there that's higher, and the expectation is indeed that you tick up, that gives you a divergent story maybe in the currencies relative to the price action that you see today, where U.S. yields are shifting in the wrong direction for the dollar, and the European yield structure isn't getting worse. Like, they're already dovish, but they're not runaway dovish relative to history, which is to say, we definitely expect that the ECB is going to be a dovish central bank this year. I mean, if you look at what markets are baking in here, we're looking for at least 100 basis points in rate cuts this year for the ECB. That's not a story of a central bank that's going to be terribly supportive of its currency with interest rates. But that story hasn't changed since, I mean, for essentially a month. So if we look at what's being priced into ESTR futures, which is their version of Fed funds, it's had about 100 basis points priced in for 2025 for over a month now. So maybe the currencies have an opportunity to actually bounce as we get into next week. Maybe the dollar doesn't follow through. But this, the VGK short, that might be an attractive short all the same. Speaking of like things to short, equities to bet against, this looks like a compelling both narrative and structure.
My only concern with this is whether then you're on the wrong side of a euro rally.
Well, the good news with something like a VGK is it's already priced in dollar terms, so it should be currency hedged for the most part. But obviously not hedged to the idea that capital is wanting to be out of euro-denominated markets or pound-denominated markets, if that's what's going on. That would be kind of a larger macro force. But it's an interesting idea, and maybe an interesting idea as a spread, where essentially what you're looking for is the dollar to weaken, not necessarily for the euro to strengthen. So you're looking for the yields calculus to move the dollar and for that to echo into the euro. So rather than, for example, just buying the euro in isolation, you would say, okay, I'm going to buy the euro, but I'm going to sell VGK. I'm going to buy the pound, but I'm going to sell VGK. And so what I'm not betting against the outperformance of the U.S. as a kind of economic sphere relative to Europe as an economic sphere. I'm betting on U.S. interest rates being overcooked.
Which is just just a way to pile onto your long bond position, basically.
Basically, yes.
of everything we've talked about today, I still really like that short discretionary long bond as a pair.
Yeah.
That just feels the most and very approachable, very liquid, call spreads, put spreads. I don't know whether it'll be right or not, but it's just the thing that I'm going to think about tomorrow morning when the market opens.
Yeah. Yeah. I mean, I'm going to be looking probably to put on XLY when the market opens tomorrow, barring kind of weirdness in the early price action, because the risk reward there, even if you're wrong, is very attractive. I mean, 3-1, and obviously we'll see what liquidity looks like at the open. Obviously, we're looking at a snapshot after the close here. But if this kind of risk reward holds up when we come back tomorrow near the open, it's very difficult not to want that. Even if you end up being wrong. I mean, those are the kind of bets that I want to take. And even if they're wrong, if I take enough of those bets, the winners outweigh the losers by a long mile. If it's 3-1 reward to risk each time, I only really need to be right 1 out of 3 times and be making money.
We shall see.
Indeed. With that, our first overtime of the new 2025 year is done and dusted. We'll be back next week in full triumvirate form with Mr. Vecchio back in the saddle. And for now, don't go anywhere because there's a lot more dollar unpicking that's coming up next. I'm going to be back in just a little bit with Macro Money, where we'll talk all about the dollar and what in the world might be going on here. Stay tuned.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade. Forbes called us best online for options trading. Investopedia, best for options trading, period. Stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic and like I was a skeptic as well. And Tom was able to sort of convince him and That was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Oh, yeah. Tasty Nation, good morning.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at Tasty Live.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant. That means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
We're back. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. It is our first show of 2025, and we are going to focus today on what is my little favorite pocket of the markets, because on this first day of the new year, the really crazy moves, the really out there volatility is in the currencies world. And so the question that we are going to ask ourselves here today, after a blistering U.S. dollar rally at the start of the year, is what in the world is this thing doing, and has it gone too far? Because as we unpick this, doesn't seem to make a terrible amount of ready and obvious sense what is going on. And we have an opportunity here, perhaps, in the days ahead to see this move unravel and for there to be a trade opportunity in that unraveling, which we'll unpick here as we go. So first of all, let's start with a look at the intraday chart of the US dollar index, DXY. This is, for the record, mainly euro. The index was created before there was a euro, and so all of these big national currencies that were major currencies at the time, like the French franc, the German Deutschmark, the Italian lira, all got subsumed into what became the euro share of this dollar basket. And so now it is overwhelmingly euro with a smattering of other currencies. So don't take this as a perfect average of the dollar, but it nevertheless gives you an idea. The dollar was basically asleep for much of the holiday period. So we can see here, this is kind of the pre-Christmas week here, when a lot of these markets went on holiday. And we can see that the dollar did next to nothing this entire time. But come the beginning of 2025, and the dollar is off to the races. Sharp rally here of close to 1% at the start of the week. And we can see now going from what this was, which was a hourly chart. So each bar is an hour of today's session and back. And this is now a daily chart. So each bar is a day. And we can see here is today's price action in the euro. Just a blistering loss for the euro and a sharp, sharp rally for the dollar. Not only does this rally mark a huge acceleration, but it marks a break from the range that's held basically since mid-November. There was very little here in terms of trend development. We can see we made a sharp low here in the second half of November and then held at it through basically middle of December, did nothing for the lion's share of the holiday period. And now today, not only do we have a big update for the dollar, but it's a big update that takes the range out and ostensibly sets the stage for further dollar strength. It's a similar story in the pound, where, again, we have a very well-defined range, next to nothing that happens during the holiday period in the second half of December, and then sharp capitulation. Moreover, this is not a story that extends to other currencies against the dollar. So we don't, for example, over the course of today, find ourselves looking at a sharp move higher in the Aussie dollar, let's say. We don't have a sharp move higher in the Canadian dollar. The yen barely wiggles. And so we don't really have a story of generalized US dollar strength. Moreover, it's just Europe, and not even all of Europe. When we look at commodity currency Europe, Norwegian krone, say, not a big day. But the big European currencies, euro, pound, Swiss franc, they are all sharply lower against USD. So, needless to say, the first question is, well, okay, this looks like a breakout. It looks like we were in a range for essentially a month and a half, mid-November through to now. We've broken out of that range. Surely this must be the next leg in what is a trend that is developing. Should we be sellers of these currencies and buyers of dollars, or is this a fake out? Does this basically amount to start of year weirdness? And should we basically write it off and say, okay, hold on a minute, this is not something to chase? Moreover, might this actually be a buying opportunity? Might the euro have become way too cheap here after this shellacking? Might the pound have become too cheap, especially since these moves are not being confirmed in other expressions of the dollar's value against the non-core European currencies and against currencies that aren't European? So first and foremost, then, we need to figure out what in the world is going on. And the thing to start with, in my mind, is first, what is the logic behind the trend itself? If this is continuation of a trend that began, let's call it mid-September or so, and you can see that in the euro here, you can see it in the pound right there. If this is the next leg of a move, then what's the move all about? And we've touched on this before, but we'll just quickly review. There has been a dramatic shift in U.S. monetary policy expectations from about mid-September through November and into the end of the year. And we can see here that the lion's share of this change, this is the implied Fed policy path, and the snapshots here are the policy meeting that the Fed did in mid-September. That's this. Then the policy meeting in early November. That's the big dash. The policy meeting we just saw middle of December. That's the small dots here. And then the current curve here. So what we see is that there's been a significant hawkish rethink. So in September, we thought, or the markets were pricing in, that we're going to end up at about 2.8% on Fed funds by the end of 2025. This is December of 2025. Already by the time we got to November, so barely 2 weeks later, 2.5, 3 weeks later, we had this massive adjustment by almost 100 basis points, almost 4 rate cuts worth, where it looked like we're going to be closer to 3.8 than 2.8 by the end of the year. And we've talked about why that is, but we'll, again, review it here just so we know what in the world is going on, what the moving parts are, which buttons are getting pushed to make this happen. And we can see here that when the Fed came out in September, this was it right here, it gave the markets all manner of dovishness. It said, we're going to cut rates by 100 basis points in 2024, and here's half of that up front. They issued a big 50 basis point rate cut. They said there would be another 50 basis points with only 2 meetings left for the year. So not a long time to change their mind, and indeed delivered on those. So we actually got the 100 basis points. We then also got a forecast saying 100 basis points for next year. And that makes sense. The markets were calling for the Fed to be dovish because by the time this meeting occurs, the markets have been baking out more and more and more and more and more easing, because from about the middle of April, U.S. economic data was steadily deteriorating relative to forecasts. This is an index from Citigroup that measures relative U.S. data performance compared with expectations. So what this was saying was, look, U.S. economic data is getting worse and worse and worse and worse, and so we're going to need the Fed to be really dovish. But then by the time the Fed delivered on this, we'd already rounded a bottom, and U.S. economic data was already starting to improve. And so the market said, okay, wait a minute. The Fed gave us all this dovishness, basically everything that we were asking for, but the game has changed in the background. Now it looks like we're actually going the other way. So now all of this extra stimulus that you're saying you're going to do, in particular the 100 basis points that are being projected for 2025, you're not going to be able to do all of this because all of the stimulus you're dumping on the economy here, 50 basis points up front, another 50 basis points at the last two meetings of the year, you're dumping it on an economy that's already improving as of late August. And so with that, you're going to get reflation, and you're not going to be able to cut as much because inflation and wanting to get to your 2% inflation target is going to keep you from doing that. And we see these dynamics. So here's mid-April. This is where this deterioration starts, right here. And you can see at the top here are inflation expectations as they are baked into the bond market. They start coming down. Interest rates, the 2-year, the 10-year, they start coming down. The US dollar in the green here likewise starts coming down. Because, of course, this amounts to a deterioration of the dollar's yield advantage. But then come September when the Fed delivers, again, we've already crossed back the other way in terms of economic data dynamics. And when the market reckons, okay, well, now this is too much easing, inflation expectations come back up, dollar comes back up, yields come back up. So the tempting thing to say, well, okay, if this is now the resumption of this, we would have to believe that, okay, the U.S. economy is getting hotter, and we're back to a stronger dollar because we're not expecting the Fed to be able to cut as much as the Fed seems to be signaling. We're going into a reflationary sort of dynamic here. Okay, maybe. But if we look at the performance of U.S. markets today, that does not add up, seemingly. So here's that massive euro sell-off. Notice the yen doesn't really follow. So the first thing would be, if this is a generalized dollar story about higher yields, you'd expect this to be more consistent. But it isn't. You'd expect yields to have moved more. But they didn't. The very modest move in the 2-year here, and at the long end, you actually have basically a goose egg. Finally, gold is up, which is a bit odd. Gold is not in the habit of rallying when interest rates are edging up. Certainly not in the habit of rallying when the U.S. dollar is up. Gold is a natural foil for paper currency, of which the dollar is sort of the main and the benchmark asset, not surprisingly. Close to 80% of global monetary transactions are settled in dollars, according to the latest data from the Bank of International Settlements, which is a kind of central bank for central banks that aggregates everyone's data. So it doesn't make sense to say, oh, well, this is just more of the same. This is the move from September restarting in the new year because we have everything back as it was. Everybody's back from vacation. It's just more of the same. We're back to our previously scheduled programming, as it were. Well, I don't know. Doesn't seem to line up in a world where the dollar is not uniformly strong and gold is up and yields have barely budged. Could make the argument that this is liquidation, that stock markets are down. They're down for a few consecutive days here. Not down a lot, but down. And that implies a move to cash, the cash of choice, because of its absolutely unrivaled liquidity in times of liquidation is, of course, the U.S. dollar. But again, you would expect this to be more uniform. You would expect for dollar strength not just to be concentrated in the European currencies. You would expect it to be everywhere. In fact, you would expect the yen to be particularly strong Because in those risk aversion scenarios, the one currency that does as well as the dollar, or sometimes even better, is the yen. So you would actually expect the yen to be stronger. But no. And even if you didn't expect the yen to be stronger, even if there was no carry trade unwinding that you extrapolated from a risk-off scenario more generally, then you would say, all right, fine, but at least then the dollar should be strong across the board. And it's not. Finally, you would expect Bitcoin to be taking a beating, speculative, volatile asset that it is, in a risk-off scenario. And obviously, that's not the story here today. So it's tempting to draw conclusions that what this is some sort of an extension of what was already there, or indeed some sort of a broader macro risk-on, risk-off dynamic, but doesn't seem to line up that way. Moreover, it seems like the Fed's December policy announcement was 2 steps behind the turn in economic data dynamics, much like September's was, just the other way. So in September, we can see the Fed got very dovish, but by then the economy had already turned up. Well, obviously the Fed doesn't exist in a vacuum. It saw the markets repositioning for this. And so when it came back in December, it was more hawkish. It stretched out its 100 basis points for next year to run 50 basis points in 2025, another 50 in 2026, such that the 100 basis points that in September was going to end up being easing will now take through the end of 2026. That, of course, lines up with this adjustment. We already have an adjustment in a more hawkish direction from the markets. But by the time the Fed catches up, the economy, again, in relative to expectations terms, is already cooling. The economic data outcomes that we're getting are already getting softer. And so maybe, as we've posited here, what we're looking at is a top in yields and a bottoming in bonds. So you can see here, you don't really get much of a change in inflation expectations today. You don't really get much of a move in the bonds. We saw that here. But it's the dollar that's surging. So it doesn't seem to be that whatever this is more of whatever this was. This looks to be something else. Ditto for the pound. This was that hawkish dollar yield adjustment, but this doesn't seem to line up to be that. And so whatever this is, it seems vulnerable to a reality check. And we might get one as we start next week, because the next big piece of macro data that we are going to get on all of this is going to be Eurozone inflation. And here we can see that what we're expecting is that in December, Eurozone CPI went up. In this case, the expectation is that we went up from 2.2% in November to 2.4% in December. And to put this in relative terms, this would be the highest that we've seen since July of 2024. So it would be a 5-month high on Eurozone inflation. And we can see from the breakdown here, it's a little bit difficult to see when we look at it here, but we can look at the makeup in more detail. This is November's numbers. Most of this lives in the hospitality sector, and most of what's there in the miscellaneous bit is actually insurance. So insurance costs. And when we consider how Eurozone dynamics have worked, we've been in near recessionary conditions again in the Eurozone over the fourth quarter. And indeed, after an attempted rebound in the first half of the year started to fizzle once we hit the mid-year mark. But these kind of discretionary spending categories are still holding up. They're seeming to be impervious for now, anyway. And so it is certainly the case that the Eurozone economy is in a bad way, but inflation is going the wrong way nevertheless and is proving sticky even in those parts of the structure that should be more cyclically sensitive. Moreover, if we take a look at Europe's economic surprise index, we can see that we're very close to the zero line here. So we're a little bit under, but very close. So data is coming out very close to expectations, if not on expectations. So the conclusion then would be we're probably going to get something in the vicinity of this number or close to it. And of course, if we take a look at the way at least the euro has performed, it has been very much a creature of the yield spread. And indeed, there has been some divergence here because most recently, the actual yield spread between benchmark Germany for the Eurozone and the US has stopped moving in the dollar's favor. This was the big move in the dollar's favor here, which of course we saw right here. But that move's over. And the euro is still weakening, as we can clearly see. So this appears to be something of a growing disconnect. Now, does that make sense then to go in and buy the euro immediately? Maybe not. We don't really have a price signal and markets don't need to pay attention until they do. But it does appear like if we were to get an uptick in CPI that suggests the ECB is not going to be any more dovish than we already expect, which is about 100 basis points in cuts this year, and the turn in the dollar's yield structure might be all but done, at least for now, because the economy is actually already starting to argue against an ultra hawkish view, then this might not be something to chase, but need something to fade, if maybe not yet, until at least some signs of this momentum ebbing appear. And that is macro money for today. As ever, we will be back starting next week to our regular schedule, Monday through Thursday, right after overtime, a show I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and what is likely to follow. I'll be back on with Victor Jones for the Price of Truth on Tuesdays in the new year, on with Victor and Tom for First Call on Sundays, as usual, on with Chris for Futures Power Hour, Mondays and Fridays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter, and most recently now on Blue Sky as well. Thanks for watching. Macro Money's back next week. Hope you had a great new year. Welcome to 2025.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway.
Always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's going on? Welcome back to Bad Taste. It's the first week of the trading year, and how are we feeling about this so far, Julia? How are we doing?
Today was kind of a goofy day. A lot of swings today. Yeah, weird day, weird way to start off 2025. But I kind of came into 2025 pretty lean. It's like, I think it's actually all shares. Don't tell Tom, but yeah, it's all shares. I kind of didn't want to hold options going into New Year's. And kind of not, I don't know. I'm just keeping it lean right now. We're also falling at a weird time in the earnings cycle. So a lot of options would be mid earnings for the 50 days. So, but yeah, no, a little bit of a weird day. But how's everything going with you?
Pretty good. I mean, I'm pretty lean, just like you, kind of heading into the new year. But I was looking at VIX, and I mean, it's the first day of the trading year. It's not much, but it's something. I mean, a little bit of a pop in VIX. So I'm going to take that as a good sign. Maybe we get some elevated VIX this year, but I'll be looking forward to that.
Yeah, honestly, like a little bit of a pop sitting around just a little bit, a hair under 18, which is funny because that's below the VIX's long-term average, which is about 20. So it's a little banana-ramas, especially because, we had a lot of volatility, kind of leading into December. And it's kind of calmed down a little bit. But yeah, I don't know. Are you positioning yourself in any particular way going into like later into January?
No, I mean, I'm probably going to be doing that this week. I mean, usually I always have at least 2 directional positions on that kind of I express my bias with, but I haven't yet. But I probably will maybe get something on the Russell. I think the Russell is one I'm going to focus on a little bit more this year. You're the one that kind of put me on the Russell a little bit more because you would always talk about that one, and I really like the volatility in that one. So, I mean, maybe instead of focusing so much on QQQ SPY, I know the Russell will definitely be probably one of the first positions I'm going to be looking at for me this week at least.
Sure, yeah. I think a lot of people are like rooting for the Russell. Do you have like a directional bias with this one or a directional assumption?
I mean, nobody wants to take my opinion on this because last year, I mean, I would have not expected the market to be at all-time highs if you were to ask me last January. So I'm going to do I mean, I was debating some iron condors as well, but if I had to go directional, I would probably maybe sell a little bit out of the money on some of the calls. So I'm going to look at that first. Bitcoin, MSTR, those kind of things are still piquing my interest. The chatter on social media has gone down a lot. And I mean, I feel like you can kind of tell what the underlying is doing depending on the amount of, talk on social media.
Sure. Yeah, I'm not I got IBIT shares, so like a little bit of crypto skin in the game. I'm honestly surprised that Bitcoin didn't have like a continuation of some of these gains. I mean, maybe it's not that crazy, but with Bitcoin's level of like volatility, like price volatility, I didn't think that was out of the realm of possibility. I was honestly very surprised to see it slow down this much, or as much as it did. So let's check cash actually. Nope. That's not a symbol. Yeah, it's kind of surprised to see it slow down, but we've seen this a lot in like mega cap companies as well. Like Nvidia slowed down. The S&P slowed down. Apple had a nice little rally. If you want to talk about a donk, if you want to talk about not so magnificent, Tesla dropped today. Like weak numbers, weak sales.
Yeah, they're getting hammered. I mean, they had such an insane rally into the second half of this year. I mean, it felt like Tesla wasn't really Teslaing as much as it was lately. But I mean, I feel like we got prime 2020 Tesla the last few months. But
yeah, no, we had definitely Tesla was Teslaing again, which was a little past due because like you can just see how it was doing in 2024. It was doing actually really crummy. It wasn't being so magnificent. Today it did drop 6%, but that's after like, again, a very large rally off of some like lackluster numbers, sales numbers, EV sales. But I mean, if you look at the last 1 year, so 252 trading days, it's still up 50%. And so much of this came from this rally, this huge, really crazy, maybe not that crazy, not terribly unsurprising rally that we saw in Tesla. This is, I think, going to be one to watch going into next year. Expecting a lot of turbulence. I don't know about directional assumptions around this one, though. For me, directional assumptions around Tesla could really go either way. I've been thinking about it quite a bit.
I mean, is there any other underlyings you're kind of looking forward to heading into the first quarter?
Well, dude, the quantum stocks have not chilled out. I'm a little mad. I made like actually a good amount of money on Rigetti, and I'm mad because it was up another 30% today. And Rigetti, it's a quantum computing company. Right. Actually, a guy that I went to school with, we were in the same research group. He works there, which is why I bought shares before it popped. Yeah. So made a bunch of money, decided to close out and move into IonQ because like Rigetti's just had like such, I mean, this is like super exponential growth, right? Definitely seems highly speculative, although there is some, like there were catalyst pieces of news that kind of drove this, but this is just crazy. So I'm approaching that with a grain of salt. I decided to close out my IonQ position close my Rigetti position and move into IonQ, which is not really, I mean, it's about pretty much flat actually. Like basically, it's down $100, but not doing too much. But it had a little bit more stable of growth compared to Rigetti. I wanted a little bit of skin in the game. And this is like, I studied something kind of adjacent to quantum computing. I did quantum communication, which is a little bit different. I'm like, let's get a little skin in the game. And I'm a little mad that I chose to put my skin into IonQ instead of Rigetti. But yeah, this one, there's been a couple, there's another one, Qubit.
I know you and Luis are probably having a lot of conversation about those, but I know he brings those ones up whenever we talk.
Yeah. In terms of the hype, like it's like a lot of the AI hype died down apparently, and it all moved into quantum computing, even though it's like very premature in my opinion. But so the AI hype chilled out, and quantum computing hype is all over the place. Tesla donking and a whole lot of stuff. Let's actually look at the tasty fast movers list. I like to look at that and see how things are moving today. The market itself was actually a bit of a mover because even though we wound up on the day pretty flat, like the intraday swings that we saw were pretty significant. And SoFi dropped 8%. Boeing dropped about 3%. Man, the fact that Boeing is only down 3% is crazy to me, that it's up so much since November. I understand like it's a defense company as well. It's got in the industrial sector a lot of government contracts and certain degree of stability that comes with that, or at least perceived stability that comes with that. But like with all these planes falling out of the sky, man.
I was about to say, I know I'm not the only one. Every other scroll is a plane crash. I know I'm not the only one seeing that.
So I don't know, but it's just too Boeing to fail, I guess.
Yeah, that's a good one. Yeah.
Yep, that's the mantra. Or I guess that was like the biggest takeaway from 2024. It's just like some companies are just too Boeing to fail. UAL actually a sleeper build. This one has had a very strong 2024. I'm going to be looking at that going into 2025, especially as Spirit Airlines got halted again today.
Oh, what was the word on that today?
It's just Spirit. I didn't even look at the news. I'm like, it's just Spirit. Of course, it dropped another.
Just another day. It's just another day in the market for Spirit.
For Spirit. So I don't even look it up anymore. I'm like, it's probably just another merger attempt that got blocked or acquisition attempt that got blocked. Although I didn't actually look it up. Don't quote me on that. Palantir. This is another sleeper build. Palantir just has like dominated 24, and this is certainly one that I'm going to be looking into going into 2025. And then as well, other names that I would kind of look out for. VST, another sleeper build of 24, would probably look at that. And then small caps, like smaller cap companies, looking at the Russell. Russell, we're looking at you.
Oh, reliable.
Old unreliable is what that is. Russell, that like hit all-time highs again in December for the first time since November of 2021, and then just sold right back off. In terms of like upside potential of the market indices, this is the one that I see the most just because it's lagged behind the most. But that being said, in the last year, let me just double check this real quick. In the last year, I mean, it's still up. I think, wasn't it like 10% in the last 252 trading days? So yeah, in the last 1 year, it's still up 10, almost 11%, which like compared to the S&P, compared to the NASDAQ, that's lagging behind. But on average, that's actually a pretty normal year for the S&P. But yeah, I'm trying to root for the smaller guys a little bit. Bought shares, hopefully, just hoping for the best. Actually haven't. Go ahead. Sorry.
Mm-hmm. No, I was just going to bring up MSTR after that. I know the hype kind of died down with MSTR. The IV's still not too bad, but I mean, this thing is on looking like its last leg of momentum, but we'll see what we get with that.
Damn, dude. You know it's bad when I just checked the top 10 holdings of the Russell of IWM because I haven't looked at it in a little bit. So I'm like, let's go take a look. I haven't heard of any of these companies except for Rocket Lab. That's the only one. And Rocket Lab, like, I don't know how I feel about that being a top, one of the biggest.
Rocket Lab,
yes. This is a space aviation company. And this one's been Wall Street Bets' favorite. It's been like kind of plastered. If you go on Wall Street Bets, you can see like the top 10 tickers that people are discussing that day. This one's been kind of plastered up at the top for the last like couple of weeks at the very least. To nobody's surprise, you can kind of see why. And this one is this one, and then Lunar, which actually did have a larger move today. Lunar Intuitive Machines Inc. Some rando Wall Street Bets names, yeah. But that being said, big ups, bad traders, organic farming, awesome to see you. Thank you for joining us. But yeah, I don't know. I got a lean my middle school portfolio going into 2025. Got Ibit, which does sound like an Apple product. Someone in chat said that. IonQ, which has been letting me down. Okay. I'm kind of mad that I moved out of Rigetti, but 2020 hindsight. Russell, and then NASDAQ and SPY. And yeah, in terms of options, I did have one position that I was looking at for today. That was like AMD, which I'm not in love with where this is falling relative to the earnings cycle. Like the 50-day contracts, you're like kind of right around management time. But I'm hoping that AMD, it just like, compared to NVIDIA, like it's actually not the highest correlation in the world. AMD and NVIDIA correlation, you'd expect it to be pretty high, but it's actually like closer to like 0.5, 0.6 in the last couple of months. Oh. So yeah. I kind of use AMD to get semiconductor. I go back and forth between AMD and NVIDIA to get semiconductor exposure because SMH is actually kind of, it's very heavily like weighted in NVIDIA, but it still has Taiwan Semi, which can move a lot. So I actually prefer to just like trade one or the other single stock when it comes to stuff like this, especially around earnings because of how weird NVIDIA falls in the earnings cycle. I just kind of choose the single company names in certain cases. What does it kind of feel to you? Kind of something like in between an NVIDIA and a Taiwan, somewhere in the middle? somewhere in the middle. Man, everything's all over the place these days. I don't even know anymore. There's like still a couple names like Micron, which I'm not touching Micron. Micron, Intel. Intel, man, Intel and Boeing are like kind of like opposites to me because Intel could get the best news in the world and it'll sell right off, but Boeing could get the worst news in the world and it'll do sometimes nothing. So to me, these are like kind of polar opposites. Which, that being said, they've done a pretty good job of like boofing any market share that they've had, which they've had dominant market share for a long time and have, in my humble onion, have gotten a little cushy. Gamers can go on rants about that for days. But in terms of what else moved today, Hut. It's actually really, why is Hut up so much? This is a crypto mining company. I don't know why.
Cheaper underlying, decent IV, earnings February 12th. I mean, overall, Bitcoin made a little bit of a move today. And it feels like Bitcoin and crypto has had a little bit of a pause, but when you really zoom out, it's still sitting just underneath 100,000. So,
yeah.
The downside always just feels so much more aggressive.
I know. This one's interesting. Yeah, dude. So this is going to be the next piece that I'm going to do with Tom because I like to torture him. The next piece that I'm going to do with Tom is going to be about quantum computers, which I think is going to be cool.
Okay.
It's probably going to be like a multi-piece series, to be honest. And I know a lot of questions. I've been seeing a lot of questions bubble up on like social media and even on like the live show about like how quantum computers can put certain cryptocurrencies at risk. And it's actually like a really interesting problem because you can quantum proof a blockchain. Like there are quantum safe types of encryption or quantum resilient types of encryption. Bitcoin and like Ethereum, for example, happen to be like pretty susceptible to a quantum attack because they use a form of encryption that quantum computers can brute force calculate much faster than regular supercomputer clusters. But that being said, Ethereum is in a really interesting case, and this is going to be in, like, again, I said, a series of segments to talk more about it. But Bitcoin is like kind of uniquely, I don't want to say screwed, but in a really tough position to adapt. Ethereum, because it actually has like a foundation, right, that kind of like doesn't oversee it, but at least helps facilitate certain changes, like moving from proof of work to proof of stake, is in, it seems a much better position to adapt because of that, moving potentially to a quantum safe protocol. Whereas Bitcoin, because it is so decentralized, would be much harder to do. And then there are like new cryptocurrencies that are like built to be quantum proof where they don't have to do the same kind of overhaul as like Ethereum, for example, or some existing cryptocurrencies, which is cool. But
that makes, so were you were saying it might be a little bit more difficult for something like Bitcoin because it's more decentralized. It almost seems like Ethereum has gotten so popular, it would feel like they have that issue. But I think that just speaks volumes then to how powerful some of those computers can be.
Sure.
To even kind of, I don't know what that process would be called, but for it to be able to do it for Ethereum, it just feels like Ethereum is so established already. So
But they did with a decentralized network move from proof of work to proof of stake. So like if you can transition in that, which is a big transition for like a decentralized network to be able to do, and a lot of that, from my understanding, comes down to the fact that it is a little bit more centralized, even though it's like still a decentralized network. It is still, there's still like some organizations that have input over how the coin is like almost managed, but don't quote me on that. I'm super in the crypto space, whatever. And Bitcoin is like so like opposite on that end of the spectrum that in like it couldn't, I don't think as feasibly as Ethereum kind of do the sort of overhaul that it would need to like maintain the integrity of its blockchain with quantum computing gaining momentum. But that being said, like not from the papers that I've read on this, not all the Bitcoin out in circulation is at risk. It's really only, from my understanding, the ones where the public keys have become available, but that's still like 25% of the Bitcoin that have been in circulation, which is a lot. So it's a really interesting problem. In terms of the tier list of things that I'm concerned about with quantum computing.
That was my next question.
That's like kind of low. Because like
that was my next question. Yeah.
A lot of modern cybersecurity is potentially at risk of quantum attacks. Like a lot of it is kind of based on like sort of the fact that like brute force cracking types of encryption would just take regular supercomputers, like tens, hundreds of thousands of years, maybe more than that, to be able to complete. So I'm a little bit more concerned about like how cybersecurity is going to update, and then Bitcoins and cryptocurrencies and DeFi and all that stuff's mixed in there for sure. But yeah, in terms of the tier list of things that I'm concerned about, it's a little bit lower on the tier list.
What would you say is maybe top two, top three?
Definitely banking.
Financial services.
We're just like regular vanilla financial services. Healthcare records, I think, are really, like sensitive government, like, information like social security numbers, like that kind of stuff, like things that are, what'd you call it? Like national security risks and that kind of stuff. So it's a whole interesting problem. Going to talk about it more, like where the history of quantum computing and what kinds of problems quantum computers can solve well. I'm going to talk about most of that next Friday. I think is going to be the first of that series, I guess.
Okay, next Friday, mark your calendars.
Mark it down. We're moving from Friday to Wednesday. But we do just about have 6 minutes left. We got a trade-all set up and ready to go. Do you want to do your first trade-all of 25?
First trade-all of 25.
Let's do it.
Let this be a testament to how the year will go.
I hope not. Maybe. Well, you know what? Actually, let's see how this works out. So, Tradle, for anybody who's joining us for the first time, is a game that we like to play. It's similar to Wordle, where instead of words that we're trying to guess, there's a country, a target country, whose export distribution we are given here, and we have to guess which country it is. So, this country, for example, has $771 million in exports. Not the smallest country in the world. A lot of agricultural products, other nuts, 5.6%, spice seeds, 3.77%, olive oil, 18%. We got raw cotton, 4.43%, scrap iron, glass bottles. Basically, we got to guess a country, and then this is going to tell us what direction the target country's in and how far off we are. So, E, calcium phosphates, jams. I think I actually know what this one is. Maybe. E, do you have any guesses?
700. Hold on, give me a second. I can't see your.
Oh, maybe I can.
But you said 771
million. There we go.
771 million. That's very small.
It could be bigger. I'll tell you that.
770.
It's not this. We've seen much smaller, to be fair.
Okay. What were we had one of the islands recently, didn't we?
We did have islands. I think the olive oil is what gives it away for me.
Okay.
18% of it is olive oil. It's a lot of olive oil. And then calcium phosphates are, I'm thinking like Northern Africa. I'm kind of leaning towards Morocco, actually.
Okay.
We also have shaped paper. We got nuts. We got spice seeds.
Shaped paper.
Apples and pears. We got cypress as a guest from Organic Farming over in chat.
What is shaped paper? Like the production of paper? What is that?
I have no idea.
Okay.
Tanned equine and bovine hides, tanned sheep hides, low voltage. So we have like the blue. We got a little bit of industrial equipment in here, and we got a lot of agricultural stuff. Turkey or Greece from loan. I'm thinking yes. It's got to be somewhere in the Mediterranean, with the olive oil being 18%. It's like some kind of Mediterranean country. It could be North Africa. It could be like maybe like Turkey. It could be Greece. Morocco is good for olive oil. Morocco, okay, I'm thinking Morocco because I read that there was like a crazy phosphate deposit that was found in Morocco, and they're also like in that kind of area. So that's what I was thinking, but
let's shoot for it.
Let's go for it.
Let's do it.
No, actually, we're pretty far. Wow, we're pretty far. Okay, so we're 79% of the way there, which like I honestly thought it'd be a lot closer. And we're about 4,200 kilometers away. So if it's Morocco and it's all the way basically to the east, like it can't be Spain. Scrap iron is also kind of weird. It could be like, no, if it was Saudi, it would be way more oil. Million. Egypt, I think, is further because I'm like, okay, it could be Egypt, but Egypt, I think, is further away. How big is it? You want to try Egypt?
Yeah. I mean, that's another... Yeah, we'll be closer. I think we'll be closer for sure.
We're going to be closer, but I don't think it's close enough. Okay, we're 94% of the way there.
Okay.
It's like, okay, so now I'm trying to remember my geography.
Step in the right direction.
94% of the way there. We're really close. It's to the northeast of Egypt, so it could be like Lebanon. It could be Syria. I'm kind of leaning towards Lebanon. What do we think, Chad?
Lebanon, not a bad one.
Want to try Lebanon?
Chad, what are we thinking? Yeah, I think that's a good one for the third one, at least, too.
God damn it. Okay, it's right next to Lebanon. God. Okay, my geography is like, it's not Jordan. It's next to Lebanon. Oh, this is going to drive me absolutely crazy. I'm trying to picture the map right now. My brain is just like, it's 5 p.m. You've been up early. You're over-caffeinated. What's right? Do you know what's right next to Lebanon? That's going to drive me crazy. It's like right next to Lebanon. That's going to drive me nuts.
Right next to Lebanon.
This is going to drive me absolutely bananas.
We do have 2 more guesses.
We got 3 more guesses, actually.
3 more guesses.
Oh, man. Chat. Iraq. Is Iraq... I feel like Iraq might be too far. And I think it would have more oil. Because there's, like, actually no oil in this, which I'm very surprised about. And I'm like, okay, olive oil? Like, it's got to be... Oof. Or Syria. Syria's... I think Syria, actually. Do you want to try Syria?
Yeah, let's do it.
Syria! We got it!
Okay.
Good
Olive
job,
oil.
Emmett. Well done. Antarctica is a great guess, Uncle Sticky. We got it. Okay, now I feel a little bit better now. See, what a great way to start out 2025.
Ironic. There we go. But always, you're a luck box, especially for the first week of the year.
There we go.
But olive oil, that's a new one. I wouldn't
Yeah.
have expected that. That threw me off. I would have thought that was the biggest hint, but it was led me astray.
We started out pretty close, though. I'm kind of surprised because I thought 76%, we went from 76% to 94%. Like, I kind of didn't really put together how big the Mediterranean is because all the countries kind of seem very close to me. But well done, guys. We actually got that one. And I want to try some Iraqi olive oil. That sounds awesome. Hell yeah. Well, we are kind of exactly out of time, like just right on time, which is great. E, for our first stream of 25, is there anything that you want to leave on before we get out of here?
No, I mean, Tradle, first green one of the year. Always nice to, I don't know, head into the new year. First year of the trading year, 2 more days or 1 more day into the week. So it's always nice to just have that mental fresh start.
Which is nice. Also, it's been kind of messing me up, though, because we had yesterday off. We had the Wednesday before that off. And now we get next Thursday off because of Jimmy Carter's death.
I was so ready for a full 5-day routine week.
I know.
But
We're not
I guess we'll have to wait another couple weeks. No, I know.
That's okay. Just a weird time, but we're forced to relax maybe a little bit. Not on a day like today with the market bouncing all over the place, but what are you going to do? Everybody, was awesome to see you. Thanks so much for joining us over in chat. It was great to see everybody here and kind of talk with you guys. Great way to start out the year. So everybody, I hope you have a green 2025. We're going to be back next Tuesday. So good luck trading. We'll talk to you soon. Peace.
Peace.
You look around.
Thank you.
Thank you, guys. Thank you.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a tastytrade account. Plus, smart tech and a broker who's got your back at tastytrade. Make your move, genius. tastytrade.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at Tasty Live.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY. Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario, or something that would give us pot odds to stay in.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Oh, yeah. It is Thursday, January 12th, 2025. Can you believe it? We made it. We stumbled in, but we made it, and that's what matters. What's going on, everybody? My name is Victor Jones, and it's 5 o'clock somewhere. It's not here, but it's 5 o'clock somewhere. You know what that means? It's time for Tasty Live's evening show, a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. And incentives there are, a world that gets a little crazier every day. Shout out to all the people watching on tastylive.com. Shout out to all the people watching within the Tasty Trade desktop and mobile application. But if you want to be part of the conversation that our good friends, the producers who run this fine operation, are going to put on the screen here in just a moment, you've got to head on over to Tasty Live's YouTube channel and jump into the chat. Speaking of the chat, what's up, everybody? What's up, all of you maniacs in the chat? I should say what's up to all of you. I would shout you all out individually if I could, but I can't. So I will say what's up to just a few of the people who have made some recent comments. Make some noise in the chats, everybody. It's 2025 here. Brian Watson, what's going on? I see you, absolute beginner. Donna Ski. What's going on? Emmett, how are you? Chris Connolly, happy New Year to you, my friend. Lone, Steve, Cato Prime, absolute beginner. It's great to see all of your names. I'm glad some of you all made it to 2025. You made it past the what do they call that? The purge. You made it past the purge of 2024. You're all here with us. Shout out to all of you. Let's get going. Let's get rocking. Can you believe it? I don't want to say we were right, but we sat on a little bit of volatility towards the tail end of the year, and I'll be darned. Volatility is what we got, a little bit. I mean, it wasn't much, but I suppose beggars can't be choosers. We got vol into the end of the year. Even today, cash indices a little bit lower, down, NASDAQ down around 0.1%. Same thing with the S&P. The Dow Jones, not to be outdone, was down about a third, and the Russell, a big old scratch, up about 7 basis points, something to that extent. We are sub 6,000 in the S&P 500. Market's given a little bit back over these last couple of weeks. Been a two-way marketplace. Some would call it sideways. We're at the bottom end of the range. I would say we've given a little bit of it back, and we're at I think, a bit of a line in the sand here in the market from a technical standpoint at 5,900. More on that later. NASDAQ at 21.1. From a technical perspective, the NASDAQ looks much weaker than the S&P 500. So many people have made so much about how the S&P 500, 10 stocks, effectively makes up 40 cents of every $1 in the S&P 500. But that, my friends, was 2024 in a nutshell. You are not investing in a broad-based index. You're not investing in a diversified passive index fund. You are shoveling money into 10 of the largest companies, getting larger by the day. And that trade stumbled a little bit in the last week and a half. The Dow Jones, if anyone cares, is 42.6. Structurally, that one looks very similar to the S&P 500 from a technical perspective. And the Russell, which has been absolutely Lone says, thanks for nothing, Santa. Yeah, that's right. Thanks for nothing. Thanks for a big old nothing burger. But some of us aren't just playing the Momo number goes up game. Some of us like a little two-way action every now and again. What's that saying? What is it Scarface? In that saying in the restaurant where he's looking at everybody and he's had some pharmaceuticals, and he looks at everybody and says, "You need people like me." That's what I feel like sometimes in the marketplace when everybody's so bullish that they want to blow their brains out, and I'm saying, you know what? I want to fade the Santa Claus rally, and I was probably a bit early. Technically, it's that last 2-week window. It's probably a week early and took some pain, maybe a week and a half. But eventually they gave it all back. It was a big
heart palpitations just to come all the way back for a few points lower than when we started. Oh, my face is close today. That's on me. Hopefully you guys like HD. You need a bad guy like me. That's right. Chris Connolly says, I've been short since 2017. Chris, you're gonna need what they call the catch-up trade. You're gonna need a few ratios to pay off, my friend. Yeah, but as I said, structurally, the indices are either ending the year or beginning the year, no matter how you want to talk about this here, at a structurally weak point. And it I don't like to throw these anecdotal points in too often, but it does seem the news flow. Am I crazy, or is the news flow sort of taking a turn? It seems to have taken a bit of turn. That might just be my information bubble algorithm, but from my point of view, it seems to be a little bit of a turn in the narrative, and the marketplace, and some of the data, and sort of forward expectations, ever so slightly. I mean, maybe I should expect that after 2 weeks of volatility, but it does seem like the narrative ever so slightly has started to shift. Now, what could shift it back? Well, we've got earnings season that's going to be effectively kicking off next week. And so, a couple of 20% ripper rallies to the upside in some mid-cap stocks could be enough to change the narrative. Maybe a rate of change in NVIDIA and some of those tech stocks that have been effectively carrying the market. Maybe we get a rate of change that doesn't just outright spook the marketplace. But if you've been watching sort of NVIDIA on its journey over the last several quarters, I don't want to be that guy who tries to call the top in NVIDIA, but we've had this nasty sort of sideways range in a lot of these semiconductors for more than the last 2 weeks, sideways to downwards. But it does seem the rate of change on earnings has slowed significantly. Not only the rate of change of what they're delivering to the street, but the rate of change in the price reaction to earnings, capped by last quarter sort of muted reaction. I would say muted on the day and sort of maybe delayed reaction. You did get a reaction maybe a few days later, positive to the upside. But my point is, as we get ready to head into a new earnings season, that could be a new catalyst. But sometimes at these turning points, if the market is expecting slower growth, you get these weird points where you can actually see decent performance in earnings, but muted responses in equities. And I think that's going to be something to look out for, that you end up seeing lots of companies that are beating whatever their estimates are on both the top and bottom line, but muted price response. And if that's what we see, I think it's further evidence that we're headed into what could be a rocky first quarter, rocky first, half of the year. And I'm saying that, one, because that's part of the narrative out there. But more importantly, I think different aspects like the VIX term structure, some of these things are sort of signaling a little bit of continued volatility into this sort of first part of the year. But there's a part of me that goes, well, we've had 2 weeks of volatility, and usually if this market has been, give them 5% of a discount and they'll eat it all up. So why shouldn't we go in and start buying up NVIDIA at 130? And I think this market is one that it'll pay to be disciplined. I don't know, maybe. I'm hoping it pays to be disciplined. We thought we might get some volatility. We got it, but we were a little early by a week and a half or so. We have seen some volatility, but I wouldn't call the market cheap by any stretch of the imagination at 5,900, at 21,000. And there's a lot of unknowns between now and January 20th, the new inauguration, which begins the mark of the new administration, new policies, new likely trade relations with the rest of the world, new geopolitical positioning. I think in a way the market has priced the optimism of that. But in all of the new policy, in all of the new trade relations, there does seem to be some risk, right? And perhaps the risk hasn't been appropriately priced, at least up until this point. And maybe that's the last 2 weeks is the market sort of digesting the other side of, the left tail risk back into the marketplace. We'll talk, I think, about some of these things, about the setup going into 2025 in just a bit. But right now, let's set the table, my babies. Victor, I saw a first sign of a turn in the gold and silver metals and energy today. Yeah, finally. That's what makes me, I don't want to say nervous, but it does seem like when the markets start dropping materials, it's not pricing global growth recovery. But you did see, some energy stocks over the last 5 days. Devon Energy was up like 6-7%. Apache Energy, same thing. We'll cover some of the movement in the energy stocks. To me, I know the easy trade is probably to go after those 10 gigantic stocks. That's not the game I play. That's not the game we play here. And so it's probably looking for value, but value with decent beta. And the themes that we ended up getting hit on, not hit in a bad way, the themes we hit in 2024 were nuclear energy. We hit, that was a value play with high beta. We hit Chinese stocks, was a value play with high beta. Those were sort of the larger ones, and a few others. Gold miners were value plays. I don't want to say they had high beta, but we caught a decent move there. And there are a handful of other themes that we played throughout 2024. I'm guessing there's going to be a completely new texture to the market, new themes for us to look for and play, but I don't think the strategy will change much in terms of looking for value with high beta. And I think at the tail end of last year, with energy getting all the way down into the upper 60s, energy stocks had been obliterated. Healthcare stocks they've taken it to the face. And if you start getting sort of the slowdown price, if you start getting a slowdown priced into the marketplace, which I'm not saying we are, but we could, if you start getting that narrative priced in, healthcare stocks could look interesting just from a money flow point of view and perspective. So that's one we've been watching at the tail end of 2024. I'm almost ashamed to say I'm long Pfizer, and I'm looking at other healthcare companies as well. Good Lord. We need some tribunals for some people in Pfizer. So healthcare, I think, is one that will be interesting to watch in 2025, given the potential rotation of narrative. If you end up getting, the market is only priced, 1.5 cuts, something like this for 2025. Let's imagine that rings true. That could either mean the economy was strong, we were never restrictive, and we're going up, and away, which means healthcare stocks are probably too cheap. They don't outperform, but they might be cheap. It could mean that the Fed just destroyed the economy and did some like Paul Volcker thing, held rates and just didn't refuse to cut. I think that's the least likely scenario that plays itself out. Or it could be that 1.5 cuts is too hawkish and we end up seeing more cuts than that for one reason or the other, because of a slowdown or just because the incentives are aligned to making our debt cheaper as we refinance $7 trillion in U.S. Treasuries in 2025. It could be because of that. And that's a pretty big incentive. For all of those reasons, you start to get a slowdown priced. Perhaps healthcare does decent. My point is, healthcare got murdered because of what I think is policy expectations, adversarial policy expectations. And there's a big part of me that hopes that that's true. Godspeed, RFK Jr. But there's probably a large part of those potential outcomes that have been priced into the markets. Could there be more? Sure. but I think we're probably getting to a point where we have decent risk to reward in some of these names, especially if a slowdown is in the cards first, or at least pricing a slowdown is in the cards for the first couple of quarters of this year. And then energy is sort of the flip side of that coin. So if we're wrong about a slowdown, then materials are probably priced with some value. So whether that's Freeport McMoran, whether that's Newmont Mining, whether that's some of the energy companies. I don't want to use XLE because really that's just looking at a chart of Exxon Mobile and CVX. Even most of those are off their highs pretty significantly. But things maybe more like Occidental Petroleum. You could probably go through a laundry list of energy stocks that are pretty significantly off the highs. And if the slowdown isn't in the cards, these things could be interesting names. Again, this is all policy expectations that the U.S. is likely going to have an energy-friendly policy, which will create more supply, lower oil prices, which means that these companies will be able to monetize oil out of the ground at a less extent than what they can today, which is probably true to some extent. But again, it's probably to a large extent already anticipated and being reflected in the prices that we see on our screens. So are these names impervious to beta? No. If the market goes down and correlations go higher, some of these names are going to get hit the same way that others are going to get hit. But the bet is that the stocks that are cheaper going into that type of market probably outperform on a relative basis relative to, let's say, some of the high flyers with a lot of growth expectations priced into their net present value. That's the bet. And I think some of those areas, to me, are interesting, and those are probably some of the themes that I'm going to start off 2025 looking at and talking about. And if anybody knows this show, that tends to be a slow roll. They say, how these things hit slowly, then all at once. That was the nuclear trade. It was slowly, then all at once. That was China. Literally, if you didn't have some exposure, there was probably a week where these things went up by 80% and the trade was over. And so there's a whole bunch of time of looking at these things like pet rocks, and then maybe they pay off. That's kind of the value. That's the value trade game. Let's see what some of you guys are saying. So here's what I like to do. Let's start off 2025. I'm going to give you a few more names here in just a little bit. I want to travel around my thoughts around bonds, the housing market, the home builders, really. And then take us into some of the metals, Bitcoin, all that fun stuff here towards the end. But what I want to hopefully start off this discussion, I'm 30 minutes in, start off this discussion. Give me your favorite themes for 2025. They can be names, they can be sectors, they can be industries. Give me your favorite themes going into 2025. They can even be baskets, simple things like the unwind of the Trump trade, right? Something like this. It could be even just more or less international. I think emerging markets are going to outperform U.S. markets, or I like China over U.S. Whatever it is, I'm just curious to get the room's temperature on your favorite themes going into 2025. Why do I like to do this? Well, it gives other people some ideas as well. You guys are all really smart people. I've said for a very long time, this is, in my personal opinion, one of the smartest chats probably on the internet, because you guys get both the macro side of the world and you embrace the randomness of price and the understanding of volatility and distribution curves. So I think this is one of the greatest places to get ideas. I use it as such, and I think other people do too. So tell me what you guys think. I'll read some of them as they come in. Donna, why is Google evil? That's a whole show in and of itself. Healthcare got murdered because of United Health, Jack Murphy. So I would separate United Health out, right? United Health is insurance, which is technically, if I'm not mistaken, I think they basket those insurance. I'm not sure if healthcare insurance goes in finance or thought of as a financial. I thought all insurance companies were basketed as financial. So anyways, I would agree with you, UNH, and I know you're doing a little bit of a play on words there. But actually, even though they have definitely they've had an impact in their price as well as their business. I actually think if you look at a lot of the healthcare companies, it was really on the Trump election where you started to see some weakness, and then on the naming of RFK Jr. as the candidate for secretary of HHS is where you saw some additional volatility. So if I point here, Jack Murphy Live, you can see the anticipation of a rollover in healthcare started in September. November 6th, you see a gigantic bar here, downside bar in healthcare. That was obviously the day after the election, and you continued to see weakness after it. So I would actually say the healthcare stocks are more of a political and policy volatility here than sort of the Luigi Maggioni situation at UN Healthcare. United Healthcare. Is watching VJ a value play? It's kind of meta. Probably, I would say in some way. I'm not sure how much beta there is to it, though. It's definitely value play. I'm not sure. The problem with value trades is a lot of them never pay off. So take that for whatever it is. Cato Prime says, Jen Time says, AI agents is the theme that you like. I like that idea too. I don't really know any direct ways to play it as of right now. So I would probably need to, as a Chicago rapper would say, do my research. I probably need to do my research and find out what the direct plays are in AI agents. I would probably say there's probably some indirect plays for that. Like there's gigantic call center businesses. I'm guessing they've already been priced into the market here a little bit. I'm guessing they're not doing too well. And I would probably guess that continues. So those are two interesting themes I'll go back and I'll look at. One, who are the direct plays on AI agents? And then two, who are the most liquid call center companies? I'm not sure of any liquid ones offhand. Cato Prime says healthcare, nuclear, and cybersecurity. Here's my issue with cybersecurity. Nuclear, I agree. I think nuclear ended up getting pretty cheap along with the rest of the materials. So I do think if you weren't on that train in 2024, I do think there's still opportunity here. I do think, however, it is a second order derivative, or maybe first order. It's a first order derivative of the AI trade. So as long as there's a continued AI hype cycle, I think nuclear continues to have additional upside. Nuclear. How did he say it? Nuclear. But if there's weakness in the AI trade, then I think there's probably weakness in nuclear stocks as well, because they're all linked, and you can sort of see it. CCJ Cameco is one of these plays that I've been in. SMR is a high beta play, might not even be a real company. That's how high beta it is. And you can see the vol starts in these nuclear stocks at the exact same time you start to see the waffling in a lot of the AI trades. So I think it is, to me, it was a catch-up trade for AI. Like if you weren't in NVIDIA, if you weren't in sort of Microsoft, or you weren't participating in some of those names to the extent that you wanted to, then maybe nuclear energy was an interesting catch-up trade because people were going to realize that, hey, if this thing's real and we really have to build all these data centers, then we need energy. Now, the flip side to this is some of the recent innovations in AI, which seem to say we're going to push the compute power out to the user side. That seems to be a small pivot that the AI industry is making. And I'm not as read up on this as I probably should be, but if that is a legitimate pivot, you still have additional energy needs, but it's a different type of energy need. You know, if you're talking about pushing out the compute power to the user side and not centralizing it in these gigantic data centers where you need cooling, you need water, you need energy, I still think that's where we go, but it probably changes the dynamic. It probably changes the trajectory of those energy needs. So I think that's probably the one thing that's changed in the nuclear setup or the backdrop. My issue with cybersecurity has always been like everybody's hacked. I think I heard a podcast where Theo Vaughn said something like, I have 6 pieces of information. He's like, you want me to believe you don't know those 6 pieces of information by now? I think that's so true. When you really think about it, it's like 6 numbers. And I think these companies are it's like you're held hostage. You got to pay all this money for sophisticated cybersecurity and to keep up in the arms race. But at the end of the day, China just hacked the U.S. Treasury. Like, if you can't keep the U.S. Treasury data safe, do you think I can keep my social security number safe? Like, that's my issue with the value proposition of a lot of these cybersecurity companies, is that, like, who are they keeping safe? They're just making it harder, but I don't really totally get why these things trade at these ridiculous multiples. People keep shoveling money at these companies, but at some point, we're just going to go, all right, everybody knows your info. Let's just operate under that assumption. All right, let's see what you guys. Commodity bubble deflating. Maybe, yeah. I think commodities had a really great year in 2024. I think it depends on what we do with monetary policy and fiscal policy. I think that will, because depending on where you are in the cycle, you are going to see this reflected in commodities first. But a low commodity demand, it's not signaling great things for the future of the economy. It could mean all your price inputs are going to go down. You're going to see more disinflation in price, and the economy is going to stay strong. That's what it could mean. But historically, based on where we are in the cycle, when you start seeing weakness in materials, I don't know, sort of means be cautious ahead. And I cannot keep my eyes off of this chart right here, because going into September, there were 2 things that we had talked about, and they took more time to play themselves out. Again, I don't like talking about predictions that I got right without putting out some stuff that I got wrong, because I get stuff wrong all the time. I don't sell newsletters. I don't sell trade ideas. We just come here and we talk through potential pathways of outcomes. And one of the pathways of outcomes we talked about on the start of the cutting cycle was 2 things. The first order was that we didn't think the long end was going to play ball. We thought the long end would lift on the cut, and we got lucky, and that happened. But when it happened, I think a lot of people just it was easy to brush it off. Why was it easy to brush it off? Well, it's because that's not uncommon. If you just study the history of interest rate cuts, that tends to happen actually for the first 30 or 45 days. The real question wasn't, in my mind, from a probabilistic standpoint, wasn't whether the long end would lift. It was whether it would lift and stay. And it did lift and stay. So right around here, mid-September, the Federal Reserve starts cutting. But home builders continue their trend until the next month, until the end of October. Then you start to see some weakness get priced in. You see a rally, but that rally is unsustained. It's not able to make new highs. The point is, if the long end is lifting, what we said here was the Fed's not buying mortgage paper anymore. They're letting all of that stuff mature, which means you need to find a natural buyer. The markets, your home mortgages are not priced off the Fed funds rate. They're priced off of long-term borrowing. And if long-term borrowing rates are going up, so will mortgage. And if mortgages go up without a corresponding decrease in price, your home affordability is going to get worse, not better. Regardless of what the statistics are saying and the rate of change is saying on a year-over-year basis, which is still not great, still like 4 or 5% inflation. But at some point, the market needs to respect that home affordability is getting worse. And I didn't think it would take 3 months, but it took all the way until basically the last month of the year for these things, for that theme to get priced in. And now you finally saw a massive break on some of the home builders. Basically from 125, 126-ish, all the way down to 104, which is still a far cry from where they were. In 2022, when we embarked on this whole thing, or the end of 2022, these were $60 stocks or $60 ETFs. And mind you, that's an ETF. So if you look at the percentage change of some of the home builders themselves, Pulte Homes, KB Homes, Lennar, a lot of these things have even worse percentage changes. So the preponderance of evidence, says materials are getting soft. So inputs are getting softer. Home builders are getting softer. Mortgage applications, if you looked this morning, mortgage applications were down 10% on a week-over-week basis, if I'm not mistaken. Let me pull up the numbers so I can make sure. Every week on Wednesday, you get MBA mortgage applications. It was delayed today, given the holiday, so we got them on Thursday. The composite number was down 12.6%. Purchases were down 7%. And refinances were down 23%. 23%. It makes sense because that mortgage rate is bumping up against 7% again. 6.9 and change, soon to be over. Maybe not soon to be over. So there's a potential interesting trade setup here. In my mind, a long bond position, which we saw a little bit of stability here at 113. In my mind, a long bond position let me say this a different way. In my mind, a long home builder position at this point is probably a synthetic long bond position. I think there was a lag there going the opposite direction, right? Bonds go down. Home builders didn't go down right away. It took a couple of months. Now they've come down. I think maybe those correlations there's a possibility it will be a little bit stronger. That if you see a rally in bonds, there's the potential that you're going to see that rally priced in to an extent with the home builders. In other words, if you see a bond 2-point rally, I think it's a high likelihood your home builders are going to be one of the outperformers on days like that. So there's two ways to play this. Either if you think a long bond, you want long bond exposure, you just go directly into the bond market. Or you could play sort of a leverage defined risk upside in XHB or ITB. If you think, no way, I want no long bond exposure, I want to continue to be short bonds, I probably wouldn't sell home builders here because you'd be shorting the whole. But if you think long end yields are going to continue to go higher, then maybe we wait for a rally in the home builders and we sell, we get some short deltas in the home builders. So I just think it's about, what do you believe the future holds? I believe longer term, we're going to see 5% rates. I think in the short term, bonds have blown their brains out, and it would make sense to get a trader's rally here. So if you don't want to play the counter trend rally, you just wait maybe for it to see if bonds give you a little rally, home builders rally, and then take some additional short deltas in home builders. This is, let's see what you guys are saying real quick. Let me pause. Alexander says tulips. Grumpy Mike, no one has ever accused me of being smart. Donisky says favorites: quantum computing, silver, oil and gas services. Interesting. Not necessarily energy producers. Donna, why is that? Why oil and gas services? Is it just because of how cheap they're trading? Trying to think of some oil and gas services companies offhand. Is that like Schlumberger? Isn't that a services or oil and gas services company? Catan says, I actually watch forward PE now. And to me, I don't think it's the end all be all. If something has a low PE, it doesn't mean I'm going to buy it. If something has a high PE, it doesn't necessarily mean I'm going to sell it. But to me, it's like IV rank in a way. It helps me know where I am relative to itself. But I also think there's I think I saw a paper, I can't remember who put it out, that they tried to explain that there was positive drift to PEs. Something that now I'm curious. Now I got to go back and find the paper. U.S. Treasury probably use TP-Link routers. Mike Castillo says, again, if you're just joining, the question to the chat, I gave to start this little podcast, I gave some of my favorite themes going into 2025 so far, and I'm asking you guys to give me some of your favorite themes, and I just want to react on them before we move on to some other points of discussion for the day. Fintech companies like SoFi, Upstart, and even Robinhood. I'm long Hood, which has been a decent trade. I'm long from like I don't think single digits, but maybe like tens, somewhere in there. I'm not mad at that. I kind of like the SoFi trade. I kind of like that. I've always liked that SoFi trade. I just think they're in a really, really interesting business, especially as rates go higher. And people want to refinance or roll in their student loans. They're in a really interesting business, especially because you can't really discharge student loan debt in bankruptcy. I think there are some special instances where you can, but correct me if I'm wrong. I don't think you can get rid of that stuff. So they're in kind of like this, I'm going to make them an offer you can't refuse type business. I like it. But to be honest, they're probably still cheap, even though they've doubled. I don't own it. So I like it, but I don't own it. So that tells you my level of conviction. I have an emotional issue with that company, which I will not air out. Victor Jones, do a security freeze at the big three credit companies. Yeah. I mean, I was joking. You can do that though, but it also makes it really hard. I guess it's like, what do you want, security or convenience? But it does make it hard to do business on the internet if you do one of those security freezes. You basically can't pass any identity verifications anymore. But I don't know. I'm not signing up for many things on the internet anymore anyway. Christian says ITB, XHB, donk kicks off recession. Here's my thing, Christian. I'm not in the business of calling recessions. I don't actually think it matters. There's a part of me that thinks we're already in one, and there's a possibility that the NBER will backdate it, depending on how the first couple of quarters of the year, how they go. There's a part of me that thinks politics is played. I have no proof of that. But yeah, I don't really think the recession matters. Recession is just what they tell you. It's what they will tell you happened 6 months after it already happens. So to me, I'm just more interested in pricing. What I say is I price the pricing of a slowdown. Because to me, if a slowdown gets priced but never happens, it still mattered to market participants. It doesn't matter that a recession never came. Like that's my thing about going back to 2022. All these people say, "Oh, see, we never had a recession." Yeah, but the market peeled off 30% from its highs. So if you were somebody looking for the data, going, "I don't see a recession," you lost 30% of your portfolio, not understanding what was happening, that what was being priced. So I don't know why I went off on this tangent a little bit, but I think years ago I might have been really interested in the recession talk. Now I don't care. I just care about markets pricing a slowdown, and I think there's nuance there, but there is a really big difference. Sosnov's best friend is doing well. You'd be surprised. He has good relationships with everybody. Everybody likes the Sos. Supposedly, the Chinese use social engineering to talk an employee of a treasury contractor into giving up their credentials for access to treasury docs. Isn't that funny? It's like no matter what you do on the security end, we can't get away from the risk of somebody calling you and asking for your password over the phone and you giving it to them. That's the one weak link in the chain of security. You just can't. That's the thing we can't get over. Have you ever been that guy or that lady? That's probably that's a tough thing to show up for Monday morning work. You were the person that got socially engineered and caused the U.S. Treasury to get hacked. How'd this happen? Victor willingly gave up his security credentials over the phone to a guy with an accent. All right, I'm gonna do a few more of these and let's keep going. Houses are still greatly mispriced. No way my haunted looking house is worth this much. I think so too, Sleepy. I've long thought that. I don't know by how much, but there's some part of me that thinks this is over when 30% of people's equity in their home gets haircut. Then we're getting back towards normalized territory. But you can get there through time as well. You can get there through price or time. So what can happen is the price can go down, or the price can stay the same over a long period of time, And that's technically, in a weird way, doing the same exact thing. Corrections can come in price and time, because if money is growing, if the money supply is growing, but the price of the asset isn't staying the same, it is staying the same technically, it's giving something back to the market. Maybe I'm wrong, but that's the way I view it. All right. You guys got a lot of good stuff here. All right, I'm going to respond to a couple more just because you guys are super active. Lone says short until 110. I'm guessing bonds. You're talking about bonds, trader rally, indeed. Have a wonderful evening. You too, Lone. Short until 110. But so here's my question then. Like the risk, this is what I did with long bonds. So when we got the rally from 118 up to 120, I was trying to hold on to like 121, 122, where I thought would be fair value. And what that taught me was, what was the risk and reward? I had just made 3-4 points in bonds, and I was holding on for 1 point. So really, I was risking 4 points in bonds to make one, which probably didn't make sense. At these levels, we're at let's call it 113. I know we're at 114 now. Let's say we're 114. You're short until 110. So you're trying to make 4 points, and what do you think the risk is to the upside? Maybe you're probably equidistant, Maybe 118 is an appropriate upside potential. That would bring us to the top end of the range. So maybe that's a 50-50 bet. My only point is be smart about the risk to reward that you're taking on. I don't think I was very smart when I tried to get out one more point of that long bond position, that long bond trade. See, we got decent calls here and bonehead mistakes, just like everybody else. Ooh, Sleepy, I like this one. My only theme is risk management and discipline. I had a huge drawdown the last 2 weeks. Went from 1 mil profits to 300,000 profits. Good night, y'all. Go Energy. Sleepy. I don't know if you're still with us or if you dropped off already, but damn, I wish I would have got to this earlier if you did drop off. An awesome way to frame going into 2025. I think I had 2 pretty decent drawdowns as well. And they both happened at times of high conviction. So at the time of high conviction, I increased. It's the same story everybody goes through. I increase position size, take a little bit of pain, but high conviction causes you to increase deltas, double down into that pain. And next thing you know, you're forced into risk management. Luckily, I keep my lessons much, much smaller than I have in the past. But there were 2 times in 2024 that I fell into that trap. And so, yeah, I'm with you. I think that the theme of risk management in 2025 is a good one. I think having a trade journal or writing, at least thinking about trade, your style for 2024, what went well, what didn't go well, and how you systematically improve your decision making to minimize that from happening again. That's, I think, the most important thing. Writing stuff down is great. Reflecting on your previous trading style is great. But if you don't systemize it, if you don't create a system that prevents or minimizes those weak decision-making habits from happening again, then it's probably likely to happen again. But I think it's a great way. It's a great way to think going into 2025, Sleepy. And I would also say, congrats on the 300. Yeah, 700 was tuition, but to be positive, that's really what matters at the end of the day. So congrats on a good year. All right, I think we got to the end of most of this stuff. All right. Yeah, I think we got to the end of that. Thank you very much, everybody, for the participation. That was fun. You guys got a lot of great ideas going into 2025. I'll talk quickly about my thoughts on bonds or where we are. I like the short end of the curve here. I like twos. I almost never say that. In 2024, maybe I bought twos 2 or 3 times. Once outright and then twice as part of a steepener. But I do like the twos here. I like the long end on sort of a trader's rally, which means I don't love playing the steepener here. Why? Well, the steepener, and again, if you're that's a new term to you. Let me just set the table real quick. ZT, the 2-year Treasury note. So this is the bond price. And yields move inverse to price. So as this price chart goes down, the 2-year yield is going up. As bonds move higher, its yield, the yield on the bond is going lower. This is the 2-year. ZF is the 5-year note. ZN is the 10-year note, and ZB is the 30-year bond. There is also an ultra bond. UB is an ultra treasury bond. Mostly, I'll trade ZT, ZN, and ZB. And so the yield curve, or the 210 yield curve, is the difference between the 2-year yield. So if you use this instrument /2YY, you can get a proxy for what the yield is on the 2-year. And that is approximately 4.22, 4.23 right now, 4.23. And the yield on the 10-year, using /10Y in your platform, these are micro yield contracts. They're both tradable, but they're also, it's just information sources. These will give you proxies to what the current yields are on those futures at 4.56. So the difference is about 23 basis points, right? 423 to 456, right? No, I did that wrong. 30. Yeah. So 30-ish basis points. Come on, Victor, you're better at math than that. 30-ish basis points. And that is a high. We're at a high of where that 2 versus 10 steepener is traded. So once the yield curve uninverted at the tail end of last year, we moved up to like 26 basis points, the difference between the 10 and the 2. Then we collapsed all the way down to flat. Now we've steepened up to 30-ish basis points. And, could we continue to steepen? Sure. The long-term average between those two is 100 basis points. I would bet over time we're going to move towards a world where the difference between the 2 and the 10 looks more like 100 basis points and less like 20 to 30. But I don't think anything moves in a straight line. So I don't love trading the steepener at 30 basis points. If they give us a chance to get back in the mid-teens, 10, 15 basis points, I think I'll probably take that. But for now, I would almost rather, I don't really want to play the flattener either because I don't love the risk and reward. I just kind of want to be long. I guess I am playing the flattener in a way. I want to be long twos, and I like a trader's rally in the longer end of the curve. That might be my, famous final words. I'm going to go down going, I'm going to go down with the long bond saying any minute now, we're going to get a trader's rally in these things. I do think, I understand the narrative for why these things are just funny money paper and they don't have the appropriate yield on them. But, and I do, as I said before, I've said it many times in this podcast already, I think we're going to 5% longer end yields. I just think we don't go straight there. And I think this is an interesting point, 113, 114, to stage a rally. We shall see. Okay, a couple of more. I mentioned this earlier, a theme that I like was energy. Has nothing to do with what I think crude oil will do. I've at one point I was the world's worst gold trader, paper trader, like meaning the actual screen market. So I just said I'm going to buy physical gold and I'm not going to trade it anymore. And I had some success with gold, I think, in 2024 for sure. Crude oil has had my number. I'm not a great crude oil trader. So I don't have you'll notice I don't really have strong opinions in crude oil, nor do I have strong opinions in natty gas. Often energy is not my thing. Energy commodities, but I do like the risk reward on the underlyings. And I think you can see divergence of crude oil and some of the underlying energy stocks. So I've already mentioned these before, but I'll bring them again. Just to name a few, Occidental Petroleum. I think these are probably getting to the rich side. A lot of these things have already staged 6-7% rally. So I don't know that I'd buy them here. I think as an investment, they're still cheap. But like as a trade, Occidental Petroleum has gone straight up for like a week and a half. It's gone from 45 to like $50. Same thing with like Devon Energy. This thing went straight down since April of last year, and we've now over the last week gotten a little bit of a rally. And Apache, same thing here. What's this? Marathon, MPC. You can see all these things are going to have a very similar sort of look to them. And they were really beaten up for maybe 70% of last year. And so there's a part of me that sees, one, did crude oil move from the mid upper 60s up to 70? Yeah, we're getting a little bit of a bump there. But this is probably an interesting area for a lot of these underlying energy stocks, in my personal opinion. Again, anyone that knows me knows this is not a call for what's going to happen in a week from now. When I start looking at some of these things, I actually buy the equity. So I'm not held to like a 30 or 45 day cycle on some of these ideas. I slowly add equity. So I'll add equity, and then if these things get a little cheaper, I'll add equity, add equity, add equity. And then at some point the position builds. And if you get some decent volatility built in, now you start to do sell upside calls to pay for downside protection, that type of stuff, turn it into a synthetic vertical spread. So yeah, a lot of these things in my mind are getting cheap enough to start taking a swing. And but again, if we get a growth slowdown, these things are going to get cheaper. Don't get me wrong. I just think they've got a head start at getting cheaper than everything else. All of this stuff, man. Doesn't matter what you look at. The last week was really was energy related. And I'm not sure how to think about that. I don't know. There was great volume over the last week to have a ton of conviction in the price movements of some of these underlyings. But even if that's not the case, again, it's about the value that these things create. And it's not just the price of these instruments themselves, but the whole sector, all of energy stocks in the S&P 500 makes up like 3 or 4%. So to me, I'm getting long-term odds and short-term odds together, and throwing a few cheap multiples, and I think there's decent table odds for some of this stuff. What do you mean by this, Chris? As an entrepreneur, I'm so risk tolerant that I haven't managed my risk. Markets are different than building a business. I'm curious what you actually mean by that. We need an easy way to promote people, like Spaces, promote people onto the show and just give them the microphone. I'd be really curious for you to expand on that. Here's what I'm guessing you're meaning, that being a business owner has taught you to trust in the future. And that when volatility shows up, an entrepreneur tends to think about those periods of times differently than others. Entrepreneurs build when it gets bad outside. They look for opportunities. They look for distressed assets. They look for distressed companies, ways to add on to their business. They look to add or to strengthen their employee base with new talent or skill sets with people that potentially lost their jobs at other places. I'm guessing what you're saying is, as an entrepreneur and business owner, that being subject to the business cycle has hardened you to the idea of risk. And for that reason, you take more risk in equity markets, or expose yourself to higher levels of risk, and you're comfortable with it. I'm guessing is what you mean, Chris, but if I'm off, let me know. I'd love for you to expand on that if you could. Gregor V. Dub, energy is going to move big time over the next 4 years. Yeah, I don't know. I don't know about time. I just think on a relative basis, we're getting decent pot odds. And I think that's hard to find. Most of the time, you end up looking at a bunch of stuff that looks expensive. And to me, that's the hardest market. Picking the least most expensive is a tough job. I kind of prefer when everything blows up and you know everything on your screen is cheap. And that's just a waiting game. And how much pain can you stomach? So I'll go through a few more. Gold picking up a little bit here. We said this, that 2,600 the first time, it rallied with conviction. So even though I was looking for hopeful entry, maybe 2,400, it never got close. And as we came down the second time, one of the things that we had said is, I wonder if, given the amount of conviction in the buying at 2,600 previously, that becomes kind of a line in the sand, and we're not really going to get our Christmas wish of 24 being able to buy or get long more gold at 2,400, and that's kind of what happened. But I've said this, probably going to die on this hill just like any others. The way I wanted to play gold then, if gold wasn't going to get cheaper than 2,400 and it was going to stay at 2,600, then the deviation between the miners and the underlying didn't make sense. To me, if gold has a line, has a support under it at 2,600, it's only $100 off its high, something like this, then why have the miners, why are they down 40%? And to me, I liked that divergence. So I'm long some of these miners, long Newmont mining as sort of like my favorite of the bunch. There's a handful of these. Newmont, Barrick Gold, which has probably the best ticker. It's just gold, GOLD. And then I'm long some silver miners as well. So I think, a lot of these names are probably, if you're going to draw a trend line or you're going to draw a range, they're probably trading towards the bottom end of their short-term 1-year ranges. Their vols aren't super exciting. So for some of you volatility traders, it's going to be harder to construct sort of especially a short vol strategy around some of these. If you don't mind being long premium, there's probably some ideas there, but most of these I am long the actual underlying. Newmont mining, because the vol got so cheap, I was long some premium as well. But I like being long equity on these value plays. What are my thoughts on Palantir for a short, says Kevin. I've had a running joke on Palantir. First, I'm long Palantir from the single digits. And I had a running joke as to why. To me, I said it was an emotional hedge. I said a world where Palantir does really, really well is probably a world that looks a little bit more like a tech dystopia. And I'm probably not as happy in that world. So in order to offset my diminishing utility, my diminishing happiness in that world, I would like to make some money if that happens. And if it doesn't pay off, then I'm probably happy that that tech dystopia didn't manifest itself. It's a joke, kind of. But I'm long this thing, and I think it has a bunch of things working right now. The things that are working are in a way it's a defense contractor. It's right in the middle of Ukraine stuff. In a way, it's a homeland security play. In a way, it is a free government play. Like it's that $900 billion we spend in defense spending, which is more than the next 9 nations. You rank all the countries in their military spending. You take the official numbers. Some people argue with China's official number, and they say their military budget spending is actually much closer to ours or on par with ours. But if you take the official numbers, we spend more than the next 9 countries combined. And that money goes somewhere. And, Palantir is a beneficiary of that gravy train. It's also an AI play. So it's like all these themes are working for it right now. What do I think about it as a short? I think it's probably expensive and can get cheaper. I don't know about the timing of this one. And here's the reason. When Rivian got super expensive, there was a time when Rivian was by market cap, the second largest car company on the planet by market cap, bigger than Volkswagen. I know I'm saying that wrong to all the people who actually know how to pronounce it. So just excuse my my layman pronunciation. And Volkswagen makes millions of cars. Like the company had made a handful of cars, and it was by market cap the second largest. To me, the risk and rewards favors sitting on that as a short. Do I think Palantir is extended? Yes, but I also think the future prospects are, I don't know. I think we've only scratched the surface of what the future prospects of this company could be. And I think Peter Thiel being buddies with JD Vance probably does them more favors than harm. So yeah, I mean, could you get a break in the price? Probably, but I've told Tom this. I'd rather be a buyer on weakness in Palantir than a seller on strength, because I think the long-term odds probably favor upside versus downside. But there's times when I don't feel like that. Like the home builders, I didn't feel that way. I felt, how can there be more upside in a world where the homes get less affordable than they are today? That doesn't make sense. In a world where Rivian, if they're the second largest car maker on the planet before they've made any cars, well, you've already pulled forward all the optimism. How can there be more upside than downside? So there are moments and times when I feel my logic can get me to a place where I think a short makes sense. I don't short all the time. And when I do run shorts, like short NASDAQ, it's usually to get short deltas, but it's only offsetting long deltas, and I'm still running net long delta in the portfolio. I've been beaten up too many times by the idea of positive drift to try to just sit short deltas in a world where we're printing money like Tic Tacs, and the nominal price of everything is going to go up in that world. I know it's a really long way to answer your question. I apologize for being long-winded with some of these. What do I think about it? I think it could pay. I think it's a high-risk, high-reward type bet, but I'm a scaredy cat, and I'd rather buy the dip that you could get paid on and just keep adding to my existing long position. That's what I think. I think we'll end on this. I'll just read Chris Connolly's note. Yes, as a business is built over time, managing volatility with adjustments, knowing I'm in alignment with conviction in the market. I take too much risk. My conviction doesn't matter. Even though in my business I had everything on the line, I am challenged with managing my risk in markets. Probably just too aggressive, hopeful for returns in the market. You know, I am the same way a little bit. I think my problem is a little bit different than yours. I think I can outthink the market sometimes. That's my problem. And sometimes that will pay, and sometimes that's a humbling experience. And so the way I've adjusted for the weakness in my thinking sometimes is you'll notice I talk a lot about owning stock on this show, which I think is blasphemy, I think, at Tasty. But it was the way that sometimes I have good ideas and sometimes I have decent conviction, and sometimes 30 to 45 days wasn't the right time. And so my way of, to bring this all the way back to the risk management discussion, my way of systematizing risk management for my style was to add way more long equity positions. And for me to let go of the idea that I could time these moves and just be okay with owning some stock. And if the stock position got large enough to manage the risk around the stock with options, so I could minimize my downside. And it gave me an opportunity to be in trades longer. Because if you're in a long call, you still have 30 to 45 days of risk on the table. But if you're in long stock, long put, you're still burning theta, but you can be in, you're going to be in that trade longer than a 30 to 45 day cycle. And if you like the price where you're long, which is why I look for value. If you like the price where you're long and you stay small, you can just keep adding to long positions. You don't necessarily need to buy the put protection or burn theta. So that's the way I've chosen to adjust, because I, like you, can have lots of conviction and optimism in either the future or at least my way of thinking. And adding a little bit more equity to the way that I execute my ideas has helped me to be in the trades a lot longer and maintain conviction over a longer period of time and minimize the variance of my P&L. That said, you guys had an awesome conversation in the chat. For anyone that watched on demand, I would encourage you, spend more time reading the chat, less time listening to me. I appreciate all of you guys. I hope you had a terrific 2024. I didn't get a chance to say that before the close of the new year. I got a chance to say happy holidays, but I hope you had a great 2024. And if you didn't, I'm wishing you all the success in the world in 2025. I hope you get the opportunity to sit down and write out your goals and what you want to see happen in the next year for yourself, and how you want to spend it. And I want to thank you for spending some time here with me. I will see you back here on the flip side, everybody. My name is Victor Jones. Please do me a favor, hit the like button on your way out of the door. Leave a comment if you can. See you back here, same time, same place, same great network, only on Tasty. Peace.
Good morning, happy new year, everybody. Welcome back. That's it. Everything resets to zero and we go again. Are you ready? Ronnie.
Top of the morning, my friend.